Approval. Novo, of course, launched its own obesity pill earlier on this year, and indeed, Novo Nordisk's ADRs have been down as much as 2.5%. So we watched them at the European Open. Also watching Puig, Estee Lauder and Spain's Puig advancing in talks to combine, this according to sources, and the respective owners, there are the respective owners of Mac and Lalabo, so we'll watch that one carefully. Also, finally, Lufthansa. Airlines in general under pressure from higher oil and jet fuel prices, particularly after President Trump's speech. You would expect that to factor in. But indeed, Lufthansa downgraded at Morgan Stanley for precisely this reason, Anna.
Yeah, absolutely. A lot of focus on aviation then because of the broader story around oil and Iran. We've also got a bidding battle taking place, or maybe it will be a bid battle, certainly bids coming in for TAP over in Portugal. So the start of the equity trading session is expected to be negative. We're factoring in further risk of escalation in the Gulf. No new news lines surrounding the Strait of Hormuz. No new developments as far as reopening the Strait of Hormuz and trying to normalize energy markets. As a result of that, the oil price is higher. Stocks are lower. We're certainly seeing that the case this morning here in Europe, and US futures continue to point substantially lower. So the extent of the selling here in Europe, yes, the FTSE 100 is a little cushioned from it. That probably to do with energy stocks, but the FTSE is down still by 0.6%. The CAC 40 down by 1.3%. So overall, for these European equity markets, we're down by just over 1%. And we see the message from the Trump administration really oscillating day after day in terms of escalation and de-escalation, and the market's just sort of caught in its headlights, trying to disentangle all of the messaging and try and work out if any off-ramps are going to creep into sight. Lizzie, what do you see in the markets this morning?
Well, the FTSE 100, of course, will be boosted by energy. That is the best performing sector this morning. It's up 1.5%, but it's going to be dragged down by basic resources, and that's second to bottom of the sectoral basket, down 2.25%. Overall, you've got all but 3 sectors in negative territory this morning, reflecting that risk-off mood that you've flagged for us, Anna. Tech at the bottom of the basket, though, down 2.3%. Only energy, food, beverages and tobacco and personal consumer goods managing to eke out gains at the moment. But just recapping some of those stocks that we had flagged we should be watching, if we turn to the airline sector, if I can find it this morning, IAG is down 3%. Air France, despite submitting that non-binding offer for a stake in TAP, Air France shares down 4.6%. We're waiting for Lufthansa to open at the moment, and yeah, those are just some of those that are moving at the moment.
Yeah, absolutely. So delving deeper into the aviation sector seems sensible today when you've got oil prices up by 6.6%. 107.86 is where we trade on Brent, and sure, they can hedge, but usually that just smooths the edges of their exposure and the profile of energy prices rather than really wholesale reducing the exposure. So broadly in markets then, nearly every sector in negative territory, just energy stocks, food, beverage and tobacco actually proving a little more resilient today, which in itself is quite interesting, something we'll get to in a moment. Let's speak to Frédéric Carrier, who is Head of Investment Strategy for UK and Asia at RBC Wealth Management, with us on set this Thursday morning. Frédéric, thank you for being with us. So, I mean, let's take stock of where we are. European equity markets down substantially today, more oscillation in our expectations of escalation, de-escalation, but also following a pattern that we see most weeks since the start of this war, where the beginning of the week is more optimistic than the end. So what do you make of today's moves then, Frédéric?
There's a lot of focus about what President Trump, what the US might or might not do, but really what we focus on is the damage to infrastructure. And we see, while there are many scenarios as to how the war might continue or evolve, there's very few scenarios in which there is a normalization of energy flows because of the infrastructure damage. When you have the CEO of the Kuwait Petroleum Company saying that even if hostilities end today, it's going to take up to 4 months to put production back to capacity, I can just imagine what might be the case in Iraq, a larger producer with an infrastructure which has been underinvested. So we think that we have a scenario very likely of higher oil prices for much longer than what the market might be thinking.
Yes, Frédéric, can I ask you about where are opportunities in this environment, if it's possible to find them, or relative opportunities? Defensives, often a useful place to think about, defensive stocks, a useful place to think about in times like this. But have they been playing the role you would expect? I noticed food and beverage tobacco up today. It's mostly driven by tobacco, it seems. But this is the kind of sector that you might expect to do okay in tough times. What are you expecting?
So we have seen utilities do particularly well. Perhaps they are seen as halo assets, so unlikely to be disrupted by AI. They also will benefit from higher energy costs, so that sort of defensive is working. With respect to defense stocks, we think that the Iran war have unveiled perhaps some concerns which weren't there before the war. So the fact that Iraq within the first week was able to destroy a US radar facility, that suggests that perhaps the US deficit is not as advanced as we thought. Also, the economics of using very expensive air defense to shoot down very cheap drones. So the economic logic might be a little bit strained. So we've seen a derating of defensive stocks from 35 times forward earnings to 28 times. We don't think that they will go back there in a hurry. They should be trading at a higher valuation than in the past because there's more visibility. Countries will definitely increase their budget in defense, but we don't think we're going to see the euphoria about defense stocks as we've seen in the past.
But does that not just mean that you need to be more selective within defense stocks and turn from, tanks and ammo to air defense?
A lot more selectivity, yes.
Okay. Also, what counts as a diversifier when it comes to commodities? We've talked so much about oil, but, everything's being driven by this same macro shock, so how do you pick?
We talked a lot about oil this month. In January, we talked a lot about gold. So we want commodities to play a role in our portfolios, but we want them to be very uncorrelated to macro events, uncorrelated to stocks and bonds. So we have a long-short strategy which looks at the broad commodities market, so freight and agriculture, power companies, industrial materials, and focus really on demand and supply, dislocation, price misallocation, and that will give a ballast in the portfolio that just buying a long-only commodity will not give you.
You would think that everything is impacted, though, by the war, whether it's through fertilizer prices or aluminium prices. How do you find a commodity that isn't touched by that?
So they all are, but it's all about demand and supply dislocations.
Yeah. I can ask about equities with a longer-term horizon. I think with a one-year view, you're still constructive on stocks. Talk us through that. How much of that is dependent on resolution of the current war? And also, is it reliant on the AI theme, private credit, keep on rolling in a sort of benign or positive direction?
So the key factor is that we believe that it's very unlikely that there will be a U.S. recession. The U.S. is independent in terms of food and energy. 20% of household incomes come from social security transfers, which are indexed to inflation. It's one of the highest proportion in history. So that makes for a very resilient economy. And of course, AI investments are very important. So if the US does not fall into a recession, we think that it's warranted to be constructive on a one-year view. Having said that, we know that in the past, when there's been a constraint on oil supplies from Middle East crisis, stock market have fallen on average by 16%. And when we've had growth scares, so instances where fears of recession start to be discounted in markets, but a recession does not materialize, in those episodes, the S&P 500 can fall between 14 and 19% over a period of 2 to 9 months. So that gives us a ballpark of the volatility we can expect over the next year.
I did want to ask you a question that I've been thinking of since we were last speaking to our FX guest earlier in the programme, and that is a result of the war that the dollar kind of loses purchase because more oil won't be traded in dollars because of this war?
So with respect to the US dollar, we think that the theme of an erosion of the US dollar will continue, but perhaps not to the same velocity as it had before the war. And certainly there are increasing number of transactions which are done outside of the US dollar.
Yes, because I suppose there's another view that maybe this show of force and show of power, this was what maybe the US administration might hope, that would help to support the dollar. Certainly in the short term, the dollar is well bid, isn't it? Yes. Let's talk about bond markets and what role they're playing at the moment, Frédéric. We've got bond yields are going higher once again, another sell-off, and that's in keeping with the pattern of trading in other assets that we would expect this morning. What role do you expect bonds to play?
So you were asking about opportunities in this market, and whereas it's difficult to see opportunities at the moment in equities because the headline risk is so high, we do see opportunities in the rates market in particular, and gilts for us have shown this opportunity. We've increased duration. We believe that the market is very much focused on the inflation impact of the shock, but we think that the Bank of England will have to flip very quickly to the growth impact. We're not in a situation as we were in 2022. Monetary policy is already restrictive. There's already a sizable output gap which keeps on growing. And so we think that the Bank of England, again, will be constrained in terms of increasing interest rates. And we think that when market discounts 3 or 2.5 interest rate increases over the year, we think it's too much. So we've increased duration.
Okay, well, 10-year gilt yields up 6 basis points this morning at 4.89. Frédéric Carrier, Head of Investment Strategy for UK and Asia at RBC Wealth Management. Thank you very much. Well, let's check in on the core six this morning. How are they holding up in this risk-off environment? Oh, we do seem to have gains for Novo Nordisk and Nestlé. We had flagged that we should keep an eye on Novo Nordisk, given that Eli Lilly's obesity pill has won US approval, not under the pressure that we had been expecting, and despite the fact that ADRs had been down in the US for Novo. Also, Nestlé eking out gains of 0.2%, but losses for LVMH, Rheinmetall, ASML and Schneider. Let's take a look at some of the other individual stocks on the move this morning with Bloomberg's Chloe Melly. Chloe.
Good morning, Lizzie. Well, we are seeing those oil majors that were down yesterday now up, now very much in the green. And that is because yesterday they were down because of this optimism that the war in Iran might end. But then yesterday's comments from Trump about hitting Iran extremely hard over the next 2 to 3 weeks, that has led the market to think that maybe the resolution to the conflict is not coming just yet. And therefore we are seeing oil gain and those oil majors gaining this morning, with BP in particular up 3%. Part of the same story is, of course, airlines, which are all down this morning after being up yesterday because of those higher fuel costs. And then we have some individual stories within that industry as well. We've got Lufthansa being downgraded and having its price target cut by Morgan Stanley because of this concern that fuel costs could stay higher for longer. And then we also have Air France, which has just submitted a non-binding offer for a stake in Portuguese carrier TAP. And so this is essentially kicking off the race for that company. And we are seeing just overall that industry down in the red this morning. Miners are also down. We are seeing Anglo American, Glencore, Fresnillo, Rio Tinto all as well in the red. This is part of the same story, those comments from Trump. And finally, AkzoNobel, the paint maker, is also down after being downgraded by Goldman. And this is really part of that chemical sector that is really struggling with those higher input costs. And so we are seeing that downgrade really hit the stock this morning, down about 3.5% for that company.
Chloe, thank you. Bloomberg's Chloe Melly with those movers for you. Coming up on the programme, oil jumps then as President Trump's address dims hopes of a quick end to the Iran war. More on that next. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Geo report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to the opening trade. We're 15 minutes into today's session, and it is risk off here in Europe. The Stock 600 down 1.2% on the latest from President Trump. We had that 2 a.m. UK time address from the president, essentially saying that he's planning to escalate to de-escalate in this war in Iran. And so the mood in markets is one of negativity this Thursday, as we have been seeing throughout the conflict. Weeks starting more positive than they tend to have ended. But particular weakness this morning coming from the DAX in Frankfurt. I should note that Denmark is closed today, so in fact Novo Nordisk is not trading at the moment. But what is on the move is Puig, as we have had the news that Estée Lauder and Spain's Puig are advancing discussions to combine their businesses, a move that would create one of the world's largest luxury beauty players. For more, let's speak to our Bloomberg Deals reporter Manuel Baigorri. Manuel, good morning. What more do we know about the deal?
Yes, Lizzie, more progress coming on this transaction as the companies are advancing on their negotiations. As we learned towards the end of last month, the companies were in talks to combine, potentially creating one of the biggest luxury beauty brands in the world. Estée Lauder, obviously almost 3 times the size of Puig, which has a market valuation of around $11 billion. And talks between the companies are definitely progressing in the right direction. Most likely this is going to be a stock transaction, which will allow the two families behind the companies to remain in very active position and have a say in the combined entity. So definitely a very transformative deal in the consumer retail space.
Yes, Manuel, talk to us about the wider industry, the wider sector, and how this changes the competitive landscape.
Anna, I mean, for a while we've seen a significant uptick in transactions in what had been actually over the years a rather sleepy sector for big transformative deals. We saw just a few days ago the Unilever McCormick more in the food space, That was also a very large transaction. Obviously, now this into the beauty segment, and Puig, which, by the way, just until not that long ago was a relatively not very well known privately held Spanish company from the Northeast. Then they did the IPO, and now people kind of realize, well, this company is actually rather sizable. I mean, they are very big, particularly in the fragrances segment. This will obviously, combining with Estée Lauder, create a potential rather steep competitor against the likes of L'Oreal, and definitely a big transaction in this space. I mean, remains to be seen how the two companies come together. All sources seem to indicate that it's perhaps a matter of a few more weeks of negotiations as they go through the SPA, and we may likely see an agreement on the table rather soon. As I mentioned earlier, most likely a stock transaction that will allow the two families to have a say in the company.
Manuel, thank you very much. Manuel Bagori, Bloomberg Deals reporter, with the latest on the consolidation that could take place within the beauty sector. Let's move on to another sector that is very noteworthy and newsworthy this morning. We see oil prices are higher. Let's talk about oil and gas jumping after President Trump, in his address to the nation, signaled an escalation to the war in Iran. He also called on the rest of the world to reopen the Strait of Hormuz, urging them to take the lead in protecting global energy shipments. For more, let's bring in Bloomberg's Middle East energy reporter, Anthony De Paula. It's interesting that once again we're seeing movement, of course, higher in oil, higher in gas prices, higher in refined product, Anthony, and another reminder that it is refined product that sometimes moves more on these kind of headlines. Europe and Asia, for example, reliant on the Persian Gulf for some of that refined product.
Yeah, good morning, Anna. Yeah, for sure, we did not see the markets calmed by the comments from President Trump this morning. He did say that negotiations and talks were still going on. He did express his thoughts that this, as he said, a changed regime is more reasonable than the last. Of course, we've got a Supreme Leader with the same last name as the previous Supreme Leader, and the IRGC military complex still in charge there. And then Trump continued with the threats particularly against the power plants in Iran. If a deal isn't reached, he has threatened again to bomb those. And then he made those comments that the U.S. would continue to monitor by satellite the nuclear sites and continue to potentially attack those. So that kind of gives the markets a view of escalation here. So that's why we're not really seeing much relaxation, and really no sign that the U.S. is going to work towards opening up Hormuz. And of course, it's that strait through which about a fifth of global oil demand passes each day under normal circumstances, that is blocked and cut off. And that's really what's starving the market of crude oil to go into those refineries. And so those refineries are not able to produce the products that they need to get to market. Plus, the Gulf region is a huge exporting market. So the Gulf refineries are also not able to get the diesel and jet fuel that they need to sell in the market. They're not able to get that out of the Gulf. So that's also a huge dislocation for the market, Anna.
Interesting to see China telling private refiners to keep fuel production at 2025 levels, Anthony, even if they have to incur economic losses a month into this war, a month or so. Who is it that's managing to get oil through the strait, if anyone, at this point?
Yeah, at the moment, we are seeing that Iran is letting some of its own vessels go through. It's charging tolls to let some other countries' vessels through. So, for example, we've seen Pakistan get a number of ships through. We've got a story on the wire today talking about how Pakistan has offered its flag to some vessels for them to transit through Hormuz. But really, what we're talking about is those tankers that are inside the Gulf and getting out. We've got a number of tankers still in there that loaded up, haven't been able to get out of the Gulf. We're not really talking about tankers going in and trying to load and continue that normal trade. And it's Iran as well getting some of its oil out, still loading at Kharg Island. Trump continues to talk about Karg as a key point for Iran. But they are able to load there and get their oil out through the Strait of Hormuz. So there is that trickle, but for all intents and purposes, for the normal working of the market, Hormuz is closed, and that massive supply is not coming out of the Gulf, Lizzie.
Anthony, thank you very much. That's Bloomberg's Middle East energy reporter, Anthony De Paula. Well, overnight, of course, there were two big things we were watching: President Trump's address and the Artemis II launch. NASA astronauts blasting off on a 10-day mission around the moon, marking humanity's return to the lunar neighborhood for the first time in more than 50 years. The US and China are racing to put humans back on the moon, with NASA working to build a lunar base. Bloomberg Tech co-anchor Ed Ludlow has been reporting from the Kennedy Space Center in Florida.
4, 3, 2, 1. Booster ignition.
That was the moment that NASA sent astronauts back toward the moon for the first time in more than 50 years. Artemis II is a dress rehearsal, first for NASA's Space Launch System, or SLS, developed by Boeing, which generated almost 9 million pounds of thrust when it lifted off from Kennedy Space Center, Launch Complex 39B, here in Florida. Initially, there's this 2-day orbit of the Earth at different altitudes, practicing burns, practicing manual control of the Orion spacecraft before a translunar injection. That then puts the crew on a slingshot around the far side of the moon. 250,000 miles of distance, a total round trip of 685,000 miles, at one point 4,000 miles from the moon's surface. And in that time, the crew on board are going to be practicing maneuvers, manual control of the spacecraft, communication systems, emergency procedures, because Artemis II is just one step in a bigger picture plan to return astronauts to the moon's surface, potentially as soon as 2028. That is America and NASA's goal. And it's been an expensive enterprise, $4 billion per launch, a $93 billion program cost. And it's a race against China, who have their own ambitions to land on the moon. They've stated 2030. The crew of Artemis II are expected to splash down on the west coast of the United States in 10 days' time. This is Ed Ludlow for Bloomberg News at Kennedy Space Center in Florida.
Ed Ludlow on the ground for us then in Florida, keeping things and travel a little closer to Earth. Let's have a look at where we are on the aviation stocks, because clearly with oil prices moving as much as they are, you would expect to see some negativity coming through on the aviation space. So we've got oil prices are up by 6.6%. That's the Brent price. And as a result, you see Lufthansa, EasyJet, IAG and Air France all down by more than 2%. Of course, there will be hedging, as we said earlier, Lizzie, involved here to try and take the edge off. But really, that's what hedging does, takes the edge off. It doesn't protect you from fundamental, more medium-term changes in pricing.
Yeah, Lufthansa down in particular, 3.8% because of that downgrade by Morgan Stanley. But it comes back to the same reason everybody's down today, which is the higher jet fuel price. We should also flag Air France. It has that bit of M&A news. So Air France KLM submitting that non-binding offer for a stake in TAP, the Portuguese airline.
Coming up on the programme then, we will talk travel and tourism. We'll talk to Irene Hayes, owner and chair of the UK's biggest travel agency, that's Hayes Travel, about the disruption to travel that's been caused by war in the Middle East. It's such an important region for transport through and also visiting the area itself, of course. We'll get to that next. This is Bloomberg.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal, with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
This is the opening trade, 30 minutes into today's session, and this is a look at these markets for you. We're negative across European equity markets, down by around 1.1% on the Stocks Europe 600, and we're only cushioned really because of the presence of big energy names, particularly in London, which is why London is not down quite so much, but elsewhere also. That is one of the sectors not doing too badly. Interesting that food, beverage and tobacco playing something of a defensive role today. That has not always been the case on days of negativity attached to war in the Persian Gulf. But this is the broad picture. And Lizzie, our colleagues in Bloomberg News have been writing about this phenomenon where we see optimism in the markets at the beginning of the week, more negativity at the end of the week, which makes sense going into any weekend, but especially a long weekend.
Indeed, and perhaps that is the reason that we've got such lower volumes today, down 34%. Also, of course, because we've had such mixed messages out of the White House, not just at 2 a.m. London time this morning in the President's address, but throughout this war. And as a mark of the risk on sentiment that you were seeing, we have 445 members of the Stock 600 lower this morning compared to 106 to the upside. But let's pick out some of the winners and losers, shall we? The leaders today include BP. As you say, we're seeing energy stocks outperforming, Brent edging higher off the back of President Trump's speech. So BP up more than 3%, Total up 2%. Same story, energy really among the few outperformers in the Stock 600 today. But also in the retail space, we've got B&M doing pretty well after getting rated new buy at Kepler Chevreux. So B&M up 5.5% this morning. Flipping over to the laggards, because there are more of them than leaders today. ASML is one of them, down 4.6% after a 6% gain yesterday, mind you. But tech stocks overall dropping. Tech really in the middle of the turmoil because of the war, also with the memory and storage companies, especially weak. We've got Siemens Energy down 4.25% after a gain as well yesterday. But this on President Trump's escalatory remarks. This is a company with big exposure to the Middle East, mind you. And Lufthansa, we've flagged this for you. Airlines in general suffering today, but Lufthansa downgraded by Morgan Stanley on the risk that fuel costs could prove materially higher for longer because of the conflict, and therefore Lufthansa shares down 4.3%, Hannah.
Those are the markets. Let's get an update on some of the top stories we're covering this morning. Oil prices jumping after President Trump vowed an escalation to the war in Iran over the coming weeks. During a rare primetime address to the nation, President Trump said the U.S. military would hit Iran, quote, extremely hard. His comments dampening hopes of a swift resolution to the conflict, which has disrupted energy flows, with the vital Strait of Hormuz still effectively shut. NASA's Artemis 2 mission has launched to space and reached a stable orbit, kicking off a landmark journey that will take the crew of astronauts closer to the lunar surface than anyone has been in more than 50 years. The rocket system, taller than the Statue of Liberty, reached speeds of more than 17,000 miles per hour as it hurtled to space. The crew will spend roughly 4 days traveling to the lunar vicinity, where they will swing behind the moon's far side and be out of touch with Earth for a time. Lizzie.
Well, one of Europe's biggest airline groups has kicked off the race for TAP, with Air France-KLM submitting the first known bid for a stake in the Portuguese flag carrier. That non-binding offer was lodged this morning ahead of an end-of-day government deadline, Portugal looking to sell as much as 49.9% of the airline. Air France-KLM, Lufthansa and IAG were all invited to submit preliminary offers for TAP last year. So that just some of the latest news coming from the airline sector. But more broadly, the Iran war is, of course, disrupting global aviation, with soaring jet fuel prices, airspace closures and widespread flight cancellations hitting airlines worldwide. This crisis now spreading from Asia to Europe as global fuel supplies reach critically low levels. Kate Duffy, our aerospace reporter, joins us now for more on set. And Kate, we do have airline and travel and leisure, I should say more broadly, one of the worst performing sectors today. What should we expect over the coming weeks?
Well, speaking to airlines and their CEOs, it's really still, we're unsure about what's going to happen over the next couple of weeks. They're taking each day as it comes. But what is certain is just price of tickets is definitely going to go up. And that's across the board. So in the US airlines don't hedge their oil. So they're more exposed to the higher oil prices across the board. In terms of in Europe, the airline CEOs have already warned that ticket prices are going to go up as well. And in Asia, it's a similar scenario too. But in the Middle East, you know, the carriers there, they're still really struggling to get their planes off the ground. They're suffering from, you know, closing airspaces because of the missiles flying. And also we've reported that Emirates, you know, is basically flying empty planes back into the region, to Dubai in particular. So this kind of gives you a sense of the demand into the region at the moment that they're facing.
Yeah, absolutely. What about government responses here, Kate? Because anytime airlines are up against it, there'll be plenty of voices calling for tax reductions, and this is an industry that has attracted quite a bit of taxation in recent years. So what are we hearing in terms of the response from governments?
From governments, it's a sense, especially in Asia, potentially they're warning that planes could get grounded, that maybe airlines coming into the country can't refuel their planes because they want to hoard that jet fuel essentially for their own needs. We're hearing from airlines, especially Lufthansa this week, potentially they could ground their planes if the situation continues and fuel supply shortages wane. And Ryanair is also speaking to its fuel teams quite a lot and just keeping in touch with the situation. So it's definitely impacting airlines across the world.
Yeah, because we'd seen these comments that perhaps April will be okay, but things get real in May. Is that still the thinking?
Yeah, that is still the thinking, yeah. So there's still a bit of time. Obviously, they're just waiting on the situation in the US as to what Trump says and does. But for now, May is when the impact could really show.
And Kate, despite all the turmoil, you've got Air France-KLM still finding time for some potential M&A, this bid for a stake in Portugal's TAP. Air France shares, I should say, down 4.25%. Is that a sign that investors don't like the sound of this, or is it just because everybody's down in airline today?
I think it's probably more the latter at the moment. So with the TAP bid, we've also got Lufthansa and IAG in the race as well. Although we did report that IAG is likely to abandon this deal, so it could be that just Lufthansa and Air France go for TAP in the end. We will find out today because obviously that's the deadline. But that will show in terms of investors' confidence as to what TAP means for these airlines.
All right, Kate, thanks for the update. That's Bloomberg's Kate Duffy, our aerospace reporter, of course. Well, broadening the conversation when it comes to travel, let's speak now to the owner and chair of the UK's biggest independent travel agency, Hayes Travel. Irene Hayes joins us now. Irene, thank you for making time for us this morning. So it was quite a bleak picture that Kate just painted for us. How would you say that bookings are shifting in the wake of the war? Are people actually cancelling trips altogether?
Some people are. We're managing to save the sail in many instances, and travellers that would have been going through, say, Dubai or Doha to the east are switching to perhaps short-haul holidays to the Mediterranean. But people still want to take that holiday, and very often they're travelling for family events, say, across to Australia. And we are just having to divert wherever we can. But yes, there's major disruption. And now that we have a full month, the month of March, and we've done all the analysis this week, overall we're down 10% as an average. But as you can imagine, the picture is very different in different parts of the world.
Well, this is quite a long-term question, but let's say that this war is protracted. Do you see other international hubs opening up that might replace the likes of Dubai and Doha?
I think that it's highly likely. I think that normally the travelling public have really quite a short memory, but the longer that this prevails, the more challenging it will be to find alternative routes, because other airlines cannot necessarily get airlift from all of the airports that they want to divert to. So it's challenging, not just as you discussed this morning around fuel charges, which could be one barrier, but the other barrier is their ability to divert and gain access to other airports. So yes, it will in the fullness of time have a longer and bigger impact.
Yeah, Irene, so it could bring about some big change. Let me ask you about the more near-term response then we're seeing from travellers, from customers. You mentioned that some are choosing to go short haul. Is it a sort of wholesale rejection of long haul, or are long haul journeys to, I don't know, the Caribbean and other places still intact?
Oh yes, very much so. I think there are, without doubt, the Mediterranean resorts are the winners here. And we're seeing significant growth, particularly in Italy, Malta, Croatia and Spain. They are all significantly up for us. But to the other part of your question, people are still wanting to travel long haul. And the winners there are Japan, Australia, South Africa and Canada. As you may imagine, the current issue has had an adverse impact on America, and travel to America is down 32% compared to the same month last year, as are some, smaller destinations in Europe, such as Turkey. That's down, and as you would expect, Cyprus. But no, it's a mixed picture, and people still want to travel long haul.
Okay, so people still do want to travel, down 10% as a sort of broad average. That's interesting, that stat you gave us about America, Irene, being down 32% year on year for the month. I mean, what was the picture like before this war? Because anecdotally, we'd heard that there were fewer people wanting to go from Europe to America, perhaps linked to the politics. But you tell us what you're seeing, what you've been seeing in your bookings.
Okay, yes, we've seen a downturn in America before the 28th of February, when the Ayatollah was killed, and the period of the war had not then properly begun. So we'd seen a downturn in months before that, but nothing as severe as 32%. So we would have seen figures coming through of about 10 or 11% reduction. But there is still a lot of confidence in some parts of America. So Florida, understandably, with the investment that's just gone in from people such as Universal, has seen an increase. And New York and Vegas have seen a significant decrease, as have other parts of the states. But the Sunshine States are still holding up, but not doing as well as they were previously.
And Irene, given the soaring cost of jet fuel, is it that people are opting for train travel instead? I've always fancied the Orient Express.
Train travel was increasing anyway, because touring in general is increasing, and there are lots of new rail products coming onto the market. But it really doesn't have the capacity to take all of the slack from the airlines that are having challenges from airlift and fuel price problems. So yes, trains and touring's doing well, but people are in the main just seeking out alternative routes. You've talked about Lufthansa this morning. Lufthansa is a real option out of the UK rather than going across to Dubai. And hubs elsewhere, Schiphol in Amsterdam. So what we're trying to do, wherever we can, is just divert away from the main hubs. But when you consider that on a normal day, Dubai International Airport would carry about 325,000 passengers, either staying in Dubai or transiting onto places like the Maldives and Mauritius and India. It is really quite a challenge to divert that level of capacity away from east to find alternative routes.
Irene, thank you very much. Thanks for joining us. Good to get your perspective. Irene Hayes, owner and chair of Hayes Travel, giving us a bit of a deep dive into what we're seeing the impact looks like on the travel industry from war in the Middle East. Coming up on the programme then, it is 1 year since President Trump announced his Liberation Day tariffs. What's been the impact of that? We've had a reminder of how this story is not completely done just this morning. We'll bring you all the analysis next. This is Bloomberg.
Estava sitiada.
Isso, ao começo, eu não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg. Welcome
back to the opening trade. 47 minutes into today's European session, and it's miserable in these equity markets. We already saw losses in the Asian session. We're set to see losses in the US session later, but the Stock 600 for now down more than 1%. Particular losses out of Frankfurt for the DAX down 1.4%. The FTSE 100 somewhat cushioned by its exposure to energy, but that is the reason why we're risk off, because we have Brent up more than 6.4% at $107 a barrel this morning. WTI also above $100 a barrel off the back of President Trump's address at 2 a.m. this morning from the White House, essentially telling us that he wants to de-escalate this conflict in Iran, Anna.
Yes, so we very much focus on the impact of war in the Middle East right now. This time last year, we were talking very much about trade. The Trump administration is said to be weighing new tariffs on drug makers and preparing to overhaul its steel and aluminium tariff policy. The moves come 1 year since President Trump announced his Liberation Day tariffs. Brendan Murray has been through the past year with us, Bloomberg's trade czar, and joins us now. Brendan, good morning. Let's start with the here and now. Tell us a bit more about what we have learned about drug makers and the investigations that have been taking place and the tariffs that might now follow.
Yeah, exactly. Both the steel and aluminum and the pharmaceutical tariffs are part of this national security investigations that the Trump administration has conducted over the past year. We're seeing now the 100% tariff on drug makers if they're not producing the medicines in the U.S. or unless they've struck a deal with Trump. 9 of them did so at the end of last year. So this seems to be a move by the Trump administration to encourage those companies to follow through on those pledges. And if not, they're going to face a very steep 100% tariff.
And what's the point of the relook at steel and aluminium tariff policy? Is it simply simplification?
Yeah, I mean, the steel and aluminum tariffs last year got more complicated as the year progressed, and it became nearly impossible for a lot of companies to comply with them to try to determine the amount of steel or aluminum content in the product that they're importing. So the administration heard a lot of complaints, and they've said that they will respond to them, and this is the attempt to do so, to try to make that process less burdensome to companies and their bottom line.
Okay, so importantly, it's more for businesses than to help out voters ahead of the elections.
Yeah, I mean, ultimately, that's who would feed the benefits would feed to. But at the moment, it's so difficult to figure out the content of products that contain those metals that the companies are saying, look, we've thrown up our hands and we need some help. And so it sounds like the Trump administration is attempting to do that.
Yes, and Carstart, let's take us back a year then, Brendan, and think about how far we've come on the tariff journey over the past year. Because on the one hand, you can look at the effective tariff rate and say, look, it's 4 times where it was pre-Liberation Day. On the other hand, you can say it's much lower than it was around Liberation Day. What kind of story are you minded to tell about tariffs?
Yeah, exactly. I think the story of the past year was that Donald Trump's tariff bark, the bite was a lot less than the bark. And he came out a year ago today and said, I'm going to put tariffs, very high tariffs on the rest of the world. The markets reacted negatively to that. And what we wound up with was something a lot less burdensome to the economy. It was rolled out over many months. And so the economy had time to digest these higher costs that the president was imposing on American importers in a way that didn't crater the economy. And so what we're left with now is the president trying to rebuild a lot of that now that the Supreme Court has struck down the main tool that he was using. And now we're seeing these pharmaceutical tariffs, these reworked steel and aluminum tariffs, and we'll get more. You know, there's another case coming on semiconductors. And imagine if you put a tariff on semiconductors and products containing semiconductors, you could hit a lot of imports that way. So we'll see how the president rolls those out in the weeks and months ahead.
Well, you're making my head spin with all of these changes that have been, could be in the future. Surely that uncertainty has its own cost economically.
Yeah, absolutely. That was the story all of last year, was the uncertainty, and the president tried to combat that all year long. And now what we're seeing is another round of that sort of uncertainty. If he has to undo the whole sort of tariff program and patch it together with all these different kinds of authorities that he's using. It's very hard for companies to know what they're going to be paying to import goods 3 to 6 months out. So what we're seeing is just another cloud, a different cloud of uncertainty hovering over the economy.
You talked about the contrast between the bark and the bite then in terms of tariff policy from the Trump administration, Brendan. What has this done then overall to flows of trade? Because it seems as if China is still finding markets for its products, just not so much to the US or not directly to the US.
Yeah, it seems that another lesson of the past year is that global trade is pretty resilient. Trade in goods was up 3 or 4% last year, which is above the sort of mediocre average that it has been over the past couple of decades. This year, obviously, we're looking at the war in the Middle East as another disruptive force that could suppress demand and bring that 3 to 4% rate down to something closer to 1.5 or 2 are some of the estimates that I'm seeing lately.
It's interesting because we had reported that cheaper Chinese goods might be one thing that helps to ease the Iran effect on UK inflation. Just something to bear in mind. Brendan, thank you very much. Our trade czar there, Brendan Murray. Well, let's recheck on these European stocks, shall we? As I say, it's been a bleak morning. Stock 600 down 1% at the moment. The FTSE down 0.2. The CAC 40 in Paris down 1%, but the DAX in Frankfurt down 1.4%. We can get a bit of analysis now with Morwenna Coniam, who joins us from the Markets Today team. Morwenna, is this just a reversal of what we saw yesterday, or is it something more?
I mean, it is a reversal of what we saw yesterday, particularly if you look at the bond market. We saw in the UK some bonds having their best day in weeks. That's really unwinding today, but it's following on from the global trends set by the Fed from the US last night and the expectations for the Federal Reserve. That's flowed through Asia, and now we're seeing it very much in the European morning. It is something more in terms of the hope I think we've been building up to has been dispelled, and it really, I think the fact that we're just sort of back where we started, each incremental reversal, I think, slightly builds in terms of overall sentiment, how seriously they take the next sign of maybe some intention to move forward. I think the lack of a clear exit plan has weighed quite heavily on those who were hoping that this might be temporary, and that really ultimately is going to set into those inflation expectations and the worries about sort of second-round effects and this actually being more protracted.
Yeah, I mean, Morwenna, when we look at stocks, our colleagues have been writing about how we're following a weekly pattern that looks quite similar week after week of this war, where there's optimism towards the start of the week, perhaps induced by certain types of headlines with some de-escalatory flavour from the US. And then by the end of the week, we are quite negative. And today certainly fits with that theme, doesn't it, as we watch another day of negativity for stocks, nearly all sectors.
Yeah, but it's very broad-based. It is risk-off driven. I think one of the only sectors that's really getting this morning is oil-linked stocks, particularly heavy losses for things like tech, miners, financials. It's very much as you'd expect. But, we're also seeing that sell-off in gold continue as well, because interest rates rising on bonds makes that less appealing. So it's one of those risk-off but also quite broad-based sell-offs, and it is, every region is behaving in a very similar way, and every asset class, so it's quite an interesting but quite depressing morning.
Okay, Morwenna, thank you very much. Bloomberg's Morwenna Coniam from the Bloomberg Markets Today team. Time to talk about the weekend, Lizzie?
Yeah, well, we've got all the sports you could ever want. We've got the basketball, the rowing, the football, and of course it's Easter for the chocolate lovers.
Is that a sport? That is definitely the sport that will be practiced in my house, yes. Yeah, as I see, chocolate companies are trading higher today, something about resilience, defensiveness in tough times perhaps. 8:56 here in London, then the Pulse is up next. I'll be here with the next hour of trade. We'll continue to take you through these market moves this Thursday. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Oil jumps and stocks fall after President Trump threatens to hit Iran, quote, extremely hard over the next 2 to 3 weeks, with no clear timeline for de-escalation. Air France KLM shares under pressure after the airline group submits the first known bid for a stake in the Portuguese flag carrier TAP. Aviation generally, though, on the back foot. And back to the moon. Humanity is set to return after more than 50 years as Artemis 2 launches an historic 10-day mission beyond Earth. Keeping our feet on the ground, let's have a look at the assets for you this morning. As we flagged in the headlines, S&P futures down by 1%. This in reaction to some of the escalatory language that the market has picked up on from President Trump's speech. We're back to thinking about what that does to inflation. If we don't see the opening of the Strait of Hormuz, inflation in focus, so 10-year yields are higher, and that has spread to Europe as well. Euro dollar 115.33, really just to illustrate the strength of the dollar once again. That is a pretty broad-based trend. We are seeing once again a lot of movement into the greenback. And Brent crude then 107.70, up by 6.5%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse.
Good morning, everybody. This is The Pulse. Thursday morning, I'm Anna Edwards here in London. US President Donald Trump used his primetime address to try to sell the Iran war to the American people and said the conflict is, quote, very close to completion. But he also warned that the US plans to launch fresh attacks within the next 2 to 3 weeks.
We are on track to complete all of America's military objectives shortly, very shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. In the meantime, discussions are ongoing. Regime change was not our goal. We never said regime change, but regime change has occurred because of all of their original leaders' death.
For more, we're joined by Bloomberg's Washington Deputy Bureau Chief Laura Davison with us this morning. Laura, what were your key takeaways then, listening to the president?
So the key takeaways here is that Trump is keeping his options open, really, as he has for several weeks. He said they're going to ramp up attacks in Iran for the next 2 to 3 weeks, and at the end of that period, he wants a deal. But if there's no deal, then he will order strikes on electricity plants within Iran, which would be a major escalation of this war. So we have seen, Trump sort of send a lot of mixed signals, a lot of mixed messages about both what he wants, what he's looking for from Iran, and whether or not, what the state of these negotiations are with Iran. We saw the same, scenario play out here in what was a more formal speech than what we've seen from the president, but there were really no new details, nothing else to really shed light on what exactly is the plan to get out of this war. He had previously suggested the U.S. would withdraw within 2 to 3 weeks. He didn't quite say that. He said that there would be sort of a stepped-up military campaign until then, but didn't give any specific timeline for when the war would end.
Yeah, but the president has made some quite conflicting statements about the role of the Strait of Hormuz in any withdrawal of U.S. troops or escalation of activity in the Middle East. So what did he not clarify in his speech?
He did not at all clarify what role the U.S. would have going forward with the Strait of Hormuz. Instead, he suggested that it was up to other countries, Europe, Asia, Gulf allies, to go in there and take the oil and open it up. And he said they needed to get courage to go ahead and do this. This is really a pivot from what we've seen, just a couple weeks ago, where he was, trying to rally allies to, get military ships into the region to open up the Strait of Hormuz. He now seems to have completely washed his hands of that and says he's walking away and it's not the U.S.'s responsibility. Of course, the U.S. relies on oil from the Strait of Hormuz, that passes through the Strait of Hormuz, much less than some other countries. However, because of global oil markets, this means that energy prices around the globe are going to remain elevated as long as it is closed. So while the U.S. may not directly be affected by that specific oil sitting in the Gulf there, it is still going to be a political problem and an economic problem for Trump back in the U.S.
Yes, and so now we see more than 30 countries being convened, Laura, to talk remotely, I think, about what level of involvement they might want to have in the Strait. Also addressing the American public, in the hours before we heard from President Trump, we heard from the Iranian president. He wrote a letter that was supposed to be, he hoped, widely published in the United States. What were the key messages there?
So the messages here were that essentially that the American leadership is not to be trusted. He said that Americans, this letter was directed specifically to the American people, that they should look past the White House's rhetoric, and that there is Iran has a long history, and that the history between the U.S. and Iran is much understood. And essentially this was a very unusual move to see, and you really see Iran sort of using some of Trump's similar tactics of going out saying that Trump is adopting this maximalist position, sort of really punching back at him in a way that you see Trump take to Truth Social or other social media and lambast allies. So this is, was interpreted very much as a sign of strength from Iran, that they're willing to go toe-to-toe rhetorically with Trump.
Laura, thank you very much. Bloomberg's Washington Deputy Bureau Chief Laura Davison. Joining us now on the program with analysis, Shaukat Bunglawala, who's head of multi-asset solutions for EMEA at Goldman Sachs Asset Management. Shaukat, nice to have you with us. Thanks for joining us. I see so many references to fog in lots of research reports right now, because there's, famously the fog of war, and that seems to be being picked up by many investors to describe an inability to have a lot of conviction about what happens from here. How is that fog influencing you and the choices you're making?
Sure. Firstly, thanks, Anna, for having me. So we'd gone into this year expecting above-trend global growth, U.S. growth at probably around 2.5%. We were expecting European growth to be above trend. There was the prospect of easier financial conditions, with the Fed potentially cutting in the second half of this year. That disinflationary trend that we saw last year before the tariffs, we were expecting to reestablish itself at the second half of this year as the tariff noise faded. And there was the fiscal support from the One Big Beautiful Bill in the US, as well as German fiscal stimulus here in Europe. And that's clearly been clouded. There's a number of risks now, and those include, of course, the conflict in Iran. It includes events in the credit cycle. It also includes some of the twin concerns in AI, both as it relates to return on investment as well as some concern around the impact on the labor market. If you take the first of those risks, as you've been discussing with the conflict of Iran, it's both a function of duration as well as magnitude of impact. On the one side, there's an uncertainty associated with the duration. We've already seen the impact as it relates to shipping being incredibly limited through the Strait of Hormuz. Kuwait, which has significantly reduced oil production, has already said it could be many months before they get back to full production. But there's also the potential for, obviously, escalation. There could be impacts or challenges in the Bab el-Mandeb Straits. There's already been an impact on energy infrastructure in Qatar with the Ras Laffan plant, and they've already indicated that some element, some proportion of that supply is going to take many years to get back into the market. So the concern on this clearly is around duration and potential magnitude. That's having an inflationary effect. We've seen that more impactful in Asia and Europe, where they're just that bit more dependent, of course, on importing energy, and that's consequently had an impact on the path of policy rates.
Yes, absolutely. And there's a lot to think about there. So you started by outlining the growth expectations that you had before the war, before this particular risk loomed on agendas, on investors' agendas. So you expected above trend growth. What's your expectation now? Is it trend growth or is it well below trend growth, given the scarring perhaps to some of that energy infrastructure that has already taken place?
Sure. So we're now expecting trend growth. There's been some clear deterioration, but it's been modest, and that's why we're expecting trend growth. But we're acknowledging that the range of outcomes from here are quite uncertain. Those risks are obviously, any one of those risks could have a significant tail event, so it's worth certainly monitoring.
Yeah, absolutely. I mean, the other things that you mentioned, are they still, we're thinking about the AI story, for example, because, how much is that providing some upside at a time when clearly a lot of investors are nervous, risk off, in today's markets, substantially so. How much upside can the AI story provide through this? Because, I mean, there are links, aren't there? Energy is one of the key requirements of the AI rollout.
Absolutely, yeah, certainly very dependent on energy. I think there's a significant degree of AI capex, which is certainly supporting growth, and we expect that to continue. In terms of concerns, there's still a challenge as it relates to the forecast around return on investment, and there's also a challenge as it relates to the potential impact on labor market supply. On the second, with respect to private credit and some of the events in the credit cycle, we've also noticed some AI disruption there, particularly as it relates to the software sector, and that's had a material effect. But with private credit, I think it's important to distinguish on the one side sentiment and the other side fundamentals. There's been some concern around redemption activity in these open-ended private credit funds, particularly in the US with some pretty large funds. But we think that's sentiment-driven. That's more about, can investors achieve their redemptions, or are these funds going to impose their stated caps? That's more about the extent of liquidity that these funds hold and about fair treatment of investors given their pool funds. We don't think that's related to fundamentals. On the fundamentals, I think it's important to continue to monitor the potential impact as it relates to AI disruption in software sectors, the potential for increases in defaults. To date, it's been quite limited, and also assessing for whether or not there's any reduction in broader lending from banks. But we do think that that's contained. We don't see a spillover effect into broader risk assets at this stage.
And let me ask you about diversification, because clearly that means very obviously diversification across different asset classes, maybe within equities and credit, different sectors, that kind of diversification. But you make the point in your notes, it's also about tail risk hedging, so protecting yourself from some pretty unlikely things, but things that could happen, and trying to find uncorrelated assets. How hard is that right now?
Sure. So I think as multi-asset investors, diversification is obviously very important to us. We think there needs to be multiple types of this. So we've seen the typical sort of ballast that you get from bonds, which are, you're seeking negative correlation to equities. Doesn't always play out. It hasn't played out in this environment, given bond yields have moved up. So firstly, seeking some element of tail risk protection, focusing on asset classes that are perhaps unduly impacted by a prolonged energy supply shock, and therefore buying protection in areas like European equities, we think is prudent. Secondly, recognizing that there could be a market debate around the potential speed and magnitude of central bank policy reaction function, but then also a fiscal response that impacts longer-term bond yields, means that you can seek to take advantage of rates volatility and looking for that protection from larger swings in bond yields, and that can be an uncorrelated source of return in portfolios as well, and that's one of the other things we're doing.
Yeah, I talked earlier about that volatility in bond markets with an FX guest who was talking about the dollar on the back of that and saying there just doesn't seem to be much that stops the dollar right now. Certainly going into a weekend, that seems to be the case. What's your thinking about the role that the dollar is playing in this particular crisis?
Sure. So I think with market moves, we've seen with a more than 50% increase in the price of oil, we're now sustainably above $100 a barrel. You've seen dollar strengthen. You've also seen European and emerging markets equity fall around 10 to 12%. That's more than what we've seen, of course, in the US, which is down around 7% or so. Bond yields have moved up, IG spreads are up, high yield spreads are up about 30 basis points. All of those are probably natural things that you'd expect. But one important thing to also look at is look at the sector composition of equity market returns, particularly in the US. 5 of the 11 sectors are still actually up year to date, not just energy, which is up substantially, but consumer staples, industrials, materials, utilities. And that's suggesting that the breadth is actually still quite robust. Russell 2000 small cap indices up year to date as well. And that's also supported by very positive earnings growth. We saw double-digit growth last year. We're expecting double-digit growth again this year. And that's one of the reasons why we're still constructive over the medium term. So notwithstanding this element of dollar strength as a safe haven, which is reflecting near-term uncertainty, with the overall medium-term outlook for us is still quite constructive.
Okay, thank you very much for your time. Thanks for joining us. Chocolate Bonglawala, who is Head of Multi-Asset Solutions for EMEA at Goldman Sachs Asset Management. Coming up on the program, 1 year on from President Trump's Liberation Day tariffs, and the turmoil is not over. We bring you details on how he plans to target the pharmaceutical industry. That's next. This is Bloomberg.
Geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's Jobs Day, and Bloomberg has the report under surveillance.
Right now, the headline bad news is bad news.
This is a stagflationary mix.
It's a double squeeze for the rest of the world.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The market is tightening financial conditions.
It's not just what's happening present day. It's 5, 6, 7 months out.
The longest first quarter ever continues.
The March Jobs Report, Friday on Bloomberg.
This is The Pulse. I'm Anna Edwards, live in London. NASA astronauts have blasted off on a 10-day mission around the moon, marking humanity's return to the lunar neighborhood for the first time in more than 50 years. The US and China are racing to put humans back on the moon too, with NASA working to build a lunar base. Bloomberg Tech co-anchor Ed Ludlow sent this report from the Kennedy Space Center in Florida.
4, 3, 2, 1. Booster ignition.
That was the moment that NASA sent astronauts back toward the moon for the first time in more than 50 years. Artemis 2 is a dress rehearsal, first for NASA's Space Launch System, or SLS, developed by Boeing, which generated almost 9 million pounds of thrust when it lifted off from Kennedy Space Center, Launch Complex 39B, here in Florida. Initially, there's this 2-day orbit of the Earth at different altitudes, practicing burns, practicing manual control of the Orion spacecraft before a translunar injection. That then puts the crew on a slingshot around the far side of the moon. 250,000 miles of distance, a total round trip of 685,000 miles, at one point 4,000 miles from the moon's surface. And in that time, the crew on board are going to be practicing maneuvers, manual control of the spacecraft, communication systems, emergency procedures, because Artemis 2 is just one step in a bigger picture plan to return astronauts to the moon's surface, potentially as soon as 2028. That is America and NASA's goal. And it's been an expensive enterprise, $4 billion per launch, a $93 billion program cost. And it's a race against China, who have their own ambitions to land on the moon. They've stated 2030. The crew of Artemis 2 are expected to splash down on the west coast of the United States in 10 days' time. This is Ed Ludlow for Bloomberg News at Kennedy Space Center in Florida.
Let's get some further thoughts on this quite historic event, really. Bloomberg's global defense editor also covers the space beat for us. Jerry Doyle is with us on set here in London. Jerry, good morning to you. So how much relief, then, do you think there'll be that this went as planned? I mean, these things don't have to... There's not everything you do in space is crewed, but this was crewed, and it's really historic because it's going further, deeper into space than has been done in decades. So a lot more attention on this than perhaps usual.
Yeah, absolutely. Crewed spaceflight is very hard. Getting off the ground is arguably the trickiest part of a mission. There's a lot more stress on the spacecraft and the vehicle. So the fact that they were able to carry it off, everything went off without a hitch, no technical problems there in orbit. I think everybody is breathing a sigh of relief at this point.
Yeah, breathing a sigh of relief. And a longer term, bigger picture, how important then is this for the future of the NASA space program, for space travel, for those American ambitions in the sector?
I think it's tremendously important. It's going to prove a lot of technology, a lot of procedures, a lot of techniques for operating in orbit, getting things to and from the moon. A lot of different things are going to be sort of proven on this spaceflight. And if it all goes off without a hitch, and eventually in a few years there are people back on the moon's surface, maybe that will lead to steps farther into the solar system.
What about the European dimension to this, Jerry? I'm not sure if that's something you follow particularly closely, but this was obviously a US NASA mission, but is a US project. But it has international involvement, not global, not China, not Russia, but it does have some global contributions, in particular from Europe. I spoke to an politics professor yesterday who was saying that there is a bit of a risk, though, for Europe, that its role is not quite certain. It was hoping to be involved in the Gateway space station that was going to be next to the moon, essentially, but that might be scrapped, and if that is scrapped, Europe's role isn't clear. I mean, what expectations do we have for Europe and its role in this particular version of the space race?
Well, there is some European technology in the hardware that is going to and around the moon. At the moment, NASA does not seem to be planning to do the lunar gateway, the sort of the orbiting station around the moon, and that has sort of led to some disappointment because there was going to be additional European technology in that. However, as the plans for a lunar base become real or become closer to being real, I think there should be some opportunities for European companies and the European Space Agency to get involved.
And we were talking about, decades ago, when this was being done for the first time, this was all part of the Cold War, and it was about a Soviet-US rivalry. Now there is rivalry on space ambition, certainly with China, and to some degree still with Russia as well. What do we know about how much this advances the US cause versus the others?
It's hard to say. I mean, it feels like the U.S. Artemis program is closer to actually putting people on the moon than the Chinese space program, which has landed probes on the far side of the moon, which has ambition for a lunar outpost at one of the lunar poles. So, you know, to the extent there's a Cold War feel to this, it feels like if there is a space race back to the moon, maybe the U.S. is slightly farther ahead, but I think the stakes are somewhat lower than they were during the Cold War. The moon has been visited before by humans, so it's not as much of a milestone as it was in the 60s.
Yes, I wonder how inspiring this will be for people watching it. It's often talked about in those terms. People who got into space decades ago will talk about it being, you know, on the back of the lunar landing. Remind us what the purpose of this trip is, because this isn't actually to land on the moon. The purpose of this, Artemis 2, is to test a lot of the kit that will be required.
Correct. It's sort of a shakedown cruise, right? So they're not landing on the moon, as you said, but on this 10-day journey, they're going to spend 5 or 6 days getting to the moon. They're going to swing around it, passing as close as about 4,000 miles to the lunar surface. And en route, they're going to practice some techniques, some processes, maneuvering the spacecraft. They already did that in orbit, sort of testing how well it flies in space relative to the simulators that they've done on the ground. They test other maneuvers, test communications, and other technology that they're going to need to function perfectly if they're going to land on the moon.
Thank you very much. Thanks, Jerry. Thanks for joining us. Bloomberg's global defense editor, Jerry Doyle, casting an eye over all things space-related for us this week. And there's been plenty of news on that front. Also, lots of news on the energy markets. We talk a lot about what happens in crude markets, but some of these refined products we need to mention as well. European diesel futures hitting $200 as the Iran war limits fuel supply, and it is crucially some of these refined products that are being hit, and jet fuel, diesel, some of the prices there going higher or moving more than we've seen for the crude unrefined products. So we keep our eye on that. Europe generally produces less diesel than it consumes, and so it's particularly exposed to what comes out of the Gulf. Now, the Trump administration, on another beat, is said to be weighing new tariffs on drug makers and preparing to overhaul its steel and aluminium tariff policy. This comes 1 year after President Trump announced Liberation Day tariffs. We remember that well. Brendan Murray, our Bloomberg trade czar, also remembers that very well. Brendan, thanks for joining us once again. So what's behind the moves on drug makers? Get us up to speed there.
Yeah, so this is just a reminder that the Supreme Court took away only one of Donald Trump's tariff authorities, and that he's got all these others that they've said that they're going to roll out. So the pharmaceutical tariffs are going to come from a 232, this national security investigation, and the goal that President Trump has said is to encourage drug makers to make those medicines in the U.S. And so a lot of those companies have done deals and pledged to manufacture in parts of the U.S. They've said that they were going to cut drug prices as part of these deals. But this is the administration following through and making sure that those pledges are upheld. Otherwise, 100% tariff on pharmaceutical imports is going to hit them hard.
And what about the other sector we're getting news flow on, and that's aluminium, aluminum, and steel? What's the aim there?
Yeah, exactly. So these predate the Liberation Day. They came very soon after President came into office for a second time. They have been added to. There are products that have been added to the application of those tariffs, and it's an extremely complicated thing for importers to figure out what is the tariff on this tiny little component of metal in this product that I now have to declare and pay a tax on. So the administration has heard those concerns and is trying to simplify the situation.
Okay, so simplification is the aim of the game. And Brendan, thank you very much. Brendan Murray, Bloomberg's trade czar. It has been a very heavy week for news. If you need something new to think about, we'll talk about the business of sport next. Ahead of next week's Masters, we're going to be talking about the outlook for professional and amateur golf. Guy Kinnings will be with us, the CEO of the European Tour. He's up next. This is Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. Welcome to The Pulse. I'm Anna Edwards, live in London, and these are your top stories. Oil jumps and stocks fall after President Trump threatens to hit Iran, quote, extremely hard over the next 2 to 3 weeks, with no clear timeline for de-escalation. Air France KLM submits the first known bid for a stake in the Portuguese flag carrier TAP, with the broader sector under pressure from higher oil prices. And back to the moon. Humanity set to return after more than 50 years as Artemis 2 launches an historic 10-day mission beyond Earth. Let's get back to the corporate agenda then, 9:30 here in London. Welcome back to the programme, everybody. Let's have a quick look at where the shares of Puig are trading. This, of course, the beauty brand listed over in Spain, is actually up a couple of tenths of a percent, which isn't a bad performance when you consider the wider markets are considerably weaker today. So the Stocks Europe 600 is down by 0.9% for reasons to do with war in the Middle East. But we do see some outperformance then coming through from Puig. Let's get to the story then. Bloomberg News has learned that Estée Lauder and Spain's Puig are advancing discussions to combine their businesses, a move that would create one of the world's largest luxury beauty players and perhaps reshape the sector. For more, let's bring in Bloomberg's French luxury reporter, Angelina Rascoury. Angelina, what more can you tell us about this potential deal?
Hi there, Anna. Yes, indeed. I mean, as you said, they're holding, Bloomberg reported that they're holding advanced talks about what could be a stock deal, essentially. Marc Puig, who is the executive chairman of the Spanish group, would likely have an important role in the future governance of the combined entity with a board seat. As you said, it would create the largest beauty player. Obviously, there's no guarantee that the deal talks will succeed, so we have to wait for what happens. Remember, these are two businesses, Estée Lauder and Puig, which are controlled by families, the Lauders on one side and the Puig on the other side. And since the deal talks leaked on March 23rd, Estée Lauder shares have fallen about 18% in New York, and Puig have gained about 11%.
Yes, so that move higher in Puig continues today then, but just marginal compared to what's already been achieved. I mean, you're in Paris, Angelina. Normally we talk to you about the French fashion industry. No doubt they will be watching this potential deal very closely, because this could reshape the industry to some degree.
Yes, indeed, Anna. I mean, basically the backdrop is that L'Oréal last year clinched a crucial beauty deal with Kering, a €4 billion beauty deal. So basically it's getting the perfume brand Creed is also going to keep on developing the perfume brands of Balenciaga and Bottega Veneta, which are the fashion brands that belong to Kering. And eventually, it'll have the Gucci beauty license, which is right now with Coty, but that license will soon expire. So L'Oréal, which was already the market leader in that category, is going to be, in beauty, is going to be even stronger. So on the Puig side, it likely felt that it needed to be part of a bigger group. You need to scale. Puig has beautiful, perfume brands. It's got Jean-Paul Gaultier, Rabanne. It also has the makeup brand Charlotte Tilbury. But basically, you're going to have more leverage when you're going to be negotiating with distributors. On the Estée Lauder side, it was probably a more surprising move because Stéphane de La Faverie, the CEO who took over in January 2025, he was tasked with turning the ship around, with probably cleaning up. There was a strategic review going on. So it's likely why also investors are, have reacted negatively, because they were probably expecting him to shed some assets instead of going on a transformational trans-border, transatlantic acquisition, combination, which likely carries a lot of execution risk. And, the backdrop is also the turmoil that we're seeing, and, high oil prices, what's going to happen to consumer budgets.
Angelina, thank you very much. Thanks for the update. Bloomberg's French luxury reporter, Angelina Rascouet, joining us there from Paris. Let's move on to another corporate story, and one that is a very well-read story on the Bloomberg terminal for reasons that will become clear. The British entrepreneur Nick Candy has sold his family home in London's Chelsea district for more than $350 million. It is believed to be the biggest single house sale in history. I'm not talking just about London here either. For more, we're joined by Damien Shepherd, our residential real estate reporter. Damien, what more can you tell us?
Yeah, look, Anna, this is quite literally what they call a mega deal. We don't think we've ever seen this type of a deal anywhere in the world in terms of the value. It's a estate essentially bought in Chelsea, and that's by an unnamed buyer. The seller, Nick Candy, the well-known property developer who was at the heart of the One Hyde Park development in London and is now up to all sorts in the luxury space in Dubai too. Now, to put this into perspective for viewers, this deal is worth something in the region of about £265 million. The biggest deal in London last year was £41 million. So this is a massive deal, something we've not seen in a long, long time. The biggest one before this was £210 million in 2020. That was a mansion overlooking Hyde Park called Rutland Gate. But yet you can't play this one down, Anna. This is a massive deal, and it's a big deal for the London market too.
Yeah, absolutely. What does it mean for the wider market? How does it fit into the broader trends that you're seeing, Damien?
Well, look, last year was defined by changes to the non-doms regime, different tax hikes sort of affecting the flow of wealthy individuals to London and the UK. Now we're seeing, the conflict in the Middle East potentially changing the mindset of wealthy individuals who've moved from London over to the Middle East. So now potentially this is a really good sign for the London market, and the fact that, a property has gone for this value might just give other vendors and buyers the confidence to say, hey, I'm pushing the button, I'm going now, and I'm moving forward with the deals that I've had in mind for a while.
Very interesting, Damien. Thank you. Thanks for bringing us the story and the incredible price tag. Damien Shepherd, Bloomberg residential real estate reporter. It's 9:36 here in London. This is The Pulse. Let's pivot to the business of sport. The Masters gets underway next weekend at Augusta National. But the first golf major of the year will be without Tiger Woods, who says he's stepping away to seek treatment after pleading not guilty to a DUI charge. The wider professional game also faces an uncertain future, with the flagship tours in the US and Europe yet to finalise any deal with Live Golf, despite agreeing to merge with the Saudi-backed tour in 2023. Let's think about where the sport goes from here. Guy Kinnings joins us, the CEO of the European Tour Group. Guy, really nice to have you with us. Thank you very much for joining us on the programme. If I could start with the sort of most recent developments, I guess, in the sport and globally, something we're talking about a lot and how it affects a lot of sectors. Events in the Middle East have an impact on any global business, and golf is a global business. Certain events have had to be rescheduled. What is the impact of this, do you think, on the golf business right now?
I think we're still to see exactly what it means. We ourselves play multiple swings on our tour. We're kind of a truly golf's global tour. We played in the Middle East in January. We don't play again in the region probably until September, and we have some big playoff events in November. So we've got a little bit of time to see how things work out, and we will be ready. You know, we speak to our advisors, our travel advisors. A lot of the players travel through there. A lot of the tournaments that we do around the world use it as a hub. So we've been having to monitor that, and we'll wait and see and hope that we'll be able to finish the season as we started it.
Yeah, okay, so unlike some sports which have imminent fixtures in the region, you're maybe a little cushioned from that particular eventuality. Let me talk about the wider golf landscape then, because for some years, certainly many months, we've been thinking about consolidation within the space. Live Golf emerged and quickly started to try to redefine the sport, and then we saw talks between Live Golf and the PGA Tour, and yet those talks have sort of ground to a halt and haven't seemed to go anywhere. I wonder, from your perspective, what are you looking at? What are your hopes for that kind of conversation within the golf world?
I mean, for us, we play the world over. We like to work with partners in different territories, and that's what makes us the global tour. You know, we play double the number of countries. We play in double the number of countries. We have double the number of nationalities on our tour. And for us, all we can really do is to try and control what we control. You know, we have a strong working relationship with the PGA Tour, a strategic alliance that's allowed us to invest in our product. And that product has never been as popular with fans and with sponsors. We have 5 global swings. We go into our back 9 and playoffs. We play national opens around the world. And at the moment, interest levels are extremely high in those. You know, we've got record sponsorship levels, consumer levels are up. And for us, therefore, our focus is, let's make sure we do our product as well as we can.
Yeah.
Check that people are enjoying it, which they seem to be doing. We've maybe had our best year ever in 2025. Rory McIlroy helped a little bit. His extraordinary win at the Masters, first sort of European to be a Grand Slam winner. We had the extraordinary events in Bethpage. Our Ryder Cup heroes there gave us the most watched TV golf event ever on Sky. So all of that's been good, and that allows us to do what we need to do with our partners.
Okay, yes, guys, I suppose I was wondering whether the uncertainty that these ongoing conversations between the PGA and Live create, does that uncertainty throw up opportunities for you, or does it mean that those who are interested in investing or sponsoring golf stand back and don't make decisions? Does it hold things back? What's been your experience?
Well, it's interesting. Golf in itself has never been more popular. We think it's just under 110 million people play around the world. Record numbers took it on since the pandemic. And for us, our product seems to be very popular right now. We have $300 million in sponsorship booked for this year. That means we've got about $1 billion in sponsorship contracted. Our consumer levels, so our fan engagement, people are watching, people are turning up at events, up 30% year on year. So for the moment, what we're seeing is there's an interest in the sport. There is an interest in those people who want to see it. For sure, we have needed to innovate. We've needed to bring in new fans, and we've done that by creating experiences. So it's not just putting on great golf tournaments. People have a great experience. What we'll put on in Adair Manor at the Ryder Cup in 2027 will be extraordinary and appeal to people in different ways. And we also we've been very lucky. We've been award-winning, 8 awards last year, but they've been in different areas, our delivery, but our content is probably almost our strongest. Our players create this incredibly appealing, virally appealing content that has drawn in a new audience.
Yes, and you talk there about innovation, and I wonder if all of the attention that Live Golf received and the questions it raised about what the professional game should look like, did that open up an opportunity to have conversations that maybe you couldn't have before about what the game should look like, about risks that should be taken, about innovation that should be brought in? Has it moved things forward?
I think it has. I think we always have to improve. Our sole goal is to service the members of our tour, improve the tour year on year. Absolutely, challenges and people who ask questions, make sure that you're always improving, innovating. We're kind of known to be the innovators. PGA Tour are very strong, great partners of ours. You've got Live, but we are the global tour, attracting talent from across the world, and we do it often in kind of different ways. We go to more countries and we go to different geographies. appealing to different demographics. And that's always a good thing. Golf can be shown in lots of different ways. We play standard stroke play, we have match play. The Ryder Cup is almost this extraordinary event, attracts an audience all of its own. So it is up to us to kind of keep making sure that we innovate to attract that audience and keep that audience.
Yeah, you mentioned the strategic alliance that you have with the PGA Tour. As part of that agreement, the PGA Tour acquired, I think, 15% stake of the European Tour productions, rising to 25% in 2027. Are you open to selling more of these kind of vehicles to investors? How has that particular arrangement played out for you?
The relationship with the PGA Tour has worked incredibly well. There were lots of synergies. It made a lot more sense for us to be working with them rather than against them. We looked at private equity before we decided we would work with the PGA Tour, and it's worked very effectively. And we've shared in some of the projects that we work on together, and we're looking to continue to work in that way in the future. I think that the sport, I think golf, which has a very strong, valuable audience, and is very appealing to people. It is the sport of business, and people get to do things. The Pro-Am is a unique opportunity. Handicapping allows people to play with their heroes. So the sport is in really good health. I think that means it's attractive to investors. For us, we have a great working relationship, and my job is to make sure that we do the best thing for the members of our tour.
Yes, and I know we want to focus on what you do and not what others do, but clearly it's such an unknown, the LIV PGA relationship hanging over the sector. I mean, what do you realistically expect the end of this to look like? Are we in stalemate? Does it go anywhere?
I mean, in essence, those are decisions to be made by the two parties. We, as it were, sit there working closely with the PGA Tour, but equally we have players, members of our tour who play on LIV. We've shown that we're ready to be inclusive, and for us, the most important thing is control the controllables. What can we do? Take our product around the world, make sure it's as appealing as it can be to sponsors and to the audiences, and then hope. I mean, we are very much the funnel for global talent. Because we're in so many countries, the best young players tend to gravitate onto the DP World Tour, and some of them then graduate onto the PGA Tour. So for us, all we want to do is to continue to be that focal point for global talent.
Okay, Guy, thank you very much. Thanks for coming to speak to us. Thanks for bringing us the story. Guy Kinnings, the CEO of the European Tour Group. Good to talk golf this morning on The Pulse. Coming up on the programme, we'll get back to the market story. And the market story that is moving this morning is, of course, related to war in Iran. It's hitting global aviation, from soaring fuel costs to grounded flights. We'll get an update on that particular sector. Travel disruptions to look for. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Welcome back to The Pulse. Now, the disruption from the Iran war is impacting economies and industries across the globe. In a moment, we will discuss the disruption to the aviation sector. But first, let's look at what this means for inflation and the construction sector in Europe. Joining us now is Angelica Donati, who's Managing Director at the property development company Donati. And nice to have you in London. Thank you very much for being with us. So bring us your perspective then on real estate, the construction sector, and how it's coping with what we're seeing here. The Gulf conflict clearly has an impact on your ability to source certain materials. So let's start there.
Well, there's been a huge inflationary spike in all raw materials costs. So not just energy costs, which obviously are the most logical, but all materials from plastics to steel. I think the biggest headline we've had in Italy in the past few weeks is bitumen, which is basically road paving, surfacing material, which has gone up 50% in the first 2 weeks since the war started, which means that road paving projects are now up 25% in terms of costs. But not just that. Suppliers are just not delivering, so a lot of projects are now stalled. And because, unfortunately, as we've seen in the past few weeks, it doesn't seem to be a temporary increase, but something slightly more structural, even if the war were to end, you know, as we all hope, very soon, there is a big worry, there's a big underlying fear of the long-term effects that this will have on the sector, especially with delivery programs which are set on very tight schedules, considering that we also have the PNRR, the Recovery Fund investments, which are now supposed to be winding down. So we're in the last leg of that, and the delivery of that could be massively impacted.
Okay. Yeah. And so would you say, Angelica, that the sector is more concerned about the price it will have to pay for product or the ability to actually get product at all? Is it going to be just a very expensive raw materials and things like bitumen, or is it going to be that you can't actually get it at all because there just isn't enough of it to go around the world?
I think a bit of both. So you mentioned bitumen. We do a lot of roadworks, and our suppliers are just not delivering at the moment. But then across the board, there is just a massive push on input prices. And unfortunately, we don't have, Italy doesn't have a price revision mechanism which is automatic. Contracts that were signed before 2023 had no price revision mechanism at all. Post-2023, it's slightly different. We do have a compensation mechanism, but the industry is now calling for this to be amped up and speeded up because, of course, we can't forget that Italy is at a very important crossroads also on global supply chains. So our infrastructure is particularly crucial for delivery in this, troubled moment.
And yes, absolutely. And being in the Mediterranean, that's important, and its role in the port landscape. I wonder what businesses such as yours have learned from going through the COVID experience and then going through the invasion of Ukraine and all of these events globally that pushed up prices, pushed up construction prices, made supply chains more precarious. Is there a sense that companies are more resilient this time around? They know what to do in this situation, or the crisis is just different each time?
It's very different. It's different each time, and unfortunately what we've seen is that we're at our third shock in 5 years. So we had the war in Ukraine, we had Gaza, and we had COVID, so actually this is probably the fourth, and now we have this. And every time what we've seen is prices go up, but then they don't fully correct back down. So it kind of gets, the increase in costs gets baked in to our baseline. We are in a better position now than we were before COVID, because thanks to this important injection of, nearly 200 billion euros of investments into Italy, thanks to the PNRR, we were able to not just invest massively in our infrastructure and other key parts of the Italian economy, but our companies were able to reinvest in themselves and recapitalize. So we all come out of the COVID era much stronger. However, nobody's equipped for this kind of shock, and everything that's been put in place to deal with inflation, to deal with price shocks, is not built for this kind of spike and this kind of unpredictability, especially because we don't know when things will then normalize again.
Yes, this has been described by the IEA in quite stark terms. Lots of people talking about this as the worst oil shock since the 1970s. Maybe it becomes as bad in some ways as previous events like the 1970s. I mean, what are those who've been in the industry for a long time, what's the conversation like about how this compares to past crises?
It's interesting because I've read the research as well. Macquarie has said that if the war continues past June, we could see $200 a barrel, and that would be devastating for the global economy. We've seen inflation forecasts go up. The OECD has now said that inflation on the G20 level will be 4% this year. Data for Europe and Italy has been going up already month on month. But I don't think anybody has quite factored in how dangerous this is. From what I've been reading, what I've been seeing, it's still being seen as a short-term spike and a short-term crisis, whereas it's very clear that even if the war ends tomorrow, as we were saying, the long-term consequences will last and will be quite strong. And so I think we need to start thinking now of what we can build in structurally to support the economy, support our key sectors in this transition period out of a kind of low inflation state to a high inflation state.
Angelica, thank you very much. Thank you for joining us. Good to hear from you. Angelica Donata, Managing Director at Donati. Let's pivot to the aviation sector then, another sector that's being hit, of course, by all of the developments in the Persian Gulf. Shares in Air France KLM are lower this morning. That's after the group kicked off the race for TAP, submitting the first known bid for a stake in the Portuguese flag carrier. It comes amid the war in Iran, disrupting global aviation with soaring jet fuel prices, airspace closures and widespread flight cancellations hitting airlines worldwide. Kate Duffy is our aerospace reporter and joins us now. Let's start with the M&A story, which perhaps is quite incredible timing or maybe opportunistic. Kate, what can you tell us about the bid to acquire TAP?
It is, well, 3 airlines have been in this race for over the past year now to acquire TAP. So this is the Portuguese flagship carrier. It's one of the last medium-sized private airlines in Europe, and it's got a great network with strong demand into South America. So ultimately, that will build out one of these 3 airline groups that are going for it at the moment. That is Lufthansa, Air France, and IAG. So far, Air France is the only one to submit the non-binding offer. The deadline is today, so we're still waiting for Lufthansa and IAG, but we have heard that IAG, and we've reported that they're likely to abandon the deal. So we will find out in the next couple of hours as to what the decision will be. So yes.
And so what further impact to travel disruption can we expect over the coming weeks? So pivoting to the effects of the war in the Middle East, paint a picture for us, Kate. What are you hearing?
Yeah, I mean, it really depends on how long the war lasts, of course. We've seen a lot of airspace disruption in the Middle East. A lot of the Middle Eastern carriers are really struggling with the missiles flying around and having to operate and avoid all of that disruption. Many of the European carriers have, redeployed their aircraft out of the Middle East and put those aircraft into other routes, existing routes into Asia and the US. And US carriers, although they are on the other side of the world, they've also been affected by this in terms of they don't hedge any oil, and therefore their prices are rising. Having said this, executives have said that transatlantic demand is strong and people are booking a lot of tickets during this period. And this could be because of the fact people are trying to lock down these tickets before they increase even further in price. So lots of movement in the sector at the moment.
Yeah, we've certainly seen phases and periods where there have been explicit surcharges for fuel, haven't we, Kate? So we'll see how that develops. Our aerospace reporter, Kate Duffy, thank you very much. European equity markets then on the back foot this morning. US futures also reflecting that negativity, a re-escalatory interpretation of what we heard from President Trump. So that seems to be where the market is focused, and so futures pointing lower this Thursday. Have a good long weekend, everybody, if you're getting one. Bloomberg Brief is up next. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time
sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Markets on edge, stocks lower, oil surging as President Trump's primetime address dampens hope for a swift resolution in the Middle East. Tariff announcements on deck. The U.S. set to roll out a tiered system for steel and aluminum imports, as well as new levies for some drug makers. And NASA astronauts in a historic mission to lap the moon reach a stable orbit. All right, well, it is not liftoff for stock futures this morning. It is quite the opposite. After 2 days of gains, we are looking lower because of what you see in front of you. Brent crude at 108.84 a barrel, very close to 109, and that's spread with WTI now just about $1.50. It's incredible, the change in markets overnight. Terry Haynes of Pangea saying Trump punctured the market's Iran fantasy about a quick, definite end to the hot war. That's for sure. There was not much that was clarifying about what Trump had to say, and it didn't sound like he was backing down either. If you look at the 10-year yield, we're up about 5 basis points, and that's across the board, and not just in the United States, but around the world. Japan had basically a failed auction earlier, and that 10-year yield was up 9 basis points. Let's flip the board and look at futures, because after those 2 nice days of gains, look where we're headed. Lower, it looks like, if we hold on to these losses until the market open. And then the dollar index back to the war trade, up 0.4%. All right, let's get to some individual movers now. Here's Abir Abu Omar.
Good morning, Vonnie. Well, with what is happening in the U.S. and the pre-market image that we're seeing, it's really hard to find a sector outside of energy that is doing well. And this is what you're seeing reflected on the board behind me, and that is the likes of Chevron, Occidental, Exxon, really surging this morning as opposed to what we're seeing in the futures picture, down more than 1%. And this is on the back of President Trump's remarks yesterday that really put further those talks for a resolution in the Middle East after optimism that we saw in the session prior to that. We flip the board and the negativity starts to show, and that is reflected in NVIDIA. If we flip the board a little bit, and well, the board is not flipping, but NVIDIA is one of those stocks that is not doing well this morning, Vonnie, and that is on the back of those sort of risks that we're seeing in memory chips. But we flip the board again, and the negativity is still pretty much there in airlines. Now, airlines are in a sector that is not doing well at all today. We saw this performance follow a negative performance in Europe, and that is on the back of surging jet fuel prices and crude products, Vonnie. And we just saw a hot headline flash across the terminal just less than 30 minutes ago about European diesel surging above $200. So this is also reflected in the airline space, with European airlines also not doing well. A Morgan Stanley report downgrading some names on the back of soaring jet fuel prices as a result of the war in the Middle East. So a really negative day we are looking for at the open today. Vonnie, back to you.
All right, Abir, thank you so much. Abir Abu Omar will be back later in the hour. Also coming up this hour, more on the market swings and inflation woes. We'll speak with Peter Kinsella of Union Bancaire Privée. President Trump fails to calm anxiety surrounding the war with Iran during his primetime address.
We are on track to complete all of America's military objectives shortly, very shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. In the meantime, discussions are ongoing. Regime change was not our goal. We never said regime change, but regime change has occurred because of all of their original leaders' death.
Certainly, investors not reacting too well in terms of risk, at least to what the president had to say. Joining us now from Washington, our Washington Deputy Bureau Chief role is Laura Davison. Laura, markets were not anticipating this kind of a speech, particularly after having been set up, it seemed like all day, by the president, giving interviews to various outlets, suggesting that this whole thing might be over in 2 or 3 weeks.
Yeah, there was a lot of optimism going into this address that there would be some sort of concrete plan, some sort of announcement about what the scaling back of this war would look like. Instead, investors got the opposite. They got even less clarity than what we had had in recent days from a variety of different statements from the president. He, said that he was going to be ramping up attacks on Iran in the next 2 to 3 weeks. He said he then also wants to see, a deal with Iran at the end of that period. Hard to see how that comes together. And then if there is no deal, then he would look to target electricity sites within the country, which would be a major escalation. So really, Trump here is sending a lot of mixed signals, clearly trying to keep all his options open, both military and diplomatically. But there was not a sense that, that there was some sort of resolution, whether diplomatic or military. He didn't really give any indication of what his key goals were. That's why we're seeing some of this market reaction. And all of the diplomatic push has really been shifted to a group that's being led by the UK, a group of 35 countries talking about ways to open the Strait of Hormuz. That group does not involve the U.S. So we really have sort of 2 tracks here happening of one, the UK and other U.S. allies operating separately from the U.S., while as Trump is continuing to talk about, bombing, but also, nebulous peace talks.
Yeah, exactly. And that group of 35 plus the UK, as you say, trying to figure out some way of maybe incentivizing Iran to open the Strait of Hormuz, if not trying to force Iran, although I think that's been proven to be undoable. A few hours before the president's first address to the nation, we had an open letter from the Iranian president, Laura. How unusual is that, and what was his objective?
This is highly unusual. This is the kind of thing that we have rarely seen from Iran, to issue some sort of open letter to the American public, where it was highly critical of the U.S., its negotiating tactics, and sort of encouraged Americans to look beyond what they say is sort of maximalist, shady rhetoric from the White House. This is an interesting turn of events here, in that it is sort of Iran using the playbook that Trump uses a lot of go out on social media, be big, bombastic, bombastic, criticize your enemy and try to see if you can, negotiate that way in public in a very flashy sort of way. Unclear that this is going to do a lot to sway the American public, but it is a sign that, Iran is not defeated. They are not looking to kowtow to the American president, and the fact that it hit just a couple hours before Trump was set to have this big address, which turned out to not really have packed the punch that many thought it would, just signals that this conflict is not, at least diplomatically, anywhere near its end.
Yeah, absolutely. Laura, thank you so much. That is Bloomberg's Laura Davison. And you can follow our continuing coverage on Iran. Just go to TLive Go, TLIV Go on your terminal. So oil soaring again, along with grain prices and other gases and refined products as uncertainties around the war remain high. European diesel futures, for example, climbing as well. Converted to dollar per barrel terms, they hit $200, the highest since 2022 amid limited supply. Here for a closer look now is Bloomberg's Emma Ross Thomas. And Emma, we have plenty of countries actually sort of trying to scale back usage of fuels. For example, South Korea. We have Japan looking to the United States for helium and so on. How widespread is, I don't want to say panic, but is the, fragility of these markets?
Yeah, so I think from the very beginning, almost a month ago, the panic, those measures that we saw that most in Asia, didn't we? That the hit, the queues, the rationing, the attempts at stockpiling that was happening in Asia. Australia is another market where we've seen a bit of strain. As you mentioned earlier, price of diesel above $200 a barrel, and what we have seen in Europe as this crisis goes on, what we're hearing in Europe that there could be shortages in the coming weeks. We've spoken a lot about jet fuel, haven't we? And what we're hearing in Europe is that we're fine for April, but come May, which is not that far away, there could be issues. So yeah, the refined product is certainly from the beginning where we've seen more stress, haven't we? And that's only set to continue.
Yeah, and if I remember rightly, back when Russia invaded Ukraine, we sort of didn't see the full extent of the effects of that for several months. In fact, it wasn't until really well into the winter, Emma. I mean, is that something we should be looking forward to at this point?
I mean, with this we've said this from the beginning, haven't we? It's all about duration. It's just over a month now. The scale of the supply loss is huge. The duration for now, it's a month. And I think one of the reasons that the market is freaking out today is because of the Trump comments last night really left it a bit open-ended as to how long this could go on. And so just the longer it goes on, the more the stress.
Yeah, Emma, so remember when Trump changed the deadline for Iran to sort of, meet his demands, and if Iran didn't, then he was sort of, all bets were off the table, energy infrastructure was really in play. Is that the deadline we're looking out for next? Because that's early next week.
Yeah, so I think the market is looking past. I think that the latest guidance we have is what we had last night from Trump, and I think that's what the market is focused on. I think there are two things, right? One is the closure of the Strait of Hormuz, which everyone is obsessed about, but then there's the other piece, which is the risk of energy assets being hit. And one thing that Trump said last night, which I think is quite important, is he said we haven't hit the oil assets, but it would be the easiest target. And of course, one thing to remember is that Iran has been exporting a lot of oil. The one country that the Strait of Hormuz is not closed to is Iran, and that is one of the. When we think about the buffers that are available, one of those buffers is actually Iranian oil that is still getting out to world markets. And so, if Iranian assets were hit, that would be another jolt to the market. And of course, then you also think about retaliation to other energy assets in the region. So it's these two things, right? It's the Strait of Hormuz closure, which is very important, but also the threat of more damage to energy assets. And I think some of the rhetoric last night probably pointed a little bit in that direction.
And it's being reflected in markets today. That is chilling. Emma, thank you so much. Bloomberg's Emma Ross Thomas. Well, domestically, turning to tariffs, the Trump administration is preparing a new tiered system for its tariffs on steel and aluminum products in order to simplify the process. Joining us now is Bloomberg's Brendan Murray. So we've been speaking to people familiar with what's going to come out today, Brendan. What are they telling us?
Well, what they're telling us is the Trump administration is finally hearing the pleas from the American importers who are having a real hard time complying with this steel and aluminum tariff program and all the products that they hit. So what it sounds like, and our reporting tells us that the president is going to announce something of a simplification of that to where it's easier for companies to decide on their customs declarations what amount of steel or aluminum in those products they have to comply with. So it's a step in the direction of helping companies manage through the tariff disruptions and the extra costs, but it's certainly not any step backwards from the steel and aluminum tariffs that they've applied.
Well, so how were derivative products treated before? Was it a self-reporting system?
So it was, you had to determine the amount of that steel or aluminum in that particular product, and then you had a tariff based on the quantity of it. What they're going to do now is base it on the price of the overall good that contains the metal. So it would appear the administration thinks will make it less complicated and make it easier to figure out what the tariff rate is going to be on those products.
If the White House is shifting tariff from content now to the full value, how are we doing the calculation? Is it going to make it more costly or less costly for the importers?
It's going to. We don't know yet, and we'll have to wait to see what the White House announces in terms of the details of this. But it's certainly not going to make things less costly. The tariff rates will still apply. It's just going to the 50% and the 25%, but they're going to move it around, and what those rates apply to will be different. And so it doesn't sound like it's going to make anything less costly or reduce the tariff burden on American importers.
Just the difficulty. Refunds. Where are we on that?
So there's a mad dash to apply for refunds, and there are and the process to do that sounds very slow. It could take months, if not more than a year, for companies to get refunded the tariffs that they paid. And of course, you had companies that paid the tariffs that didn't pass those costs along to their customers or their suppliers, and those customers and the suppliers are coming to those companies and saying, "Hey, if you're getting a refund, what about a break for us too?" So it's become a real tangled mess that the Customs and Border Protection Agency has to deal with, and but ultimately it means $166 billion of money that's sitting in the federal treasury that needs to go back out to the companies that paid it.
Yeah, and at some point the treasury market will be looking at that rather than the impact of war. Brendan, thank you so much. That is our trade czar, Brendan Murray. Now, two other top stories trending on the terminal this morning. The UAE has called on the United Nations to take immediate action to reopen the Strait of Hormuz. The letter asks the Security Council to authorize various measures, including force, to restore free passage along the strait. Air France KLM submitted its first bid for a stake in Portugal's flag carrier TAP Air. Air France KLM, Deutsche Lufthansa and IAG were all invited last year to submit preliminary offers for TAP, one of the few remaining mid-sized carriers in the region open to acquisition. French authorities have charged and jailed an adult and 3 teens over a foiled bombing attempt near Bank of America office in Paris. Authorities are investigating possible links with a pro-Iranian propaganda video released by a group targeting the Jewish community in Europe. Coming up, looping the moon. NASA's Artemis 2 astronauts in safe orbit and set to fly further in space than anyone has ever been. More next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslinda Amin in Davos, Switzerland, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Ignition and liftoff. The crew of Artemis 2 now bound for the moon. Humanity's next great voyage begins.
And that was just about 10 hours ago now. NASA successfully sending 4 astronauts on a 10-day mission around the moon. The Lockheed Martin-built Orion capsule remains in stable orbit now as the crew gets closer to the lunar surface than anyone has been in more than 50 years. Bloomberg News' Jerry Doyle joins us now. So the obvious question is, why did it take 50 years to get back there, Jerry? No appetite or no resources?
Well, I mean, I think the simplest answer is that space is very hard. It's extremely resource intensive to send somebody just into orbit. Getting all the way to the surface of another celestial body like the moon is even more resource intensive. And then after the Apollo program ended, NASA was looking for ways to spin things forward, and they came up with the space shuttle program, which was extremely innovative for its time, a reusable space plane. And so they was just focused on exploring Earth orbit and the kind of science you could do there. But now I think there's a lot more sort of political impetus to get back to the moon.
Now, Artemis 2 is going to go around the moon. Explain to us how it actually does that, because that hasn't been done before.
Well, the Apollo capsules and those spacecrafts obviously did go around the moon. This is sort of a shakedown cruise, as it were, for Artemis 2. They're going to try out all of this new hardware that's been developed for the program, taking it not just into lunar orbit, but like the long path that it takes to get from the Earth to the moon. They're going to use that as an opportunity to test new hardware, test new techniques for maneuvering the spacecraft, sort of try out ways that they can try to dock with other hardware in space and communication systems, just sort of make sure all of this stuff works properly for the much harder task of actually landing on the surface.
Yeah, so we're not even close to landing on the surface. That'll come in a future mission, I guess, and then maybe even a moon station like the International Space Station, right? To try and learn more about the moon and its orbit.
Yeah, NASA originally had planned to have something in orbit around the moon called the Lunar Gateway. Now they're sort of looking more at a surface-based installation where people can live permanently to do science and research, look at ways you could extract different resources from the lunar surface that will hopefully, they think, make it easier to explore the rest of the solar system.
All right, Jerry, always exciting to talk space. Thank you so much. Bloomberg's Jerry Doyle there. Let's take a look at these markets because we're in for an interesting final day of trading for this week. Of course, we're headed into the long weekend. And if you had disappeared for 24 hours, you would be shocked to find futures lower after 2 days of gains. One of those days, an absolute whopper of a day. Well, we're giving back some of those gains today. S&P futures pointed to a lower open, and that's across the board. A really down day in Asia as well. Oil completely ripping higher off the back of President Trump's first primetime address to the nation since the beginning of the war. As you can see, the dollar index is higher, gold is off, Bitcoin is off. The war trade is firmly back on. This is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And
I'm Christina Ruffini.
We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Bonnie Quinn in London. Time now for your front page news. First up, on the Washington Post, the Supreme Court appearing skeptical of President Trump's effort to end birthright citizenship. The Post says the High Court looks poised to uphold the legal principle that almost everyone born on U.S. soil is a citizen. A decision is expected by June or July. Next up, on the New York Times front page, Republican leaders agreeing to move forward with legislation to reopen the Department of Homeland Security. It resurrects a bipartisan deal that President Trump and the House GOP had rejected most vociferously last week. The Times says it's a sharp reversal by the lawmakers and by President Trump. And finally, the Financial Times reporting Gulf states are reconsidering building costly new pipelines to avoid the Strait of Hormuz. The FT says Saudi Arabia's 1,200-kilometer east-west pipeline was built after the Iran-Iraq tanker war in the 80s and is now a key lifeline. The kingdom is now considering how it can export more of its daily production by pipeline, and other Gulf countries are also reassessing options. Take a look at how your market is shaping up for this Thursday and final trading day of the week. We have futures pointed extraordinarily lower after a down day across Europe and Asia. The dollar index much stronger and yields up at least 5 basis points across the board. We'll be speaking with Peter Kinsella of Union Bancaire Privée next about these markets. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Markets on edge, stocks dropping, oil surging as President Trump's primetime address dampens hope for a swift resolution in the Middle East. Tariff announcements on deck. The U.S. set to roll out a tiered system for steel and aluminum imports, as well as new levies for some drug makers. And NASA astronauts in an historic mission to lap the moon reach a stable orbit. So one silver lining in that group of headlines there. I tell you what, it's not so silver lining a type of day in the markets. If you look at Brent crude, we're trading above 108, only $1 lower than that for WTI, and it's impacting all asset classes around the world. You're seeing the yields on sovereign debt rising at least 5 basis points. In Japan earlier, the 10-year was up 9 basis points, and it's really just this reversal of the trade we had seen for 2 days previously as the markets began to hope that maybe there was some kind of resolution. The U.S. might pull out. There might be some kind of a Strait of Hormuz type closure, or at least clarity to the situation. But as Terry Haynes of Pangea said, Trump punctured the market's Iran fantasy. And boy, is that fantasy punctured today. Let's take a look at futures. Lower after a down Asian session. At one point, the Kospi was down more than 6%. And the dollar index, as you might imagine, is getting bid by about 0.4% higher now across a basket of currencies. Let's get to some individual movers. Here's Abir Abu Omar.
Good morning, Vonnie. We spoke yesterday about big oil in the U.S., and it was a slightly different picture. It was all in the red. It was one of those sectors that were suffering yesterday, down nearly 4% at the close of the S&P at the last trade session this morning, and post the remarks that we've seen from President Trump suggesting that this war in the Middle East could go on for a little bit longer than we had expected yesterday. That's driven big oil stocks in the U.S. higher as much as 3% in the case of Exxon here, and that follows a similar trend by the energy sector in Europe. Now we flip the page and we take a look at NVIDIA. NVIDIA is suffering today. This is from a wider sentiment that has soured in the tech sector. This follows a negative trade session in Asia, but also in Europe. We saw the likes of ASML down pretty significantly at the open earlier on. And then finally, we take a look at airlines in the United States, also following a trend from Europe earlier, and airlines are suffering this morning, down nearly 4% in the case of United Airlines on the back of those surging jet fuel prices as a result of the tensions in the Middle East and the possibility that this escalation will likely go on for longer than expected. Airlines are not doing very well, just like they aren't in Europe this morning. Vonnie, back to you.
No, that's for sure. Abir, thank you so much. Secondary effects to be felt for some time to come. Well, President Trump stirring the market with threats to escalate the war with Iran.
We are on track to complete all of America's military objectives shortly, very shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. In the meantime, discussions are ongoing. Regime change was not our goal. We never said regime change, but regime change has occurred because of all of their original leaders' death.
Joining us now from Washington is Bloomberg Government's Mika Sollner. Mika, can you draw the through line for us between President Trump's comments to various news outlets earlier yesterday and this first primetime address to the U.S.?
Yeah, Vonnie, the White House is really aware that, that this war is unpopular with the majority of Americans, and a lot of people are really feeling it to their pocketbook and blaming Trump's actions in Iran, the military operation, to rising gas prices. So the president clearly felt like he needed to address the nation, address the fact that he believes that those costs are temporary. He called it a temporary increase in gas prices and reassured people that the economy is going to come back and that the operation is going to slow down here in the next 2 to 3 weeks, which again is a longer timeline that was initially laid out by the administration, which was 4 to 6 weeks. We're now in week 5.
Yeah, exactly. And he certainly had markets celebrating what they thought was going to be a swifter resolution yesterday, but that's not the case today. Now, domestically, there's also issues for Trump to deal with. So, for example, they're changing the tariff system. Explain what's going on to us.
Yeah, I mean, the administration has been very bullish on its tariff policy ever since the Supreme Court struck down its initial use of implementing tariffs worldwide. And so the White House is proposing the up to 50% tariffs on steel and aluminum. But again, this comes at a time where there's a lot of economic anxiety for many Americans. So we don't know yet what this is going to do and what this is going to do with everyday consumer costs. So this is yet another gamble, I believe, by the administration when it comes to what's going to kind of trickle down to the average person.
Yeah, absolutely. And we're seeing it in Trump's ratings as well as approval ratings. But we're also getting potentially new tariffs on some drug makers. Do we know any more about that?
Yeah, this could roll out as early as today. I do think that this is interesting. The administration has been leading on some of its policies. I know that leading members have been trying to pitch Congress to try and codify some of Trump's healthcare plan. This is kind of the cornerstone of the president's affordability agenda, is these most favored nation and of the drug prices, and trying to get Trump RX, the website that offers lower prices to consumers, kind of at the heart of their agenda. So I think that this is one way that they can try and put pressure on drug makers to make deals with the U.S.
All right, Mika, thank you so much for the update. So much happening every day from Washington. That's Mika Sollner of Bloomberg Government. Joining me now is Peter Kinslip, Head of UK Investment Services at Union Bancaire Privée. So, Peter, what happened in the last 24 hours? We thought this was all done and dusted, right? Although there were people out there like Ed Yardeni saying he reserved the right to change his mind again if President Trump did. What happened?
Well, I think we kind of had the opinion that Trump was trying to walk back from what's happening in the Middle East, trying to organize a situation in which he can resile and get his troops out of, and get his forces out of the Middle East and the conflict. And it seems he's doubling down. And so with that, all of the optimism we saw yesterday has evaporated overnight. And we're now preparing for the very real prospect of another 2 or 3 weeks of this air campaign. We'll then clearly make an assumption that we're going to have extreme disruption into the oil market. That's already been evident in the oil prices today, and you're seeing that across markets. Airlines slower, etc.
What happens the next time this happens? Is it a case of fool me once, shame on me, fool me twice? Whatever, however you end that.
Sure.
I can't imagine that we'll see, $20 come off oil anytime soon again.
No, not at all. I think there's a few things happening. The first is that the supply disruptions we've seen, not just in terms of stranded tankers, but also reducing in production, means that we're going to be dealing with a very lumpy profile, even if the war ends tomorrow, right? The fact that we're going towards a more extended period of war, and we're still kind of at the moment unclear what the outcome is going to be. If we have sort of Iran in control or tariffing, Straits going to ships going through the Straits of Hormuz, it means we're going to have a much higher risk premium on oil in the future, right? So whereas before this conflict started, we were all assuming, $60 a barrel for the rest of the year on oversupply, on this oversupply narrative. Now that narrative's completely gone. So I think we're going to have a deeply embedded risk premium in oil prices, at least for the foreseeable future, and that's going to have knock-on effects across the entire supply chain.
And then are we going to continue to see dollar strength at that point and real serious emerging market currency weakness?
Yeah. I think if we start with the EM weakness, right, you've already seen, obviously, Turkey, doing a gold swap, trying to support the lira. You've seen significant weakness in the Indian rupee. Both of those are big energy importers. And so really what you're seeing at the moment is terms of trade shock, but it's morphing into a balance of payment shock, i.e. Significantly lower trade balances on an assumption of higher oil prices. That poses a big risk for the euro. Eurozone imports around 8.7 million barrels per day. That's the daily oil use. If you assume $100 a barrel, going forward, that's going to knock the best part of 100 billion off the Eurozone's trade balance. So this is a really, really significant shock, right? We're morphing from a terms of trade shock into a balance of payment shock.
So what are you profiling then in terms of euro dollar, for example? Do you have a wide range of forecasts?
Well, at the moment, look, you're kind of, if you look at any balanced fund that we manage and some of our discretionary funds, we're in 100% risk management mode, right? That's been very heavy hedging of our equity portfolios, very short duration on our fixed income portfolios, and our performance has been really, really good relative to the market thus far. For the currency effect, what we're seeing is certainly a strong-ish dollar at present, the prospect of an extended weakness for the euro and definitely the Japanese yen, in the short term. But again, much will depend on the duration of the conflict, the scope, and the scale.
Will markets start to concentrate on central bank actions soon and sort of ignore the Strait of Hormuz, just sort of build in assumptions that it's going to be difficult there for a long time to come?
I think so. I think vis-a-vis central banks, they'll be very careful not to overdo it with rate hikes, because what they really have to do is you accept the supply shock. There's not much they can do about that. What central banks have to focus upon is the extent to which domestically generated inflation increases. So I suspect that market expectations on very aggressive rate hikes in the short term are probably on the wrong side. But I think we have to assume we're going to see some tightening in policy.
Well, and also it's doing a little bit of the work of the central banks for them, right? That's what Ed Giordani told Surveillance the other day. The bond vigilantes might help out here. Sure. At the same time, the Fed doesn't seem all that concerned yet, assuming that this is, another sort of transitory type of inflation shock. Will it be as transitory as the Fed is thinking?
Probably not. I think anybody who worked and lived through 2020 into 22, we kind of hate that word transitory, right? So I think any central banker using that term would only do so with extreme discretion. I think what we have to see really from the Fed, they've obviously had their meeting 2 weeks ago. In a new scenario of very extended to higher gas prices and higher bond yield prices, that is going to affect the consumer. There's no doubt about that. So I think that the narrative from the Fed could well change.
Peter, you said you were very hedged when it comes to equities. How are you doing that?
Well, we entered we kind of started hedging our equity portfolios with S&P puts and so on, which performed very, very well. We've extended those puts, from selling June into September. So in a sense, really taking profit, maintaining our sort of, I would say, hedge positions. And that's been a very, very good trade for us. We dramatically reduced the risk exposure in our funds. And again, as I said, we're just in 100% risk management mode because we're seeing a genuinely unprecedented oil price shock. And this is going to have ripple effects across markets.
If we see another, couple of days of gains like we have for the last couple of days, though, would that make you nervous that maybe you're missing out on getting back in some form?
Well, I've hedged with puts, right? I'm still fully invested, but so, I'll capture the upside there. But it's really just about the risk management using puts to do so at present.
And being on when the markets are on, right?
That's it.
You can't go to sleep in this environment. Peter Kinsella of Union Bancaire Privé, thank you. Now, to other top stories trending on the terminal this morning. The headquarters of Goldman Sachs in Paris was placed under police surveillance Wednesday night following threats believed to be from an Iranian group. That's according to the newspaper Le Parisien. Paris prosecutors said no suspicious items had been found at the site on Thursday morning. The threats come just days after authorities foiled a bombing attempt near the Bank of America office in Paris. The largest gasoline pipeline in the U.S. has restarted after an outage Tuesday. Colonial Pipeline's Line 1 stopped shipping fuel after a portion was damaged by a third-party work crew. Prolonged outages of Colonial's pipeline system can significantly disrupt fuel shipments from the Gulf Coast to the East Coast. And And NASA successfully completed its Artemis 2 launch, kicking off a landmark journey. The Artemis 2 mission aims to establish a base on the lunar surface and ultimately venture on to Mars. Coming up, 1 year since President Trump's global tariffs, with more to come. We'll take a closer look next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in London. The Trump administration is set to outline a tiered system now for its steel and aluminum imports while preparing to unveil new levies for some drug makers. This comes as we mark 1 year since President Trump's global tariff kicked off. Let's bring in Bloomberg's Enda Curran for more. So we're 1 year old on the global tariff push, Enda, and today it looks like we're going to get a little change in some of these tariffs. Explain to us what's going on.
Well, in terms of the steel and aluminum tariffs, one of the big complaints from business has been how you calculate the value of steel and aluminium within products, which adds to the overall tariff rate on a product. And our colleagues are reporting today that there's probably going to be an announcement around that the calculation will be based on the total value of the product, total value of steel and aluminum in a product with a tariff of around 20% and being tiered then as you go down. So it's a way of simplifying how you calculate the tariff on steel and aluminium, which has been a big complaint for business people. And the other thread today that our colleagues are reporting is that we may get some new tariffs announced on pharmaceutical companies who, in President Trump's view, haven't been doing enough to bring down prices here in the US. Though we don't have details on those tariffs yet, we know that they've been threatened to be very high level. But, taken together, it just adds to the idea that the hawkish trade policy pursued by the administration continues.
Just on the first part of that the agenda there, and is the White House changing the way it's structuring these tariffs to change how it's calculating sort of derivative products and how the whole is calculated? Is it going to make it less or more costly for importers?
Well, I think the idea is to simplify it. One of the complaints from business people in this particular instance has been, how do you calculate, you know, the what percentage of a product is made up by, say, steel or aluminium, and then therefore how do you calculate the tariff from that? So there's been some pushback on that from the business community, but it just adds to the idea that after a year of roller coaster trade policy, you mentioned we had the Liberation Day 1 year ago. Since then, we've had exemptions. We've had trade negotiations, tariffs on pause, on hold, tariffs going back into effect, an effective tariff rate going up and down, and of course the Supreme Court ruling. But after a year of all of that, we are still where we started with the administration. They are very serious about pursuing the use of tariffs across the board on imported goods to enforce their trade policy, and whether that's pursuing options through existing trade avenues that they have, for example, the Section 301 that we hear a lot of conversations about, or even drilling into derivative products like steel and aluminium, what part of a product is made up by steel and aluminium, and of course now potentially also pursuing pharmaceutical companies. It just adds to the idea that despite all of the up and down, the volatility with trade policy, the end point remains the same. They are pursuing tariffs and very serious about imposing tariffs on goods.
Yeah, and one way or another as well. And the pharmaceutical tariffs that we're going to see, are they going to be on individual companies? Sorry.
Yeah, we don't have the full details yet, but that's the expectation, Vonnie. We have had some of the big pharmaceutical companies have already made agreements with the White House to participate in a scheme to bring down prices. Of course, health analysts have their own views on that policy, but those pharmaceutical companies who haven't yet sort of come into that policy are probably the ones who are going to be at the forefront of whatever tariffs are announced. And we don't have those details yet, but it has been a long time coming. And remember, more tariffs will be imposed in the months ahead as well, because even though the Supreme Court struck down tariffs in their ruling back in February, lots of investigations are underway and will be expected to be underway in the months ahead into products coming from countries all over the world that will eventually resume in tariffs being reimposed. Now, one question is what level of tariffs will be imposed on both pharmaceuticals and other goods, given the cost of living story here, especially acute now on the back of the energy impact due to the Iran war. And of course, don't forget the political calendar with the midterms coming up in November. So there's some discussion among economists what level of tariffs will ultimately be imposed against that kind of a backdrop. But nonetheless, the story remains one of tariffs full steam ahead rather than sort of a broad-based retreat from it.
And thank you so much. That is Bloomberg's Enda Curran there with a big roundup for us. Let's get back to commodities now. We're seeing oil higher, significantly higher in today's trade. $108 a barrel when it comes to Brent, and that spread with WTI only about $1. Refined products as well also soaring. Emma Ross Thomas is back with us to explain. Emma, so like a $10 swing, I mean, that's huge. Is it that the market was overpricing the risk to the Strait of Hormuz, or was it underpricing what we thought would be the relief?
Yeah, I suppose what's changed overnight is that we've got less certainty when it comes to duration. And since the beginning, when we sort of tried to calculate is this a crisis or not? There are two factors, right? One is the scale of the disruption, the size of that shock, and the other is how long it will last. And I think one of the things that we came away from last night with is a sense that A, there could be an escalation, and B, that 2 to 3 week idea seems to have sort of taken a bit of a back seat. And so that's what's really, I think, driving prices. I would just point out, actually, with the spread, I think the TI Brent spread is still pretty wide, actually. It's just if you look at, depending on which month you look at.
That's actually very important.
Because that is quite that would be quite striking.
It would be, wouldn't it? I mean, I guess the idea is that the US has plenty of oil, and in fact, places like Japan are coming to the US for help on things like helium. So it's not just oil. There are going to be shortages of all sorts of different refined products.
Yeah, absolutely. And you saw the price of diesel above $200 a barrel, the equivalent. In Europe, we're already... So, Asia was at the forefront. I think we had this morning headlines from Korea talking about saving every last drop of fuel. In Europe, what our reporters are hearing is that in the next few weeks on diesel, there could be concerns. And then when it comes to jet fuel, which I know people are, it's Easter week and people are thinking about holidays over the summer, jet fuel, again, what we've heard in Europe is that we're okay for April, but there could be shortages in May, which is, in fact, just around the corner.
You know, I think the market was very relieved that it looked like there was going to be a swift end, but even if it goes a week or two more, is the damage increasingly done now? I mean, we were asking that question last week. Even if it came to an end tomorrow, would the damage be done? Is it done now?
Yeah. So I think there are a couple of things to unpack there. On the one hand, yes, you've got lasting damage. The case of, Qatar, LNG, they've been talking about, I think, 5 years to get that back. So that's one sort of element. The Strait of Hormuz, will we go back to the pre-war status quo? I think there are some big question marks over that. We have Iran already enacting some kind of the toll booth is what the industry is calling it. So I think there are some question marks over whether, even if it stopped tomorrow, do we go back to the pre-war normality? Probably not.
Yeah.
And then, of course, damage to energy assets.
All right, Emma, thank you so much. That is Bloomberg's Emma Ross-Thomas. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The GM report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This is how your Thursday trading session is shaping up. It is the final trading day of a holiday-shortened week, and futures are pointed well lower off the back of that rise in Brent. Up above $108 a barrel now. Yield across the board up about 5 basis points. Gold lower, Bitcoin lower. That's it for Bloomberg Brief. Surveillance is next.
would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We're sort of signaling caution here. We have not added to equities.
We want to be positioned for a rebound.
The U.S. is the best house in a bad equity neighborhood.
The market as a whole probably still has some mean reversion.
We've got a bullish and bearish tug-of-war going on here.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now, coming into Thursday following a primetime address.
We are on track to complete all of America's military objectives shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. If there is no deal, we are going to hit each and every one of their electric generating plants very hard. When this conflict is over, the strait will open up naturally. Gas prices will rapidly come back down. Stock prices will rapidly go back up.
The president offering very little news, sticking with a 2 to 3 week timeline, leaving the Strait of Hormuz closed, fueling another move higher in crude and weighing heavily on risk appetite, sending equities lower, stocks trimming a 2-day bounce.
And here we are back in whipsaw land as people take a look and say, okay, it might be now 2 to 3 weeks rather than 1 to 2 weeks, but we're talking about escalate to de-escalate, and that could potentially introduce the damage that people have been worried about to physical infrastructure. Economics, Oxford Economics, Ryan Sweet said something really interesting. He said that the military timeline differs from the economic one. And given how long the strait is going to be closed for, you can assume $113 on average for the second quarter for Brent crude, and that materially changes estimates.
Brutal. That's a big change in the outlook. We've talked about this repeatedly. This market wants 2 things: end the hostilities, get energy moving again, and after that address last night, no indication you'll get either anytime soon.
Especially when it comes to the Strait of Hormuz. The president once again said that the United States is not as reliant on it, so it's up to other countries. He said that they should really go in there, muster the courage, and try to open it up. Or he then offered another scenario where if the hostilities end, it will just naturally open up. But the problem is right now, the game is changing for the Iranians, and they want to start charging vessels to come through, and they are going to decide which countries should be allowed through depending on which flag is on the vessel.
The next phase of this is the data, the earnings that come out in the next several weeks, the guidance that comes from corporate America and leaders around the world. This is the data so far, and this is the good news. This is the good news as we approach payrolls Friday. The data so far has been good. 3 for 3 on Wednesday. Retail sales ADP, ISM, pretty decent across the board.
Yeah, the bad news, the rub, is that prices paid, the component that you people were looking at, rose to the highest level in ISM going back to 2022. Even when you look at sentiment surveys, people are really concerned about the inflationary impacts. This is what's going to affect margins. This is what's going to affect outlook. How do consumers respond to that? Yes, retail sales were strong for February. At what point does this higher cost start to suck up some of the oxygen in the room?
And tanker trackers said, to their knowledge, not a single LNG tanker departed via the Strait during March of 2026. To your point, maybe the military conflict is on one time, but the economic conflict is going to be felt for weeks and months to come. And it might be 6 months, potentially, once hostilities end, then we get normal flows back to the Strait.
Brent crude right now up 7%, 108 on Brent this morning. Coming up this hour, we'll catch up with David Stubbs of AlphaCore as a two-day equity rally stalls. Ed Mills of Raymond James as President Trump vows to continue strikes on Iran. And Stephen Schork of the Schork Group as crude climbs once again. We begin this hour with President Trump offering no clear off-ramp for the war with Iran. Our team coverage starts right now with Bloomberg's Tyler Kendall in Washington. Good morning, Tyler.
Hey, John, good morning. Well, President Trump sought to reassure Americans that the war in Iran is in the national interest as he maintains that the U.S. is nearing completion of its military objectives. Still, he also previewed that the conflict could soon escalate as he renewed threats to hit energy infrastructure. In fact, a person familiar with the matter tells us that Vice President J.D. Vance delivered a very similar message to intermediaries that there will continue to be increased threats on strategic assets until Iran agrees to a deal. This White House is maintaining that diplomacy continues and is ongoing, though at least publicly, Iran has so far denied being in formal negotiations with the U.S. And our own analysts at Bloomberg Economics say they are expecting a short-term escalation before this turns into what they are calling a low-intensity war. It felt clear that President Trump was trying to defend against foreign policy decisions, but also defend against some of those domestic policy impacts as Americans pay more for prices at the pump. And we already knew that affordability was emerging as that key messaging as we head into the midterms. And while the Pentagon has outlined those tactical successes of this mission, including degrading Iran's military capabilities and hitting more than 11,000 targets, we didn't get any new solutions from President Trump when it comes to some of those strategic setbacks. Of course, most notably, the closure of the Strait of Hormuz. John, as you well know, President Trump ramped up the pressure yesterday when it came to urging allies who get their energy supplies from the Strait to take the lead in securing it. But as Anne-Marie mentioned, he also said that he thinks that it will, quote, open up naturally once this conflict resolves.
Tyler Kendall with the latest in the nation's capital. Tyler, we'll catch up with you again soon. It's been a confusing time through the week so far. On Monday, open the Strait or else. On Tuesday, the Strait is someone else's problem. On Wednesday, a mix of Monday and Tuesday.
And ultimately, what I find fascinating is that markets continue to respond to this. And it seems like they're looking for some signal. Yesterday, the fact that there was a rally on the heels of something that could have been considered a little bit more conclusive with ending the war was just completely turned around today after a speech that didn't give them what they wanted at all. At what point does it lose its punch, right? At what point does true social diplomacy not have the same effect on markets?
Equity futures this morning, negative by 1% on the S&P. Here's the view on Wall Street this morning. David Stubbs of AlphaCore writing, equities end the year higher, but with significant volatility if the war drags on. The U.S. is a net energy exporter. There are also positive aspects to higher prices. David joins us now for more. David, good morning.
Good morning, buddy.
Tell us about those positive aspects of higher prices, please.
Well, there is, the U.S. is a net energy exporter. If you get elevated prices for a period of time, then the energy complex in the United States will respond to that. In general, the U.S. is fairly insulated from the consequences of its own actions here, right? Their energy is less than 3% of the CPI basket. There's also tremendous tailwinds that we came into the year talking about, right? You have a lot of fiscal support from the Biden bills and the Trump bill last year. You have the ongoing AI build-out. You have tremendous strength across the balance sheets of consumers and businesses in the U.S. So I'm not saying that if you have this kind of nightmare scenario where this plays out for months on end, that everything's going to be fine in the United States. But relatively speaking, the U.S. is more insulated than any other major economy.
Looking at the S&P 500, we know what the weightings are from sector to sector. What does it mean for the earnings profile of the S&P and the companies and the exposure that they've got, not just to the US story, but the international one as well?
Well, I think the point you just made about earnings season, this is going to be a great excuse to throw in any kind of issue, right? And a great excuse to not give any guidance and throw up a lot of uncertainty, maybe add a dash of job cuts along with AI. We know that the CEOs will take that excuse. But I think at the moment, what's been illustrative is the earnings profile has remained very strong. There's different ways to think about that, but if you do a dividend discount model, for example, we started the year assuming something like 15% earnings growth. Today it's only about 13. That's well above the 9% we saw in the 2010s, and well below the bubble territory of low 20s that we saw in the late 1990s. So I think the market is priced for a continuation of this huge AI build out, and that ultimately is where the rubber meets the road, right? We've all heard a lot the last few days about helium, that being an important a part of semiconductor production, and that's when it really gets real for the U.S. economy and I think other economies around the world. When does this disrupt that huge pillar of growth and earnings which we've seen from AI in the last couple of years?
The production of semiconductors in particular, which helium is a key ingredient for, on a broader level, at what point does the disruption to supply chains disrupt the AI trade and the AI build out more materially? Just if you zoom out, I mean, how do you gauge that?
I think you gauge it from a drawdown in the inventories that matter for semiconductors. Most of the producers, to your point, have 2 to 3 months of helium inventories. Those are starting to draw down. I think obviously if you were to see a much higher energy complex here in the US, you'd start to see some rethink of these energy intensive data centers, for example. But at the moment, even with 4 or 5 weeks into this, that we haven't really seen that impact on that particular complex. Now, we've seen dramatic impacts around the world. Look at Asia, look at the rationing we're seeing in some economies there, look at the stimulus that some of the European nations are putting in, look at the potential for this to morph from terms of trade shock into a balance of payments issue. So there's very severe issues around the world, but at the moment the AI complex seems to be untouched.
It seems like the fiscal impulse is going to leave equities in a decent position. Maybe not just globally, but certainly in the United States. Everyone keeps talking about how they're going to keep pouring money on this because that's what politicians do, especially of late. How much does this come at the consequence of bonds? How much does this end up leading to a steepening yield curve and a real penalization of people who are trying to find safety in fixed income?
Oh, absolutely, and this is the new world we've been in, the regime change of fixed income and equities, fixed income not hedging, equity drawdowns, and we've gone into this, of course, in a fragile position, because you had years of above target inflation, because central banks believe, rightly, that in some cases that their credibility is somewhat thin in that regard. That's what really could make this again go from bad from worse. So if we see a tipping point where certain central banks feel they have to act to defend their credibility, even though they're taking a hit to growth, but that'll probably be the ECB that does that. If we get to that type of position, that's one of the ways that this gets a little non-linear. It's a way that this becomes more of an annoyance or more of a difficulty.
If they hike rates.
If they have to hike rates. If they're kind of bullied into that by market pricing. If you see inflation expectations become unanchored. And it's crucial to point out, in the US, you've seen the opposite. 5-year and 5-year forward break-evens are down by 10 basis points since the war started. But in Europe, they're up 5 basis points. Small beer, sure, but that's the direction of travel. And again, the ECB has history here. If you go back, if you remember your history, 2011, Jean-Claude Trichet hikes twice into an energy price spike, and in 2008 as well. This is, I hope they've learned the lessons and they don't do it.
We've heard from the Europeans just moments ago, the French president, in comments to reporters, the headlines read as follows: it's unrealistic to free the Strait of Hormuz by military means. The Hormuz Strait can only reopen in consultation with Iran. Those comments just dropped in moments ago.
So basically, having the cooperation of the Iranian regime, which the United States right now is obviously striking and trying to decimate, to the president's words yesterday, this feels very different than what the president wants to see, which is the help of the Europeans sending things like minesweepers or their part of their navy to the Middle East to help them reopen it. Rutte is supposed to be in Washington, D.C. next week, according to reports, and I imagine a lot of this is going to be brought up and potentially becomes a bit more of a fractured discussion between European allies and the United States.
The rest of the world is in a really uncomfortable place right now. I'm sure you've been tracking the headlines worldwide. We've seen a series of governments in Asia shifting to a 4-day work week. We've seen fuel rationing in places like Indonesia, in Sri Lanka. This from the Australian Prime Minister to start the week as well. Over the coming weeks, if you can switch to catching the train or the bus or tram to work, do so. On the surface of things, you might shake that off, but I wonder what the next phase of that kind of address from a Prime Minister is going to be. Is it going to be if you can or you must?
Well, that's what people are expecting, that there's going to be supply rationing come at least as soon as this summer in places like Europe, if there isn't some resolution to this, because they are working through their stockpiles. And that last shipment of jet fuel, I keep thinking about that from our conversation earlier, is slated to arrive, and there is nothing after that heading to the European region.
David, there is a deeply uncomfortable COVID-type feel to some of these dynamics. How do you see it playing out in the next few weeks? Not in the US, but elsewhere.
I think it's going to be pretty rough internationally because, as you said, it takes 4 to 6 weeks for some of these ships to get there. They left it before this hit. We only got a couple of weeks of that. Then we obviously have 4 to 6 weeks of most inventory. So we're writing in our Q2 commentary that if this is not solved in the second quarter, the second half of the year is going to see COVID-esque impacts to the most vulnerable economies. Who are they? If you're energy intensive, energy dependent, and also you have some limited fiscal space and limited space to absorb a trade shock, those countries are going to be severely affected.
Is this a reason why you're not necessarily as excited about, say, going into South Korea right now, or even, dare I say, going into European assets, given that there's been a drawdown and some people are saying, well, this is a favored trade before this shock and it will be afterwards? You disagree?
I think if you could magic away the shock, I think that we would come back to the same kind of principles. But as you said, even if you shut it down tomorrow, there's a delay with the ships, there's a delay with the refinement, and then on what planet do we not have a sustained risk premium in products from this region, even if the Iranians play ball, right? Because the vulnerabilities have just been made so clear. So again, if you're importing from that region, about 3/4 of most of it goes to Asia, I think you're looking at a sustained shock that doesn't really fully revert.
What are you paying for gasoline on the West Coast right now?
I paid $7.50 a gallon on coastal California. Inland California is $5.50.
Wow.
So I'm not sure what that tells you about California, but yes, a triple-digit bill to fill up the family SUV the other day.
Brutal. David, it's good to see you. Thanks for dropping by. Thank you, sir. David Stubbs there of Avocor. We talk about the average in this country, $4 per gallon. I'm sure the Brits are laughing because it's brutal over there right now, particularly in the other European nations too. But the difference you see across this nation, the West Coast, coastal California, pushing $7 plus in some places.
Yeah, does this end up encouraging some politicians to remove some of the gas taxes that have been put in certain places, given the affordability issues for a lot of them?
I think California needs to remember they shut down refineries. They only have one pipeline. They get 20% of their products imports from places like Asia, which right now are winding down their economies because they don't have the energy. So they're in a really tough spot.
Let's give an update on News Worldwide this morning. Let's get to your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. In a primetime address, President Trump saying the U.S. is very close to completing its military objectives in Iran and vowing to hit the nation, quote, extremely hard over the next 2 to 3 weeks. Still, the speech lacked new announcements and most notably a precise timeline for an exit. President Trump also saying in the address other countries need to take the lead on reopening the Straits of Hormuz. The president saying the U.S. does not need the oil exported through the critical waterway and that the nations who depend on it should, quote, go in and take it. And President Trump busy yesterday, becoming the first sitting president to attend Supreme Court oral arguments as the justices considered a challenge to his executive order restricting automatic birthright citizenship. The court is scheduled to rule by early July. That's your Bloomberg brief. John.
Yahira, thank you. More from Yahira later this hour. Up next on the program, staying on track in Iran.
We are on track to complete all of America's military objectives shortly, very shortly. We are going to hit them extremely hard over the next 2 to 3 weeks. When this conflict is over, the Strait will open up naturally.
Up next, we'll catch up with Ed Mills of Raymond James, live from New York City this morning. Good morning.
astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
The problems persist. Even if this goes on for 2-3 weeks and it ends right there. This from HSBC. Even if the Strait of Hormuz were to reopen soon, it would take months for supply to normalize, and damaged natural gas infrastructure now means it's already a medium-term story. And that's what this market's starting to price in slowly again. Equity futures down by more than 1% on the S&P 500, the Nasdaq down by 1.7%. In the bond market, this is where things get really confusing again in fixed income, because the data this week has been better than expected. As Lisa pointed out, the ISM came with higher prices. Yields are up again by 4 basis points, 10s at 436, 2s at 383.
Although, interestingly, you're not necessarily seeing rate hikes getting priced back into the futures curve for the Federal Reserve. So it's not necessarily a rate hike type of inflationary impulse. How quickly, though, can this Federal Reserve cut rates? A real question mark now, given the inflationary shock and, frankly, an economy that is resilient enough to absorb them, and that is the key point.
Brent crude this morning, check it out, up by more than 7% on Brent crude to 108.60 on Brent so far this morning. Under surveillance this morning, staying on track in Iran.
We are on track to complete all of America's military objectives shortly, very shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. Regime change was not our goal. We never said regime change, but regime change has occurred. When this conflict is over, the Strait will open up naturally. Gas prices will rapidly come back down. Stock prices will rapidly go back up.
So here's the latest this morning. The president stirring investor anxiety, pledging more aggressive action in Iran without concrete steps to reopen the Strait of Hormuz. Ed Mills of Raymond James writing, the clear desire of the US and Iran to wind down the war will need to be reconciled within the very narrow diplomatic pathway. Ed joins us now for more. Ed, welcome to the program. Can you describe to us, in a way you've described it to clients, what the next 2 to 3 weeks might look like?
Yeah, John, I think that there's going to be an intensity of the operations. I think there is a higher probability of a ground operation, I think, that the market is prepared for. At Raymond James, we've been highlighting to clients that it will take a while for things to return to normal once the Straits of Hormuz has reopened. Our energy team has been doing a considerable amount of work on that. And I do think that there has been an expectation in this market that things were going to go faster, quicker, and cleaner than expected. And we have been telling folks some cynicism here has been warranted, and the cynicism has actually been the thing that has played out consistently over this last month.
And when you say ground operation, do you mean to open up the Strait of Hormuz for normal traffic, or do you mean for military boots on the ground to go seize the uranium?
I think, Anne-Marie, that's to be determined. I do think that there is a history of President Trump. Once he has built up a military capability, he uses that military capability. So when we see how many troops have been positioned in the area, I do think that there is a obvious desire to reopen the Straits of Hormuz. But President Trump last night did talk about that as something more natural than kinetic. There has been these conversations about the potential operations to seize uranium. To me, that's probably the higher probability. I don't know exactly how robust that is going to be. I think some of that is to be determined. But very clearly, Anne-Marie, here, President Trump is building up pressure and was telling even the kind of Iranians last night, they have a choice still here that the operations can get much more intense unless they negotiate.
And why give this speech last night? It felt like the tone of this speech was trying to get the American people on board that maybe it should have been given the first week or two of the operation.
Yeah, Anne-Marie, that's what we were discussing internally here at Raymond James, because I think there was a hope and an expectation that a speech a month into this was a speech to wrap it up. The tone of the speech was the first real rationalization directly from President Trump speaking to the American people of exactly why, and almost preparing the American people for what comes next. When you have all of those comparisons to the lengths of other wars, it is somewhat ominous. We are hopeful that this is 2 to 3 weeks from now, but there's no guarantees. I think that there was a hope that it was only going to be kind of less than a month when this started a month ago. Now we're already extending those timelines. So making that pitch to the American people, because things are probably going to escalate before they de-escalate, is kind of my biggest takeaway from that speech, Anne-Marie.
This, to me, is the key point, Ed, that this was essentially preparing the American people for whatever is to come next. Do you have a sense of what that could look like and how much it will come in concert with United Arab Emirates, with Saudi Arabia, with other alliances?
Yeah, we're seeing kind of more of those alliances could take place. We're kind of looking at the fact that Iran, in their initial response, probably kind of drew the region more together than split it. One of the key questions that we've been asking has been, how long does the United States and Israel stay together? Because there is a big concern, especially in the national security community that I talk to, about whether or not the end game for the United States and the end game for Israel are going to be aligned, especially if this goes much longer than mid-April here. And politically, you do want to have those alliances, but usually those alliances happen before an attack, build those cases, get the American people on board. As we've seen gas prices, as we've seen inflation, as we've seen other impacts of this, as we see a market reaction to that, the American people are going to put more and more pressure on members of Congress and on this administration to wrap this up sooner rather than later.
And let's just stay on international relations. There's a very strange dynamic to the address by the president yesterday, and it's as follows. For a long, long time, this country, successive governments have wanted to keep the likes of China out of these regions, keep them well away, contain any international ambition they might have. And now we're almost inviting them in to help solve a problem. Do we really want the Chinese military in the Strait of Hormuz?
No. And when we've talked to some of the national security advisors and kind of China contacts that we have, there is almost zero expectation that the Chinese military will be involved. But you do have the fact that Trump and Xi will ultimately meet here over the next month and a half. And, Trump always pulls things together, and to the extent that there are things that he is going to be asking China for, China's going to be asking us for, kind of adding in, hey, this is more of your problem than my problem, is really the subcontext of everything that he's saying with the Straits of Hormuz. It's like, yeah, it's a big issue, but maybe China needs this more. Maybe NATO members outside the United States need this more. Maybe France needs this more in particular. Come in, protect that. It is not just our problem. I think this here is a reflection, John, over the fact that he does not feel as if everyone has been willing to rally to his side on what he sees as an existential threat to the United States and to the world.
Ed, it's good to see you. Thank you, sir. Ed Mills there of Raymond James. And you see some of that playing out in the language coming from the president of France a little bit earlier on this morning.
Absolutely. The president of France is basically saying we want to work in cooperation with the Iranians to reopen the strait. Very different from what this White House wants to see.
Up next on the program, we'll catch up with Stephen Schork of the Schork Group as crude prices get absolutely whipsawed to start the new month.
problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of your net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
We just put up the biggest two-day rally on the S&P 500 since May of last year, and this morning we're taking some of it back. Equity futures negative here on the S&P by 1.3, on the Nasdaq by 1.7. The leadership in the last 24 hours coming from consumer names and technology, many of which were beaten up quite badly through the month of March. And I imagine today somewhat in reverse. In the bond market, 2s, 10s, 30s, yields shaping up as follows. More data this morning, 2 hours away, jobless claims. Yields this morning up by 3 basis points on 2s to 383.55, 10s to 436. It's a really odd moment, a tense moment in fixed income. Given we are considering the hit to growth at the same time, the data is standing up quite well at the moment.
The momentum heading into this shock was strong, and actually stronger than economists expected. If you take a look at the Bloomberg Economic Surprise Index for U.S. economic data, you can see it hit the highest levels going back to 2023. So there was definitely heat in the economy, and you're seeing this from all of these upside beats. Does that mean that we can withstand any kind of growth shock coming from higher oil prices, or does it mean that it will read through to higher inflation and actually pressure yields and prices higher on a consistent level? This is a key question in tension right now in the equity market.
Let's check out crude together. A move of 7 to 8% so far this morning on Brent and WTI. Now, you might be looking at that spread and thinking, that's really tight between Brent and WTI right now. Well, one of the contracts is the May contract for WTI. The other one is June. So when we look at Brent, we're looking at June. When we look at WTI, we're looking at May, so just keep that in mind. But ultimately, the trend is clear. Crude is high this morning. Energy prices are rallying.
And the other trend is clear. It's going higher in the United States. And this is why the president had to address it yesterday. He said, I know that there's going to be the short-term hit, not just to the stock market, but also your energy prices. Gasoline is going up. Across the country, it's north of $4 a gallon. What happens as we head into peak driving season if that becomes closer to $5? Across the country, we just heard from David Stubbs. He's paying $7 a gallon in California. In California, it's $5.81 a gallon across the entire state, an aggregate. And we are just a month in.
$7 plus on coastal California. These are real numbers, European-style numbers in some cases.
Well, and it shows how connected California, to your point, AMH, how close California is linked to Asian flows and some of the global disruptions, not to mention some of the gas taxes, and I wonder if that's going to become a question.
Brent up, stocks down. How many times have we said that over the last 5 weeks? 3 hours away from the cash open. Let's get some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. That risk-off sentiment that you described is showing up in the Mag 7 after President Trump failed to reassure investors when it comes to the timeline of this war. So that is weighing on the highest growth names in this market as we see yields tick higher. So names like NVIDIA and Tesla down about 2.5%. Meanwhile, take a look at the aluminum stocks. They are also falling this morning. On a reporting that the Trump administration is set to overhaul its steel and aluminum tariffs. Raw metals would still face tariffs as high as 50%, while finished goods would be taxed at 25%, but on the full value of the product, meaning that companies may end up paying more overall since the rates will be applied to a bigger base. And we end on Global Star. Those shares are surging 10% in the pre-market on a report in the FT that Amazon is in talks to acquire the company as Amazon tries to compete with SpaceX and its dominant Starlink network. Many have taken notice of this company and its ability to compete with SpaceX, so shares are up 230% over the last year. John?
Yahara, thank you. Thank you for the update. On our radar this morning, in a primetime address, President Trump saying the U.S. is very close to completing its military objectives in Iran and vowing to hit the nation, quote, extremely hard over the next 2 to 3 weeks. The president also declaring other countries need to take the lead on the Strait of Hormuz.
The countries of the world that do receive oil through the Hormuz Strait must take care of that passage. They must cherish it. So to those countries that can't get fuel, many of which refuse to get involved in the decapitation of Iran, I have a suggestion. Number one, buy oil from the United States of America. We have plenty. And number two, go to the Strait and just take it.
The president suggesting the critical waterway would, quote, open up naturally once the conflict with Iran ends. And finally, the Trump administration preparing to outline a tiered system for its broad tariffs on steel and aluminum products, just 1 year on from Liberation Day.
The United States can no longer continue with a policy of unilateral economic surrender. We cannot pay the deficits of Canada, Mexico, and so many other countries. We are finally putting America first. The United States will implement reciprocal tariffs on other nations.
1 year on, Bramo. 12 months is up. What a 12 months it's been for the trade story.
So now we're looking at a clarification. This is a simplification of saying you don't have to measure how much steel and aluminum is actually in specific goods and then figure out that that's 50% tax. It gets very confusing. We'll just have a flat tax for 25% if goods. Taking a step back, this just shows how unstable the parameters are for any kind of policy analysis right now. Sure, we're 1 year on. We're getting clarity on policy. It's still being created. Now we've got an oil shock. How do you analyze all this and understand how to price it into the future if it is changing at such a rapid pace? And this is one of the big challenges right now, to really come up with even a framework to look at the current moment.
Well, the administration is fixing a crisis of their own making. And this has been a massive headache for corporate America when it comes to the derivatives of steel and aluminum in products. So say you're going to import an aluminum pipe. Okay, that's still going to be 50%. But if you have, say, less material in a certain product, that rate's going to drop to 25%. And the real issue for a lot of companies has been something like this. A little aluminum or steel on the cap of a lip gloss. You were getting hit with a crazy tariff. Basically, now they're saying that's going to drop to zero. So this was a crisis in their own making. It's been a problem for corporate America. Corporate America has been lining up at the door of the administration saying you need to simplify it. And they said, oh, look, we heard you. We're simplifying it. Now it's just 3 tiers.
Let's just leave the steel story to one side and just think about the last 12 months. You were in the Rose Garden that day when the president made that address. And initially, we thought maybe it would be a baseline tariff of 10%. And then remember, the market started to rally.
And I sent you a picture.
And then I saw the picture.
These are the real rates.
With these crazy numbers on. And in the weeks after that, before we got some form of capitulation, not total capitulation, but the weeks after that, the forecast was this would lead to really high inflation here in the United States and cause tons of economic problems. 12 months later, we haven't seen a great deal of that relative to what people expected 12 months ago.
No, we haven't. And that's what a lot of individuals in the Federal Reserve have talked about, and a lot of individuals, of course, in the administration, that this has been one-time hits. Companies have been able to deal with it and maybe pass along some of it, and some of it they've been able to just have to absorb. I think what the problem right now is when you're talking about what's going on currently in terms of energy prices is there's really no outline of what can happen, and consumers might just start to make their own decisions without companies being able to really change anything, because discretionary spending, more of that is just going to have to go to energy.
12 months on, we've got another supply-side shock. Crude prices surging as the Strait of Hormuz remains effectively closed. President Trump downplaying the economic fallout of the war so far.
Many Americans have been concerned to see the recent rise in gasoline prices here at home. This short-term increase has been entirely the result of the Iranian regime. When this conflict is over, the Strait will open up naturally. Gas prices will rapidly come back down. Stock prices will rapidly go back up.
Stephen Schork of the Schork Group writing, Hormuz remains at risk and ceasefire prospects are weak, pointing to a prolonged geopolitical disruption to global flows. Stephen joins us now for more. Stephen, welcome to the program. Let's just run with the base case, as presented by the president. Things could change, I know that, but let's run with 2 to 3 weeks. Where would this energy market be? Where will it be in 2 to 3 weeks?
Yeah, absolutely. So at the rate we're going right now, the way we've modeled it for the next actually 3 weeks, the current time frame for the spot market right now is $103 a barrel. What was our top, was our initial, we'll call it our one standard deviation envelope and all of the simulations that we've run in potential price paths. Now that we are well beyond that, what do? We begin to look for that next. And because of the volatility that's been introduced, we have extremely fat tails on the distributions of potential outcomes. 3 weeks hence, we could be looking at $133 in oil. So, John, what we're essentially looking at or doing is the United States, its oil, and the contract that we're following, in this case, NYMEX WTI, that's been the cheapest barrel in the world. Now what's happened is the arbitrage is well established. So now you're having a tremendous amount of buying interest coming in from Asia, coming in from Europe, and hence we've been the cheapest barrel. But because of that buying interest, because you just can't get oil from Asian refiner from your typical sources, you're going to start bidding that oil higher. And that's what I think we're starting to see in the Gulf Coast, is that U.S. prices have been suppressed over the past 4 weeks, but that now it's starting to catch up to reality. And therefore, over the next 3 weeks, as this disruption continues, certainly the path is higher to our second tier envelope, which is, like I said, $130, $134 a barrel.
Is that high enough to cause demand destruction for people to pull back on their use of oil or their ability to get oil enough to get oil prices back lower in the near term?
Based on recent observations and economic theory, no, it's not there yet. We have to keep in mind that demand elasticities for gasoline have changed tremendously. I'll give myself as an example. I drive a plug-in electric hybrid. I fill my car up about once every 2 to 3 months. Now, juxtapose this back to 2008, when oil prices peaked at $149 a barrel. I was filling my SUV up every single week. So that was an incredible pain point. That has changed over the last 15 years. So that part was, so what has happened is back then, if we adjust for inflation, $3.60 at the pump was that pressure point. That's that inflection point where demand started to fall off. We are higher because we've introduced more variables into the equation. So based on what we've seen recently, i.e., we're still $1 below a gallon where we were in 2022, and that did not destroy demand. So we'll look to see oil prices up of $150, $160 a barrel before I think we start to see the market correct and demand destruction kick in.
Stephen, are we done, you think, with verbal intervention? Has it run its course?
Well, are we done verbal? So, trying to jawbone the market or trying to, I don't think so. I mean, I think it's just something as an analyst, as a trader, you just have to endure. And so this is why we look at the spread markets. The forward curve in any given market is your indication of where we're potentially going. And so when we see that, when we look at what has transpired now over the past week in WTI with the curve, that is an extreme bid or price increase on the front end of the curve for those prompt barrels, but that is now also starting to cascade down long from the curve. And then we look at a relationship between WTI, Dubai, or for instance, we have oil production in West Texas delivered into Houston that is trading at a $12 discount to the global price of oil. And that and there's a backwardation along that, meaning that there's a strong bid for West Texas oil, and hence why we're still bullish on this market. And so regardless, you could verbally, you could address in the market and say anything you want. The market is reality, and what the reality is telling us, it's that prices are here higher, and they're going to be higher for longer, certainly over the next 3 weeks.
Will energy companies capitalize by actually reinvesting and expanding production?
Eventually, but what we'll see now, and if you're looking at quarterly earnings for if you are a refiner looked great. I mean, you have diesel fuel that's trading at $170 a barrel against $100 crude oil, or gasoline trading at $130 a barrel against $100 oil. So the refinery margins are going to look extremely great coming through the first quarter. But now, as we transition to the second quarter, as we've said, that U.S. prices are starting to catch up. So that is going to be a bigger hit now. That is what has been a boon for Gulf Coast refineries, that wide margin between product prices and crude oil prices. That's catching up, and oil prices are catching up, and that's going to begin to squeeze margins. So we're going to see a lot of volatility. What was good for refiners last quarter is shaping up to be, especially when demand is starting to pick up coming into the second quarter. So you've got the double whammy of domestic oil prices catching up to the global price of oil at a time, second quarter going into summer, where demand for the output of that refinery is going to surge.
Stephen, I don't just want to talk about price, I want to talk about shortages and outright shortages. This from the Australian Prime Minister. We mentioned his comment earlier on today. Over the coming weeks, if you can switch to catching the train or bus or tram to work, do so. The EU Commission suggesting people travel less across Europe. You can track, you've got visibility on the tankers that are arriving and won't be arriving. You can see the cushion that some of these countries have got, the supply they've got, the inventories. How close are we to a shortage where these governments are actively telling the people to stop doing things in the same way that they are in Asia at the moment?
Yeah, absolutely. So looking at the prompt month, which has about 3 more weeks, that time frame that the president supposedly says we're going to be out of there or wrap this up, the market's highly skeptical. So I'll give it that 3-week time range where we'll start to see certainly economies in the Far East, and now we're starting to see economies, because that Atlantic Basin spread is starting to tighten up. Economies in Europe begin to seize up. Here in the United States, oil inventories are sitting at we just got the weekly update yesterday, sitting at a 3-year high. So there is oil here, but the problem is it's not where it needs to be. Yep. So even though we do have, and the president might want to say buy American oil, that's great, but tanker logistics limitations, there's just a limit to how much that can sate that. So while here in the U.S., as we said, oil prices, or excuse me, oil supplies are fat 3-year highs, they're really beginning to seize up. And that's why we're starting to see the Brent market kind of, or WTI now outperforming Brent at this point, because European buyers, refineries are coming out of their, once they come out of the maintenance season, they're going to be buying a lot more oil, a lot more U.S. oil, but there is a limit to how much. So we are 2 to 3 weeks away from a shortage that we're already seeing that's going to grow exponentially over the next couple of weeks.
Stephen, it's good to see you. Thanks for dropping by and getting us up to speed. Stephen Shork there of the Shork Group with some sobering comments at where we'll be in the next 2 to 3 weeks.
Yeah, and we're talking about, he was primarily talking about the United States, but you look at Southeast Asia, as you were mentioning, about 90% of all of their oil and gas comes from imports, and they don't have the capital to really invest in supporting that. So that's leading to people staying home. That's leading also to people not being able to fly there. So that's also affecting tourism. It's a double whammy on all sides.
Brent crude around 109. Let's get you an update on stories worldwide with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. The UAE is pushing for the UN to authorize a range of measures, including force, to reopen the Straits of Hormuz. The Gulf nation is calling for the organization to take, quote, immediate action. A virtual meeting will be held today to discuss a plan. GOP leaders striking a deal to reopen the Department of Homeland Security, ending the 6-week-long shutdown. The agreement, which had been rejected by President Trump last week, fully funds the department through September. A vote is expected to come as early as today. And Stellantis is in talks to build EVs in Canada with its Chinese partner Zhejiang Leapmotor. Sources telling us talks are in the early stages, but if they proceed, this would mark the first major auto investment from China after the countries agreed to reduce tariffs on Chinese-made EVs. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, pushing ahead to payrolls.
You look at certain indicators that would tell you the labor market is super tight. There are labor shortages in certain industries. I think that hiring rate will remain low for the foreseeable future.
Up next, we'll catch up with Nita Richardson of ADP, live from New York City. You're watching Bloomberg TV.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Stocks are declining this morning. We're down by more than 1% on the S&P, negative 1.6 on the Nasdaq, and the bond market yields creeping just a little bit higher, 2s, 10s, and 30s, with this move in energy. Crude higher, Brent pushing much higher, higher by around 8% right now, just short of 109. Under surveillance this morning, we're looking ahead to the data, pushing ahead to payrolls.
You look at certain indicators that would tell you the labor market is super tight. There are labor shortages in certain industries. People are saying it's very difficult to find a job, right? And that's why they're not quitting. Before the conflict started, disposable personal income, which is essentially income adjusting for inflation and taxes, was already slowing. I think that hiring rate will remain low for the foreseeable future.
So here's the latest this morning. Traders looking ahead to the March jobs report, with our survey expecting 65,000 jobs to be added. The data will follow an upside surprise in the ADP private payrolls report. Nita Richardson of ADP writing, although hiring has slowed, pay growth has been stable, which helps support consumer spending. Nita joins us now for more. Nita, this is a central question for a lot of people right now. Just how tight is this labor market? Away from payrolls growth, what do you see with things like unemployment, and what do you see with things like wages?
Hi, good morning. I think we have 2 stories coming out of the labor market. Pretty steady, but lower than we're used to hiring. We have 2 straight months of plus 60,000 private sector hiring in the ADP numbers. But the wage story is telling something entirely different, that there's more tightness than is generally appreciated. We saw pay growth for job changers accelerate in March, going from 6.3 to 6.6%, which doesn't sound like a lot, but in the context of low hiring, it's strong signal that wages are still pretty tight. And when I look at just hourly workers over the last 3 months, wage growth has been higher every single month of 2026 than we've seen in any month of the previous 2 years, suggesting that there is some tightness out there in terms of getting new hires on board.
Yela, this suggests that the labor market's in a much better spot than some people give it credit for, even with these low levels. Does that mean, as John's been talking about, people can go ask for a raise to offset the increase in gas prices?
I wish it was that simple, because even though the labor market has been incredibly resilient, it's incredibly fragmented. Most of the jobs are coming from one sector, healthcare. And that's been the case for the past 2 years. In fact, from 2023 to 2025, 3 out of every 4 new jobs created in this country came from the healthcare sector. If you extend that trend out 10 years, the healthcare sector becomes the dominant sector of the United States. And so this sector is also being defined by low-paying jobs. At the same time, we're seeing some steady hiring. We're also seeing an increase in part-time share. That means people are taking part-time jobs. They might be taking second jobs to make ends meet. These jobs may not be the full-time 401k jobs, and they may not be the jobs that give you bargaining power when it comes to higher salaries.
Neela, what are we going to learn tomorrow when we get the March payrolls report, given that a lot of people say it's already outdated, based on it not taking into effect the full shock that we saw in March?
Yeah, I think we'll always get before a shock as a baseline. We'll see how healthy the labor market was going into that shock. And that's particularly important on Friday, remember, because January and February showed such wide swings in the government data, up so much in January, down so much in February. So March is kind of the referee of the first 2 months of the year. If we see a labor market that looks like consensus, looks like the ADP private sector number, about 60, 65, at least we'll see some corroboration that the labor market was okay going into the shock. And then we can track whether or not this particular shock, the duration, the impact will have a strong hold on hiring. I have to point out in the labor market numbers that we produced on Wednesday, small firms really carried the torch for the labor market. If small firms are generating this growth, if the healthcare sector is generating this growth, there could be some buffer if services are really the stalwarts here.
That is an upside surprise we saw yesterday, and a welcome one at that. Neela, thank you. Neela Richardson there of ADP on the jobs data so far. And your point on the sector stuff, healthcare, expected a snapback in healthcare tomorrow morning.
Yeah, which I guess is a good thing, considering that that was the weak spot, but it's a bad thing because it's sort of independent of any kind of cycle. So it's not like you can decide to hire more people because we're all getting older and need to get a lot more health attention.
Yeah, absolutely. The health sector has been the only thing that's really been pulling this market up. The problem the Federal Reserve is going to have, we have slowing labor market and higher energy costs, with every energy analyst saying it's only going to get worse. This is going to be incredibly difficult few months.
Coming up on the program, we'll catch up with Jim Zelter of Apollo, Mike Parle of BlackRock, Claudia Irigoyen of Bank of America, and a whole lot more. The second hour of Bloomberg Surveillance is just around the corner.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
A cidade estava sitiada.
Isso, ao começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
From the market perspective, we are underpricing economic impacts of this energy shock.
There is a little bit too lax thinking around some of the inflation pressures.
A few more weeks of this, we're going to have to take down our GDP forecast.
It might last longer than a lot of us expected originally.
You could open up the strait tomorrow. Impacts are still coming.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Following the biggest two-day rally on the S&P 500 since May, we're lower across the board. On the S&P, down by 1.2, on the Nasdaq by 1.6. In the bond market, following some pretty decent data in the last 24 hours, yields creeping higher again, up by 5 at the front end of the curve, 2s at 385, encouraged by this move in crude. Brent crude up big time this morning following the president's address. We reclaim 109 on Brent. We're higher by 8%.
Yeah, now the question isn't whether the conflict is going to end in the next week or two. It's going to be how much is the escalation going to potentially create some sort of conflagration in the region and potentially damage to regional oil supplies in the meantime, because ultimately that was what the president was preparing us for. I have to say, my mind's spinning. I'm trying to understand exactly how much heat there was in the U.S. economy coming into this, what the shock could mean for it, and exactly how long it can go on before it's irreparable to go back in order to the momentum that we saw beforehand. It is a very difficult scenario to invest in, which is the reason why you see a lot of people sitting on their hands and then these whipsaw movements in markets.
The energy market is focused on the Strait of Hormuz, and yesterday the president said the Strait must take care of that passage, the individuals who use it, meaning not the United States. And then he said it might just open up naturally. If we learned anything from history, what happened in 2023 with the Red Sea was that we are still not at normal flows of what they were before the Houthis started attacking ships. And the energy crisis in Asia right now is being felt so deeply that we are not feeling it here, but maybe it is going to get a lot worse in the months to come. South Korea's president, in an address to the parliament today, please save every drop of fuel. Don't use it. Take public transportation.
In addition to that, we're also tracking threats to financial institutions. We've seen the reported threats against Goldman Sachs in Paris. This from Citi just moments ago. The Paris employees will be working remotely as a precaution, but also in Frankfurt, employees working remotely Thursday and Friday.
We're looking for more details. We don't know exactly the parameters of this. It shows the second order effects of this, which is questions around terrorism, questions around disruptions to both cybersecurity as well as physical security around the world, given the support of Iran, the way they've operated in the past. Again, this is a deeply uncertain moment. The market wants to look past geopolitics. It's having a hard time doing it.
And what Citi is saying comes after the headquarters of Goldman Sachs in Paris was placed under police surveillance yesterday because of concern when it comes to threats that U.S. authorities believe is linked to an Iranian group.
Equity futures right now in the S&P negative by 1.2%, just about session lows. Coming up this hour, we'll catch up with Jim Zelter of Apollo as the president's address upends risk appetite. Mike Powell of BlackRock lowering his outlook on U.S. equities, and Claudio Irigoyen of Bank of America expecting crude to remain in triple digits for the remainder of the year. We begin this out with stocks falling following the president's shift from a near end to the war to now committing to more aggressive action against Iran over the next 2 to 3 weeks. The president of Apollo Global Management, Jim Zelter, joins us now for more. Jim, good morning.
Good morning, John.
We have got a lot to cover. What interesting times. You've called this a confidence shock. A confidence shock. What does that mean for growth?
Well, I think, and I was listening to the show the last 30, 40 minutes, and I've been doing this a long time, and I sometimes think sometimes there's days where you should just go out and just take a walk around for 30 minutes, because I think we've lost the plot.
It's not that bad.
I think we've lost the plot on two big themes. The first is what's really going on in the world of credit, which I'm sure we'll talk about. And the second is the economic strength of the underlying economy. Certainly, we have a very challenging issue with what's going on in the Middle East right now with this conflict, and I'm suspicious of it ending in 2 or 3 weeks, as many others are. But you just had a quarter with record M&A, literally record M&A in the United States and globally, and we had the biggest IG issuance almost of all time. Those are two indicators of a lot of economic tailwinds along with the CapEx cycle. So I think we lost the plot on the underlying economic strength coming into this thing. The second, I would say, we've really lost the plot on credit. We're talking, the headlines and the conversations are about this little narrow area of direct lending, 200 billion of the non-traded BDCs. And why are we here in the first place? The reality is the last 15 years, credit has compounded great returns for investors around the globe, and they've done it in a manner which beats the high yield and loan indexes dramatically. And so we're talking about a little bit of skirmish on the sidelines here. So, no doubt a big macro crossroads in terms of the timing of this and the impact of crude and what that's going to do on consumer confidence and unemployment. But I think we've missed the plot on two big issues, and I suspect if I'm sitting here in 3 to 6 months, we'll be talking about a much, much different backdrop, and we'll be talking more about the M&A calendar, the IG calendar, the strength of the overall CapEx cycle than we are what's going on in the Middle East.
Well, let's talk about what you called a skirmish in private credit. So let's get to that. So
sure.
Apollo Debt Solutions, cap redemptions of 5%.
Yeah.
Understand that clients sought to redeem about 11.2%. When you get those kind of redemptions, how does it work internally? How do you decide what you're going to cap? What do you do?
It's pretty easy. When we created the whole theme of these vehicles were to give global wealth investors an opportunity to be in a robust asset class with incremental yield over the last decade or so. Institutions have clamored to get into it as they took their equity risk down. And so when these products were created, they were created with the premise of you get higher returns, robust compounding yield, but we are going to protect the vehicle from the run on the bank mentality and that type of activity. And so on page 1 in black and white, it talks about a 5% redemption structure of the portfolio to protect all the investors, not just the 5%, but the 95% they're staying. So for us, it's a very easy conversation. The document said 5%. We told folks 5%. We're giving 5%. And so the idea that this is this term of a gate or redemption penalty, this is common structure and common practice. So we're not doing anything punitive. We're doing what's right as a fiduciary. So it's actually a quite easy conversation.
Is it making it more difficult, though, to raise new money for new funds?
I think when you sit back and you see the headlines of the concerns and consternation of where we are in the credit cycle, investors will say, does this make sense for my portfolio? And yes, subscriptions of new capital have come down from the pace that they were last year. But as John mentioned, the first quarter we had as much money coming in as wanted to redeem. So we were in that fortunate spot because of the nature of how we've run the portfolio. A BDC structure is like a hedge fund or like a mutual fund. It's just a structure. Then all the choices are how you invest it, how you structure it. We've been pretty consistent, low leverage, all 100% senior secured, no PIK. So no doubt, I think investors are going to be a little bit more cautious about how they asset allocate. But I really go back to this first comment. The last 15 years, since 2009, credit, depending on where you've been in private direct lending, probably a 9.5% return versus being in the public safe high yield at around 6.5%. That compounding has made a tremendous amount of difference. It's worked for institutional investors around the globe. They want to put more capital in. So if it didn't work, those investors wouldn't be asking for it.
We have seen that, though, over a period of time where we haven't seen a true credit cycle.
Yeah.
And we've seen that over a period where we haven't seen the same kind of build out of private credit the way that we have. And we've seen that during an era of prosperity for the Middle East, which has pumped money into this industry. And now a lot of nations have to use that money to go into infrastructure and protecting themselves and propping up their economies. How much does that potentially challenge the credit cycle and challenge the industry from a cyclical perspective, not necessarily just these one-off issues in BDCs?
I think you're pulling at the thread of the secular backdrop of credit. When I got to Apollo 20 years ago, investors had a very easy choice. They invested in equities or they invested in private equity, and they did other things around the edges. But really, for credit, it was high yield or distressed. It was a very binary decision, yes or no. The last 15 years around the globe, as the globe has gotten older, more and more folks are hitting retirement age. The need for income, the need for yield, and taking that equity risk down is a broader secular theme, literally around the globe. And no doubt the big sovereigns in the Middle East have been big players in a lot of these activities. And certainly when this conflict ends, they're going to need to focus on the CapEx at home, in Saudi, in the UAE, in Qatar, et cetera. But I don't think that's that might have some marginal impact. But, and to your other point, it has been, other than the COVID period, we really have not had an economic slowdown in the U.S. since '09. That would be the longest cycle post-World War II that we've ever had, almost 17 years. I'll remind you, I was in Australia last week. They haven't had an economic cycle since '92. So the reality is the way the world has grown, globalization, interactive trade around the globe, it's made economic cycles much, much longer, much more durable, and it's made recessions harder to come by. But I will add, in the last 17 years, you had a huge issue on energy in terms of the shale crisis, a lot of credit losses there. You had a lot of losses in pharma roll-up. You had the crypto bubble crisis. So you've had a lot of sector issues, but the underlying strength, again, when you look at the breadth of this CapEx cycle, the M&A cycle, the IG cycle, I think there's some really, really strong secular tailwinds that, again, I think this is a moment in time, this conflict. I think as I sit here in September and October, this will be in the rearview mirror. I'm sure oil prices will be a little bit lower at that point in time. And I think the year ends up in a much stronger spot than we are right now. It's pretty challenging right now. I would encourage all three of you to go for a walk this afternoon. It's springtime in New York.
Do you not need to rethink some of your strategic partnerships in the UAE? You're dealing with a lot of real estate companies. You're dealing with Mubadala, Sovereign Wealth Fund.
Yes, we do, because I think their needs are going to change. They're going to need to focus on the domestic CapEx and the domestic FDI. We've actually been a fairly large player in FDI in the UAE and in other spots in that region, so we're going to continue that. There's a tremendous amount of, whether it's airports, infrastructure, AI data centers, that they're going to need foreign capital too. So yes, I mean, certainly when we think about our investment grade solutions toolbox, we want to take that to that part of the globe. But I've seen nothing out of their actions over the last 6-8 weeks that have taken them off their broader investment objectives.
Can we finish on inflation?
Sure.
If you're so bullish on growth right now, so constructive at the moment, do you think people are underplaying the risk that we see?
I've been consistent in that. I've been consistent in that. I said that last time I was on the show.
And now we've got an energy shock.
When's the last time you bought something that was cheaper 3 to 6 months ago and then you bought it today? I mean, very little.
A long time.
So I think that any conversation of the Fed lowering rates in the short term, I think that's dissipated for the right reasons. I think inflation and stagflation is a little bit of the concern. But I'm definitely much more focused on either back-end inflation or a steeper curve when I think about risk analysis across the portfolio.
Jim, you're going to stick with us. Don't go anywhere.
Sure.
Don't go for a walk. Jim Zelter of Apollo Global Management. I might go for a walk.
I was going to say,
sounds beautiful, doesn't it?
You know,
I'd love
honestly,
to start my day with a walk.
All I can say is, please, I actually like his advice, and frankly, I could use a walk. So maybe I'll go for one
blossoms,
right now.
You know,
it's beautiful.
Come through, taking a bit of
little perspective. Take a step back. Look at the big picture.
I'm trying, Jim. I always try. You know that. Thank you very much. He's going to stick with us. I can't work out if this is an endorsement of this program or not.
Well, I think he's saying that we're being a little histrionic when it comes to how dramatic we feel the moment is and how potentially bad it could get. And I think that our job is to work through the parameters, and the parameters could get pretty negative. And Jim is saying there's a lot of positivity on the other side. Go take a walk.
You ever met Jeff Curry over at Carlisle?
Yes, and
you guys shouldn't speak.
I've been doing this for 41 years. You don't get to my spot in business by being naive. I'm not naive. I'm very cognizant of the day-to-day issues that we're confronting with the situation this administration's in, the gravity of the war, the concerns what's going on in Paris. These are some devastating issues. I'm not denying any of those, but I really think, again, I'm using a little bit of the page of the SVB book. We were all convinced after SVB that a massive credit tightening was going to happen in the economy, and we missed it. And the strength of this economy, the strength of the consumer, the CapEx cycle, M&A, those are very powerful drivers.
We appreciate the constructive outlook. More from Jim in just a moment. Let's get you an update on stories worldwide with your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. In a primetime address, President Trump saying the U.S. is very close to completing its military objectives in Iran and vowing to hit the nation, quote, extremely hard over the next 2 to 3 weeks. Still, the speech lacked new announcements and most notably a precise timeline for an exit. President Trump also saying in the address other countries need to take the lead on reopening the Strait of Hormuz. The president saying the U.S. does not need the oil exported through the critical waterway and that the nations who depend on it should, quote, go in and take it. And the headquarters of Goldman Sachs in Paris was placed under police surveillance last night following bomb threats believed to be from an Iranian group. The threats come just days after a bombing attempt was foiled near the Bank of America in the French capital, city telling its Paris and Frankfurt employees to work remotely as a precaution. Mr. Bloomberg brief. John?
Yahira, thank you. They are concerning headlines. We'll keep tracking that story for you throughout this morning. Up next on the program, turning up the pressure on Iran.
We are on track to complete all of America's military objectives shortly, very shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. When this conflict is over, the Strait will open up naturally.
Up next, we'll catch up with Bloomberg's Tyler Kendall. We'll have more from Jim Zalta. Bramo's going to talk to him in the commercial break. By the time that's finished, he'll come back a different man from New York City this morning. Good morning.
Is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
I can tell you it didn't work. in case you were wondering.
I think he's more fired up.
I tried.
No, he's more fired up. He's more
Hold on a
fired
second.
up.
You've got some concerns.
Yes, I have some concerns. I'm an investor in the world. I have a lot of concerns.
Okay, John.
It's not about the little narrow. It's not about the little narrow corner of the world that you guys call private credit. It's much broader. But
You seem riled up this morning.
Pardon?
Have you been annoyed by the coverage in the last few months?
No, I'm not annoyed by it. I think it reminds me of when I was a young high-yield trader in the early 90s, and when 1990, when Drexel went filed, and there was concerns about the high-yield asset class, junk bonds. You know, asset class won't survive. It's a Ponzi scheme. There's no credibility here. And I think that if I look back at that time, it was early days of the high-yield market, which is now the high-yield market and a legitimate asset class. I think this is just growing pains. And as I go back to my first principles, if investors over 15 years were not actually making money, and I see the demographics of the globe right now where investors need robust compounding yield, I'd be concerned. But I see the great benefit of this product.
I've sensed frustration. I've sensed frustration from the asset managers. You have too. I can feel it now, I've got to be honest with you. I can sense the frustration that you've got, I think, with some of the coverage over the past few months. What is it about the coverage that's been quite upsetting? The fixation on just BDCs and not the broader asset class? What is it about that's upset you and the team, maybe?
Well, I got to push back on being upset.
I can tell you over the last few minutes it's felt that way.
Okay.
Maybe not aimed directly at us, but certainly the coverage of your world.
Well, I think that a lot, because of the proliferation of the analysis in every corner of the environment we work in right now, I think that's why I had my message about taking a step back. You know, I do think when you look at the growth of the U.S. economy since '09, the result has been we have the most robust banking system in the world. We have the leading banks that are well-run organizations that have done an amazing job, and the return on equity and their impact in the U.S. economy is profound. You also have a backdrop of economic growth that is unmatched around the globe, and I don't think it's any surprise that the advent of pushing out the risk in the banking system, the benefit of securitization, the benefit of CLOs, the benefit of all the things that institutions have helped out with, that has resulted in a much broader, deeper base financing environment. We financed a lot of growth. We financed amazing tech growth. Our VC marketplace is the most robust in the world. And so I think that, you know, many mutual funds today, I'll give you a little analysis, many mutual funds today were very forward-thinking and were able to buy SpaceX several years ago. And so SpaceX is part of their portfolio, a small portion. There's probably not a clearly defined marking process on how they all mark their SpaceX equity because of employee sales, whether it's monthly, quarterly, whatever it is. But just because the marking process may be inconsistent, that shouldn't stop them from buying a great American company that they're going to do very, very well on. And so that's why I think we're sort of missing the plot about, I've talked on this show in the past about Berkshire Hathaway, about half of their portfolio being in private companies. And so I do think the whole idea of the public-private convergence, the broader portfolio approach, where the market's going in terms of these massive CapEx, that's where I think we've sort of lost the plot a little bit. And again, I'm not in the newspaper business, but I do think that I know what sells headlines. And I think the methodical, robust growth of the U.S. economy, the role of the public-private convergence, the strength and breadth of our financing, that's really the bigger story here.
And clearly there are people who want to belittle or demean this industry because they feel like either they've been left behind or they want to suppress prices so they can get in and buy. And I just wonder, from your perspective, are you seeing this as an opportunity to get more aggressive, considering that there have been some discounted assets, there are some weaker hands, and a lot of people are worried, including myself?
Well, unfortunately, I would say two things. In my 41 years in the industry, in the 20 years at Apollo, whenever there's been any kind of dislocation, we've been fortunate enough, between the breadth and the discipline and the capital we have, to end up in a better spot. That's number one. The second is, I would say, is the headlines have been much more profound and loud than the activity. There really isn't a lot of assets that are for sale that have widened out dramatically. The high-grade index is where it's been. The high-yield index has really been pretty tight. There's been a variety of financings done. Look what JP Morgan did on EA Sports. They did a massive IG crossover financing. The high-yield and loan markets have been pretty strong. So there's been a great excitement about putting this massive amount of capital to work. That's the business we're in. We really have not seen the vast majority of assets coming to marketplace that people have talked about. So, you know, we have a lot of liquidity. We've got 125 billion of capital and liquidity ready to put in the market in our platform, but I'm sure we'll be active, and I'll talk about it on the several times I'm back here the rest of the year.
Final question.
Yes, sir.
Texas or Florida?
You know, we want to, we love New York. New York has been our home for a long time, and we're going to maintain a massive presence in New York.
Do you feel loved by New York?
You know, New York is a very dynamic place that will always attract a lot of best and the brightest of young folks, but we want to make sure, as we think about our company, between New York, Des Moines, El Segundo, we want to make sure we have a spot to create growth and innovation, and we'll see what the process leads us to.
Let's go for a walk together.
Sounds
we can
great.
do that in a moment. Jim Zauter, it's good to see you, sir.
I believe it.
Thank you. Jim Zauter of Apollo Global Management. Jim, this was fun. We appreciate your time.
Always appreciate
Thank
being
you
here.
very much. A stern defense of his asset class. No doubt expected by many.
Yeah, well, and saying that really you haven't seen the actual pain in terms of fire sales or any kind of assets on the market. The broader takeaway to me is the economy is going to be in a robust place in October, September, come when this is in the rearview mirror, and it speaks to some of the upside surprise that we've seen in economic growth. Also speaks to the reason why some people are worried about inflation.
Do you remember a long time ago, if you got the tap on the shoulder and you were asked to move outside of the New York office to somewhere else, it felt like a punishment, and now it feels like a reward. Can you imagine the line of some of these financial institutions to get on board, jump ship, and go somewhere else?
Well, and that is part of the reason why they're moving to other places and why you're seeing those locations surge.
Walks in Miami.
Right? You know?
Much better.
At least
run out of time, but I do wonder how many people knocked the door and said, you know what, Jim, I fancy some of that.
I would like.
I'll see you down in Florida.
I would like to hear the New York response.
Yes.
You know, what does New York City have to say to that?
Coming up on the program, Mike Powell of BlackRock, lowering his outlook for U.S. equities, plus Danny has your morning movers. Higher fuel prices weighing on airline stocks this morning. Stocks down across the board. New session lows on the S&P. We're negative by 1.5% on the S&P 500. From New York City, you're watching Bloomberg TV.
of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Jenner report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Let's sit on this price action just for a beat. Equities down across the board on the S&P 500. We're down by 1.5% on the S&P. Jim Zalter's taken a walk. That's why he's so chill.
I mean,
right?
he gets a chance to take a walk. In fairness, he was in
He's
Australia
ever coming back?
Don't listen, Jim. The Nasdaq's down 2%. In the bond market, 2s, 10s, 30s look like this. He's a good sport. Yields are up by 5 basis points on 10s, 437. 2s up by 5, 385. Encouraged by this move here in crude. WTI and Brent advancing this morning. Brent crude just short of 110 now, 109.55 and up by more than 8%. The president's address, for many of you, falling short. Didn't have new information. And I keep going back to the 2 key issues for this market right now. End the hostilities, get the energy moving. And there's nothing that we've heard in the last 24 hours that suggests that one or the other is going to happen anytime soon.
People were expecting this to be some sort of explanation of how the U.S. was going to extricate itself from Iran based on some of the recent posts that we've seen on Truth Social. Instead, it was preparing the American people for a greater escalation, which is a reason why you're seeing a response this morning. Again, how many days do we have to come in and say, well, everything's changed now that there's a new post or there's a new comment? And that is sort of a question. At what point do we reach the place where there's sort of diminishing returns for some of these macro headlines that keep whipsawing everything?
When it comes to the Strait of Hormuz, the president gave no indication that the U.S. government is going to be the ones to reopen it via militarily. And then we hear from Emmanuel Macron of France saying it would be, quote, unrealistic to try to open it through military means. And they say we need to cooperate with the Iranians, who right now the United States is having strikes on.
The next phase for all of this is the data, the economic data and the earnings, the guidance coming from corporate America and elsewhere. We've got more economic data for you now. Mike McKee has more. Good morning, Mike.
Good morning, John. Well, it is sort of guidance. The Challenger job cuts numbers are just out. Now, these don't all happen, but they do give us an indication of what the corporate offices are thinking. And we see 60,620 job cuts announced in the month of March. Now, that is down 78% from the same month a year ago. However, if you look industry by industry, technology getting whacked. 18,720 jobs announced to be cut in March. A total from 52,050 for the year so far. The next biggest is pharmaceutical, and that's only 6,348 for the year so far. Manufacturing jobs continue to go away. But if you want a job that doesn't seem to be threatened at the moment, become a lawyer. The legal industry, no job cuts in March, none announced year to date, which is kind of interesting because everybody says AI is going to get rid of a lot of people in the legal industry. It seems to be doing much more to those who are creating AI than to those who are going to be using it.
Like it's always the way, when things start to get bad, they make money. Mike McKee, thank you, sir. The latest on the jobs data. More tomorrow morning at 8:30 Eastern Time with the payrolls report. ADP was decent. Retail sales were decent. ISM, the headline was decent. You noted prices paid. That might be of more of a concern in the months to come if that holds.
Yeah, the idea that you see prices paid increasing to the highest pace since 2022. I just find it interesting that this highlights how companies are shifting budgets toward AI investments at the expense of jobs. That's according to the head of the Challenger jobs cuts announcements. And again, this is the existential risk behind all of this. We're leveraged on a bet tied to artificial intelligence that will prop us up through any kind of potential shock. At what point do we see that percolating into other issues that affect the economy? And this is the reason why people get negative. They start to like put all these things together and it becomes
questioning
a toxic
your own
brew.
negativity.
Well, I don't want to question my own negativity. I never want to question that. But I do think that Jim Zelter is onto something when you actually look at the upside surprises in a lot of the economic data that we've gotten.
Data's good. Capital markets have been wide open. From Jim's seat, I see the same thing. That makes a lot of sense. If you're in a political seat right now, I'd be far more concerned. Gasoline prices, $4 a gallon. The trends you're talking about in the labour market, try getting elected on those kind of trends. That doesn't look good for me going into the midterms.
I'm more worried about the sovereign debt market, frankly, because given the fact that everyone's going to be trying to prop up a lot of the incomes of individuals, both in the United States and elsewhere, how much is that the real issue? More fiscal spending and what that does to the yield curve.
And when it comes to trying to get elected, if you look at the latest Reuters Ipsos poll this week, 2/3 of Americans want a quick end to the Iran war. We did not get that last night from the president.
Okay, you ready? Feel more comfortable now? Good. Feel comfortable in your negativity.
For a walk. No, I mean,
too.
That's a contradiction.
He's in a different seat to us.
No.
He gets to go for a walk.
I mean, being comfortable in your own negativity.
Oh, right,
like
sure.
A permanent uncomfort.
All right.
Let's move on.
On a radar this morning, the president indicating the war in Iran is nearing completion.
We are going to finish the job, and we're going to finish it very fast. We're getting very close. I want to thank our allies in the Middle East, Israel, Saudi Arabia, Qatar, the UAE, Kuwait, and Bahrain. They've been great, and we will not let them get hurt or fail in any way, shape, or form.
The president later pledging more aggressive action in the coming weeks, including potential strikes on Iran's electrical plants.
If there is no deal, we are going to hit each and every one of their electric generating plants very hard and probably simultaneously. We have not hit their oil, even though that's the easiest target of all, but we could hit it and it would be gone, and there's not a thing they could do about it.
Some of those comments from the president sending equity futures lower and crude prices much higher. And finally, a concerning story developing. The Goldman Sachs headquarters in Paris receiving bomb threats overnight. This just days after a failed bombing attempt near the Bank of America office in the French capital. Citi telling employees in Paris and Frankfurt to work remotely as a precaution.
Hugely concerning. The reports say that this is tied to a threat coming from Iranian-backed groups or groups that are pro-Iran. Again, this is not just an isolated story to the Middle East, to a specific region. This is the new type of warfare, and it is warfare with a nation that is engaged in a lot of cells around the world to engage in terrorist acts. So definitely something that's hugely concerning, and we'll keep monitoring.
And Europe is obviously bracing for this. The Paris police saying they're tightening security around U.S. banks. You have bank CEOs saying just don't go to work. How long is this going to last? It's a serious concern.
We'll keep tracking those headlines as they come in. Yahara is going to stay on top of that story for you. Let's stay on that top story this morning for financial markets worldwide. The president's address on the war in Iran, weighing on risk appetite and whipsawing financial markets. Mike Pyle of BlackRock writing, we think the shock in energy is not fully reflected. We're recommending dialing back risk in global equities. We've trimmed our overweights to the US and Japan to neutral. Mike joins us now for more. Mike, good morning.
Great to be here.
Let's talk about why you believe it's not well priced. What is the risk that you don't think is sufficiently priced at the moment?
Yeah, I mean, I think as you were talking about in the lead-in, that duration of disruption to global energy supplies is the core question, and it looks as if it's going to continue to cascade for some number of weeks, if not months, from here. That is a core risk to the global economy, and one that I think has caused our portfolio managers to be dialing back risk, just more to that neutral position.
You're tracking how the dominoes fall. Just describe how that will cascade in the weeks to come. Now, the president's essentially told us, and we can go with this as a baseline assumption, this will continue at least 2 to 3 weeks.
Yeah, I mean, I'd say maybe a couple of things. One, when it comes to the geopolitics, when it comes to when energy is going to be restarted, I've got my eyes on two things now coming out of the president's remarks. One, that mid-May date when the Xi-Trump summit has been scheduled, May 14, May 15. I don't think they're going to want to reschedule that again. That's obviously very important to the president, to U.S.-China relations. I think as I look out there, that looks to be something of a backstop for the length of hostilities here. Secondly, the UK Foreign Secretary's convening 35 countries in London today. I think a broader set of countries around political diplomatic, military steps are going to be a part of a solution to the Strait of Hormuz, and I think that those discussions are happening is important. So those are two things in light of the president's remarks I've got my eyes on. I think to your question, this has already now been going on 4 to 5 weeks. It's going to take weeks, if not months, to restart, and we've got cascading issues as a result. I think, what am I looking at? I'm looking at not just the headline prices of crude. I'm looking at a lot of those spreads to the refined products, to things like diesel, to things like jet fuel, to things like naphtha, where we're really seeing signs of physical supply disruption, demand destruction, especially in Asia, and I think beginning to extend to Europe. And I think those are the places where we're really going to see some of that supply disruption manifesting itself in economic slowdown.
You're talking about going to neutral for both Europe and the United States, even though a lot of people have come on the show and said Europe will be much harder hit, as you were just talking about, as well as Southeast Asia. What's the transmission mechanism for the United States that, given all of the growth that Jim Zelter's talking about, you think could potentially stymie expectations even further from here?
Yeah, I divide that into kind of two parts. One, I think on the real economic side, certainly the U.S. has and is going to have its exposures. This is a global supply shock, but the U.S. is coming into this from a relatively strong economic position, as Jim was talking to, and is relatively more resilient to energy shocks globally. I was talking to Anne-Marie before we came on air. If you look at the natural gas price in the United States, an important input to electricity, an important input to industrial production in the United States, that basically hasn't moved since the start of the Iran war. Very different than what we saw in 2022. On the flip side, I think there are a set of financial linkages from the United States to the rest of the world, that could be stressed. There are going to be a lot of countries, whether in the Gulf and Europe and Asia, that are having to take resources and invest them at home around their own resilience, around their own defense. Those are financial flows that are an important uplift historically for U.S. equities, for U.S. assets, and I think some of those financial linkages could be a headwind as we look ahead.
Is this a reason why potentially yields could go even higher in the U.S.? We're talking about equities and Middle East investments in the United States equity market, but what about the fixed income market, given how much they've been also investing there?
Yeah, so I think, we look at the long end of government bond curves. That isn't just in the United States. I think it's across developed markets in general, and see, risks to the upside. Obviously, all of these are markets that came into this conflict with question marks over fiscal, the need to invest. Those question marks, those needs to invest, even greater now. And so I think particularly at that long end, that 10 to 30 year part of those curves, we see risk in the United States, but risk across the developed markets more broadly.
Well, we see structural changes. You brought up something like naphtha. The United States right now is exporting the most on record, 15 million barrels of naphtha last month. That's pretty incredible for the U.S. Does that stay?
Yeah, I mean, I think that that this is a moment that is going to be a pivot point, just as the 2022 invasion was, just as COVID was for supply chains globally. And I think one thing that gets talked about a lot, but I think can't be underscored enough, is the benefits of building resilience through stockpiling. I think that one of the ways in which we're going to see increased spending, increased investment from a range of countries around the world is building these stockpiles around critical inputs, like on energy, like on raw materials. And naphtha is just one example where I would expect to see ongoing demand, because companies are going to want to build those resilient stockpiles in the face of the likelihood of ongoing shock.
It's a theme we've heard repeatedly over the last month that's going to keep prices elevated even after these hostilities end and conclude.
And it's not just in oil prices, it's not just in gas prices, but aluminum, in nickel, in copper, and that's what you see around some of the pricing and the volatility there. How you get a handle on that and what that means for inflation longer term, again, that's the reason why people are looking at the fiscal budget as well as potentially the price inputs for consumers.
Mike, thoughtful. It always is. It's good to see you. A year since Liberation Day. Where's 12 months gone? It's crazy, isn't it?
Flies by.
1 year on from Liberation Day. Mike Powell there of BlackRock. 12 months later, we're sitting here trying to work out what the impact of that day is going to be. Still trying to figure things out.
Well, when it comes to tariffs, yeah, because the Supreme Court struck down IEEPA, the administration is working out exactly what the tariff rates are going to be. I just spoke to Jameson Greer about this. They're still working out what the tariff rate is going to be in China. They're trying to get back to that 20%. Can they? We'll see.
That meeting between Xi and the president circled on, I think, most people's calendars going into the month of May. Let's give an update on stories worldwide this morning with your Bloomberg Brief. Yahira has more. Hey, Yahira.
Hi, John. Great Britain will host talks aimed at forming a coalition of countries to explore ways to reopen the Strait of Hormuz. The virtual meeting will include at least 30 countries, including France, Germany, Italy, Canada, and the UAE. The U.S. is not expected to attend. The headquarters of Goldman Sachs in Paris was placed under police surveillance last night following bomb threats believed to be from an Iranian group. The threats come just days after a bombing attempt was foiled near the office of Bank of America in the French capital. Citi telling its Paris and Frankfurt employees to work remotely as a precaution. And the Wall Street Journal reporting that Maine is poised to freeze large data center construction until November 2027. The bill calls for the pause so the states can assess the impact of data center development on the environment and electricity grid. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for the update. Update on the market session lows. We're down here by 1.6% on the S&P 500. Up next on the program, a crude awakening.
Many Americans have been concerned to see the recent rise in gasoline prices here at home. Our economy is strong and improving by the day, and it will soon be roaring back like never before. It will top the levels that it was a month ago.
Up next, we'll catch up with Claudio Irigoyen of Bank of America Securities, live from New York City. This is Bloomberg Surveillance.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
let's get you up to speed on the price action this morning. Equities declining. Decent two-day bounce, the biggest two-day run we've seen on the S&P since May of last year. We take almost all of it back this morning. We're down by 1.6% on the S&P. On the Nasdaq, we're down by 2 percentage points. On the Russell, a similar move. In the bond market, yields pushing higher. It's that toxic brew, as Bramo would call it. Stocks are lower, bonds are lower, yields are higher by 5 basis points, 10's up to 437. And the epicenter of all the price action is this right here. The story hasn't really moved on. Brent crude at 109, up by 8%. And the fact the story hasn't moved on is part of the problem.
Yeah, you can't really discount the idea of higher oil prices. When I look at the price action every single day, I wonder, do traders come in and they're like, oh no, we got to sell, or oh no, I got to buy, or is this just algorithmic trading and programmed trading that's trying to pick up all these headlines, interpret them, and inject, oil prices up, bad, risk on, or risk off, oil prices down, good, risk on. At what point are we just trying to put a narrative to what ultimately is just computers?
Well, the administration is trying to put a little bit of a cap, at least through verbal intervention, on the paper market. The issue is everyone's waking up to the physical market, and the fact that the Strait of Hormuz is still closed 5 weeks in is a huge problem. And right now, the president didn't offer any options besides it naturally opening up or other countries that use it opening up, which Emmanuel Macron to that today says that's unrealistic and it has to be done through consultation with Tehran.
No sign that external partners have the ability to open it up right now. And if they did, no real sign from the president right now that they've got the willingness to do that, at least for the moment. And things can change because guidance has gone back and forth over the last few weeks. For markets, your base case now is this endures, it's prolonged, it goes another 2 to 3 weeks, and the longer the Strait of Hormuz is compromised, the more the problems accumulate. And I think we're already past the point of this being a short-term shock. And that's what I get from the commodity pros at the moment, reading the research on the sell side, is this is already a medium-term issue because of the damage done to production across the region.
Which is the reason we're all looking at the economic data. How much momentum do we have going in to withstand the potential shock that clearly is going to be a little bit more significant than a lot of people thought?
Out of Savannah this morning, a crude awakening.
Many Americans have been concerned to see the recent rise in gasoline prices here at home. In 1 year, we've taken a dead and crippled country and made it the hottest country anywhere in the world with no inflation. Our economy is strong and improving by the day, and it will soon be roaring back like never before. It will top the levels that it was a month ago.
So here's the latest this morning. Oil prices surging as President Donald Trump vows to increase attacks on Iran. Claudia Irigoyen of Bank of America Securities writing, we now assume the war ends before the end of April, with oil prices around 100 a barrel for the rest of the year. Claudia joins us now for more. Claudia, good morning. That's quite a headline, because that's not priced into the oil curve right now. When you present that to clients, what kind of pushback do you get?
Well, there is so much uncertainty that people understand that that can be one of the scenarios. I think what the market is not paying enough attention is the persistence of the shock, even if the war ends in 3 or 4 weeks, because you're going to need a lot of time to normalize the flows in the Strait. It's not just about the war is over, it's about normalizing the flows in the Strait. And also you're going to need 3 or 4 months to normalize production. So that creates a lot of persistence and obviously a higher floor for energy prices versus pre-war. And that's the part I think the market is not pricing in totally.
So let's run with that baseline assumption, 100 for the rest of the year.
Yep.
Let's go with that.
Yep.
What does that mean for your expectations for growth and for inflation?
Well, the short answer is lower growth, higher inflation. The question is how much lower, how much higher, which countries are going to suffer more. We are thinking at the global level, we shrug off 0.4 of global growth from 3.5 to 3.1. Inflation is going to go up at the global level 90 basis points in the headline inflation. For you to have a sense, in the U.S., we expect 40 to 50 basis points, depending on whether you're talking about fourth quarter versus fourth quarter or average growth, 40 to 50 basis points. I would say 30 basis points is because of the oil shock in growth. So reduction in growth, 30 basis points because of the war. And inflation headline should go up in the U.S., headline PCE, 70 basis points and core 30 basis points. But if you compare that shock, the same shock in Europe, where obviously LNG is also very important, growth will go down around 60 basis points. and inflation 160 basis points higher.
Have we already reached the point where certain parts of the world that previously were going to have positive growth are now headed for recession?
I think for that word is probably too early to use it. I think we need some worsening of the price action. If you think about, for instance, the U.S. and the type of growth that you have, that last year was driven by investment, AI mostly, and the K-shape type of consumption where higher and middle income brackets are the ones that are pushing aggregate growth. If you have a correction in asset prices, that through consumer confidence can affect aggregate consumption much more. But if in order to have that, you need to have probably higher oil prices and the prospects that oil prices will remain about, say, 120 for a while. The market has been pretty resilient.
How important is tomorrow's jobs report to you? At what point does the sort of typical economic data matter again versus, say, just the company reports that come out during earnings?
So, I mean, this report is obviously dated because it's information pre-war. It gives you a flavor of where the economy was before the war. This type of shocks, stagflationary shocks, shows up first in inflation and then in economic activity. So you're going to see it in employment maybe in the next 2 to 3 reports. We need to wait. But the inflation numbers, you're going to see it pretty quickly.
Do you think that will shape the sequencing that you just described? Do you think that's going to shape communication from the central bank as well? Do they start out by trying to anchor inflation expectations, knowing that at some point down the line, they've got to respond to growth?
Yeah, absolutely. And over time, you're going to have either good news about the war or bad news about the war. Right? So it's a moving target to some extent. But for instance, at this point, we have the Fed not doing anything for a while, but we have the ECB hiking in June and July.
Wow.
Right? So it's a very different type of dynamic and very different type of management of inflation expectations.
Got 30 seconds left. Do you consider that a policy mistake if they hike twice?
Not necessarily. I think there is so much uncertainty that it's too early to tell that it's a policy mistake. We're talking about June and July. We are beginning of April. This is equivalent in normal times of 3 years, basically. A lot of things will happen between now and then.
Claudio, it's good to see you. Thanks for being here. Appreciate your time.
My pleasure.
Claudio Irigoyen there of Bank of America Securities looking for, on average, $100 a barrel for the remainder of the year.
Yeah, and the idea that increases headline CPI around the world by 90 basis points, by almost a full percentage point as a response, gives you a sense of how this is increasingly very much an inflationary story.
Coming up on the program in the next hour, we'll catch up with Sarah Hunt of Alpine Saxon Woods, Ruqayya Ibrahim of BCA Research, Alejandro Grindel of Ned Davis Research, and Osun Kwon of Wells Fargo. The third hour of Bloomberg Surveillance is just around the corner.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. every week, only on Bloomberg Television.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving someday.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this field forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazla Amin in Davos, Switzerland, and this is Bloomberg.
We're sort of signaling caution here. We have not added to equities.
We want to be positioned for a rebound.
The U.S. is the best house in a bad equity neighborhood.
The market as a whole probably still has some mean reversion.
We've got a bullish and bearish tug-of-war going on here.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your scores look like this. The losses resume, declining across the board. On the S&P 500, negative by 1.6%, down by 2 on the NASDAQ. In the bond market, bonds down 2, yields higher. 2s, 10s, 30s. Yields up by 4 basis points, 4.36. And the epicenter of all of this, guess where it is? It's right here. Brent crude and WTI advancing. Brent crude, 109, higher by 8% so far this morning.
The why here is actually really important. Last night we got a speech from President Trump where essentially he was preparing the American people for an escalation to de-escalate. This wasn't a discussion about getting out or how quickly the U.S. is going to remove itself from the region. It was talking about how they're going to insert a lot of pain on Iran in order to reopen the strait and get some concessions. A real question about how long this goes on for, whether people are sufficiently prepared, and how big of a shock this is to an economy that had been pretty resilient going in.
The market was hoping and looking for an off-ramp. Instead, they got a ramp up from the President of the United States and no indication that a Strait of Hormuz will be opened anytime soon. The President said countries that rely on it, they need to go do that themselves or it'll just open up naturally. Mark Short, who worked for the President in the first term, had this to say on social media. If the U.S. isn't going to secure the Strait of Hormuz, who is? And the market fully understands that.
The next phase, we've talked about it repeatedly, the economic data, 8:30 Eastern Time. Jobless claims tomorrow morning, 8:30 Eastern Time. The payrolls report. And the data so far this week, better than expected.
Yeah, with the economic surprise index reaching some of the highest levels going back to late 2023. Claudio Irigoyen had a really interesting thing to say, and I just want to pick back up on that. And you were talking about it, the sequencing of this, that we're not going to see the read-through of this shock in the employment market for a couple of different readings. We are going to see the shock show up in prices much more quickly. ISM manufacturing yesterday, we saw the prices paid component rise to the highest level going back to 2022. Watch that data point and the read-through to how people respond to it, including, as you mentioned, central bankers.
Yeah, the sequencing matters. Inflation first, then growth later. Seems to be the view from the economists at the moment. And which central banks respond? In his view, the Federal Reserve sits it out, doesn't cut interest rates for quite a while. The ECB, they've got 2 hikes from the ECB, the European Central Bank, through the summer.
Even though people are talking about this being an even greater hit to growth than simply just an inflationary shock in places like Europe. Granted, they've got a single mandate to control inflation. You asked Claudio whether that was going to be some sort of policy mistake. A lot of people would say they have made that policy mistake. Please don't make it again. He said it's too early to tell. Nonetheless, the longer this goes on, the more the long-term growth shock is going to come into play. And you're going to start to wonder what the counter effect of hiking rates into that type of a scenario is.
Claudio made another really important point that I think sometimes we forget. Even if the war ends tomorrow, the natural flow of oil and vessels through the Strait of Hormuz will not go back to normal. And the Red Sea is emblematic of that. We are not at normal flows right now from the Red Sea, from the Houthis hitting at vessels since 2023. We're still not back to normal. So I think you need to really recalibrate that. We are really never going back to the old Strait of Hormuz.
Stocks sold this morning. We're negative by 1.6% on the S&P. Coming up this hour, we'll catch up with Sarah Hunt of Untitled Chapter. Words with stocks retreating on intensifying war rhetoric. Alejandro Grindal of Ned Davis Research breaking down the latest round of jobs data. And Osun Kwon of Wells Fargo trimming his year-end S&P target on increasing risk from the war with Iran. We begin this hour with our top story. Equities lower following back-to-back gains, with the president turning up the pressure on Iran once again. Sarah Hunt of Alpine Saxon, words writing higher energy prices pose a real challenge to both earnings and the consumer. But given the multiple compression in equity markets, valuations are becoming attractive. Sarah joins us now for more. Sarah, good morning.
Good morning.
Let's start with earnings. Is the outlook for earnings solid, or analysts just really, really slow?
I think that there is a problem with earnings that is going to come through from energy, and it looked like if we were going to get some sort of a change over the last couple of days, maybe that would be okay. I'm starting to think as the oil back curve starts to move higher, I don't see how earnings are going up for 2026. I think that there has to be some sort of a balance, and I don't know where that balance is yet, but I think that we are getting a little over our skis on the earnings.
Begs the question if I should be getting excited about multiple compression with that in mind.
I think, it's amazing you write something a day ago and the next day it's already different, which is why, there's a lot of whiplash going on the narratives. I think that you could see how much the market was anticipating some sort of an off-ramp. It looked like there might be some sort of discussions that might get to something. The fact that we're back in this place a day later tells you that this is going to be, at least for the next foreseeable, whatever future that is, 24 to 48 hours, you are going to have more issues. To your point about trying to get back to normal, I think that because there was normal in the Strait of Hormuz, it was okay that the Red Sea wasn't back to normal. I think there's going to be a huge push to get anything back as soon as you get it open, but when that's going to be, we don't know. The longer that takes, the higher energy prices are. That's going to feed through to earnings, and people are not going to like that. So yes, I think that definitely tempers my enthusiasm for valuation compression, because I don't think that you're going to get a solution as quickly as we thought just a day ago.
So when I hear you talking, I'm like, oh yeah, this is the reason why I'm nervous. And then when I read your commentary, you see opportunities out there. I think, what am I thinking about? I just obviously need to go take a walk. So how do you get the conviction to decide to buy, given the level of uncertainty? Have there really been enough sell-offs in specific sectors or names to justify taking that risk?
I think that's sort of the key, and I loved Jim Zelter on earlier this morning, because he was like, take a step back, look, zoom out, because it's also a timing question, right? Over time, we know that market problems eventually get resolved. Am I looking at a 5-year window, a 2-year window, a 6-month window? In a 6-month window, I can see a lot of volatility, and I would not be as sanguine on a 6-month basis as I would be on a longer-term basis. Is there going to be more volatility this year? Yes. Do people are still thinking that we end the year either higher than we are today, or sort of flattish to where we started? That's really going to depend on the developments over the next couple of months. And I think that a month ago this was, let's see how long it takes. Well, we're into a period of time now where that compression and just the traffic jam of getting through there is going to be a problem, and is going to keep energy levels high. And that's going to be hard for growth. I don't see how that doesn't impact earnings.
So taking a step back, I took a walk, and I'm thinking, well, what has structurally changed if you take a look at a 3 to 5 year horizon? And what a lot of people keep saying is maybe not the equity story, not the AI story, But does the bond market story change, given suddenly the renewed need for fiscal, the renewed need to sort of support, from a debt financing perspective, a lot of social initiatives that are only getting more current?
Well, that turns into a much longer, deeper discussion about what is the point at which the government can not keep throwing money at things. And at some point, you would think that there is a point at which bonds start to get higher price because everyone's worried about the fiscal. Every time I think that's going to happen, it seems to back off. So I don't know what that point is. Right, but it's true. There should be a point. Maybe that's why gold is sitting at $4,500, because people are going, at some point, every currency has a problem because every government is too indebted. I don't know what that point is, though, and that point keeps moving.
Sarah, why do you think the market is so fixated on Trump's truths and just not looking at what he's doing? Just this week, again, another U.S. aircraft carrier and 2 destroyers were sent again to the region. The troop buildup is consistent, and it's getting higher.
You know, I don't know if people think that that is a strategic move, if that is an actual move, if that is a psyops move. I don't know. And I think that the problem with dealing with a situation like this that's so fluid and everybody has something to say and everybody has an agenda, it makes it really difficult to parse out what's actually going to happen. You know, maybe we could just be looking threatening. Maybe we're actually going to go and put boots on the ground. People said no, then they said yes, then they said no. I don't know what the answer is, but I think that trying to parse out what's happening from what people are saying is increasingly difficult, and the market is obviously not necessarily buying that to the extent that it was in the beginning.
So where do you hide?
The term hide is such a tough one, because when you're managing money, you have to be managing money, right? But I think this goes back to where we were sort of positioned into the beginning of the year, which is balance sheets, cash flow, all those things really matter. All of the money that is being spent by the Mag 7 has made the Mag 7 less attractive than it was. I think that was a place where people spent a lot of time. There was a lot of money in there. Some of that's come out because people are worried about that spend. There's still a lot of companies that have good cash flow, decent balance sheets, and are doing business that will continue to do it. I think growth is going to slow. It just makes it more tricky.
NVIDIA's done nothing now for months. Microsoft was down pretty hard in the month of March. Alphabet down too. Meta down by double digits. What's going on with those names?
I think the big concern is they're all spending a lot of money. They're all spending a lot of money, and we're trying to figure out what the returns on that money are going to be. Right now, since they're all running into it, it was fine for NVIDIA for a while. Then people get worried about it. If you start to see anybody pull back on CapEx, that's going to give that whole sector a scare, because everybody who's spending a lot of money is now borrowing it.
Do you think we're close to that moment, that earnings call, that release?
I think we're closer than we were. I think we're much closer than we were, because you start to see the electricity issues with data centers too, right? Maine just said no data centers for two years. We want to see what happens. There is a conflict now between energy and data centers that there wasn't before, that this is just exacerbating. I mean, it was there before, but it wasn't in the headlines in the same way before. And now you're starting to see that. And I think that could kick something like that off, and I think that could be problematic.
Is that the reason why people don't see necessarily big tech being the obvious leader out of this potential rut that we see in the equity market?
I think so, but on the other hand, I would take the counter argument and also say they are in the best position to weather this in the end. So even if they do pull back CapEx, even if if people start to get really worried about that, they're still generating a lot of cash. They're going to generate a lot of cash. So to the extent that those multiples have compressed a little bit, that probably makes that part more attractive, because you don't know enough about what's going to happen with some of the other sectors that have pulled back, like software. Although I definitely think that's going to be an and not an or for AI.
Back above 110 on Brent just moments ago. That rally now up by 8% on Brent crude to about 109. Back above 110 on WTI, I should say, up by 10% on the session. So a serious rally starting to build.
And we haven't really seen it go materially in the other direction. The expectation is for escalation before any kind of de-escalation. The growing risk is there could be additional oil facilities hit during this escalatory period.
I know that there are different contracts, and WTI is looking at May, and you pointed out that Brent is at June, but at this moment, that contract for WTI that you're showing on your Bloomberg screen is higher than Brent right now. And you have gasoline prices in America north of $4 a gallon. Potentially, this continues, as the president outlined last night. You are going to see closer to 5 as we go to peak driving season in the United States.
TI right now, 110. We're higher by 10 percentage points on the session so far. Sarah Hunt of Alpine Saxon Woods. Sarah, good to see you. As always, thanks for dropping by. Let's give an update on stories worldwide with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. In a primetime address, President Trump saying the U.S. is very close to completing its military objectives in Iran and vowing to hit the nation, quote, extremely hard over the next 2 to 3 weeks. Still, the speech lacked new announcements and, most notably, a precise timeline for an exit. The Trump administration is preparing to outline a tiered system for its tariffs on steel and aluminum products. Sources telling us here at Bloomberg some derivative products will maintain a 50% duty, while many products will be tariffed at a lower 25% rate. And NASA sending a crew of astronauts towards the moon for the first time in over 50 years. The Artemis II crew has reached stable orbit in space, marking the initial phase of the 10-day mission. The spacecraft is expected to swing around the moon on Monday. Dr. Bloomberg Brief. John?
Yahira, thank you. Thank you for the update. Session lows here. We're down by 1.7% on the S&P 500. Up next, the Monocores plus Ruqayya Ibrahim of BCA Research as crude prices continue to climb. WTI north of 110.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until the midterm election.
Hear it first on Bloomberg.
I think there's some really, really strong secular tailwinds. I think this is a moment in time, this conflict. I think as I sit here in September and October, this will be in the rearview mirror. I'm sure oil prices will be a little bit lower at that point in time. And I think the year ends up in a much stronger spot than we are right now. It's pretty challenging right now. If I'm sitting here in 3 to 6 months, we'll be talking about a much, much different backdrop.
In 6 months' time, we'll play that clip again. That was Jim Zelter, the president of Apollo Global Management, with a much more constructive outlook on this moment, given the stress we're in right now. So let's take a picture, a snapshot of that stress. We're down across the board. Equity markets declining by 1.7% on the S&P 500. On the NASDAQ, we're down by 2 percentage points. In the bond market, bonds down, stocks down, yields up across the curve. 10-year yields this morning higher by 3 basis points at 435. Twos at 383. And check out crude, WTI and Brent. Now, just bear in mind, we're not comparing apples to apples here. The front month of the WTI futures curve at the moment is still May. On Brent, it is June. So if you were to compare June to June, WTI right now is trading about 98 on the June contract. So still something like a $10 spread here between the two. But the move we're seeing in crude, regardless, up by anywhere between 8 to 10% at the moment, near the front end of the futures curve. Off the back of the comments from the president overnight, this war is going to go on for 2 to 3 weeks, and anyone who works in this energy space right now will tell you things are stressed enough. Another 2 to 3 weeks, it can get a whole lot worse.
There are a couple different issues. On one hand, you've got the physical shortages that are taking place in Asia, Southeast Asia in particular, but that also will be taking place should this go on through the summer in places like Europe. But there also is now a question of escalation in a region that accounts for 20% of the world's oil and gas supplies could potentially cause further damage to some of the oil facilities, the natural gas facilities. That is a huge concern for a lot of people in markets.
That's the price action this morning. Let's get you some morning calls. First up, TD Cowen lowering its price target on United Airlines, noting investor skepticism due to, guess what, higher energy prices. That name is down by 5%. Your second call from KeyBank raising its target on Diamondback Energy, expecting global oil dislocations to continue into the summer. That name is up by 3%. And finally, Citi raising its target on Exxon, saying the conflict in the Middle East could create, quote, structural re-engagement in the sector. That name is up in the pre-market by 3%. That's some McKinsey speak where you don't really need it, right?
It's just amazing. Structural tailwinds to the industry that is currently
re-engagement, yeah.
Structural
higher oil
re-engagement.
prices.
Okay. Let's stick with energy. President Trump vowing escalation in the war with Iran, sending crude prices surging.
We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. When this conflict is over, the strait will open up naturally. It'll just open up naturally. That will resume the flowing and the gas prices will rapidly come back down.
Ruqaiya Ibrahim, Chief Commodity and Energy Strategist at BCA Research, writing the following. Emergency supply relief measures to ease tightness in global oil markets are insufficient. A large recovery in physical transit through Hormuz is still needed. Ruqaiya joins us now for more. Ruqaiya, welcome to the program. Let's talk about the phase that we're in and might be entering. You know how this works. I've seen it in your research. Ultimately, when you have this kind of situation, you draw down inventories first. And then you start to worry about moving into a demand destruction phase. Are we entering that phase? Are we already in it?
Yeah, good morning. So I do think that the difference this time around is that in terms of demand destruction, there are really two factors. First of all, there's the higher prices, which will cause consumers to reduce their consumption. But also just the magnitude of the disruption and the shortages has already started causing some consumers to reduce their consumption, especially in Asia, where we see things like rationing, policy adjustments for shortened work weeks, working from home measures, things of that nature. So I think this time around, the demand destruction is likely to occur earlier because of that.
So, Ruqaiya, when the president says this could go on for 2 to 3 more weeks, where do you expect that demand destruction to show up next?
Right. I think what's happening now is we're seeing Asia at the epicenter of that demand destruction, but it is going to ripple across the global market, spread to Europe, as not only oil prices move higher, but the shortages also take time to impact European markets just because of differences in transportation delays.
When we see this start to move around the world, moving from Asia to Europe, what kind of price premium are we going to see when you start to see demand destruction increase?
Yeah, I think what's going to happen is we're going to continue to see global oil benchmarks move higher as long as transit through the Strait of Hormuz is disrupted. And I think the reason why oil prices are up today is because not only did President Trump not provide a clear sort of endpoint for when the Strait of Hormuz is going to be reopened, but the 2 to 3 week time frame also raises the possibility that energy infrastructure will be damaged during that period, which adds another layer to the disruption because it could potentially prolong the period that energy shortages are in place, even after the Strait of Hormuz is ultimately reopened.
How do you think about when the Strait of Hormuz, though, does ultimately become reopened? How long do you envision it to be going back to normal oil flows?
Yeah. I think that really depends, first of all, on whether energy infrastructure is disrupted. A couple of weeks ago, for example, we saw the Qatar energy facility being attacked. And, the news that we got from there is that it's going to take several weeks for, the production to normalize from that facility and reach full capacity. So, I think, first of all, it does depend on whether energy infrastructure is impacted, but also it does take several weeks for the production to come back online. According to our estimates, there's about 9 million barrels per day of crude production that has been throttled from the region. And that just can't be switched back on overnight immediately after the Strait of Hormuz is reopened. It's going to take weeks and potentially over a month for production capacity to reach its pre-crisis levels.
Ruqaiya, we're talking a lot about oil and natural gas, but it's also aluminum. There's about 9% of the world's supply comes through the Strait of Hormuz, and it really is related to Middle East production. We're talking about fertilizer. We're talking about a host of other materials. How much has that already been accepted in markets? How much has it already been priced in?
I think what we're seeing is that the first round effects are being priced in. We're seeing things that are immediately, directly impacted by the closure of the Strait of Hormuz go up. So, as you mentioned, oil, gas, fertilizer prices, urea prices, for example, have really shot up. But we haven't really seen the second round effects take place. And, by that, I mean things like agricultural prices. They are a second round effect because higher fertilizer prices, higher natural gas prices also push up agricultural prices. So I think we're starting to see that happen. And the longer that the Strait of Hormuz closure remains closed, the more likely we're going to start to see these second round effects take place.
Do you think that right now, when you look at the futures curve, the forward-looking curve for commodities in particular, that the market has repriced sufficiently? I'm looking at WTI still sub $7 at the end of the year. I'm still looking at Brent crude in the 80s at a time when some people are wondering, exactly as Anne-Marie was asking, how long it's going to be until we get back to normal, whatever that looks like, as well as the stockpiling of resources that comes in the heels of a supply disruption.
Yeah, it's pretty remarkable that, the prices towards the end of this year and even more so further out in the futures curve haven't really increased that much. I mean, of course, they have increased, but the magnitude of the increase is really not that much. And I think, again, it really does depend on the duration of the closure of the Strait of Hormuz, because that, as this closure prolongs, it will lead to a more long-lasting disruption that will push up prices across the rest of the futures curve. But, ultimately, the futures curve is already extremely backwardated, and it will remain backwardated because what is happening is really a shortage that we're seeing right now. But as the disruption continues, we're going to see prices rise across the remainder of the curve until we eventually reach demand destruction levels that will then push down prices towards the end of the towards the back of end of the curve, as demand comes down sharply.
Ruqaiya, appreciate the breakdown. Thanks for joining the program. Ruqaiya Ibrahim there of BCA Research. It's not just about the inability to pay the prices that crude demands right now, an energy product. It's the absence of the product right now. It's the actual shortages that Ruqaiya's talking about that have started in Asia, and you might see elsewhere in a few weeks' time.
These are pandemic-era shortages in terms of just the inability to move around the way that you previously had, and potentially, when does that become codified in restrictions from governments saying don't use these certain supplies?
Just to give you a picture of the backwardation right now, we talked a lot about the 110 at the front end of the curve, of the futures curve for WTI, around 109.60 at the moment. Let's take December. I've always had one eye on the back end of the year. That's trading around 73. So when people talk about backwardation, if you're outside the oil market, just tuning in, interested in what's happening here, all that really means is the front end of the futures curve is way up here, and then way down here further out is where crude prices will be, potentially, in the future.
The expectation, it's going to go back down, way back down. And actually, that number has been going down over the past couple of trading sessions, so the normalization is widely expected.
Up next on the program, more data, jobless claims, just around the corner.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The cash opens just around the corner, 60 minutes away. The price action shaping up as follows. Equities declining by 1.5%, down by 2 on the Nasdaq, following a really strong 2-day rally on the S&P 500. The strongest, the biggest 2-day rally we've seen going back to May of last year. In the bond market, yields look like this, going into jobless claims, seconds away. Yields higher by 3 basis points on 10s, up by 2 on 2s. With this move in crude, WTI briefly breaching 110. Brent crude advancing this morning. Brent higher by close to 8% at 108.90. Let's get you some economic data. With that data, Mike McKee has more. Hey, Mike.
John, well, it looks like the folks who are listed in the Challenger layoff announcements reports aren't being laid off yet. At least they're not filing for jobless benefits. Just 202,000 last week. That is down from 211,000 the week before. In terms of continuing claims, we see 1,841,000. That's up from 1,816,000 the week before. Basically, what we could say is there's just no change in the jobless claims numbers or the continuing claims numbers, basically, as the low hire, low fire economy continues. The other number out this morning, trade balance, negative $57.3 billion. That's up from, down. It's worse than the negative $54.7 billion that we had last month. These are February numbers. Imports rose by 4.3%. Exports rose by 4.2%, which is why it got a little worse. So even though the president's been on a trade kick, and this is the anniversary of Liberation Day, we're still seeing a fairly wide trade deficit based on imports of goods into the United States.
Mike McKee, stay close. Let's talk about that jobless claims number, 202. That is the right kind of downside surprise. The estimate was 212. So we've got a rolling 4-week moving average of around 208,000 on jobless claims, which is absolutely phenomenal. Put together with what we've seen in the data so far this week, retail sales okay, pretty strong. We saw the ADP number pretty decent as well. ISM, the headline number, we'll get to the details later, but the headline number was pretty good too. All of that building up going into payrolls Friday.
When you put this all together, all of these upside surprises, and you take a look at the U.S. Economic Surprise Index, it is now at the highest level going back to October of 2023. We have underestimated how much strength collectively as analysts across Wall Street, underestimated how much strength was in the U.S. economy, both in the labor front as well as in the manufacturing and other sectors fronts. How much does this buffer the U.S. economy from any kind of growth shock, and how much does it just sort of feed into the ability to absorb price increases and pass it along in the form of inflation?
Mike McKee still with us. Mike, let's talk about that. To Lisa's point, how much momentum did we have coming into this month and moving into April?
We did have some decent momentum. When you look at the sales numbers, American consumers still out there, even though we have seen some decline in consumers' confidence. The question is, do they continue? Most of the data we have now is before the war started. We didn't get the latest retail sales numbers for March yet. So let's see how people hang in there and how spending patterns might change given the cost of gasoline. Labor market hasn't changed changed in months now. Basically, companies aren't hiring, but they're not firing either. Everybody waiting to see what's happening with tariffs and now with the war.
Mike, does this give the Federal Reserve more space to worry about the other side of the mandate?
It does. They have basically said they're more worried about inflation than they are about jobs right now, because inflation they know is going to rise because headline inflation will go up with oil prices, but does it get into other parts of the economy, and what is the continued lagged effect of tariffs? That's what they are worried about, and they're not going to know for a while. I made the argument that it's a little bit easier, maybe, job for Kevin Warsh if he joins the Fed on time, because now he can tell the president, you know, with inflation above 4%, and predictions are we're going to get there based on oil prices, I can't justify arguing for lower rates. Instead of having to say the economy is strong and we don't need to lower rates, he can say, well, inflation's too high. So maybe he stays out of the president's crosshairs for a couple of months.
Yeah, good luck, Mike. Thanks for that. Appreciate it. Mike McKee, thank you very much. Wishful thinking there. I'd love to know how that conversation would go.
Listen, Mr. President, look at the inflation levels, and Mr. President's going to say, absolutely not. We want those rates lowered. We already are hearing it right now.
Looking ahead to payrolls Friday, let's get to the data. The estimate's 65K. That's the median in our survey. Talked about this very wide range. At the high end, we're looking for 151. That's the high estimate in our survey. The low is negative 16,000. The number drops 8:30 tomorrow morning. We'll be here in a studio right here at Bloomberg Surveillance, live from 7 a.m. Eastern Time all the way through to 10 o'clock. Let's give you an update with Alejandra Grindel of Ned Davis Research on what she's seeing in the data. Alejandra, welcome to the program. The data so far this week, pretty strong. How much momentum's in this economy?
Yeah, so really, thanks for having me again. So yeah, really strong data. You know, the jobless claims do reflect the post-war environment, but as Mike McKee mentioned earlier, a lot of the data has also been pre-war. But, you know, ultimately the bottom line is we went into this crisis and, you know, maybe not a booming position, but at least far from recession territory. And typically we've found is that when you have policy uncertainty, when you have wars, the economy tends to be slightly more resilient if it's starting from a good starting point. In other words, we tend to shrug it off. That being said, I don't think we'll, you know, come out of this unscathed. Affordability isn't necessarily great. Long-term yields have risen, so it's a little harder to buy a home, obviously. Maybe the Fed will delay the potential rate cuts that we were expecting. So we do see downside risk from this crisis, but we don't anticipate it putting the U.S. economy into recession.
Well, let's just stand the momentum we've got for now and think about what it might mean for the Federal Reserve in the future. We've been told repeatedly over the past 5 weeks or so that there is low potential for second-order inflationary effects because, quite simply, this economy is not strong enough and the labour market's not tight enough. Does the data validate that consensus view?
So, you know, I think a lot of people have drawn parallels to, say, 2022, right, where you had that oil price shock. And if you compare, so I did mention U.S. not headed for a recession, but if you compare now versus back in 2022, where you did see those larger second round effects, and it's obviously freaked out a lot of central banks around the world, things were different then. I mean, the starting point in inflation was much higher, demand was much stronger, and it was almost like you had this supply shock already jump on something that was already headed toward, you know, central banks that were already headed toward excessive tightening. So I think right now, yes, things aren't by any means horrible, but you know, the outlook is a little more balanced. Of course, it has to do also with how long the war lasts, right? I mean, that's what everybody's saying, and none of us actually know. So anytime you have these higher energy prices, and if they stay for a long period of time, say 6 months to a year, which, as you talked about earlier, with the backwardation of the oil curve, a lot of people don't anticipate that, but assuming that does happen, then that will get into our heads, create second round effects, and then lead to a long-term spike in long-term inflation expectations. And that's really what I think the Fed's going to be looking at.
It's a complicated backdrop for the Fed.
Yes.
It's an even more complicated backdrop for the European Central Bank. I just wonder whether the inflationary pressure is going to be similar overseas or whether it's actually going to be more, I don't want to use the transitory word, but more transitory, more temporary in nature because of the growth shock aspect that might be dampened by the robust growth in the U.S.
Yeah, so definitely we have found that it's not an apples and oranges comparison between the U.S. and Europe. Europe does tend to feel the inflationary impact and the second round impact of energy prices to a greater degree than the U.S. does. I mean, we saw that. But again, 2022 is very different from today. In the case of Europe, you don't have that same strong demand, stronger labor markets, that higher starting point on inflation. So there are some parallels from that respect. But yes, they tend to see the stronger second round effects. And you also have to keep in mind the Fed has a dual mandate, employment as well as inflation, whereas the ECB just has the one mandate of inflation, and they target the headline as opposed to the Fed targeting the core. So they are in a slightly, I would say different position. It is possible that the Fed, that the ECB will move to easing policy this year, tightening policy. I have to get that right. They might move to tightening policy this year, and that wasn't our base case. But I think, last I checked, the market was anticipating 2-3 rate hikes by the ECB, and given just the downside risks that the oil price shock does present to European growth, we don't quite anticipate that much tightening. Maybe one hike to sort of show that they mean business, right? But it's kind of stay in wait and see mode after that.
What are you going to do with tomorrow's jobs report, given the fact that it feels a little bit like doing the crossword puzzle at the back of a newspaper after reading the headlines?
Yeah, it'll be just the many of pieces of data that we put in together to come up with our final outlook. We don't like to hang our hat on one indicator. That sometimes, the data is prone to quite a bit of revision too, but it's still a key report, and it does represent that March environment. And as I mentioned before, we don't have a huge amount of data reflecting March. It's a lot of soft data at this point. So this will be some hard data reflecting that number. And to your point, there's a pretty wide range of expectations. Our view is we're a little bit below the consensus of about 50,000, a little bit of payback from the healthcare strikes that we had in February, as well as the poor weather that we had in February. If the number goes significantly above or significantly below, there could be an adverse market reaction either way, because if it goes really low, there's a view that the economy is not as strong as we think. If it goes above, it could be viewed as inflationary. So we're hoping for that Goldilocks sort of 50,000 scenario. Who'd have thought 50,000 would be Goldilocks? But I think seriously, it is. Yeah.
I know your base case is still for no recession, but a lot of guests have come on the program and actually upped the probability, though, by the end of the year, higher than they thought at the start of the year. What would it take for you to potentially relook at that potential outcome?
Oh, yeah. And if you were to ask me now versus 2 months ago, definitely see a higher risk of recession, but it's still a low risk, if that makes any sense. It would really have to do with the longevity of the war, right? How long do oil prices stay elevated? How do they start having second round effects? Does the Fed, do long run inflation expectations get impacted? Good news so far, they haven't been. And does that have to move the Fed toward more aggressive tightening? Again, maybe not recession end of year, but it could put that into next year.
Alejandra, appreciate your time responding to that data. Thank you. Alejandra Gondol there of Ned Davis Research, following better than expected economic data in America. Another one, downside surprise on jobless claim. As we always say, the right kind of downside surprise. Check out this news from Blue Owl. Stock is down in the pre-market by something like 8%. Just bear in mind, this name at the end of last year was trading around 15. It now trades around 8. It's been cut in half almost. The stock is down by more than 8%. These headlines from the Bloomberg team just moments ago. 2 private credit funds capping redemptions of 5%. Go through the redemption requests individually for each fund. Investors in the $36 billion Blue Owl Credit Income Fund, one of the industry's largest, asked to pull 21.9% of shares in the 3 months ending March 31, according to an investor letter. As for the other fund, the Blue Owl Technology Income Fund, saw shareholders asking for 40.7% back, compared with 15.4% just 3 months earlier.
And Blue Owl is going to respond to these redemption requests by limiting it to that 5% cap that some of its other industry peers have been doing, in contrast to earlier allowing a greater proportion to be redeemed. The scope of requests for redemptions highlights how Blue Owl really has become sort of the epicenter of a lot of the concerns, given the fact that they invested heavily in the data centers, as well as other technology and other in software sectors that some other people said were a bit riskier. A question here about whether this is a specific issue to a couple of different loans or whether this is an industry-wide issue. Jim Zelter was on moments ago talking about how he sees this as, what was it, noise?
Take a walk.
Take a walk.
Noise for the broader asset class.
Correct.
I think is the frustration coming from some of these private credit managers right now.
Because there are people who have behaved in a more disciplined or less risk-on kind of way. That said, there's clearly is an issue that some people continue to harp on, and you can see that in the redemption
And the
requests.
clue might be in the name, Blue Owl Technology Income Fund. And that's why the redemption's there. The number is so much larger, I would imagine. The issue I've got with this brand, we've talked about this a few times over the last month or so. The problem you've got now, knowing they're going to cap redemptions at 5%, that is basically the industry standard. And as Jim said, it was there in black and white ahead of time anyway, that if you won your money back, you're going to put in a much bigger redemption request. So it'd be interesting to me what the source of the redemptions are, how isolated they are, and a handful of investors who are thinking that way and putting in a bigger number to redeem.
Does 40.7% of this Blue Owl Technology Income Corp represent 40% of total investors, or two investors that are putting in significant amounts asking for redemptions? There's also a question at what point some of these funds actually have to start to sell, because what you have seen is that inflows to some of these funds, not Blue Owl, but more broadly in the industry, have been matching roughly what the outflows have been, so you don't have to have the fire sales. At what point do you actually see that pressure valuations of the underlying assets?
Blue Owl down by 8 to 9% so far this morning in the pre-market. Let's get you an update on that and stories elsewhere with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. Applications for U.S. unemployment benefits fell last week, suggesting layoffs remain low. Initial claims decreased to 202,000 for the final week of March, shy of what Bloomberg economists were anticipating. These numbers coming ahead of the March payrolls report set to be released tomorrow at 8:30 a.m. Eastern. We will see you here. Blue Owl is limiting redemptions at 5% for two of its private credit funds following a massive surge in withdrawal requests. Investor letters revealing shareholders tried to pull 22% of shares from its credit income fund and 41% of shares from its technology income fund, the firm saying the caps are necessary to balance the interests of all shareholders. And the headquarters of Goldman Sachs in Paris was placed under police surveillance last night following bomb threats believed to be from an Iranian group. The threats come just days after a bombing attempt was foiled near the office of Bank of America in the French capital. Citi telling its Paris and Frankfurt employees to work remotely as a precaution. That's your Bloomberg Brief, John.
Yahara, thank you. Thank you for the update. Up next on the program, Oh-Seung Kwon of Wells Fargo warning prolonged war limits potential upside. Plus, Danny's going to be back. She's got your morning movers. Blue Owl capping redemptions from two private credit funds. That name down by 9% in the pre-market.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Virginia report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
There is so much uncertainty. What the market is not paying enough attention is the persistence of the shock, even if the war ends in 3 or 4 weeks. It's not just about the war is over, it's about normalizing the flows in the Strait. Lower growth, higher inflation. The question is, how much lower, how much higher?
That was Claudio Irigoyen there of Bank of America on the outlook for inflation, for growth, for the global economy, and what central banks might do or might not do in the future. Your scores this morning look like this as we count you down to the opening bell. Equity futures near session lows. We're down by 1.4% on the S&P. On the Nasdaq, we're down by 1.8%. With some morning movers, some single names. Danny Berger has more. Hey, Danny.
Hey, John. It's shaping up to be an especially painful session for Blue Owl. Stunning redemption requests for 2 of their BDCs. We were talking about it before the break. One of their tech-focused ones, 41%. The other one, 22%. They are gating the funds, only allowing 5% to come out, as is the standard for their prospectus. Blue Owl does point out that 90% of investors said that they're sticking with the fund, so that 10%, it was really concentrated of the outflows. But again, these numbers are stunning. Some of the bigger numbers we've heard, Oaktree, for example, 8.5% was their redemption request, which, by the way, Matt and I will be speaking to the co-CEO in about 2 hours' time of Oaktree. But still, these are big numbers. It has the market worried. Blue Owl down almost another 10%. It's already lost 65%, this stock, since its peak. Elsewhere, we're looking at the impact of higher oil prices and generally negative risk sentiment this morning. WTI up as much as 12%. Chevron, Exxon, Occidental Petroleum, all the oil majors undo some of their losses over the past 2 days and post up gains as high as nearly 4%. In the case of Oxy, the flip side of this are those that will have to pay for higher energy costs, and the airlines continue to be the poster children for this. The American-based carriers down at least 4% this morning. In the case of Delta and United, that's 4 1/3%. Of course, the woes even more acute for international, European, and Asian airlines, looking at higher ticket prices, but still the pain clearly expressing itself this morning, John.
Hey, Danny, thank you. Thank you very much. Danny's going to guide you through to the opening bell in about 10 minutes' time alongside Matt Miller, so look out for that. The pain for the airlines. Think about the month they were having before this war started, the guidance they were offering, really strong numbers they'd seen in the underlying business, and then this, bang, different story.
20 to 30% of their total costs suddenly increased by more than 50% with jet fuel now in short supply in places like Europe. How do they pass this along to consumers? Will they tolerate higher prices? That is what we're going to be looking for in the earnings season.
Things have changed for the team over at Wells Fargo. Oh-Seung Kwon cutting his year-end price target on the S&P to 7,300 from 7,800, writing this. Other than a firm resolution, we don't see many upside catalysts and see the setup skewed more negatively for equities. Oh-Seung joins us now for more. Oh-Seung, good morning.
Thanks for having me.
Obviously weren't expecting the war. Not many people were. Things have changed. But typically you see Wall Street wait. Not married to their forecast, but want to really understand what they're confronting. You've moved fairly quickly. You've waited a month or so. What's changed for you permanently for the year ahead?
Yeah, I mean, I think the biggest risk is inflation. I mean, that's something that we have been highlighting even before Iran war, that potential inflation reacceleration in the second half of the year is the biggest risk to the equity market. And now that the Iran war happened, I think that risk has gone up. At the end of the day, inflation is really too much money chasing after too few goods. Money supply has turned. Inventory levels are low. We are firmly in a restocking cycle, which typically drives inflation. So that underlying backdrop, plus what we're seeing in commodities, I think that sets up pretty negatively for second half inflation.
We live in a nominal world, and there are instances where that can be good for stocks. Why is this bad for stocks? Margin risk, what is it?
Yeah, no, I'm not saying this is, absolute negative for stocks. And I think it ultimately depends on what the Fed does. If the Fed is okay with 3%, then I think equities are going to work. And there's a good chance that they are going to be okay with it because I think both Washington and the Fed want to inflate out of this deficit issues through inflation, basically. So if they're okay with 3%, and look at what's happening in Japan. And I mean, that's the perfect example of the debasement cycle, which is basically translating into rates ripping, FX collapsing, and stocks are going higher, actually. So, if something like that happens in the U.S., then I think equities are still going to work, at least in dollar terms. Maybe not in gold, but in dollar terms.
At what point, at what levels do yields become a constraining factor on the multiples on equities? And I'm not just talking about the front end, which is more controlled by central banks, but more 10-year denominations and the borrowing costs there.
Yeah, I think it depends on what's driving rates higher. If rates are being driven by higher inflation, and a hawkish was our top sectors heading into this year. Yeah, thank you. We were more cautious on tech, but with this event, I mean, what this did was it at least put a dent on the growth outlook that people were getting really bullish into. And the biggest driver of that bullish outlook was A, the restocking cycle, which I think is going to continue, but also B, the one big beautiful bill, the tax return, which is going to get wiped out, basically. The thing is, I think the economy is going to be okay because the cost of living that's spread out over the next 12 months. Whereas one big beautiful bill, that's happening today. People are collecting their tax returns today. So that's going to be a cushion over the next 6 months at least. So I think the economy is going to be okay. But at the end of the day, this is a K-shaped widener because the bottom 40%, they lose right away because they weren't getting that much from the tax return anyway. Whereas the top 20%, even over the next 12 months, they are still going to benefit by about $1,500. So I think this is a K-shaped widener.
Osung, it's good to see you. Thanks for the update. We appreciate it. It's a moving target, I know, and things are moving pretty quickly. Osung Kwon there of Wells Fargo. We're getting closer and closer to a long weekend, and you just wonder where we'll be when we come out the other side.
Long weekend? What are you talking about? It's not going to be a long weekend for us. We're going to be here tomorrow, but that's the reason why. How many people are trying to de-risk ahead of what is a long weekend for most people?
I like what Osung said there. This one big beautiful bill, all of that money, that tax refund, the president talked about last night, how much of that is just going to your local gas station for most consumers?
3 days for the president where the market will be largely closed. Troop build-up continues to build. Back and forth in terms of the communication and the verbal intervention we've seen so far. That's what I'm trying to figure out what the next few days looks like in this conflict.
Yeah, and how much people are trying to de-risk ahead of that, because we just got a warning shot saying escalate to de-escalate, and people are taking that seriously.
To Bramo's point, we will be here tomorrow morning, 7 a.m. Eastern Time. Not quite an early start, an early-ish start. Going into this, the payrolls report at 8:30 Eastern Time. We'll catch up with Priya Misra of JP Morgan, Francis Donald of RBC, Torsten Slock of Apollo, and the National Economic Council Director, Kevin Hassett from New York City this morning. Good morning to you all. This was Bloomberg Surveillance.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
We have two crises, two essential crises, and for both it's now or never, democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
All right, 30 minutes until the start of trading on what feels like Thursday to a lot of us, including me. I'm Matt Miller.
But it's really Friday for most of us. I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, from hopes of peace to escalation fears, once again, President Trump offers no clear timeline on Iran while pledging more aggressive action ahead.
The month-long turmoil forced traders to unwind position, with some of the world's biggest hedge funds posting heavy losses in March.
And Apollo's Jim Zelter downplays concerns about private credit, even as firms curb withdrawals amid a surge in redemption requests.
I mean, it's Blue Owl's redemption request this morning. That's everyone's attention. 41%
Massive.
For their tech fund.
Massive.
And of course, they're putting up the gates and just giving.
But if you know they're only going to allow 5%, then you have to request 100% of your money back.
And maybe that's what happened. They say only 10% of investors in the fund asked for their money back. Matt, here at the Open, I'm watching some of the big Mag 7 stocks. A couple things going on. For one, they're all getting hit just because of the negative sentiment in the market. But Tesla specifically down. They had deliveries in China, which were poor, and their first quarter deliveries just coming out that misses estimates at about 358,000. The estimate was 372. Shares down 3.4%. Meta, Alphabet, those also falling as well. They're plunging even more as governments scrutinize their practices. Indonesia, Matt, you pointed this out to me, issued a second summons to ban social media for kids.
Yeah, and I think more than 200 child advocacy groups have called for YouTube to ban AI from the kids' platforms. Of course, YouTube owned by Google. Let's look at energy stocks this morning. Surging on the rising price in oil. So Apache, Marathon, Valero, Diamondback, all up 3 or 4% as oil rises, futures fall. Take a look at cross-asset piece here. S&P futures, NASDAQ futures down pretty sharply, almost 2% for the tech-heavy index. And then oil surging, and you have NYMEX crude up 12% right now, Brent up 8%. And in fact, Brent is priced at lower than NYMEX on the front end, or the front contracts. And Danny, I guess that's because what? Brent crude is trading a June contract?
Yes. Yeah. And then WTI is still trading at its May contract. And as is usual on the curve, the closer you are to the contract, the higher it's been trading right now because of all the drama, and then it starts to fall off. So that's the reason for the disconnect. impact at the moment.
And this all coming, the surge in oil prices, after President Trump in his primetime address said the U.S. operation in Iran is close to completion, but he signaled an escalation ahead.
We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. When this conflict is over, the strait will open up naturally. It'll just open up naturally. That will resume the flowing and the gas prices will rapidly come back down.
Joining us now is Wayne Sanders, Bloomberg Intelligence Senior Defense Analyst and a retired Army Colonel. Wayne, I mean, it's a market that decided we didn't learn anything new from the speech last night. What was your takeaway?
No, I agree. I think nothing has really changed in terms of military posture, where we actually are right now. You've seen an escalation, an uptick of deployment of assets over to the region that does still support what could potentially be, an increase in activity over the weekend. If you look at the air assets, you have increased A-10 deployments, which is a close air support aircraft, as well as Apache helicopters. You have the B-52s in the area. So in terms of trying to actually create an increased airstrike capability for over the weekend, that the U.S. is ready to do that. They have the means that are able to be in place. The Straits of Hormuz being naturally open, maybe some of those targets will actually be coastal missile storage facilities along that area. You could see the A-10s and the Apaches actually coming through and softening targets in that area, similar to some research that we put out last week.
It's unclear to me, I think unclear to a lot of people in the markets, whether they're opening the Strait of Hormuz is a goal, is an objective. He said he won't accept a ceasefire from Iran unless the strait is open. Also, we've heard Pete Hegseth say it's not an objective. And it seems like the administration isn't terribly concerned about that. To me, more worrying, though, Wayne, is the more than 400 kilograms of highly enriched uranium that may or may not be in Iran, may or may not be accessible. What do we know about this material, where it is, and how long it would take the Iranians now to turn it into nuclear bombs?
No, absolutely. And it's probably for all intelligence professionals that are out there working in the government, it ends up being one of the biggest issues is confirming or denying where it is, how much they actually have, whether or not it's actually buried in one of the strikes that have taken place. And without boots on the ground, it's very, very difficult to be able to confirm or deny any of the presence there. And you increase risk substantially if you try to actually put any ground forces in the area to be able to find it. So at this point in time, the options are limited to saying, where is this? If you actually think you know where it is, you don't want the media, you don't want anybody in the public to be able to know that. You don't want the enemies to know that you think you know where it is. So it ends up being this gamesmanship play in terms of where those strikes are. Some of the strikes over the weekend, if it continues to escalate like this, could potentially be against targets they believe is where the enriched uranium actually is. But there's nothing that can confirm that at this point in time, and I'm sure they're going to keep that on the classified.
Can I just underline, though, this has to be the most important aspect of the entire war, right? Because we don't trust the Iranians, and we need to definitively confirm that they cannot build a nuclear bomb. After we killed the Supreme Leader's mother and father and wife and son, he should be very angry. So we need to confirm with no doubt that they can't make a nuclear weapon, don't we?
Absolutely. And even if we were to pull out of Iran, I guarantee you that would be priority number one for the intelligence community within the United States. They're going to continue to be able to put ISR assets, intelligence, surveillance, and reconnaissance assets on that. They're going to continue to use human sources that are out there to be able to confirm or deny where these things actually are. So even if the military strikes ended, this would still be a campaign that will continue. But their production facility and their ability to do something with it inside of Iran is obviously extremely degraded based off the amount of military strikes. So at this point in time, the intelligence community would also be looking for where some of these connective tissues are with some of their, I call it the big four partners between China, Iran, North Korea, and Russia, where that actually plays and whether or not the scientists are back involved, where would this actually take place, what labs are building it, and then whether or not they're actually doing any additional enrichment facilities. Right now, they've destroyed the ones that we know of. It's really a question as to where they could actually process it at this point.
retired Army Colonel Wayne Sanders. Thank you so much for joining us now of Bloomberg Intelligence. Now, the Trump administration is prepared to roll out a tiered tariff system on steel and aluminum imports after months of pushback from U.S. companies. Joining us now is Joe Doe, Bloomberg senior reporter covering corporate and economic statecraft. Joe, just before we get to the tariffs, I mean, this moment that we're in of Trump basically saying the strait will reopen naturally, it seems not to be an outright goal, although he wavers on that. There's a J.P. Morgan report saying that to get energy flows back to 99% of where they were, it would take something like 4 months. How is industry dealing with this, again, before we even get to the tariffs?
I think you're seeing it bear out in the markets, right? We have had such choppy trading, volatile trading over the past month. The conversations that I'm having every day, whether it's down in Washington or here, whether it's with policymakers or investors, it's about the Strait of Hormuz. And it is about when confidence will come back to traverse the waterway, right? Because it's not closed. It's not closed. It's open for anybody to go through, but nobody has the confidence to send their crews, their their people through there to do what shippers typically do. What's it going to take? Well, I mean, that's what everybody's been talking about for, what, 5 weeks? And it's not clear, even from the president's speech last night, that he is laying out what it's going to take. We can take a guess, right? And one of the guesses is good old-fashioned diplomacy. You have Gulf states working alongside the United States, European nations working alongside the United States, and putting pressure on Iran, whether it's kinetic or diplomatic, to figure out a way to reach some sort of ceasefire in which the Iranians will no longer be a threat to attack tankers moving through the Strait of Hormuz.
So, you know, the companies that I talk to, the automotive manufacturers, while they're concerned about, obviously, the price of oil and a lot of the raw materials that come through the Strait of Hormuz, the big bugaboo for them in terms of, you know, the bottom line have been steel and aluminum tariffs, especially if they obviously make cars here in the U.S. because they're penalized by these massive tariffs, and it's also a complex system, an incredibly complex system. So a lot of these CEOs don't even know how much really they're paying in tariffs or should be. What do we know about this simplification that is taking place on that level?
Yeah, so last night we had a report out that the administration today is going to, or today or sometime in the next few days, going to announce a tiered system of tariffs around aluminum and steel products, essentially. So it's not the raw materials, right? It's not commodity grade aluminum or steel. It is things like steel pipes or extruded aluminum, right? The problem has been now for months. American companies have been telling the administration, they've been telling Howard Lutnick, they have been telling Jameson Greer, it is impossible for us to properly calculate the tariff that is supposed to be on things like vitamin C packages coming in, because there's a little bit of aluminum in that. The administration has heard that, and they have said, we have simplified it. We're basically saying there's going to be a value put on the product coming into the United States that has aluminum or steel, not the specific steel or aluminum that is in those products. It's a different range of 50%, 25%, or even lower. If you want to get into the details, go to Bloomberg and find out where we go into that. But like one of the sources told me, it was like, dude, we had dental floss coming into the United States, and because dental floss has a small piece of metal to cut your floss, people couldn't figure out the tariff they were supposed to be charged for that. So they are simplifying things like that, getting that off the table, so that American businesses, which already have so many troubles that they're dealing with, can just say, okay, this is one of the ones that we don't have to waste our time worrying about anymore.
All right, Joe, great having you here on set. Joe Doe, and highly recommend subscribing if you have a Bloomberg terminal in front of you to the Global Trade War newsletter. You can get these updates, important updates for business, obviously, and they come down to earnings results in your inbox every day. Tesla delivered, speaking of, 358,000 cars last quarter, missing estimates of 372,000. Let's get the latest from Craig Trudell, Bloomberg's managing editor for global business coverage. So, Craig, what do we know about Tesla's car-making business? Obviously not a huge part of its massive $1 trillion-plus valuation.
Yeah, absolutely right. I think it's not a huge aspect of their valuation perhaps anymore, and yet it is what sort of pays the bills. And this is a business that has been trending in the wrong direction for a couple of years now. I think, the year ago comparison here was, sort of as easy as they come, right? First quarter of last year was one of the weakest since 2022. And so for this company to only manage about, a 6%, call it increase year over year, when, the first quarter of 2025, they had significant production losses tied to the Model Y changeover. You had Musk in the White House making a lot of negative headlines. This is a really, downbeat showing from this company for the first quarter of this year.
Hey, Craig, thank you so much for joining us. With Tesla shares declining 4.2%, Bloomberg's Craig Trudell. I mean, at least if they're going to decline, they're going to decline 420, and Elon Musk would be happy about that. A quick check on markets this morning. A lot of negative risk sentiment piling up after no signs of de-escalation from the president in his address to the nation last night. We're down 1.5%. NASDAQ falls 2%. Huge moves in NYMEX and Brent crude. Just flagging, in case you're wondering why it looks like NYMEX is higher than Brent. NYMEX crude, that contract is currently the May one. You're looking at a June Brent contract, but both above $100 a barrel. But one of the biggest sources of pain in the market this morning. Coming up, shares of alternate asset manager fall. Blue Owl getting hammered, down 9.3%, saying that will limit redemptions from 2 of its private credit funds. We're going to get the latest coming up next, right here on Bloomberg Open Interest.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersetchi in Davos, Switzerland, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Let's get now to high interest. Look what's making headlines around the world. NASA's Artemis II crew is now in orbit around the Earth after launching from Florida, marking the closest return, or will be the closest return to the moon in more than 50 years when they go around it. The mission clears a major hurdle for NASA as it works toward building a lunar base and eventually reaching Mars. And $350 million is what UK developer Nick Candy just scored for his mega mansion in London's Chelsea district, making it the most expensive home ever sold. The estate boasts a private lake, a pool, and palace-style grounds. This is in Chelsea, by the way.
Crazy.
Yeah, more than 2 acres in Chelsea.
Does that exist in Chelsea?
I mean, I didn't know about it. The property sparked a bidding war despite a cooling luxury market and it not even being listed. The dude sold his Chelsea home for $350,000.
I can't even sell my tiny little flat in London.
Is it in Chelsea?
It's not far from Chelsea.
Maybe I'll take a look.
Okay.
Pressure keeps building in private credit, Danny, as you well know. KKR and Blue Owl are capping withdrawals in retail-focused funds after a sharp spike in redemption requests. Blue Owl saw demands as high as 41%, while KKR exceeded its limit and is paying out pro rata. The moves signal rising investor unease across, continuing unease across the $1.8 trillion private credit market.
Yeah, a painful number. Let's get more on Blue Owl and the broader asset management industry with Bloomberg private equity reporter Allison McNeely. And Allison, I mean, it's hitting all the giants this morning, but 41% redemption requests. I mean, that is a punchy number. I don't think we've seen anything close to that from some of these other BDCs.
No, it is by far and away the largest number we've seen. And recall that it's a continuation of the trend. We saw this last quarter with Blue Owl. You know, they did the asset sales of $1.4 billion of assets to try and meet redemption requests last time. And now, this time around, this quarter, they're saying, we're stopping at 5%. You got to get in line.
Yeah, and that makes sense, right? Because Blue Owl and others had exceeded that level previously, and that just, I mean, I don't know if moral hazard is the right term, but
well, I mean, you're supposed to be saying, look, these things are illiquid, and if you let everybody take out all of their requests, isn't it creating like a false illusion of liquidity?
I'm hearing from sources that there's actually a lot of anxiety and sort of debate within the alternative asset management industry right now about whether or not you enforce that 5% limit and essentially train the customer, hey, this is what you signed up for. You signed up for up to 5% of shares per quarter. Or do you do what, you know, Blackstone has done, what Blue Owl did previously, where you stretch a little bit beyond the redemption limit to try and shore up confidence?
Allison, what are the fears? What are the knock-on effects of, you know, 41% of your money running for the gate, whether or not, you know, you pay out?
Well, one thing we're watching really closely is whether or not these funds are continuing to take in new money. So, for example, yesterday we saw KKR extend or hit its limit of its redemptions, but it also had gross inflows. So, yes, more money was leaving, but still a healthy amount of money was coming in. Now, a lot of these funds are taking a lot of steps and a lot of measures to sort of reinforce confidence, saying, hey, we've got a lot of liquidity, we've got cash on hand to meet redemptions, we also have strong performance in the portfolio. You know, this is market jitters, this is not reflecting anything related to performance. Please be patient, we will get you out, but maybe not as fast as you would like.
I do wonder, though, because for a lot of the large, you know, publicly traded managers that you cover, their next leg of growth had been pinned on retail. Like, this was the big thesis of the next frontier because institutions are tapped out. What does it mean if maybe that slows down or isn't the next frontier?
So, and it's so awkward, too, because we had the 401k executive order, you know, guidance come out this week. There's like a lot of stuff happening, and you're exactly right. Like, this is the next frontier of growth for these firms. This, I think, kind of like what we saw with BREIT a couple of years ago when more investors tried to get out of that fund as well. You know, Blackstone really said this is like a teaching moment. We're confident in this vehicle. You know, there's going to be some pain to work through, but we will get to the other side. And I think we also saw Apollo's Jim Zelter say the same thing this morning on television. You know, he said this is kind of a moment of a bit of jitters, but we need to kind of teach, we need to push through it, we need to kind of let people know this is how it works and this is what you signed up for.
He seemed to be wearing rose-colored glasses. I mean, I recommend viewers go back and watch that.
Yeah.
It was a fantastic interview with John, Lisa, and Anne-Marie, but he was incredibly optimistic, seemed to think, like, you know, the war in Iran, for example, this is just a blip.
Yeah, I mean, on the other hand, you know, what I would also say, what else are these firms supposed to do, right? Like, if you want to ensure confidence in your product, you want to ensure confidence in the market.
But clearly there is some, like you were reporting on this morning, I mean, not credit, but KKR's private equity fund with a really big haul.
It's so interesting, yeah. So I think what we're going to see in private credit and in private equity is haves and have-nots, right? The folks who can kind of ride the turbulence. You know, KKR has ridden through a couple tough years in private equity in the industry to bring in a massive amount of cash for their next fund. So they're going to be able to come out the other side of this likely winners. We're going to probably see the same dynamic in private credit. Some people are going to be able to get through this redemption spike, you know, with strength and on the right foot, and others may not.
Allison, thank you so much for joining us this morning. Great to see you. Bloomberg's Allison McNeely. And we're going to get more on this sector, more on private credit. Armin Panosian of Oaktree, the co-CEO, is going to be joining Matt and myself at 10 a.m. New York time. And yes, indeed, it will be 10 a.m. New York time. Coming up, Goldman's Ben Snyder talks about the S&P's weekly pump and dump pattern since the start of the Iran war. We start the week okay, we end the week not so okay. That's coming up next. You're watching Bloomberg Open Interest.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Virginia report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
All right, we are less than 5 minutes away from the opening bell on this Thursday. And remember, this is the last trading day of the week in the U.S. because equity markets are closed for Good Friday tomorrow. S&P futures are down 1.5%. NASDAQ futures off 2%. And NYMEX crude is up 13 to $113 a barrel.
Yeah, you get a big turnaround from what you had yesterday, both Brent and NYMEX crude.
So much for being insulated.
So yeah, I mean, clearly we're not. I mean, this has been said much before that there's a difference between what the paper market and what the physical market is saying. That's starting to trickle through to the U.S. Some of the movers on our radar this morning: oil and gas companies, no surprise, they are rebounding after Trump's speech. Also looking at airlines and cruise operators, those are slipping because of the other side of this, higher fuel prospects. And then finally, let's just round it out with gold and silver. Those prices are dropping after Trump's comments have been weighing on the miners. Some real volatility in the price of gold. Coming up on the other side of this break, it is your opening bell.
What some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, you know, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content and never the two shall meet, but there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction might be using models to do so. You know, stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
We are moments away from the opening bell. This is Bloomberg Open Interest. I'm Matt Miller, looking at futures that are down significantly after President Trump's speech yesterday, but also after, you know, the massive rallies that we have seen. I think Tuesday was the best day that we've seen since May, and we had, you know, more than 2% gains on the S&P. So it stands to reason as you go into the weekend, because there will be no trading tomorrow, that a lot of people want to get flat and are selling risk in order to enjoy their Easter egg hunts. At the New York Stock Exchange, you've got smart storage, smart self-storage ringing the bell. The stock hasn't really done much this year or over the last 5 years. It's down a little bit. And then here's Nano Nuclear Energy, a stock that probably a lot of AI data center providers are going to be excited about. Danny, in terms of what we're focusing on, all of a sudden, once again, it's private credit today.
It is indeed. It's kind of this fear that keeps bubbling up despite everything else out there. It's breaking through the headlines. Blue Owl, it's not trading as poorly as it was in the pre-market. At one point, it was down 10%. But the news we learned only about an hour, 2 hours ago, Blue Owl is going to limit redemptions from 2 of its private credit funds to 5%. It had a surge, a huge surge in withdrawal requests. One of its credit income funds sold 22%. Its smaller tech income fund had 41% redemption requests. Craig Packer in a filing saying that, look, it was only 10% of clients that asked for their money out. The rest of the 90% are staying put. But still some pretty stunning numbers, Matt.
Yeah, well, I mean, that means 10% of clients
wanted all their money.
Have at least 41% of the entire fund.
Yeah, I guess it's a question of concentration, but also it's people who are maybe like, maybe I need to ask for all of this back because I'll get it back slowly and prorated, so it's exaggerating some of this, but it kind of has a snowball effect of more negative sentiment, as you can see here.
Yeah, it's definitely an interesting story. Tesla posted one of its worst sales quarters in years, missing Wall Street's expectations as the car maker struggles to turn around its core business and navigate an increasingly challenged electric vehicle market. And I will admit that even I, as, you know, a gearhead, don't find this story very interesting.
Why?
Because who cares about Tesla's car deliveries?
Because they're not a car company, or
it's
what?
a $1.4 trillion company. I don't care if they sell any cars. It's all about robots now. And we have a great, by the way, piece on the Bloomberg Terminal about John Neal, who used to be a president at Tesla, talking about how they were so good at ramping up in cars and how they will do that with robots. That's, I guess.
Can I tell you why you should care? Because the market cares. Yeah, its valuation is huge, but it's down almost 4% this morning.
I do, but it's the Blue Owl thing I think is more interesting because I have so many questions around whether or not this matters outside of private equity, outside of, you know, a few software loans. Let's bring in Goldman Sachs Chief U.S. Equity Strategist Ben Snyder. And before we get to, you know, the war in Iran and the horrible month that March was and the fact that Thursday seems to be the worst day for equities, what's your take on the private equity drama? Does it really matter for the wider market, for the wider economy?
The good news is so far we don't think it's a systemic risk for the economy. The bad news is if you talk to our analysts covering these stocks, they don't expect the headlines to change anytime soon, which means the kind of dynamic we're seeing in the market today probably continues, and it's hard to step in and buy those companies.
By the way, I've seen kind of this thesis put forward of prior crises when you want to, it's, you know, the whole sell what you can, not what you want to, that if people are trying to sell out of an illiquid fund, they eventually move up the proverbial food chain, and maybe that gets to equities too, and they just start selling that. Is there any evidence that that's happening at all?
We've seen a little bit of reduction in equity investor positioning, but so far I would call it broad macro pessimism rather than panic.
So what is happening with this pattern that we're seeing? And it's not just the S&P, but, you know, mainly. It gets bid up during the week. President Trump always says, you know, we've won this war, and we only need a few more weeks to win this war. We don't need any help to win this war. Please help us win this war. And then on Thursday, we sell off.
Talking to investors every day, my sense is not many have an edge on predicting geopolitical events. I certainly don't. And so one result of that is if you look at the market, we're trading with a very close inverse correlation to oil. We're trading with a very close correlation to prediction markets. And that means, as you were saying earlier, when you're heading into a weekend where you can't trade, but the news flow is going to continue, it just makes practical sense to reduce exposure a little bit.
How much, though, have investors just overall gotten really close to the ground because of the volatility? Is this a market that you can be active in at the moment, unless you're, you know, maybe trying to do a short-term quant sort of trend-following type strategy?
The strategy we've seen for many of our clients is, I think, the right strategy, which is to acknowledge the difficulty of predicting geopolitics and instead extend your investment horizon and ask yourself, where can I have conviction 6 months down the road, 12 months down the road? And for most investors, that has really nothing to do with geopolitics or private credit. It's AI investment spending. And so if we look at the most popular trades and some of the most successful parts of the market, even during the conflict, they remain the revenue and earnings beneficiaries of the hundreds of billions of dollars of AI capex that seems to be continuing regardless of geopolitics.
So I wonder if that's why we had Joe Weisenthal, the stalwart on Twitter, right, put out a tweet saying, like, we're only down 4% this year, and that's amid, like, a war, all the AI worries about software, the Strait of Hormuz is closed, the price of oil has more than doubled. Why is the market so sanguine? I mean, that's a fantastic outcome, S&P off 4% amidst all those worries.
One underappreciated dynamic that's happened during the last few weeks is as prices have declined, earnings estimates have continued to move higher, in large part because of that tailwind from capex that I was just mentioning. So for example, if you look at the sectors most exposed to the energy shock, the energy sector and the consumer sectors, they account for about 20% of S&P 500 earnings. That's half the contribution from technology. So for investors, although the headlines are being dominated by geopolitics, it makes sense that the primary focus is on that tech investment spending.
By the way, just the counter to this, to play devil's advocate, this doesn't come from me, it comes from someone much smarter than me, Neil Dunna of RenMax, sending this note at the top of the hour, basically saying that the shock to gasoline prices works out to $120 billion. That's about 0.5 percentage points of disposable income. He goes on to say, what seems out of place right now is the fact that earnings estimates for publicly traded companies have generally been rising. I get that energy-exposed companies maybe deserve a bit of a shock, but what about consumer-exposed companies? If all of a sudden your income gets this hit from the increased amount that you're spending on gasoline?
We're about to head into the earnings season in a couple weeks. My expectation is we will see some downward revisions to consumer earnings. From an economic perspective, our economists have lowered their expectations for real consumer income and spending. I think that's very reasonable. But keep in mind, we're starting from a very elevated place, in part because of the tax refunds that are coming through right now. So it is a reduction in the outlook, but I don't think it's a kind of reduction that should lead us to really panic about the fundamental outlook right now.
What do you buy in a down market like this? I mean, what have you been excited about in March that's losing a lot of value? You watch your multiples. I'm sure you have an awesome dashboard on your Bloomberg. What are you excited about picking up?
So for us, the key strategy is, as I mentioned earlier, find a place you have conviction in the earnings outlook, where now perhaps valuations are lower, and even better, if the earnings outlook has been strengthened by the recent conflict. And one place that checks all those boxes for us is solar energy and other parts of the energy infrastructure complex. Right? Because of AI and data center power demand, this has been an attractive theme for years, and now very likely because of the conflict, we're going to see much more investment in energy supply and resilience. That includes solar, pipelines, other parts of the complex.
And we're going to have to leave it there. Thank you so much for joining us. I hope your weekend does start at the end of the day today. Ben Snyder, Chief U.S. Equity Strategist, Goldman Sachs. Let's get a quick check on your markets about 9 minutes into your trading day, and we're heading for quite the negative start to the trading session. We're down 1 1/3%. That means we undo the past 2 days of market gains, although it's been a little bit back and forth on that after the president's address yesterday. The gainers, it will come as no surprise, leading the pack in terms of points added to this S&P. It is the oil majors, Exxon and Chevron, adding 2.4 and 1.4 points to the S&P 500. Some consumer staple names, so also a safety trade. On the downside, as goes sentiment, so too does the Mag 7. NVIDIA, Apple, Broadcom, Amazon, Apple, Tesla, Meta, all having a very, very bad, no good start to the day. NVIDIA racing 10 points from the S&P, which is now currently down 92 points. Tesla having some of its own issues. Matt is not interested in it, but they did have miss on their first quarter deliveries. Meta and Alphabet also have their own thing going on with continued scrutiny from governments looking at the individual sectors of how we're rounding out the week. Energy, back at the top of the pile, alongside, as I mentioned it, consumer staples. Again, one of the dynamics, just to point out, is that at the start of this conflict, staples and utilities were selling off because of positioning issues. So maybe we've worked through some of that. Now you can get back to a very classic type of risk-on, risk-off trade, where energy, staples, utilities does well at the bottom of the pile, consumer discretionary, and infotech. Matt?
Just when you thought you could get back to a very classic risk-on, risk-off trade.
Wait, no, I'm saying it is one. It is one now.
I know, but I'm just saying, like, something will happen.
Oh, yeah, probably.
Right?
I'm sure
There'll be a basis trade blow-up.
Yeah, I probably ruined it all, I realize.
Coming up, Tesla's deliveries may be in a new normal as sales growth slows down compared to recent years. And they're also facing increased competition from the likes of Toyota. We'll talk more about this stock next. This is Bloomberg Open Interest.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving something.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Virginia report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Shares of Tesla extending losses. The EV giant delivered 358,000 cars last quarter, missing estimates of 372,000. Let's discuss with Bloomberg Tech co-host Ed Ludlow. He happens to be at the Kennedy Space Center following the launch of Artemis 2. We will talk about the rocket faux show, Ed, but I want to talk first about Tesla's dwindling car business. I've heard they also have a lot in inventory. What's up with sales?
Yeah, I mean, it's the second consecutive quarter that the deliveries number has missed estimates, but there is still this large portion of the investor base, right, that sees Tesla's core car business being completely divorced from how the street values the stock, right, which is a future predicated on artificial intelligence, humanoid robotics, and robo-taxis. The production number also came in for the quarter far above estimates, which is kind of interesting. You know, Tesla had been due to start serial production of the Cybercab in the month of April. Maybe they pulled forward on that. They're ending the S and X permanently. Maybe there was a sprint finish to build some in the hopes that that inventory would be worked through. But the stock is down either way quite significantly, right, in a down market where as soon as the headlines hit, it dropped. And so that's something to take into account for sure.
And what about competition for Tesla? Matt was pointing out to me a story that the team did about Toyota expanding its lineup in a way that could really pose a challenge to some of Tesla's cars.
Yeah, I mean, generally speaking, though, the electric vehicle market is still having a tough time of it in Western markets like the United States and Europe. And remember, in Europe in particular, Matt knows full well, many of the OEMs in Europe have many more models. They offer a wider variety of battery electric vehicle at very different price points. And the criticism with Tesla is it has a very narrow range of vehicles that it offers, and so it doesn't resonate with all corners of the market. That's just not where the story is right now. And like, I think, you know, Rivian came out with its numbers, for example, and it's maintaining guidance, but it is a small niche volume player that's on the precipice of launching its first mass market product. So from its perspective, that's good, but it's not in aggregate something that's going to impact, you know, how that market's viewed overall. You know, hybrids with Ford is an interesting case study. There's a lot of data that supports that strategy of going to hybrids has worked.
Chris Bryant also has a great story about picking up a used Taycan at $45,000 suddenly seems like a great idea. Chester Dawson has a really good piece on Toyota. The Autos team is doing a ton of great work. I want to ask about rockets, though, Ed, and I'll ask a question that I've asked you already numerous times, but I don't understand why it's so costly and so difficult and takes so long to repeat one time something that we did in the 60s and 70s 6 times. You know, like if there are leaks on the SLS fuel tank, why doesn't somebody just go grab a Saturn V from the warehouse?
So the SLS system is very focused on performance. There is little reusability in it. Actually, I'm going to try something right now if my cameraman Doug's paying attention. There's an RS-25 rocket over my shoulder. The RS-25 was on the shuttle missions. They've literally refurbished them the inventory of RS-25s that they had from the shuttle era and modernized them for this. But unlike SpaceX, there's no coming back post-launch. You don't get that back, but that's not the goal that NASA's had. Part of it is also the many players. The SLS system is developed by Boeing. The Capsule spacecraft is developed by Lockheed Martin. The launch abort system is developed by Northrop Grumman. The European Space Agency in Thales did the service module. There are many hands and integrated teams working on it, which added to the complexity and cost, versus SpaceX, which designs its entire system top to tail. But, you know, again, you have to give NASA the benefit of the doubt that in this instance, reusability and the economics of spaceflight wasn't their guiding light. It was getting to the moon with maximum performance in something that is a difficult technical feat.
All right, very cool. Ed, I always look forward to talking to you about rockets. I may just give you a call during the break or after the show. Ed Ludlow co-anchors Bloomberg Tech. That show kicks off at 11, and he maintains all of his wisdom, even without the beard, which I think is a feat in itself, you know?
Is that how you feel about your own facial hair? That if you were to shave it all the way?
It's my only strength.
Oh, God, that's so not true. Okay, I'm going to save us all and move on. Let's get some top calls from the analyst action that we're focusing in on this morning. First up, KeyBank. They've upgraded Brinker, saying that Chili's strong sales were expected to keep going in 2027. The analyst is also confident that profits can improve and says new restaurant openings add to the upside. Next up, Chevron, EQT stand out as top LNG winners as the war in Iran tightens global supply. That's according to Melius Research. The firm says that oil field service companies like Baker Hughes, Halliburton, SLB will also benefit from a Middle East production rebuild. And finally, Baird is downgrading Akame, saying that the recent run is fueled by excitement around AI and future growth, but it doesn't see that turning into real gains anytime soon. Shares are down 1.6%.
That's Akamai.
Akamai,
which
thank you for that.
I know because I've been to Tokyo it was only for 24 hours.
And you went there specifically to learn how to say Akamai.
I went there to buy jeans.
That's more productive.
Coming up, some of the world's largest hedge funds wiped out year-to-date gains in March due to the Iran war. We'll walk through the winners and losers with our hedge fund guru. I just saw Emma Parmar. There she is. She'll be back with us in 2 minutes. This is Bloomberg Open Interest.
Business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on stocks on this Thursday, which has been the worst day of the week for people long equities. It is the case today as well. S&P 500 down more than 1%. NASDAQ down 1 2/3% almost at 23,629. Obviously, people want to get flat into the weekend. You can't trade, as Ben Snyder from Goldman Sachs was just telling us, so you want to get short your risk. In terms of Brent crude, it's up 7% right now, and the bigger jump is in WTI. So much for being insulated. NYMEX crude is soaring. Nvidia is down 1 3/4%. That's a problem because of its huge weighting. Tesla after the sales miss. Amazon and Global Star in reported talks. That's very good for Global Star shareholders. And then KKR and Blue Owl. We've heard the Blue Owl news today, and KKR and the BDCs are not faring well. Danny.
No, Blue Owl trading at its lowest intraday price ever. Bloomberg sources at some of the world's largest multi-strategy hedge funds say that March volatility drove losses after a strong start to the year. Bloomberg's Hema Parmar covers hedge funds for us and was behind this story. Hema, I mean, this is probably not great news, right? Because isn't this the whole point of a hedge fund, that when markets are freaking out, you return something that's uncorrelated?
Yes, you're seeing some numbers that are down 4% for the month, down 8% for the month. Some funds are about flat, which is a good month, and given the kind of environment we've seen. Hedge funds should protect in a down month and in a down year. I would think they would argue that given how stocks and bonds and wherever your money might be elsewhere, compared to that, they have lost less. But again, it's manager selection, right? So when it comes to specific firms, how are they doing? And when we look at, let's take, for example, Exodus Point, down 4.5% for the month, down 2% for the year. Balyasny, down 4% for the month. These are pretty sizable losses for multi-strategy funds. They typically, we expect them to be up at least 1% a year. And 1% a month, excuse me.
And they want to be not just uncorrelated with the broader market, but with each other as well. Are they all in the same trades?
It depends on the strategy. You see sometimes some billionaires have voiced concerns over all being in the same stocks on the equity side, and that potentially causing a spiral and a deleveraging event.
Yeah, because if they do poorly, they get cut, right? So the ones who are doing well, everybody probably looks at that strategy and says, I don't want to get cut.
Oh, so like in the pod shop kind of thing. All the money gets funneled to the winners.
Aren't they all pod shops?
Well, the multi-strats are typically the pod shop names, and you have multiple teams of traders who are given money, and they can invest in silos separate from each other. They're supposed to make the firm less correlated because everyone's doing their own thing without influencing from one another. But we are seeing some dispersion within the pod shops, right? Millennium down just 1% for the month. Bally down 4% for the month. Walleye down about 1.3%. So you are seeing, even within this group of multi-strategy funds, not everyone's the same. And also, I should note, like, Exodus Point is a lot more fixed income than the other guys.
Hey, Hema, just while we have you, because you've also been reporting on this, is the drama that's happening at Two Sigma with the co-CEO, Scott Hoffman, quitting. What is going on? For those who haven't been keeping track.
It has been, I mean, maybe one of the most dramatic hedge funds we've ever covered. The two billionaires for years have hated each other. They have been feuding over many things about the direction of the firm. They both stepped down. They both picked proxies to run the firm. That was just like less than 2 years ago. And one of those proxies, Scott Hoffman, who was co-CEO and on the management committee, he's stepped down. And so that's not a great indicator. And then his replacements, it's unclear. The firm is debating whether in becoming chosen as being on the management committee, does that mean he's also co-CEO? There's some debate there. And then this gentleman who was now in this role, he tried to fire the other co-CEO, Carter Lyons, being in the role only a couple of weeks.
It sounds like it's time for a divorce, like a real divorce. You know, somebody has to take his assets and leave. Bloomberg's Hema Parmar covers the hedge funds for us. Coming up the next hour, we sit down with Oaktree Capital's co-CEO Armen Panossian, plus retired U.S. Army Major General and Academy Securities Head of Geopolitical Strategy, Spider Marks.
cidade estava sitiada.
Nisso, ao começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
CBS News on the Hour, your home for original reporting.
I'm Deborah Rodriguez. The four-person crew of the Artemis II woke up to the sounds of Young and Six Sleepyhead, then wasted no time getting down to business in their first full day of what they hope will be a historic mission around the far side of the moon. Correspondent Mark Strassman is at Kennedy Space Center.
They're especially focused on testing the life support systems. Without that, obviously, you've got major problems. But they need a series of systems, checks, and tests to convince NASA that they are safe now to make the push for the moon.
Last night, President Trump told the American people the administration's objectives in the Iran war have already been met or exceeded. He also said the U.S. will continue to hit hard for another few weeks. CBS's Holly Williams has gotten reaction from Iran.
That Iranian spokesman claimed that the U.S. and Israel have not destroyed Iran's missile production centers, long-range attack drones, and advanced air defense systems, asserting that they are in locations that the U.S. and Israel cannot reach.
Lawmakers in the House convened for 2 minutes today, but took no action to pass a bipartisan funding deal to reopen DHS operations.
In a joint statement, House Speaker Mike Johnson and Senate Majority Leader John Thune said they have agreed on a plan to fully fund the Department of Homeland Security, except for ICE and Customs and U.S. Border Patrol. Republicans will try to fund those agencies later through reconciliation, which they could do without Senate Democrats, who are demanding reforms to immigration enforcement. The Senate could vote on the deal as early as today. The House is in recess until April 13th. Michael Wallace, CBS News.
DNA testing has linked another murder, this one in Utah, to serial killer Ted Bundy. CBS's Matt Gutman.
One of his victims was Laura Ann Amy. She disappeared in '74 after a Halloween party. About a month later, the 17-year-old's bound and beaten body was discovered on the side of a highway. Investigators have long suspected Bundy was responsible for her death, and now, more than 50 years later, they can prove it.
We now have definitive evidence proving that Theodore Ted Bundy murdered Laura, and we can announce that this case is officially closed.
This is Holy Thursday. Pope Leo celebrating Mass of the Last Supper at the Basilica of St. John the Lateran in Rome. The Pope will also wash the feet of 12 people in a reenactment of Jesus washing the disciples' feet. Oil prices soar 13%, Dow's down 507. This is CBS News. A new survey finds the Iran war has raised a lot of concerns about the U.S. economy. CBS's Cammie McCormick.
The war has business forecasters lowering their estimates for economic growth and raising their worries about inflation.
Geopolitical risk has gone from a background concern to being the dominant force shaping the U.S. economic outlook.
Yelena Malayev of the National Association for Business Economics.
43% of panelists put the odds of a recession over the next 12 months somewhere between 35 and 50%.
The survey also found many believe the Fed is in a difficult position and may not cut interest rates this year.
And all of that just feeds into the uncertainty that the average listener is probably feeling right now when it comes to the economy.
Dutch officials say they've recovered a 2,500-year-old gold Romanian helmet more than a year after it was stolen from a museum in the Netherlands. A gang of robbers used fireworks bombs to break in. No word on how it was found. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube and we're streaming live on Bloomberg.com as well. Big sell-off in the marketplace here today with the S&P off about 1%. Coming up, we're going to check in with Tyler Kendall, Bloomberg Washington correspondent, to get her thoughts on President Trump's address to the nation last night, where he's suggesting we've got three more weeks left in Iran. Shelby McFadden, senior analyst at the Motley Fool Asset Management, will get her thoughts on these markets. Ira Jersey, Bloomberg Intelligence chief U.S. interest rate strategist. We've got some economic data. We'll get his thoughts on what it means for the bond market. Brody Ford, Bloomberg technology reporter, on the big take story. Microsoft CFO's AI ambitions run up against tech bubble fears, and that's kind of what we're seeing, some concern for some of those software stocks. So we'll break that down for you. But right now, let's go to Alexis Christopherson and get a Bloomberg Business Flash. Alexis.
All right, thanks very much. And this Business Flash is brought to you by EisnerAmper. EisnerAmper provides assurance, tax outsourcing, and advisory services to businesses that need more than a generalist. Whatever the challenge, we have a team for it. EisnerAmper.com. I'm going to start with the good news first. The good news is that stocks have bounced off their lows of the morning. The bad news is we are still solidly in the red. S&P 500 down 52 points. The Dow Jones Industrial Average down now about 437 points, a loss of nearly 1%. The NASDAQ Composite down about 1% or 236 points. Russell 2000 down 1% or 25 points. In the oil pits, Brent crude is up nearly 7% at 108.16 the barrel. WTI crude up 10% at 110.97 the barrel. It had been up more than 13% to top $113 a barrel earlier this morning. The Bloomberg Dollar Spot Index remains strong strong this morning, 12.1622, and the 10-year yield is now lower at 4.31%. In stock news, shares of Blue Owl down nearly 6%. Blue Owl capped redemptions at 5% after investors asked to withdraw 22% of the private credit giant's $36 billion fund. And we've got shares of Global Star sort of bucking the overall trend on Wall Street today. That stock is up 11% on a report in the Financial Times that Amazon is in talks to buy the satellite provider. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. The Bloomberg Business Flash today brought to you by Eisner Amper. Eisner Amper provides assurance, tax, outsourcing, and advisory services to businesses that need more than a generalist. Whatever the challenge, we have a team for it. EisnerAmper.com. As Alexa was just reporting, we've got a sell-off in the marketplace today. We're off the lows, but still trending significantly lower here on higher oil prices here. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Natalia Kenijevic. Natalia, what are you looking at today?
So let's start with the Blue Owl Capital, guys. So shares are down by 6%. The ticker is OWL. So the company said that it will limit redemptions from two of its private credit funds. So one of them, Blue Owl Credit Income, which is one of the largest in the industry. So this fund has saw that investors are pulling about 22% of shares in the 3 months ended on March 31st. Then there is a smaller fund called Blue Owl Technology. Shareholders asked for 41% back. So this is compared to 15.4 in 3 months earlier. So now Blue Owl is saying that it will limit redemptions to about 5%. We also see, of course, other alternative credit asset managers shares are down, such as Apollo, KKR, Blackstone. But overall, Blue Owl is down by 45%, guys, since the beginning of this year.
Yeah, kind of brutal for these alternative asset managers as they kind of wade through the weaknesses showing up in private credit. What else do you have, Natalia?
Let's look at Tesla. So shares are down by 4%. The ticker is TSLA. So Tesla posted one of its worst sales quarters in years, and deliveries missed expectations. The company delivered slightly above of 358,000 vehicles in the first quarter. Analysts expected 370 to 160. So this is the second consecutive quarter when Tesla missed expectations on deliveries, and still, nevertheless, they are up deliveries by 6.3% from a year earlier. Now, the biggest question, of course, do investors really care about deliveries right now? Because everyone wants to see more news on autonomous vehicles, robotics, etc. But anyway, shares of Tesla are still, on a 12-month basis, are still up by 30%.
Okay, down 3.8% today, down about 19% year to date, but still up, as you mentioned, 30% trailing 12 months. How about Chevron?
Chevron, so yes, Chevron is up by almost 3%. The ticker is CVX. Just as like other oil companies, Chevron shares are gaining on rising oil prices. We see that WTI is up by 11% today. Brent crude is up by almost 8%. Of course, it came after President Trump said that the U.S. would hit Iran hard over the next 2 or 3 weeks. And he also said that Hormuz will open naturally after the conflict ends. However, he did not say any clear timeline or anything like that. Anyway, now analysts are modeling, including analysts from Bloomberg Intelligence, they are saying that oil at $100 per barrel can stay at this level until the end of this year.
All right, well, we'll see. I mean, right now, oil prices surging on this Thursday, and there's going to be a lot of concern that people want to be not long risk heading into this long weekend. Natalia Kenijevic, thank you so much with our Stocks on the Move. And of course, for more conversations like this, be sure to subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. That is available on Apple Podcasts, Spotify, or anywhere you listen. So the president held his public address last night. I guess he was kind of making the case, Paul, for the war on Iran 5 weeks after it started.
Yep.
And I'm not sure what we learned aside from he offered himself, he gave himself all kinds of room There's maximum optionality on offer at this point. Tyler Kendall is our Bloomberg Washington correspondent, joining us now from Washington. Tyler, the president likes to leave himself room for all possibilities. Is it fair to say that his speech accomplished that, but also did not really tell us anything new in terms of specifics or how this conflict might be resolved?
I agree with that assessment, Scarlett. President Trump touted the tactical successes that we've seen so far when it comes to this military operation, but we didn't really get any new concrete details or strategy when it comes to a potential timeline or what's going to happen for some of the strategic setbacks that the U.S. is facing, perhaps most notably the closure of the Strait of Hormuz. President Trump really reiterated, in some cases, echoing the exact statements that he had posted on Truth Social over the last 48 hours during these remarks, including pushing our allies to lead the way, in his words, when it comes to securing the Strait of Hormuz. This comes as the United Kingdom today convened the foreign ministers of 35 countries to discuss the issue, though we're already starting to get some hints on how that discussion is going. For example, we heard from the French President Macron earlier today, who said that it is, quote, unrealistic to use military means to reopen up that critical waterway. After this virtual meeting today, we did hear that military planners from this coalition of countries that have come together are set to meet next week. But it appears that the overarching theme is that these countries aren't going to commit assets to the Strait of Hormuz until there is a ceasefire or a resolution to the conflict, which really doesn't address President Trump's demands when it comes to getting it opened before there can be an agreement. So there was a lot that we could pull on from last night, but I think you're exactly right at this point. There wasn't really many new details, but it felt like President Trump was trying to defend his foreign policy objectives while also defending some of those domestic policy ramifications as Americans are now facing those higher prices at the gas pump.
You know, to an earlier guest today on Bloomberg Surveillance, Tyler, I asked the question, why did President Trump have this speech now? And the guest responded that this is probably the speech he should have given 4 or 5 weeks ago before going in to Iran to try to lay out some rationale for this action here. But he didn't really give himself, I guess, a milepost to say, okay, we're done here. We can leave. It seems like remains a very, very soft, I guess, milepost here for the president to decide when the U.S. is done.
Well, President Trump gave us some updates as we're now into the 5th week of the war, right? He confirmed that the U.S. and Israel have already hit more than 11,000 Iranian targets, and he maintains that the U.S. is very close to achieving its full military objectives. Yet at the same time, he also previewed that we could see an intensifying of strikes against Iran. He reiterated a threat that Iranian energy infrastructure could be hit if a deal is not reached within the next 2 to 3 weeks, and that tracks with Bloomberg News reporting per a person familiar that the Vice President J.D. Vance delivered a very similar message through intermediaries that there's going to be an increased threat to hit Iranian security assets if a deal is not reached. Now, this White House does maintain that negotiations are ongoing and that they're going to continue, though at least publicly from the Iranian side so far, they have denied being in formal negotiations with the U.S. And as we heard President Trump last night threaten to ramp up attacks on Iran in the coming weeks, we then also heard from the Iranian side also raising their rhetoric overnight when it comes to potentially what their retaliation could look like as the U.S. Furthers this military campaign.
All right, so clearly a lot to think through here. The other thing, of course, that is in a lot of Americans' minds is the fact that we've had additional Marines arrive in the Middle East region. There's already tens of thousands of U.S. military presence in that region. How is this changing the discussion of boots on the ground, Tyler?
Well, and Scarlett, plus pair that with Bloomberg News confirming that a 3rd aircraft carrier strike group is now heading towards the region that started in Virginia. It's probably not going to get to the region for another week or 10 days, according to our analysts over at Bloomberg Intelligence. But that just adds to what has been a heightening of these military assets and surging of troops over to the Middle East, which has raised the speculation that there could be an even further escalation. Now, up to this point, we haven't gotten an update from President Trump. He has previously said that he wouldn't relay or telegraph whether or not he was going to actually send boots in on the ground. So it's going to be something to watch closely, because we also know that it impacts how Americans feel about the conflict and their sentiment about the conflict. And take that with how President Trump last night seemed to be trying to reassure Americans that this military operation is in the best national interest.
Yep. Tyler, thank you so much for your reporting. Appreciate that. As always, Tyler Kendall, she's Bloomberg Television Washington correspondent down in our Washington, D.C. studio. To the extent the president wanted to calm the markets, didn't seem like that happened here. We've got
mission not accomplished, at least for today.
Mission not accomplished, yeah. So we've got WTI crude oil off the highs, but still up $11 here today to $111 per barrel. That's putting pressure on the equity markets. The S&P off 0.7%, the Dow off 1%, and the Nasdaq off about 1% as well. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Alexis Christoforous. Stocks are tumbling, oil prices shooting higher after that speech last night from President Trump did a little to reassure investors that the war in the Middle East was nearing a swift resolution. The S&P 500 is down about 42 points now. Dow Jones Industrial Average slipping more than 400 points, and the NASDAQ Composite is down about 183. We've got Brent crude now at about 107.73 the barrel. That's up 6.5%, off its highs of the morning. And WTI crude was up 13%. It's now up about 10.5% at 110.61 the barrel. Bonds pairing earlier losses. The 2-year Treasury yield little changed at 3.79%. We've got the 10-year down just 1 basis point at 4.30%. The dollar is advancing. Bloomberg Dollar Spot Index 1216.40. Gold snapping a 4-day winning streak, now down about 2% at 46.63. Tesla posting one of its worst sales quarters in years, missing Wall Street expectations. Shares of Tesla down more than 3%. And a number of major automakers, including GM, Toyota, and Honda, reported lower U.S. sales to start the year. Rising gas prices beginning to pressure the car market. GM's first quarter sales slid by 9.7%, led by the Cadillac Escalade and Chevy Suburban. We've got shares of GM now slipping more than 4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Brokers studio. We got, as Alexa was just saying, we got a sell-off today. We're off the lows here, but we're driven all by the energy, which is moving much higher today in WTI and Brent crude. Shelby McFadden joins us here, senior analyst at the Motley Fool Asset Management. Shelby, how are you guys approaching this black swan event that we're all dealing with here, which is a hot war in the Middle East? How are you approaching it? Has it changed your investment approach, at least short term?
Such an apt way of describing it is black swan. I will say it has not changed our investment approach. It's definitely made us quite a bit more active in terms of our daily work, right? So we're spending quite a bit more time looking at different exposures across our coverage. We do know that, oil is globally traded, right? And it begins with the sort of direct impacts, and then we have the sort of trickle down, if you will, into all of the different sectors. So we've been spending time the last several weeks just trying to determine, okay, which companies are going to be hit by this the hardest, and which companies are essentially just going to absorb rather, maybe like 70% of the impact. So you're almost kind of looking at what are the betas for the change in oil versus change in cost or prices for different companies that we follow. So that's been sort of the extra forensic work that we're doing, but our investment approach is about the same.
Shelby, what do you anticipate learning from companies when earnings season begins in a few weeks? This will be the first opportunity for them to share any kind of concerns or plans that they're making given all this uncertainty. I'm guessing that they're not going to want to be committed to any specific numbers because they also are dealing in a fog of uncertainty, but they'll have to say something.
Mm-hmm. Yeah, at this point, even though we are looking at something that lies between precedented and unprecedented, I'm not yet confident that we're going to get things like consumer companies pulling guidance. They may widen bands a little bit. They may say they may not want to give guidance for the next quarter. They may want to stick to something like for the rest of 26. I would also probably expect to hear comments on what changes in fuel are doing for their own operations, especially when we're talking about consumer discretionary and staples. So hearing things about traffic and even probably a little bit about ticket. I think that we're going to see a lot of that from the likes of Walmart and Costco on their calls. And then also just, again, what it's costing them inside their supply chain. These are things that get commented on frequently. I mean, even when we have adverse weather events, we hear about them when it comes to consumer-facing companies. On the other side of the sort of energy issue, we're looking to see what a lot of enterprise software companies are going to be saying about labor. That's definitely a hot headline. We've seen that come across the ticker recently in the past few days. So that's going to be something that we're interested in because we don't expect it to just end with Oracle. We're expecting to hear a little bit kind of trickling out from all of the large cap software companies.
Walmart's one of your names, Shelby. That suggests that you have a pretty constructive view on the consumer. Talk to us about Walmart.
Walmart is such a fun company. I love to start off with, is it expensive? Totally. You're not gonna hear me say that it's a bargain, which is actually kind of funny, right? But the thing about Walmart is that you're talking about this little blue chip retail company that's been such a white whale in many ways. They have sneakily been developing AI capabilities ahead of a lot of their peers. They're taking a good chunk of market share from more premium retail companies. When I look at things like the Walmart recession signal from a great analyst by the name of Jim Paulson, that is showing us some sort of creepy crawlies from 2008, 2009, basically that Walmart's growth and their capture of upper income households is outpacing the luxury goods index. So it's really a demonstration of the K-shaped economy in the most literal way. And thinking about Walmart being a top momentum holding makes almost no sense. But when you think about it in the context of the economy that we're in, it seems like such a great opportunity. So it's something that we continue to be excited to hold. Would love to see the pricing come back into the stratosphere so that we could hold it across some more strategies. But it's absolutely a great blue chip for the place in the economy that we're in right now.
And Walmart has made this shift in the last couple of years to become more of a tech company, really building out its e-commerce capabilities. Does this would this also check the box for you in terms of tech, or what else are you looking at within tech that delivers that kind of growth that you're looking for?
Walmart definitely checks a sort of indirect box, and it almost it gives you a sort of hedge with an asterisk, right? Because you're not going straight into a sort of AI bet with Walmart. You're getting a little bit of both. So when you look at the top line, you're not getting something that's going to blow you out of the water, right? We are a little bit beyond the years of them having these, even low double-digit top line growth. It's a bit more reasonable now, and so you have this dependable compounder that when consumers are a little bit stretched, they have these other capabilities to be able to expand their free cash flow and their profit margins. And so it's this sort of this booster sort of capability that you don't expect from a lot of retail companies. So it's a sort of indirect tech investment. When we're thinking otherwise about how do we get pure tech exposure, I would say that as a firm, we are playing all of the different layers of things like semiconductors. So not just fabs, but designers and equipment suppliers, all of those types of things, to making sure that we're not just, pure play exposure with one company, and then also playing out the rest of the branches of that tree.
Shelby, thanks so much for joining us. Always appreciate getting a few minutes of your time. Shelby McFadden, she's a senior analyst at Motley Fool Asset Management down there in Alexandria, Virginia. Looking at the 10-year Treasury, pretty steady here today, sitting right at 4%. All the volatility we've had in the marketplace, the bonds are they're kind of, people build careers at looking at the Treasury market. It is unfathomable to me how they do it. Well, one of them is our next guest, Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. He's one of the folks people on the street pay attention to when you talk about the Treasury market. Ira, I don't know how you do it. 10-year at 4.3%. It seems like we've been here for a while.
Well, you wake up in the morning, you have some blueberry pancakes, and then you look at the bond market. I mean, that's pretty much what you do. The bond market right now is kind of in this push and pull, right? Will we have a recession because of high energy prices, or will we wind up with a situation where inflation is so high that the Federal Reserve needs to get in front of that and hike interest rates? And what you see, you mentioned the 10-year. The 10-year is just in a range, and I don't think it's going to move very much, but it's the 2-year that I'm really focused on, right? Up and down 20 basis points all the time, and more than half of that move, in fact, about 80% of the move in 2-year yields has been because we're pricing for higher inflation. So the market is actually saying that, hey, there's a pretty high chance of a recession here because TIPS yields are lower, but inflation remains very high, and that's why you see the 2-year yield kind of where it is.
So thinking about that kind of volatility, at least at the short end, how does that set us up for the big jobs report tomorrow, which I still don't quite understand why it's coming out tomorrow when this is a public holiday, the bond market's closed, the stock market's closed.
It's not a federal holiday. It is not
the bond market's closed.
No, the bond market is open until noon.
Is it?
Yes, isn't that crazy?
Okay, so AI on Google was wrong.
I am gonna be here. Not in New York, but I'll be at the Princeton office, ready to do TV and radio whenever needed. So one of the things that I found very interesting, and we had 4 data reports yesterday, and when you look at what the bond market reacted to on those data, we could actually see that the market still cares about this economic news, even though it's from February, right? Which is some of the data data that we received from February, some was from March. So the fact that this is kind of the first big report for March, were there any big changes? Now, here's the problem with this data that we're going to get. It's from the week of March 12th. It was very early in the war. It's not really for the full month. So we really won't see the ramifications of what happened last month until we get the April report. But people are going to care. And what I'll be focused on are things like, what were wages like? If there were job gains, what sectors? Because one of the things that I've been noting is that all of the jobs have basically been created in one sector, and that's the healthcare services sector. So it's, people basically who work in nursing homes or do home care. That's where all the jobs have been created. It's not very broad-based. And because of that, I'm concerned that if that slows down significantly because people say, oh, I can't afford my home care workers because I have to pay a lot more for heating oil or whatever, then you can wind up maybe seeing a pretty bad jobs picture, quite frankly.
And what do you think the focus is of this Fed? Because with this war in Iran, you could say, boy, there's inflation pressures out there with energy. There's also, GDP concerns out there. Maybe this is going to hurt global growth here. How do you think the Fed's putting all that into its calendar?
Well, believe it or not, in this situation, I think the Fed actually has a little bit of an easier job because the Fed can say, okay, inflation is a concern, so therefore we don't cut interest rates. But at the same time, if this is going to create a growth slowdown and we're going to have job losses, we'll focus also on our full employment mandates or jobs mandate, and therefore we, won't hike interest rates. So I think for the Fed, it means until we have a clear idea what goes on, we're just going to remain on hold, not do anything. For the ECB, it becomes a bigger problem. So we actually think they're going to increase interest rates in April. Not good for the global economy by taking a little bit of accommodation out. So I think for the bond markets, it's going to be, how does the ECB explain that? If the ECB goes out and says, hey, this is a one and done, we're doing this preemptively, don't expect a string of hikes, the question is, will the market believe that? So Hugh Worthington, my colleague in London for Bloomberg Intelligence, thinks, no, the market's not going to look at it that way. They're going to price in a few more hikes if they do hike in April. And that, I think, could be pretty bad for the global bond market and pretty bad for the global economy, quite frankly.
Maybe the members of the FOMC are on spring break, but I don't see a lot of Fed speak coming up, and that's kind of unusual.
Yeah, so it's usually you get the quiet period, a week before the Fed meeting, but it is spring break time, so the government, it's not closed tomorrow, but there are a lot of people who go on vacation and break, and they do have families and the like. But there is a lot in mid-April, so going up to that quiet period at the end of April before the late April meeting, there's a whole lot of scheduled speakers then.
I mean, they wouldn't know what to say really at this point anyway, because it's all
what could you
the
say?
fog of war, right?
Yeah.
All right, Ira, thank you so much. Appreciate it. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, joining us here in our Bloomberg Interactive Brokers Circle. Stocks still lower, but off the lows of the day. The S&P's off about 30 points. That's just under 0.5%. The Nasdaq's off 155 points. That's 7/10 of 1% here. WTI crude oil, it's up 10%, $110 per barrel this evening.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Alexis Christoforous. You blink and the market turns around. We were sharply lower earlier, and now it looks as though all three major indexes are modestly higher. The S&P 500 up about 8 points at 65.83. Dow Jones Industrial Average just about 6 points lower. We've got the NASDAQ Composite basically unchanged at the moment. That's after falling about 300 points earlier. We still have a rally in oil, but not as big as a rally we saw earlier today. Brent crude is up 5.5% at 106.73. It was up more than $108 a barrel. WTI crude at one point today was at $113 a barrel. It is now pulled back a bit at $108.92 the barrel. We've got the Bloomberg Dollar Spot Index still stronger at 1215.09. The 10-year yield lower at 4.29%, and the 2-year at 3.78%. Shares of energy companies, though, are benefiting on the backs of higher oil prices. We've got ExxonMobil, Chevron, and Occidental Petroleum each up about 2% right now. Those higher oil prices are hurting shares of airlines and cruise companies as their fuel costs surge. Airlines have already begun raising fares. They're adding baggage fees, dialing back some routes to cover the higher costs, while cruise lines have already warned that the higher costs will dent earnings. We've got shares of Delta down about 3%, and shares of Norwegian and also one of the other cruise lines. Who is it? It is Royal. No, it is Carnival. Ah, that's it. Carnival down 4%, actually leading the S&P 500 lower right now. So to recap for you, we've got the S&P 500 down 6%, Dow Jones Industrial Average down 75, and WTI crude at $109 a barrel. That's your Bloomberg Business Flash. Paul and Scarlett.
It's like a pop quiz. Name all the cruise line operators.
It just escaped me there for a minute.
No, I get it.
Thanks for the help. But Royal Caribbean, by the way, in case you're wondering, is also lower.
All right, thank you for that. Alexis Christoforous with our Bloomberg Business Flash. All right, when it comes to the drivers in the market, in particular, the tech part of the market, it's all about the hyperscalers and how much money they plan to spend this year going forward on AI infrastructure. And hyperscalers, we're talking about Alphabet, we're talking about Microsoft, we're talking about Meta. Microsoft was one of the originals, the OGs, when it comes to building out its AI infrastructure. Brody Ford is one of our reporters here at Bloomberg. He covers the technology sector. He covers software, among other parts of tech. And he has a Bloomberg Big Take story on how Microsoft's CFO has some AI ambitions that are running up against the tech bubble fears. And Brody, you kind of write in, let's take you inside what's going on at Microsoft and understand how the CFO, Amy Hood, has made these decisions on when to spend, when not to spend, when to pull back. You didn't get a chance to speak with her because she doesn't talk a lot to the public, but you did a lot of reporting around Microsoft with her team. What did you learn?
So why this story is so interesting is Microsoft, as you said, is kind of one of the original hyperscalers, and they're sitting on really a nation-state size investment pool. And the big question in the economy right now is, are all these data centers going to pay off? Are all these tens and hundreds of billions of dollars actually going to result in businesses that make margins that are worthwhile? And at Microsoft, Amy Hood has effectively become all-powerful, right? You have a CFO who is making decisions about allocation of resources and data centers and who gets GPUs and where. And what we largely found is that she took a bit of a skeptical tone over the years. She took a bit of an anxious tone even, that there were moments where she said, man, we really might be overspending here.
So she decided to dial back some of that spending. Was that a mistake in hindsight?
A lot of people would say it was. It was maybe about a year and a half ago. She looked at the numbers that folks were giving her and she said, I don't believe this demand. I question this demand, and you know, it's time to hit pause on a lot of these data center projects. And I don't know if you remember, but when this played out in public, it rattled the markets. Everybody saw this as, you know, a sign that Microsoft was getting cold feet. And, you know, we're able today to say that that is what that indicated at that time. Of course, today, Microsoft is in the position of finding that, golly, we can't find enough data center capacity and our business is being held back by it. And so it seems clear that they undershot their demand projections. And, you know, we're in a moment right now where industry consensus is spend as much as you can, as quick as you can on data centers. And I'm sure in 6 to 12 months we'll talk again and the consensus will flip once again.
And because Microsoft is one of the OG hyperscalers, when Amy Hood decided to pull back a bit on spending, that not only caused questions in the market, but it caused other hyperscalers to kind of rethink their spending as well, didn't it?
Well, I think it actually created an opening in many cases. A lot of the sites that Microsoft walked away from, some of the younger rivals, think the CoreWeave, the Nebius, the Nscale, they kind of swooped in and said, man, we're ready to buy some data center capacity here. And I think all this kind of shows just how difficult it is right now for the big hyperscalers. I mean, you know, they for a long time had a business model based around no assets, around software, that, hey, if you want to change your plans, you really just kind of have to reallocate some coding teams. And, you know, you don't have these long-term fixed assets that depreciate over 10, 15 years. And now they're in the position of trying to act almost more like a Boeing or a GE, these kind of old industrial giants, and, you know, forecast out demand for a technology that's still emerging. It's a really tough balancing act, and I'd argue that there's nobody out there who has more directly on their plate in this than Amy Hood does.
I like the way you put that. They kind of went from, it feels like asset light to very asset heavy because they now own and oversee these big data centers. Does that mean that investors eventually will kind of re-rate these companies as well, given what they have on their balance sheet?
I sort of think we're seeing it happen already. I mean, Microsoft is down, you know, lost about a quarter of its value over the last year, and I think a big part of that is the margin story, that, you know, their margins have been pretty steady, but that's only because they've really been cutting in a lot of the other parts of the business, right? We write in the story that, you know, their cash cow businesses, let's call it like a Windows, have had a lot of cuts in them because this new AI business, the margins are so much lower, right? And so you had a company that was printing some of the craziest margins in the world, now renting out servers at a much lower margin and having all this, you know, tens of billions of dollars of chips on their balance sheet. It does paint a different picture of a company, right? And the question is, are they going to keep spending this way in perpetuity? Are we in a phase? I think that leaders like Amy Hood are really charting in new territory and answering all this in real time.
The stock is down 25% year to date. Is Amy Hood feeling any pressure for some of her maybe decisions as it relates to AI spending?
Our understanding is a lot of folks in the company were not happy with her around the pause last year. That said, it wasn't our indicator that, you know, hey, she's going to get the boot over this or something. All that said, she's been in the seat for 13 years. That's a long time for any CFO, and it's our understanding that there are starting to be succession conversations. We heard some names that were interesting. Chris Suh, the CFO over at Visa, well-regarded figure over there, you know, he's a name that comes up a lot because he used to be at Microsoft. He knows the business. He left and kind of gained skills and could be primed for a return. There's somebody named Matt McBride, who's kind of her internal heir apparent, right? I mean, his name will certainly be in the ring here. And so I wouldn't be surprised if in the next year or two we're talking about, you know, the great Microsoft CFO search. But at the same time, I don't think it's that, you know, she screwed up a decision and now she's getting the can. That's not what's happening.
She also has the support of the CEO, Satya Nadella, who very much works with her hand in hand. Brody, thank you so much. Brody Ford, Bloomberg tech reporter on today's Big Take story. It really hones in on Microsoft and, you know, the thinking, the planning that was going on there as Amy Hood, the CFO, made a decision to hit the pause button on CapEx.
Yeah, and it was at a time when the call on the street, I think, was spend, spend, spend. And now that's a little bit different. I think now people are saying,
the environment's different.
Investors are saying, show me the return on this in this investment.
But maybe this kind of presage that, you know, like sparked that kind of ruminating.
Yeah, but boy, you look at their income statement, just still double-digit top-line growth, huge margins, despite CapEx, you know, tripling over the last several years. Still a lot of free cash flow, and we know they can tap the bond market.
Yes, they can. AAA rating.
Yep. So we'll have more coming up. We got the markets coming back here. S&P down 9 points.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker studio. We got some big movements in the market today. It's all driven by oil, and we were really off early this morning in the equity markets because we had 10%, 11%, 12% gains in oil. That's backed off a little bit. We've got some reporting that Iran and Oman are talking about drafting some type of plan to open up the strait. That was a little bit of reporting that came across maybe 20 minutes ago, and that's kind of eased the pressure on oil, which has kind of lifted the equities off of their lows here. So the S&P is kind of unchanged at the moment. Salih Yilmaz, senior oil analyst, Bloomberg Intelligence, joins us from Cyprus via Zoom. Salih, can you help us understand the Strait of Hormuz? This thing doesn't get opened unless Iran says it does. Is that kind of where we are?
I think so. Yeah, that's pretty much where we are. I did see those headlines hit the wire, as you said, 15, 20 minutes ago as well. And the market is moving with it, and oil is down a little bit with it, but there is still a lot of uncertainty. And to your point, the strait is still in very much a standstill. Not many vessels, not any vessels except for Iran's own oil is passing through the strait. So with these news, we don't really have any details. I guess if it results in any more flows, it's better than no flows. But still, we really don't have any details on this.
And of course, in the U.S., we have a public holiday tomorrow, in that the stock market's not open. The bond market, I've been told, is open for half a day. We do get a jobs report. What does that mean for people and their positions in oil? There's not going to be a whole lot of trading either way in the global oil markets tomorrow. And for some countries, it's going to be a 4-day weekend. How does that shape positioning?
I mean, perhaps because we've had this divergence between the physical market and the futures market, the paper versus physical markets. And I suppose, they have to converge at some point. And I mean, when you have a kind of bank holiday, a long weekend, I guess that kind of delays that. But I think what we're seeing in the physical markets and what we're seeing in the fuel markets are an leading indicator to what we would see in the benchmark prices and things like Brent and WTI. And the longer the Strait is shut, I think it's more likely that we converge at a higher level, closer to what the physical market is telling us. And I suppose if there's less trading, that happens perhaps later than it would. But like I said, the Strait is still very much in focus here.
So let's just say, for sake of argument, the Strait were to open up tomorrow. How do you think oil would trade over the succeeding 1, 2, 3, 4 weeks?
I mean, it would eventually go down towards the pre-war levels, but it's not going to be immediate. We've been talking about how important duration of this war is. And, if this was a 1-week thing, I think it would get back to normal relatively fast. But we are now 1 month, more than 1 month into this war. So, we've had this more than 10 million barrels per day deficit in the market for over a month. There's been shut-ins in the Gulf, oil production of more than 10 million barrels per day. It would take time to get these back online. And I think importantly, even with the Strait, unless there's a clear and decisive ceasefire, a more likely scenario is that we have selective shipping, if you will. So the Strait doesn't really fully open, but it's a partial reopening, which again, it would help, but it would still leave some sort of deficit in the market, which would keep prices relatively high. So I'm really looking at a higher price floor, if you will, even if we have some sort of resolution, which I doubt would be a clear and decisive one.
Given everything that's happened so far. So oil prices remain elevated, and the fear, especially for countries that import their oil, is that there will be demand destruction. We'll see demand start to falter. How are you changing your expectations for demand for oil?
Yeah, I mean, you're absolutely right. What will have to happen, and we are seeing some early signs of this, is that we will have to get demand destruction. I mean, if we can't do anything on the supply side, prices will keep rising. And then, demand will be destructed. And we are seeing this in parts of Asia. I think Europe will probably be next. And the longer this goes on, I think it will be everywhere in the world. So, we are looking at, like I said, on the supply side, a deficit of more than 10 million barrels per day. It would be very painful to have demand destruction of that level. So it will be a matter of, who can afford it, which regions can price others out. So I think we will see some emerging markets really feeling the pain first before it goes to some of the more, wealthier parts of the world.
All right, Salih, thank you so much. Appreciate it. As always, Salih Yilmaz, he's a senior oil analyst for Bloomberg Intelligence. He's based in Cyprus there, so we appreciate getting a few minutes of his time. Again, oil is off the highs. I'm looking at WTI crude oil, 108.63. We were up close to $114 earlier this morning, so we do have that pullback. Brent, $106.20, was at close to $110 earlier today. So still elevated on the day, but off of the highs on this news that perhaps, I guess probably have to double underline, perhaps Iran and Oman are talking about some type of pact to allow some type of movement through the Strait of Hormuz, and that's kind of what we're seeing here.
It's according to state-run IRNA, so trust with a grain of salt, but Iran drafting a protocol with Oman to at least monitor traffic through the Strait of Hormuz, and vessel traffic should, according to this report, take place under Iran and Oman's supervision and coordination.
Yep. Yep, so we'll keep an eye on that. For our customers in the U.S., a reminder, you can listen to us on satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour, Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Brokers Studio. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. We are streaming live on YouTube. You can also catch us on Bloomberg.com/video. Coming up in this second hour of Bloomberg Intelligence, we're going to check in with David Welsh. He is our Detroit bureau chief on the latest Tesla sales. They just came out this morning, and also on what happens with Chinese-made EVs in the U.S., whether there is a market for this right now. You don't see any of them on American roads because they're tariffed at 100%. We're also going to speak with Tiffany McGee. She's the CEO and CIO of Pivotal Advisors to get her outlook for these markets as stocks have come well off their lows and are just moderately lower at the moment. Robert Schiffman is our senior tech credit analyst here at Bloomberg Intelligence, and he's going to talk about Intel's turnaround advancing as it reduces spending and it sees some return of growth. Mike Makita, of course, going to fill us in on what to look for in the March jobs report that's coming out tomorrow on Good Friday. The stock market's off, but Paul, the bond market is open.
Okay, good to know.
Okay, for at least half the day. But first, let's check in with our Charlie Pellet for our Bloomberg Business Flash.
Hi, thank you very much. And here's what's going on. Stocks bouncing around. Moments ago, we did see the S&P 500 index higher. Right now, looking at a loss of 7 points, down by about 0.1%. Got to keep in mind that at the worst level of the session in the early going, we did see the S&P down 1.5%, down 100 points. So recovering, indeed, positive print a couple of minutes ago. But right now, the S&P down 8 at 65.66, drop there of 0.1%. Dow Industrials down 92, decline there of 0.2%. NASDAQ right now down 54 for the NASDAQ Composite Index, a drop there of 0.2%. So stocks are pairing earlier losses. Oil prices retreating from their highs. The VIX just above 25 with the 10-year 4.29%, the 2-year 3.79%. Gold at 46.74 the ounce. Spot gold down 1.8%. West Texas Intermediate crude, the big story, now surpassing the price of Brent. WTI 109.24, a gain today of 9.2%. Barrel of Brent 106.49. Brent crude up by 5.3%. Bottom line here, oil rallying after President Trump last night vowed an escalation in the war in Iran over coming weeks. Now, Shelby McFadden is an investment analyst at Motley Fool Asset Management, and right here on Bloomberg Intelligence, she told us she is watching the secondary effects of higher oil prices.
We do know that, oil is globally traded, right? And it begins with the sort of direct impacts, and then we have the sort of trickle down, if you will, into all of the different sectors.
Shelby McFadden of Motley Fool, interviewed right here on Bloomberg Intelligence. We did see oil majors moving higher. ExxonMobil up 0.1%. Chevron up 1.5% right now. ConocoPhillips up by 1.2%. All of this against the backdrop of WTI 109.28, up now by 9.1%. Scarlett and Paul, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and streaming live at Bloomberg.com as well. As Charlie was just reporting, stocks are lower, but they are well off of their lows of the day. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at today?
We can go ahead and start off with some semiconductors. That'll be Penguin Solutions, ticker PENG, jumping
Penguin?
about... Yeah, Penguin.
Okay, that's a new one.
jumping 15% for its biggest intraday leap since last April. That's after the semiconductor device company raised its full-year forecast for adjusted earnings. It also reported second quarter results that beat expectations as costs for memory chips continue to rise. If you remember, data centers and AI have continued to increase the demand for chips. And we have a note out from Rosenblatt saying that the surging market prices lifted revenue about 30% above their expectations.
All right, good name to keep an eye on. Penguin, P-E-N-G is the ticker there. All right, let's go to a more familiar name.
Yes, United Airlines, that's ticker UAL, down about 3.3%, pairing an earlier tumble. That's after President Trump dashed hopes that the war in Iran would come to a swift end. In comments last night, higher jet fuel costs remain a very big primary concern among investors, though Iran did say that it was drafting protocol with Oman for Hormuz Strait traffic. So investors continue to say that uncertainty is kryptonite for the markets, and for airlines, that's definitely true.
Did I tell you that I'm a million miler at United Airlines?
You have mentioned that a couple of times.
Sure.
Yes, yes.
Sure.
No, you earned those stripes.
Oh, yeah. Okay. Just one. No. How about Blue Owl? Tom Keene and I were all over this early this morning. That's some big news out there.
It is some big news. Blue Owl, ticker OWL, dipping now only about 0.5 of 1 percentage point, though earlier it touched its lowest intraday level on record. That's after Blue Owl said that it will limit redemptions from 2 of its private credit funds. It made the decision after facing an unprecedented surge in withdrawal requests. Investors in its $36 billion Blue Owl Credit Income Fund asked to pool nearly 22% of shares through the end of the first quarter of the year. And as we already know, investors have grown incredibly skittish about private credit after some high-profile collapses and overall concerns over AI disrupting software companies that relied heavily on these direct lenders. And it's now joining peers like Apollo and Ares in capping redemptions.
Okay, so 22% is what investors want to pull out, and they're going to meet the 5%
correct
withdrawal request. Okay, thank you for clarifying
that.
that.
When you get the offering memorandum, I've seen it, like in big bold letters.
In the front, right?
Yeah, you can't get your money out other than 5% per quarter. This is illiquid by definition.
Except when people want to get their money out.
Yeah.
Exactly.
Yeah, and there you go. Okay.
All right, thank you so much. Really appreciate it. Avalon Purnell with our Bloomberg Market Movers. And for more conversations like this, do subscribe to our Stock Movers Reports. 5-minute audio reports available for you on the biggest winners and losers in the stock market. It's all available on Apple Podcasts, Spotify, or anywhere you listen. So big day yesterday in the space world, right?
Yep. So I always get psyched to watch a big rocket take off, because it just great memories when I was a kid, all Apollo stuff.
And Ed Ludlow was lucky because he was on hand to watch it as well. He's our BTech co-anchor, and he's joining us right now from the Kennedy Space Center. So, Ed, just kind of recap what we got yesterday and what we're looking for today, because there's more on this.
Yeah, NASA sending astronauts back towards the moon for the first time in more than 50 years. And where the crew of 4 astronauts, 3 Americans and 1 Canadian, are at right now is they're at a higher Earth orbit, basically an elliptical orbit of the Earth, checking all of the systems, checking communication, propulsion. They did some manual tests, seeing how the Orion spacecraft would fly under manual operation. But it's all gearing up to around 7 or 8 p.m. Eastern tonight, where NASA has to make a decision about whether they are a go for the final burn, the translunar injection that would send the crew on that path towards the far side or dark side of the moon.
So let's assume that they do get the go signal tonight. Tell us how the next several days or the remainder of this trip will develop.
Well, you'd hope it does happen, right? Because this is the whole point of the mission, the dress rehearsal to see that it works. So it'd be a blow if they weren't able to and they had to return to Earth. But it's about 4 days to go 250,000 miles to the far side of the moon. It's about 4,100 miles off the moon's surface on the dark side, where they observe what's on the surface using different sensors. They're looking for water, essentially, on the moon's surface. And then, having conducted that activity, it's a slingshot, a figure 8, where both Earth's gravitational pull and the gravitational field around the moon slingshot them back. It's called a free return trajectory, where simply gravitational pull brings them back to Earth. There isn't a reliance on propulsion. So there's a lot that needs to happen. Like, this is still high stakes. And it sets records in terms of the distance that humans have been into what we call deep space.
I feel like when we talk about space these days, these years, it doesn't really involve NASA anymore. We talk about SpaceX, we talk about Blue Origin, but NASA kind of steering this and driving this feels like a return to Paul's youth or my youth. Where has NASA been in this effort for space exploration and just, journeys to space?
Yeah, I hear you. Like, I first came to Kennedy in 2004. I won't say how old I was, but, that was a long time ago. It was the year that Hurricane Charlie hit the Space Coast. And, SpaceX kind of came about a decade after that, right? But NASA is the owner of this project, Artemis. There are lots of American companies involved in the construction of the system. Boeing does the rocket, Lockheed Martin does the spacecraft, Northrop Grumman does the abort system. But NASA oversees all of it, and it's been expensive, right? The total bill for this project is $93 billion or $4 billion a pop. But NASA's also empowered again. The Trump administration started this process in 2016. It has carried it on into Trump 2, where they say to NASA, like, go and do this, get America to the moon, particularly before China, but it's a goal that this nation has, and NASA is the agency that's executing on it.
And I probably speak for a good part of our radio and YouTube audience. Been here, done that, as it relates to the moon. What is NASA saying, and our space partners, what are they saying are kind of the next steps?
Yeah, so this is Artemis 2. There is an Artemis 3 mission scheduled for next year, which would test the interoperability of the different providers. Scarlett mentioned SpaceX. As we've reported and NASA's now confirmed, SpaceX might come into the equation where its Starship docks with Orion in low Earth orbit and eventually pushes the Orion capsule to the moon before it lands. But the ultimate goal is get to the moon as early as 2028. First, astronauts' boots on the ground, and then there is a plan to establish a base on the moon. And that sounds like science fiction, right? But the very real strategic value of it, of being first, is resources. There is oxygen on the moon, there is water, there are other minerals that are of value. And then, with America's broader goal of eventually getting to Mars, which is a real goal, launching from the moon is easier than launching from Earth because of the differential in gravity. So that's the why, and there's several stages to the Artemis program between now and 2028 to get there.
All right, good stuff. Ed Ludlow, really appreciate your kind of laying out what we'll be watching for. Ed Ludlow is reporting live from the Kennedy Space Center. NASA astronauts reaching a safe orbit, historic moon mission. I really come back to that idea, though. It feels like NASA has been missing in action, though, for the last couple of years. It's really been a SpaceX story, a Blue Origin story.
Yeah, especially, since the space shuttle program wound down, there hasn't been a whole lot for NASA to do, at least on a high level or high visibility type thing. So it's good to have them back. But you got to figure it's a public-private partnership, and that seems like the best way to finance
Yes, Ed name-checked Northrop Grumman. He name-checked Boeing. So there's plenty of private companies involved in all this.
Jeff Bezos, all that kind of stuff there. Getting back to Earth here, but we're still talking to Elon Musk. Tesla had some numbers come out that were, in terms of deliveries, a little bit disappointing. But I guess I'm like a lot of people. Like,
are they really a car company or is it something else?
That's exactly right. So let's go to a car person. That would be David Welch. He's a Detroit bureau chief for Bloomberg News. He's based in Detroit. Hey, David, talk to us about Tesla's delivery numbers here. What did you see, and what's the company saying?
Look, it was a disappointing quarter, no matter how you look at it. Even though it was up over last year, but there's some complexities there. So they greatly disappointed what analysts and investors expected them to sell. It was up over last year. So how does that happen? Last year at this time, there was a backlash against Elon Musk over Doge and everything he was doing with the Trump administration. So sales had really pulled back from that. If you look at this first quarter versus previous years, not 2025, but 2024, 2023, it's down significantly from there. So Tesla's overall sales globally have just been sliding here for quite a while. EV sales are down all over the globe. I mean, not in every market, but the Chinese have pulled back on some of the incentives there. Even BYD has seen a couple of tough months in terms of sales with some of those government based incentives going away. Trump administration got rid of them here. That's hurting EV sales here, and that's all they sell. They're getting rid of the Model S and the Model X. And, the company's trying to pivot toward robotics and automated driving, both of which are very big challenges to beat in the next few years. It's just very difficult to get cars to drive themselves. And the methodology Tesla is using is different from everybody's. They're relying on their data. So, look, it's going to be a tough road ahead, I think, for Tesla to really turn investor sentiment around because they're not selling vehicles like they used to. And there are a lot of big question marks on the new strategy and the big pivot that Elon Musk is making with this company.
All right, and that's kind of been the story with Tesla for a while now, that, even though it does still sell cars, that trajectory has gone down. And with EV sales slowing overall, what's interesting is with oil prices now elevated, there is more interest among consumers, at least into looking into examining the prospect of buying an EV to save on gas costs. There's another story out today, David, about Stellantis in talks to make Chinese EVs in Canada. I thought that the U.S. car makers were staying far, far away from the Chinese EV makers.
They are, but then again, Stellantis is really a European company with a big U.S. arm, isn't it? But look, Canada relies on the U.S. companies and Toyota largely for its auto industry. It's Ford, GM, Stellantis, and Toyota, to a degree Honda, that are making a lot of vehicles up there. That's where they get their domestic supply of cars that aren't imported and facing tariffs now. And also for employment. And if you're going to have this trade tension between the U.S. and Canada, which we have had for a while now, and we're unsure of what's going to happen with USMCA. There's a lot of talk that maybe Trump will cut separate deals with Canada and Mexico, and he's been very annoyed with Canada these days. Then Canada has to look elsewhere for companies that are going to invest in their industrial base and make vehicles there that aren't going to be subject to different trade issues. And they're increasingly looking to the Chinese. And I think they would welcome that. Stellantis' partner, Leapmotor, I'm sure they'd love to get into the Western Hemisphere with the hopes that one day, if trade tensions between the U.S. and Canada subside, they could actually send some of those vehicles into the U.S. market. And it's not a bad place. These would be small plants, but it's not a bad place for the Chinese companies to get in, even if they need a partner to do it.
David, thanks so much. Appreciate it. David Welch, he's a Detroit bureau chief for Bloomberg News up there in Detroit. Again, Tesla had one of its worst sales quarters in years, missing Wall Street's expectations as our car maker struggles to turn around its core business and navigate an increasingly challenged electric vehicle market. It just feels like outside of the United States, BYD and some of these other Chinese car manufacturers are going to basically take over the world.
Well, I mean, their cars retail for less than $10,000 oftentimes. I mean, yes, there's a lot of help from the Chinese government to keep costs low, but that's in contrast to what you see in the United States. Tesla also, as well, has a lot of supply out there with used Tesla vehicles out on the road. A lot of people who might have bought them through leases have now returned them. And so there's a lot of supply.
Yeah, the novelty maybe is kind of worn off for some people. But a lot of people swear by them. I mean,
in California, it's like every second car or third car is a Tesla.
You're exactly right. I noticed that when I was out there. And with $6 gasoline, you can see why. S&P basically unched on the day. It was down 1.5% earlier today, so a little bit of a rebound.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks well off session lows, still in the red. Little change, though. The key takeaway at this hour on the S&P 500 index, down 10 at 65.66. That is a drop of just about 0.1%. Dow Industrials down 116, drop there of 0.2. Nasdaq also down by 0.2%. And this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. goldencrestmetals.com/guide. Stocks have paired earlier losses. Indeed, we did see the S&P 500 index higher briefly. Oil prices are off their highs on a report that Iran is drafting a protocol with Oman to monitor traffic through the Strait of Hormuz. S&P 500 index, as we mentioned, down 0.1%. The VIX just above 25 with a 10-year at 4.29%. The 2-year, 3.79%. Gold down $95 the ounce, 46.62, drop there of 2%. West Texas Intermediate crude trading above $110 a barrel. WTI up now by 10%. Barrel of Brent, 107.35. Brent below WTI. Barrel of Brent up by 6.1%. Bitcoin selling off, down 2.2%. 66,697 on Bitcoin. Shares of top asset managers trading mixed after Blue Owl Capital said it will limit redemptions from 2 of its private credit funds after facing a surge in withdrawal requests. Shares of Blue Owl right now, they are trading lower, down 1.3%. KKR up by 0.5%, and Blackstone down 0.6%. Again, recapping here, S&P lower, little change, down 0.1%. West Texas Intermediate crude, big round number there, above $110 a barrel. WTI up now by just about 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Paul Scarlett. That is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet, with our check on the markets right now. Stocks have come well off their lows. They briefly went into the green, but they're now red again. And a lot of this on the back of President Trump's address to the nation, where he talked about the war in Iran, but we didn't actually learn anything too concrete. Tiffany McGee is CEO and CIO of Pivotal Advisors and joins us now from Baltimore, Maryland. And Tiffany, would it be fair to say that the speech did little to reassure investors, especially before a long weekend, where we've had this pattern of investors not wanting to be too exposed too long before a weekend of unknowable risk?
Scarlett, thanks for having me. So listen, the president's address last evening really added more uncertainty to the mix, I think. So we know that the president tends to use superlatives. He definitely likes those. But in this environment, those can be really difficult for markets to digest, and especially when they're paired with forward-looking statements, right? So, for example, he said, we're now totally independent of the Middle East. And the reality is more nuanced, right? So the U.S. may import less directly, but global markets are still really interconnected. 20% of global oil flows through the Strait of Hormuz, where, Iran has, all the influence, right? So disruptions there still impact prices, inflation, and markets globally. He also said, we totally obliterated their nuclear sites. I was taking notes as he was talking, and that's very definitive statement. But, markets tend to be cautious around claims that are difficult to independently verify in real time. And he said a couple other things that, really just sparked additional uncertainty. And one thing the market does not like is uncertainty. So I think that we're going to continue to see some more volatility going forward.
So what are the conversations you're having, Tiffany, with your clients these days about that level of uncertainty and how that may impact kind of investment decisions?
Mm-hmm. Yeah, listen, so most of our the majority of our clients are foundations and endowments. So, what we're doing, they've got a very, strict mandate, right? So we're supposed to manage this money in perpetuity. And so, we always set a strategic asset allocation, then we make tactical moves as needed. So the main idea here is diversity. We have a plan, and the same thing goes for retail investors, right? So we have a plan, and we're going to stick to the plan. In terms of the things that we're leaning into tactically, so we're really prioritizing when we think about when we think about individual names as well, like durable earnings over fast earnings, right? So consistency matters more than chasing growth. We're thinking about pricing power. That's really everything right now. We want companies that can pass along costs without losing demand, which is very, very important. We're looking at balance sheets. Balance sheets matter again. Higher rates higher rates mean leverage really matters, right? So we're focused on strong cash flow and manageable debt. Valuation discipline is also really critical. We have like a higher rate environment. Markets, the market is much less kind of forgiving if you overpay. And overall, this is a quality over hype environment. Resilience and profitability are really winning right now.
You mentioned pricing power. How do you divvy that up? Is it sector by sector, or is it companies within sector? That there's always going to be companies within, say, the consumer sector that have pricing power, even with the burden of higher oil prices?
Yeah, I think we do definitely take it on a case-by-case basis. So, the majority of our clients, we are buying actively managed funds and layering it with also passive so that we can have broad market exposure to certain areas and also reduce costs. But we're also looking, we also buy individual stocks, right? So we're looking, we're more bottom-up approach. So we're looking at pricing power as it relates to the individual companies, and also that added layer of the sector. So, different companies, pricing power is kind of relative in different sectors. So we're really kind of paying attention to the relevance of that.
Tiffany, real quick, the technology call in the equity markets has kind of changed from let's just buy who's ever spending the most on AI to now getting a little bit more differentiated view. How do you think about this AI theme from your perspective?
Yeah, we really broadly, we think about AI the way we think about what the internet did for the world, right? And so we do think that this is going to revolutionize the way we work, the way we live, all of the things. But I think that there's been a lot of focus on the investment of AI, these dollars, and the hype of it all. And so what we're really trying to focus on is actual real returns from that investment. So when we look at certain things, Microsoft is a company that we like. It's a really great example. It's a platform where AI is kind of already embedded and driving real revenue. It's got durable earnings, recurring revenue across cloud and enterprise. It's got that pricing power I talked about, which is really deeply embedded in their customer kind of workflows.
Right.
Again, the strong balance sheet and quality over hype.
Tiffany, thank you so much for joining us. Really appreciate it. Tiffany McGee, CEO and CIO of Pivotal Advisors down there in Charm City, Baltimore, Maryland. Let's stay with the tech theme a little bit, but we'll go to the credit side of the equation. Why? Because these companies are issuing debt hand over fist, which is something we haven't really been used to, but that is something that is a big theme, I think, across the tech space is kind of how they're funding some of this AI. And the best name for us to chat with on that story is Robert Schiffman. He is tech credit analyst for Bloomberg Intelligence. Let's start with Intel, Rob. I'm just looking at the stock, and the stock's really turned around, really working. But from a credit perspective, what's the view of Intel? Because there were some concerns.
Sure. First, happy holidays to all. Unlike Ira, I will not be working tomorrow. I will be eating through one of our hundreds of boxes of matzah.
Okay. Which we have on the 6th floor.
God bless our rates chief of staff.
Yeah.
Yeah, listen, it's nice to be talking about a name that actually people like in the technology space. Stock is up some 30-odd% this year. The S&P 500 tech index is down almost 10%. Spreads are 50 basis points tighter over the past 6 months. I actually think they're the original poster child for AI.
Yep.
They announced that they're going to be spending tens of billions of dollars building foundries, not data centers, and free cash went negative. They borrowed a lot, stock sold off, bonds sold off, and lo and behold, they're in the midst of a pretty major turnaround. I think it's a plan others can potentially follow over the next couple of years.
But what makes Intel different? Why was it able to pull it off? And how will other companies who might want to follow in its footsteps be able to, follow this blueprint and also succeed?
Yeah, well, there's a lot of benefits of having big, powerful friends. So first, the government converted some of their grants into a 10% equity stake. That was over $8 billion. NVIDIA wrote them a $5 billion check, and SoftBank wrote a couple $1 billion check. On top of that, they sold assets. They gained almost another $10 billion in asset sales for non-core businesses. So unlike others that have been doing nothing but been borrowing and adding leverage, this company has been on a deleveraging push. All right. And on top of that, fundamentally, their core business is starting to improve. So a better balance sheet, a top line that we're looking to see grow this year after falling 5 straight years in a row. So they are doing things that are different, and they're getting paid for it.
All right. So on the Bloomberg terminal, if you want to see who the shareholders are of any particular company, you just type in HDS for holders. Number 1 for Intel, BlackRock. Okay. Number 2, Vanguard. Got it. Number 3, United States of America. You don't see that every day. And number 4, NVIDIA. So those are the partners for Intel here. How about the free cash flow story? Because I was just looking back at the FA function, and as you said, negative free cash flow because they're spending so much on CapEx. You're a bond guy. You like free cash flow. How's that story developing?
Yeah, we haven't had a lot of free cash flow over the last few months to talk about, and we haven't been worried about it. Listen, Intel's been bleeding cash. It looks like they're probably going to be around flattish this year. That being said, though, with all these transactions that they've done, they've built a pretty big base of $37.5 billion of cash on the books. They're using some of it to buy back Apollo's stake in one of their JVs.
Is that a good move?
It's a phenomenal move. You know,
Why?
we wrote yesterday that it was a sign of strength. What this company had to do is some creative financing. Like, you know, we've seen with AI, we've seen some of these off-balance sheet SPVs to raise money so it doesn't lever the companies. Intel was sort of the first to do this, but they did it with a variety of foundries. They did a deal with Apollo, and they did a deal with Brookfield. What they're doing now is they're unwinding one of those, and it's showing that they now have the financial firepower to go into this build on their own. They don't need partners anymore. So they're using some of that cash that they've got from their equity friends, and they're using it now to take a bigger stake in what will be an upside in terms of cash flow and EPS from this foundry business. So it's a real sign of strength. You know, it's not just from us. S&P came out right away yesterday and said they thought it was credit neutral. Moody's came out and said they thought it was credit positive because it was going to enable quicker deleveraging over a shorter period of time. So it's a real sign of strength. And it's one of the few names that both the equity and the bond markets really love.
And very quickly, Robert, do we give all the credit to Lip Boon Tam?
Yeah, let me tell you something. You bring in a new CEO and you make the type of changes that he's made. I think every technology firm would love to have a CEO like that. So yeah, I'll credit and kudos to him.
All right, good stuff. Robert Schiffman, Senior Tech Credit Analyst with Bloomberg Intelligence. And you're right, it is a nice change of pace to talk about tech credit that everyone wants and loves right now, and that would be Intel. And of course, he's the go-to guy here we talk to when it comes to all these hyperscalers issuing the hundreds of billions of dollars of debt. At least for this year, at least the last couple of years, as they build out their AI infrastructure. We've got much more coming up on Bloomberg Intelligence. We'll be speaking with Barry Ritholtz. He is a founder of Ritholtz Wealth Management and host of Masters in Business on what he sees in these markets. The S&P 500 down marginally, no longer really in the red, basically unchanged at this point as WTI and Brent hold on to their gains. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks wipe out earlier losses. The S&P 500 index had been down as much as 1.5%. Right now, we'll call it unchanged on the day. The Dow down 74, does remain lower, down 0.1%. NASDAQ Composite Index also swinging between gains and losses. NASDAQ right now down 6, just about flat on the day. All of this against the backdrop of a VIX that is just above 25. The 10-year 4.30% with the 2-year 3.78%. Gold now down $91 the ounce, down 1.9%, 46.67. And West Texas Intermediate crude now at 111.07 a barrel, surging 10.9%. A barrel of Brent 107.44. Brent crude up by 6.1%. So bottom line here, stocks pairing earlier losses. Oil prices retreating from their highs on a report that Iran is drafting a protocol with Oman to monitor traffic through the Strait of Hormuz. Investors, markets, all reacting to last night's President Trump speech. Tiffany McGee is Chief Investment Officer at Pivotal Advisors. Moments ago here on Bloomberg Intelligence, she told us the president's speech last night did add more uncertainty to the mix.
We know that the president tends to use superlatives. He definitely likes those. But in this environment, those can be really difficult for markets to digest, and especially when they're paired with forward-looking statements, right? So, for example, he said, we're now totally independent of the Middle East. And the reality is more nuanced, right? So the U.S. may import less directly, but global markets are still really interconnected.
Tiffany McGee of Pivotal Advisors, interviewed right here on Bloomberg Intelligence. Tesla posted one of its worst sales quarters in years, missing Wall Street's expectations. Tesla shares trading lower now by 3.9%. Also reporting first quarter sales. General Motors, it said sales were down by 9.7%. GM down by 3.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, Charlie Pellet, thank you so much. We appreciate it. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube and at Bloomberg.com. It is happy one-year anniversary of Liberation Day. So the question is, how has the cornerstone economic policy of the administration worked out? Let's turn to our next guest, 1B Ritholtz. Barry Ritholtz, he's host of Masters in Business on Bloomberg Radio. It's a podcast, as Tom Keene would say. It's a pretty darn good one, very popular. You should check it out. He's also the founder of Ritholtz Wealth Management. So, Barry, we got a little bit of perspective here on tariffs. Any tangible kind of feedback?
Yeah, it's, everybody's kind of dancing around the data and afraid to offend the president. But this was supposedly the cornerstone of his economic policy. And it's hard to find much of a silver lining here. Everything the president said he wanted this to accomplish, not only has a lot of it not happened, some of it has gone the totally opposite way. We've lost 100,000 manufacturing jobs, far from the hiring renaissance we were promised. And this was supposedly going to reduce the deficit. Not only has the deficit exploded, but somehow the government owes $166 billion, having collected $151 billion in tariffs. It's pretty much a disaster wherever you look. And that's before we get to the geopolitical impact and how much of the rest of the world is pivoting towards China as a reaction to this.
Did it bring any manufacturing jobs back? I mean, that was one of the stated goals here, to reshore U.S. heavy industry.
Yeah, we got a lot of promises and a whole lot more talk than action. I think the only job creation we're going to see in heavy industry is going to be the things that predate President Trump, which is all the money that was spent in the last administration to get Intel and other semiconductor companies to build chips primarily in the southwest of the United States, where there's a lot of cheap land and a decent amount of reasonably priced power. But we just haven't seen that promised industrial renaissance. It failed to materialize.
Barry, talk to us about the tariffs, and the courts striking down IEEPA. That brings us to the question of, I guess, returning some of these tariffs, rebating them. Do we have any idea how that's going to happen?
So the actual mechanics of it have been kind of up in the air. It hasn't really. There's a website that Commerce has that supposedly gives a modest amount of guidance, but a lot of companies looked at it and said, "Hey, this is a disaster. We can't rely on the administration that passed what was clearly unconstitutional tariffs. We can't rely on them to process this correctly. So we're just going to sue the White House, sue the Commerce Department." And this includes everybody from Target to UPS, to go down the list of like major Costco, major U.S. companies that have said, hey, this was not only unconstitutional, it was really, really expensive for us. In fact, since August 2025, since April 2025 through August 2025 and ongoing, 9 out of 10 goods firms, retailers and importers, had to raise prices. And at the same time, 75% of these companies reported declines in margins. So in other words, they were eating a big part of the initial cost and yet still passing on higher prices to the end consumer. It was a lose-lose, and that's really problematic. And you see that showing up in all sorts of sentiment measures.
Well, for the president, who loves tariffs and intends to continue to use them as leverage, as a weapon, he now needs to shift and use other measures. For instance, Section 232, Section 201, Section 301, Section 122. I can continue, but the idea is that tariffs are not gone forever. They're still a tool at his disposal. But it's going to be a longer implemented process. It's not going to be quick and easy the way that it was before. How do you think through the economic impact of tariffs through those measures?
So, the initial hammer that he created out of whole cloth, rather than go through the process of asking Congress to give him the authority, let's be blunt, they kind of half-arsed this and didn't do it the proper way. And so nobody who is negotiating with President Trump on tariffs takes him seriously anymore. This was enormously damaging to the brand of the United States, to Pax Americana, as well as to a whole bunch of other geopolitical elements, such as pivoting towards China. And then when you see what's going on now with the Iran war, he's asking our allies to help open the Strait of Hormuz. And they basically have said, hey, you started this with tariffs. You never consulted us. You started a war with Iran. You never looped us in. This is your headache. It's up, you broke it, you fix it. And so I think he's made his own bed, and it's a bit of a mess. It's really a challenge. The biggest factor beyond just the policy whipsaw, how many times we went back and forth, I think it was over 50 times over the past year. Tariffs were added, they were reduced, they were reversed, like that constant taco trade. You ended up in a place where the rest of the world is like, we're just going to wait you out. And you see that in the plummeting confidence level of CFOs. It really made a big difference to corporate investments, corporate CapEx. From April 2nd, a year ago, CFO confidence went from 37% to 5% in a single month. And so that's very much a problem for corporate America. And you see it reflected in we've essentially stopped hiring. We're flat. Yeah, maybe layoffs have ticked up slightly, but it's been really problematic. It's not a pretty legacy.
All right, Barry, we'll see how this goes from here. Barry Ritholtz, host of Masters in Business on Bloomberg Radio and founder of Ritholtz Wealth Management. The S&P's down 7 points, the Dow's down 120 points. NASDAQ is down 40 points, but again, these were all down well below 1% here earlier in the day. So off of the bottoms we are, but still.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and streaming live at Bloomberg.com as well. All right, equity markets close tomorrow. Bond markets open till noon, I think. The economists are working tomorrow because we got some economic data, most notably change in non-farm payrolls. The survey number is 65,000. The whisper number is 43,000. I don't know. At least it's still a positive number. Michael McKee, international economics and policy correspondent for Bloomberg News, he's working tomorrow.
You think?
Yes. So somebody's got to be telling me what they're thinking about this number. What do you expect to hear about, or how do you expect to gauge the labor market tomorrow?
Well, the way the Fed is going to look at it, which is the way people listening to this program are probably going to want to look at it, is you look at the unemployment rate. And if it doesn't change at 4.4%, and a lot of that has to do with the fact that we're not seeing a big rise in the number of people in the labor market, then it's status quo. And the Fed looks beyond this and tries to figure out where inflation is going. If we get a big negative print on job creation, that would worry people a little bit more, because then it suggests that companies are starting to move in the direction of paring back. But we haven't seen any other evidence of that in any of the other indicators. Now, we were all surprised last month, so it could happen. But the other indicators like jobless claims today near a 2-year low.
Earnings, wages, I'm looking at the consensus, kind of average on a year-on-year basis, kind of 3.7%. Last month, it was 3.8%. Is that, do we expect any movement there, do you think?
Not significant movement. I mean, just a little bit of a tenth down, and a lot of that may be influenced by how long the reporting period is. But the biggest thing about earnings is that they have come down from what the Fed would consider unsustainable levels to close to a sweet spot here. If inflation is running below 3.7%, which it is, then you're still getting ahead of the game with your earnings. Now, they're measured all different ways, but this measure suggests that it's not inflationary.
I think I've heard the labor market characterized as a kind of a no hire, no fire. Is that still the case?
Seems to be. We saw a drop in the number of layoff announcements compared with the same month a year ago in the Challenger numbers today. And the only category that seemed to be losing significant amount of people, over 18,000, was in tech jobs. And that may be because of the whole AI thing. We don't know for sure, but everything else was kind of about the same, except for lawyers. There were no layoffs. There have been no layoff announcements for lawyers for this year, the first 3 months of this year. So if you want a job, there's the career.
There's a lot of litigation out there, so I guess you need lawyers. So what is the intermediate to longer term aspect of AI from a labor perspective? Is there any credible evidence to suggest it's a job creator, job destroyer, net neutral?
Yeah, we don't know. The feeling is this is going to be a transformational technology, and transformational technologies always destroy a lot of jobs. It goes back to Schumpeter and creative destruction, but they also tend to create new jobs in new categories, and that's what we don't quite understand. We also don't understand for sure what it means for various socioeconomic levels. Does this mean we get rid of all the low-paid jobs, or is AI a benefit that enables companies to get rid of higher-paying workers who are paid to think about things? Those are things that are yet to develop and yet to have any evidence on. The feeling is we're going to see a big transformation, and a lot of people will lose jobs, but maybe a lot of people get jobs, and we just don't know what they are yet.
Well, you talk. I don't know if you've done this, but I was at an event a couple weeks ago, and a lot of AI people there, and they are evangelical about the broad impacts that AI can have. Like, it can do anything. If it can't do it now, give it a 6 to 12 to 24 months. And you could paint fantastical scenarios, none of which I think is good for jobs, but I just don't know how this thing's going to play out. But you talk to these people that really believe it, really understand it. Wow.
We have had a number of commentaries published lately from people in the AI industry, which are on kind of both sides of the issue. Some of them are apocalyptic. And not only is this thing going to take all your jobs, but it's probably going to come into your living room and strangle your cat. Others say, you know, this is a great opportunity because productivity will rise and people will have to work less and they'll get more money and living standards will rise. And we just don't know. And the problem is nobody really seems to know because it's such a black box. You don't know what's going on inside this thing. And it's really hard to say for sure what's going to happen. It is, I suspect, by 2028, it's going to be a major issue in the next presidential campaign. So what do we do about this?
Yeah, what do we do with it? To what extent does it need to be regulated? Good point. Michael McKee, international economics and policy correspondent for Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. The S&P is down about 0.1%. Again, it was down about 1.5% early this morning when markets opened on the back of some comments from last evening from President Trump. It's now down 0.1%. The Dow's off 150 points, 0.3%, and the NASDAQ off 45 points. That's 0.2%. 10-year Treasury yields come in just slightly. We're sitting right about 4.3% there. WTI crude oil up $11.50, up to $111, close to $112. Brent crude $107. That's up 6%. So higher oil, lower equities. Once again, the correlation. This is Bloomberg.
CBS News on the Hour, your home for original reporting.
I'm Stacey Lynn. After a spectacular launch, the crew of Artemis 2 is on to the next big challenge up in space. CBS's Mark Strassman reports.
Great flying with you, Houston. Late last night, Artemis 2 pilot Victor Glover took manual control for the first time. Just the beginning of the crew's intense, highly scheduled 24 hours of systems testing and engine firing.
The testings to make sure it's up for the task to head to the moon, where it will not land, but instead loop around it to get a good look at the far side. In a primetime address, President Trump claimed the war in Iran is nearly over.
The president is facing sagging poll numbers. He's well aware that this war is not popular. And so this really was an effort by the president to reassure Americans that there was a finish line, but without specifics about what has to be done before he can really pull the U.S. out. There are more questions this morning about his plan.
CBS's Weijia Zhang tells us he warned there could be more strikes in the coming weeks. While the war is causing gas prices to soar, Patrick DeHaan with Gas Buddy says filling up the tank is painful.
I don't expect Americans are going to be real happy with gas prices this high if they persist into the summer. And that's where it could become a political liability for the Trump administration.
Gas has hit $4 a gallon for the first time since August 2022. The partial government shutdown may soon be over. CBS's Linda Kenyon reports President Trump plans to sign an executive order today to pay all DHS workers.
In a post on social media, President Trump said he will sign the order to fund the agency, which includes the Federal Emergency Management Agency and the Coast Guard. The move comes as Congress has been unable to reach a deal on funding the Department of Homeland Security, and as lawmakers remain out of town for the Easter break. Previously, the president signed an executive order to pay TSA agents, who are also part of Homeland Security. The shutdown of the department follows demands for operational changes to ICE after the deaths of 2 American citizens in Minneapolis.
You ready to throw in the work towel and retire on a beach somewhere?
Northwestern Mutual asked thousands of people how much money they think they will need in retirement. The magic number was $1.46 million, up from $1.26 million last year due to concerns about inflation. A recent NerdWallet poll found only 5% of Americans with retirement accounts have socked away at least $1 million. 9% have saved $500,000.
That's CBS's Michael Wallace with the not so encouraging news. And with that, your stocks are on a ride in the red today. The Dow right now is down 117 points. NASDAQ off 29. This is CBS News. You can finally change your Gmail username.
Are you still a hot mama or a geeky hunk on Gmail? You can get rid of your cringy old address now. Google says anyone who set up a username in their less mature days can swap them out without losing access to inboxes or data. Up until now, users were stuck with those embarrassing Gmail addresses, an issue for some when they got married or divorced or needed to look professional when they applied for jobs. The change comes more than 2 decades after the world's largest email platform launched. Deborah Rodriguez, CBS News.
Big change for Hershey after the founder's grandson accused the company of cutting corners by using cheaper ingredients. Hershey now says it's going back to the original recipes for all of its Reese's products. Some newer items had used coatings with less real chocolate, partly due to high cocoa prices. Hershey says the change will happen sometime next year. Stacey Lynn, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Back to the Stone Ages. Welcome to the Thursday edition as markets reverse following President Trump's address to the nation. President promising to send Iran, yes, back to the Stone Ages with no plan to reopen the strait. I had a report today that Iran is drafting a tolling system for the strait, along with Oman, and oil prices are higher again. We're going to get the latest from Bloomberg's Tyler Kendall, who's standing by at the White House with analysis from our political panel. Bloomberg Politics contributor, Republican strategist Rick Davis is with us, along with Democratic strategist Matt Bennett from Third Wave. Artemis 2 is on its way to the moon. Bloomberg's Ed Ludlow will join from the Kennedy Space Center to walk us through this mission. And we start, as always, on Wall Street. Set the baseline with Charlie Pellet at World Headquarters in New York. Charlie, how are we doing?
Right now, we are lower on the equity market. Got to begin with oil, Joe Matthew. Big story there. West Texas Intermediate now costing more than a barrel of Brent. WTI 111.14, up by 11% right now. We are monitoring this move. Brent crude 107.47, higher by 6.1%. Bottom line, stocks pair losses. Oil prices retreat from their highs on a report that Iran is drafting that protocol with Oman to monitor traffic through the Strait of Hormuz. Now, equities, at one point we saw the S&P down by 1.5%, was trading positive earlier in the morning session, but right now down 12, 65.63, a drop right now of just about 0.2%. The Dow down 147, down 0.3%. NASDAQ lower by 54 for NASDAQ, a decline of 0.2%. The VIX above 25 with a 10-year 4.30%. Gold is down $98 the ounce to $46.60, down by 2.1%. And again, WTI, West Texas Intermediate crude 111.27. That is a gain right now of 11.2%. Everybody was watching and listening to the president's speech last night. Reaction from Mona Mahajan, head of investment strategy at Edward Jones, who was interviewed this morning on Bloomberg Surveillance.
The good news or silver lining, perhaps, is we still were given that 2 to 3 week time frame, but that was certainly a time frame where the escalation would occur. What's really the question mark is, what's the off ramp after that? How do we get to a place where we are in a peace or negotiating peace? And of course, the question around the Strait of Hormuz was left wide open.
Mona Mahajan of Edward Jones interviewed on Surveillance. And again, West Texas Intermediate crude now trading at 111.29, up 11.1%. ExxonMobil shares among the oil majors down by 0.5%. Chevron shares up 0.8%. ConocoPhillips up by 0.9%. But again, cannot emphasize that oil quote worth repeating. WTI 111.30 right now, up by 11.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. That Joe Matthew, lots going on again. Is a Bloomberg Business Flash.
Wow, Charlie, I thought it was a typo. Isn't that something? 11%. This is remarkable. That's $111. The speech, I guess, didn't work the way the White House was wanting. And as Charlie just pointed out, you're paying more for oil in New York than Brent. Really amazing. We're still seeing a little unwind here in some of the big oil stocks. However, ExxonMobil continues lower. It's not down a lot, but we're certainly quite a bit below the 52-week high. Chevron is actually hanging in. It's up about $1.50, and the XLE is up just a fraction. as traders try to get their heads around this. Now, we've been bouncing around today. As Charlie just said, we're negative at the moment. The S&P down 21. It was actually positive a little while ago. Following an early swoon, we turned positive. Now we're back in the red because nobody knows what to make of that whole presentation. The president at the White House in his first primetime address since the start of the war. Here we are on the day after on Bloomberg Radio, on satellite radio channel 121, and on YouTube. We're streaming live, and we've got some good images from the whole event last evening. If you want to find us, search Bloomberg Business News Live. Did you know there was an audience in there with President Trump last evening? Looked like a mini State of the Union. We'll get to that a little bit later on. We've got a great panel today. Rick Davis and Matt Bennett are with us. As we take the story from the markets back to politics, there's no separating them right now. We've established this already. Oil goes up, stocks go down. I don't care where you are in the middle here. And the president didn't help last evening by showing up without a plan to wind things down or to reopen the strait. Much to the contrary, this was seen as a message by many of escalation. Here's the president from last evening.
We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. When this conflict is over, the strait will open up naturally. It'll just open up naturally. That will resume the flowing and the gas prices will rapidly come back down.
And all you got to do is act naturally. So the idea of the final blow is at hand. Next 2 to 3 weeks, Stone Ages. What would that include? Knowing that a third carrier strike group is on the way to the region right now, and well, we already know that there are many more Marines and soldiers on their way, with questions about the uranium that is still missing, with questions about how to reopen the strait, although maybe he answered them. The president looking at our allies to take that leg of the fight. He says, it's going to be easy now. We've done the hard part. Go ahead and take it. He said, take the strait and cherish it. And on this day after, we find Tyler Kendall picking up the pieces at the White House here with much to unpack from what the president said. She is, of course, our White House correspondent. Tyler, what's it like at the White House the day after such a big event? As I mentioned, he had a room full in the Cross Hall, though. The whole cabinet was in there, the top brass. Does the White House think that it landed the plane?
Oh, well, Joe, at this point, we haven't seen President Trump publicly today, and all of the events on his schedule right now remained closed press. But I think that this really did feel like a speech from the president that was seeking to reassure the American public that the conflict in the Middle East is in the national interest, and also to defend how the foreign policy objectives are now hitting those domestic policy objectives as Americans face higher prices at the pump. As you discussed yesterday when you were wrapping the speech on Bloomberg Television and radio, we saw President Trump here talking about the idea that this is going to be worth it for the U.S. to ensure that Iran does not obtain a nuclear weapon in exchange for some higher gas prices now. But he says that once the Strait of Hormuz opens, he even suggested on its own, once the conflict is over, then those prices will come down. So you see the White House playing some defense there. But of course, we got some breaking news within the last hour on how Iran is viewing the closure of the Strait of Hormuz, with the Iranian state media now reporting that Iran is currently drafting a protocol with Oman to monitor traffic in the waterway. The Iranian deputy foreign minister reportedly saying that the country believes that these guidelines should be in place even during peacetime, and that Iran is now going to start charging ships that go through the strait. As you well know, one of the top demands from Iran is that they want to retain sovereignty over the strait in order to end the war, something considered to be a non-starter by this White House. But it just goes to show how last night we got this tactical update from President Trump, but we didn't hear any new details about how the U.S. is going to address some of these critical strategic setbacks, including the closure of the Strait of Hormuz.
Well, I hope you all heard what Tyler just said, because this is why you see crude oil up 12% now. We're up 12%, Tyler. This is amazing, to almost $112 a barrel. That's New York crude. As the Islamic Republic will set a toll for ships passing through the strait. Iran's deputy foreign minister said this in an interview with Sputnik. This is like a comic book. Sputnik, that's who's getting the interviews with the Iranians. And this is something we've talked about for some time, the idea of setting tolls for ships. That's a whole new level Tyler. The president says the strait opens naturally. Apparently, it opens with a toll.
Well, actually, you'll recall last week our colleague Anne-Marie Herdern was in the cabinet room and asked President Trump directly how he would feel if Iran was charging ships, and he kind of downplayed it and said that he didn't think it was going to be that much and that it was going to have much of an impact. At the moment, President Trump, we've had different messages from him this week about whether or not the strait needs to be open in order for the U.S. To reach an agreement in any potential negotiations that may or may not be happening at the moment. But we're really seeing President Trump, as you well know, shift that burden onto our allies and urge them that they should really be taking control of the Strait of Hormuz. We saw that in Truth Social posts this week. We heard it last night, telling them that they should gain this delayed confidence, in his words, and go and take their energy commodities that are currently stalled in the strait. And Joe, this has come with heightened threats against our NATO allies that the U.S. could withdraw from the alliance since they haven't met the president's demands when it comes to reopening that critical waterway. And we should point out today the United Kingdom did convene the foreign ministers of 35 countries to discuss the issue, but we heard some messaging already, including from the French President Macron, who said that it is, quote, unrealistic to expect that the strait could be open through military means. It feels like the prevailing sense right now is that it's going to allies to commit military assets to help reopen the strait.
You know how it's so easy to be on the air with Tyler Kendall because I don't have to ask any questions. She gets to all the news that you just heard everything that you need to know, which gives me time, Tyler, to ask you about Pam Bondi. I mean, I'm sure you've seen the reports, and we've got at least 3 or 4 of them now. She's likely soon to be out as Attorney General. Seen a report that she actually was told to prepare for this from the president. Do we think this could happen soon?
Yeah, so there's been multiple outlets. This started last night, of course, with the New York Times. Then we saw this new report this morning from Semaphore that apparently the president has conveyed this message. We're going to have to see what ultimately comes from this. A lot of news outlets are citing people familiar with the matter, upset about how the Department of Justice has ultimately handled the Epstein files, something that at this point has followed President Trump and has really caused some political turmoil in the party as we head closer to the midterm elections. This White House has really tried to distance itself from the release of those files. Now, all of this reporting has cautioned, and we should note that a final decision hasn't been made, but it's going to be something that we're going to watch really closely. As we just saw a few weeks ago, President Trump dismissed the first person in his cabinet, Kristi Noem, the DHS secretary, over handling of immigration policies. And I think as we get closer to the midterms and the White House plays defense on multiple issues, you might start to see more of these shakeups.
Wow. Yeah, I guess the door starts swinging once you get into the second year here, Tyler. And Lee Zeldin, we're going to have Attorney General Lee Zeldin. Who saw that coming?
Right. I mean, current head of the EPA and has really helped to shepherd some of President Trump's deregulation agenda. Of course, a former candidate for the New York gubernatorial seat at one point, but he's really elevated himself in the administration as we have seen this deregulation push. And that also is coming into play when it comes to the energy market. Of course, something that we've talked about as a potential option that could potentially help bring down energy prices has been waivers to get more higher ethanol gasoline content onto the market. Not to change topics completely, but that's important for our conversation about bringing down those prices, and President Trump's been pretty happy with Zeldin's job so far.
Well, a lot to talk about, a lot to cover with Tyler Kendall. We thank you so much, Tyler. The day after the big speech, this is something. I feel like we're surveying the battlefield the morning after. We're going to do that down in Florida next. The rocket's gone. The launch pad is still smoldering. Ed Ludlow's up next, only on...
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Oil is surging, a volatile day for the U.S. stock market. Right now, the S&P 500 index trading lower by 24, down 0.4%. Did have a positive print earlier in the day. Keep in mind, at the worst level of the session, we had the S&P down by 1.5%. The Dow now lower by 0.5%. Dow Industrials down 238. Again, the S&P down 0.4%. NASDAQ right now down 94 points, a drop there of 0.4%. On a down day for much of the market, the Russell 2000 index of small cap shares right now is advancing, little changed, up under 0.1%. The VIX now below 26, the 10-year 4.30%. Gold 46.53 the ounce, down 2.2%. WTI West Texas Intermediate Crude, the big story with a $112 handle right now. WTI surging 11.9%. Brent 108 a barrel, up now by 6.7%. Bitcoin down 1.9%, 66,904 on Bitcoin. Shares of top asset managers are declining after Blue Owl Capital said it will limit redemptions from two of its private credit funds after facing a surge in withdrawal requests. Blue Owl finding itself squarely in the middle of worries about private credit. Shares down by 2.1%. Blackstone right now down 0.6%. KKR shares, they are advancing by 0.4%. Recapping West Texas Intermediate Crude, 111.87 a barrel, up 11.7%. The VIX below 26 and the S&P down 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie. I bet Charlie was watching that launch last evening. You should have seen it in the newsroom here in Washington. It was a great moment. You know everything that's going on. We talk about doom and gloom on this program every day, unless you're excited about American politics right now. A perfect bit of timing to witness American greatness. Everybody gathered around after the late edition of Balance of Power in front of a terminal. We dialed up Ed Ludlow and we watched, just absolutely floored by what we witnessed. If you're with us on YouTube, look at this thing. This is the biggest rocket that's gone up in some time with people on it, certainly from Cape Canaveral. Thousands, hundreds of thousands lined the Space Coast to watch this happen. Just to see it clear the tower, to see this reach orbit was so satisfying after so many delays. Producer James tells me the Orion's about 40,000 miles from Earth currently. What do they have, James? About 200-something thousand to go? 230,000 miles is like a walk in the park before they get to the moon. And, you know, we've told you they're not getting out. They're not walking around. This is a slingshot mission. And they're going to go further away from Earth than they ever have before. This is, of course, the next step to actually getting back to the moon, building a base, and eventually getting to Mars. This is big stuff. And they pulled it off. Even the president mentioned it last evening before he ever got to the war in Iran, when he addressed the American people. This is the first thing that he said. Listen.
Let me begin by congratulating the team at NASA and our brave astronauts on the successful launch of Artemis 2. It was quite something. It will be traveling further than any manned rocket has ever flown and will very substantially pass the moon, go around it, and come back home from a distance that has never been done before. It's amazing.
Farther in space than anyone has gone before. Can't imagine the vibe at the Kennedy Space Center the day after an event this momentous. But Ed Ludlow's going to bring us there right now. The co-host of Bloomberg Tech is our spaceman this week. And Ed, are you there for the whole mission? I love that. There he is in front of the VAB. Get on YouTube right now and check out Ed. Otherwise, listen to what he's got for us, because Ed witnessed this firsthand yesterday, standing right in front of the countdown clock. And Ed, it looks like this is going great. Can you tell us the latest on the mission?
Yeah, I would just first point out, Joe, as well, that there's a lot of critical personnel in Houston, of course, that are right now maintaining contact with the crew inside of the Orion spacecraft. Your summary introduction of where we're at and the significance, just spot on. Essentially, this morning, the Orion spacecraft conducted a burn that took it from low Earth orbit to higher Earth orbit, but it's still in this kind of holding pattern, an elliptical orbit of the planet, while they conduct tests of key communications, propulsion, and other systems. And what we're gearing toward is an absolutely critical moment, somewhere between 7 and 8 p.m. Eastern time, when NASA has to decide, along with the crew, are we or are we not a go for that trans-lunar injection? In other words, the final burn from the main rocket that's left with the Orion spacecraft to propel it towards the moon. And there is jeopardy in that. There is risk in that. Of course, it's highly calculated. But in the broader context of what you outlined and America's ambitions of the moon, you know, were they to not go ahead with that and decide to come out of Earth orbit and come back to Earth, that would be a big blow to the project. So we are watching very closely on an ongoing basis for the next few hours.
Mm-hmm. So you said around 7 to 8 p.m. Eastern time, this decision will be made. Ed, what will that decision be based on?
Yeah, based on data, based on the functionality of the avionics, the propulsion system, the input from the 3 Americans and 1 Canadian that are on board that Orion spacecraft. But this has all gone to plan so far. It is all gone to the timeline as outlined in some detail in advance by NASA. And if they make that decision between 7 and 8 p.m. Eastern, the burn itself will come just after 8 p.m. Eastern.
Okay. And then it's what, 4 days to get there, Ed? 5 days? This is a 10-day mission in total?
Yeah. Yeah, this is where the mainstay of the mission comes. So it is 4 days to go the balance of the 250,000 miles, which takes the Orion spacecraft to within about 4,100 miles of the lunar surface. And so we say this is record-breaking because it takes a human crew, manned mission, deeper into space than any have gone before. But that distance in proximity to the dark or far side of the moon, really interesting. But there's a reason, right? They want to see the dark or far side of the moon to make observation, to use different sensors to take readings of the surface of the moon. Is there water there? Is there a way of releasing oxygen? Are there other minerals? And then the final part that's absolutely key is the free return trajectory. Basically instead of relying on propulsion from thrusters or a rocket, relying on the gravitational field of the moon and the Earth's gravitational pull to slingshot the Orion spacecraft back around and back towards Earth, which is, you know, it is a fascinating physics-driven maneuver, and ultimately in 10 days' time splash down off the coast of San Diego, U.S. West Coast.
They must have some incredible views of Earth right now from that distance, Ed. You know, it's my job to ask you about the toilet. I don't know what's going on here. I guess they fixed the toilet. Was there more than one? Was that a potential problem on the mission?
I mean, I think there's more than one deployable system. That was an issue. Was it you and I discussing the 43 cups of coffee that have been designated
to the crew
over
go
the 10-day mission? Yeah. So it's a direct correlation between the diuretic that is coffee and, you know, what's going on there. But again, you know, this one of the best conversations I had on the ground yesterday was with Robert Lightfoot, a one-time acting administrator of NASA, but he did 30 years at agency. Now he runs Lockheed's space program. They are accountable for the Orion spacecraft, and the crew was so intimately involved in the design and development of the building of that spacecraft.
I heard that interview. It was great. And, of course, Ed is much more graceful than to get into the grisly details. But I did learn there, it's a suction-driven... They don't use water in the toilet up there, right? So this thing has to work for them to get to the moon and back.
Yes, in a zero-gravity or microgravity environment, the traditional system that we know to be the lavatory would be ill-advised.
Indeed. This is, of course, not why Ed went to Cape Canaveral. But I have to ask you, Ed, while you're there, because we don't get to talk often enough about SpaceX. We're looking at the biggest IPO of the year, potentially. There's a lot of talk about Elon Musk with his plans to even merge this future public company with Tesla. I'm just wondering what you're seeing, what you're hearing from the ground down there.
Yeah, I mean, one thing that one's reminded of when you visit the Space Coast is that, you know, and we went over this, I think, yesterday, Joe. You know, I first visited as a kid in the early 2000s. Now, this has got SpaceX all over it. SpaceX has facilities, hangars. This morning, when I pulled into the parking lot at the launch complex, there was a SpaceX Falcon 9 rocket that took off overhead. You know, it's so normal and with regularity. What I reported this week, I'm told by sources, is the S1 went in confidentially. They filed their prospectus confidentially for the IPO. The target valuation is $1.75 trillion to $2 trillion, and they want to raise a lot of money, $75 billion. But the key part of the story is they want that money, that capital, not for the exercise of launching rockets. The ultimate goal is to build space-based data center, right? Data centers in the form of satellites. That's taking that will take a lot of capital. So yeah, a lot going on. Trying to thread those stories together.
Man, you've had a week. That's your scoop, right? You and Bailey own that story because everybody's reporting it like it's common knowledge now, but you're the one who found out about that confidential filing.
Yeah, and what I would say is that a number of weeks ago, I won't put an exact date on it because a lot's happened, but we had also reported that there were two proposals on the table initially, right? Pre the merger, SpaceX with Elon Musk's AI company XAI, there had also been a consideration of, prior to an IPO, just merging Tesla with private SpaceX. That, it would appear, isn't happening, but there was a big body of investors that really supported that. But you're right that let's call it either the rumor or the idea that a public SpaceX still has a future where it merges with Tesla into some kind of combined entity. To a lot of people, that makes sense because of the scale, but also because of the commonalities and what those companies are trying to achieve.
And yeah, just lastly, with regard to those commonalities, Ed, do we envision a world in which robotics made by Tesla are building data centers that are brought to space by SpaceX? Is that how this comes together?
You could go a step further and say you envisage a world where Tesla's Optimus robot is the first wave that goes to Mars, right, to protect against what would happen to human life, send the robot, or indeed on the moon base. You know, these are ideas, they're theories, they're business plans at most, but that's kind of what we're talking about here. In the more near term, the idea is that if SpaceX is going to build data centers in space, Tesla has its own chips that it makes in-house. Tesla could also be a big customer of running inference, running the AI models with those satellites. That's more near term what we're talking about.
Wow, yeah, we got there. This is super cool stuff. Ed, I'm delighted that you're still in place and that you could join us today on Balance of Power. Thanks for all of your great coverage. Helping to bring us there makes such a difference here. And as far as that reporting goes on SpaceX, I mean, Ed Ludlow is a news machine. Finds the company could seek a valuation of more than $1.75 trillion. Remembering that this is the company that acquired, as Ed referenced, the AI startup XAI in a deal valued at $1.25 trillion. Just enormous numbers. As we follow the Artemis II mission, we'll keep you posted on that decision after 7 p.m. Eastern here on Bloomberg. I'm Joe Matthew in Washington. We'll assemble our political panel next for their take on the big speech last night. Did it make anything better? Did it make things worse? Might depend which market you ask and which voter. That's straight ahead on Balance of Power, only on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks in the red. However, stocks did pair earlier losses. Oil prices continue to advance. This after a report that Iran is drafting a protocol with Oman to monitor traffic through the Strait of Hormuz. Keep in mind, at the worst point of the day, we did see the S&P 500 index down 1.5% right now, showing a loss of 0.1%. The S&P down 10. Dow Industrials down 153 on the Dow, a decline right now of 0.3%. Nasdaq is down 45. For Nasdaq, a decline of 0.2%. The VIX below 26 now, with a 10-year at 4.30%. The 2-year 3.79%. Gold is down 2%. Spot gold at $46.64 the ounce. Crude surging 11.2%. West Texas Intermediate now at $111.33 a barrel. Brent 107.61 barrel of Brent, up by about 6.5%. Bitcoin meanwhile down 1.5%, 67,170 now on Bitcoin. Investors continue to react to last night's speech from President Trump. Will we see a shift in broader strategy from the president? Terry Haynes is the founder of Pangea Policy on surveillance this morning. He said he will not.
You know, he's not going to get out of NATO. He's not going to cut off the UK while the king is going to come this month, and he's not going to abandon the Middle East. These are major non-NATO allies who are, among other things, major investors in the United States. Thus the interdependence part of this. And he's not going to abandon the situation. And you know that was always pretty clear, even though markets talked themselves into something otherwise.
Pangea's Terry Haynes interview this morning on surveillance. Tesla posted one of its worst sales quarters in years, missing Wall Street expectations. Tesla shares tumbling now by 4.3%. General Motors said its first quarter sales fell by 9.7%. GM down 3.4%. Among some of the other auto names, Ford down 1%. Stellantis, parent of Jeep and Chrysler, up today by 2.4%. Again, recapping, West Texas Intermediate crude oil, $111.46 a barrel, up 11.4%. The 10-year, 4.30%. The S&P down 0.2. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that, Joe Matthew, is a Bloomberg Business Flash.
Thank you so much, Charlie. He'll come back around 1 o'clock, top of the hour, about 20 minutes away from the next reading on Wall Street. It's been a volatile session so far, with an early swoon or recovery, back in the red now, and I'm glad that Charlie was playing the commentary from Terry Haynes. Always in the clutch, man. Those client notes come flying out after breaking news before I can even get home. He writes that Trump's Iran speech punctured markets' fantasy about a quick, definite end to the hot war. Terry, of course, the founder of Pangea Policy. He says this is markets negative, increasing volatility and uncertainty, even as it benefits oil and defense. And even not all the oils are up today. This is interesting, too. Expect Thursday's soothing message from Trump White House to douse markets' jitters, emphasizing the U.S. finishing in Iran shortly within the next 2 to 3 weeks. That would not come as a surprise to anyone. But we haven't seen it yet. In fact, the president just posted on Truth Social a video of a bridge coming down, this blown-up bridge in Iran. He writes, the biggest bridge in Iran comes tumbling down, never to be used again, much more to follow. Then it goes all caps. It is time for Iran to make a deal before it's too late, he says. And there is nothing left of what still could become a great country. Of course, he has said repeatedly that it is too late. And spent time last evening trying to make the case for war and establishing what remains an elusive timeline here. We've heard him reiterate the 2 to 3 weeks. He did it again last evening. Here's the president at the White House.
We are going to finish the job, and we're going to finish it very fast. We're getting very close. I want to thank our allies in the Middle East, Israel, Saudi Arabia, Qatar, the UAE, Kuwait, and Bahrain. They've been great, and we will not let them get hurt or fail in any way, shape, or form.
Interesting, thanking the countries in the region there as opposed to our NATO allies, who he did castigate. But then there was the talk of escalation. Once again, we get the two messages. You heard what he just said. We're going to finish the job. We're going to finish it very fast, and we're getting very close. But then came the back to the Stone Ages line, as he says that over the next 2 to 3 weeks, we're going to bring them back to the Stone Ages where they belong. And I don't know what that means for help is on its way when he was referring, of course, to helping the protesters on the streets, because now he's talking about, this is a quote, to hit each and every one of their electric generating plants very hard and probably simultaneously. Let's go through all of this with our panel. We've got a great one today, sensitive to politics and political optics, which, of course, an address like this is all about. Bloomberg Politics contributor and Republican strategist Rick Davis is here, partner at Stone Court Capital, alongside Democratic strategist Matt Bennett, Executive Vice President for Public Affairs at Third Way. Rick and Matt, it's great to see you, and I'm curious your thoughts today, Rick Davis, just in general. Let's start wide and we can zero in on some of the messaging here. The president had been criticized for not doing this yet. So 5 weeks into the war, there he is in the cross hall, the doors open, walks up to the podium. A lot of people commented how it was dimly lit. Some folks referenced low energy because he was reading, not doing the big rah-rah rally thing. And I'm wondering if you think he managed to reach people in their living rooms last night, whether they were planning to see him or not.
Yeah, I mean, I just think back a week ago, we were talking about the president needs to address the country and explain what's going on in this war and trying to build some of the popular support for it, because we were seeing poll after poll indicating that not only did this skirmish start as an unpopular event, which is unusual for a military escapade like this, but two, it only got worse. And so, yes, it's a good thing the president took the time yesterday to address the country. I would say the audience that I could tell he was talking to was his base. He basically built a rationale for, if you like Donald Trump, here's your talking points for the next couple weeks. And I really didn't feel like he was addressing the elephant in the room, which is the rest of the public wondering, why are we doing this? When are we getting out? What are the benefits to this for our country? It was really kind of a baffling speech in that regard, that there was only sort of a narrow band of people who were already supporters of Donald Trump who were going to take anything positive away from that, including the markets, from what I could tell after the actions this morning.
Well, that's right. And even in real time, we saw an immediate move in oil prices, the dollar, interest rates, and stock futures. Matt Bennett, did the president make this better or worse with the speech?
Certainly didn't make it any better. I don't know if he could make it worse, because it was pretty bad going into last night, as Rick points out. And I very much agree with Rick that this was a speech to his base that is starting to crumble around this issue. There's some very high-profile skeptics like Tucker Carlson and others, and I think he was trying to shore that up. He was definitely not talking to Democrats, and he certainly wasn't even talking to swing voters who are wondering just what we're doing there and why paying $4 a gallon for gas is making America great again. I think people are right to be wondering that. The other thing he didn't offer at all was a vision for how that's all going to end. I mean, Iran gets a vote here in terms of when this war really comes to an end and when the Straits of Hormuz open, and there is zero in that speech to tell us how tankers are going to start getting through the Straits, and that's why you saw what markets do what they did.
You know, the president said the Strait would open naturally, Rick. I'm not sure what that meant, other than if you give this enough time, Iran needs to make a living and will start allowing some oil to pass through. But now there's news today that Iran is working with Oman to establish a tolling system for the Strait. Is that how naturally things are going to open?
Well, you hope not, because that kind of is de facto Iran control of the Strait of Hormuz, it's never been that way, and it should never be that way. That gives them an enormous leverage on a quarter of the world's supply of hydrocarbons. It's completely unacceptable. And I thought that was the weakest part of the president's speech, was how do you address the Strait of Hormuz? And other than that throwaway line, which is, once we end hostilities, it'll sort of take care of itself naturally. There's nothing natural about the goings on we're not talking about the run of the salmon in the Colorado River here. I mean, like, we're talking about oil tankers, the fuel for the economic growth of most of the world. So, yeah, I was scratching my head on that one. That one I really still can't quite figure out. And the other piece
Yeah.
I thought was missing last night was any reference whatsoever to the 15-point peace plan that he himself has given supposedly through intermediaries to Tehran. I mean, to not even talk about the plan that you're submitting for a peaceful transition, I was shocked by that. This is the way you're solving this problem, and it wasn't even addressed.
Wow. There's so much here that I want to ask you about and will, and I'm glad that we have a couple of hours here, because if you want to get into this, James, we can do it. Fox News is just crossing the headline that Pam Bondi is out. President Trump has reportedly fired the Attorney General, with reports that he is eyeing the chief of the EPA. We mentioned this earlier in the hour, Lee Zeldin, as her replacement. Matt, assuming this is true, and we had multiple, at least 3 reports this morning saying that this was coming, and one extra from Semaphore saying the president had warned Bondi that her firing was looming. What does that tell you about the state of the Department of Justice, and does this go directly back to Minneapolis or the Epstein files?
I think it may be neither, maybe the Epstein file, but I think what the reporting this morning suggested was that Trump is unhappy with Bondi because she's failed to get convictions against his enemies, people like James Comey, who she tried to prosecute unsuccessfully because the courts thought what the Justice Department was arguing is totally ridiculous because these people didn't commit any crimes. I think Lee Zeldin is being set up to fail because he's not going to be able to get convictions against these people either. He's also not going to be able to satisfy even Trump-based supporters who want more on the Epstein files without, angering the White House and releasing things that could be very embarrassing to them. So I don't see how Zeldin, even if he gets confirmed, which he probably will because they can confirm him with a majority in the Senate, there is no way for him to succeed if the bar that Trump is setting is where the reporting suggests that it is.
Wow. Rick Davis, Fox reports that Bondi met with Trump in the Oval Wednesday night before the speech, and that's when she was informed of her ouster. She went with him, I believe, to the Supreme Court yesterday. That must have been quite a day to start that way and end it with your firing. One of the sources telling Fox, by the time Trump got behind the podium for the address, Bondi had lost her job and was already on her way back to Florida. I guess things happen quickly once they end up happening. Rick, what's your reaction to this?
Yeah, my own view, I mean, things usually happen in real time, and sure, there may have been a plan to go, and I don't disagree with anything Matt just said about like the rationale. But we also know that he was sitting in the Supreme Court, first time a president's ever done that. And you know what? By all accounts I've read, the Solicitor General did not make a compelling argument to change birthright citizenship for the first time in history since the 14th Amendment. And I got to believe that he had expectations that were sky high for his presence at the Supreme Court and the potential outcome. And he could not have been happy. Got up and left as soon as that presentation was made, evidently made a big scene of it. And then literally that afternoon, they pulled the plug on her. I mean, she would not have gone with him, and he might not have gone if they for sure were going to fire her that day. So I don't know. That's just my insider view of how things tend to work. It's usually cause and effect, and we now see the effect.
This is why we ask you, Rick, do you believe reporting that Susie Wiles was done months ago with the Attorney General?
Yeah, you could not watch those February and March congressional hearings that Bondi did. So contentious, so inappropriate, so disrespectful to members of Congress. All these people who they are going to require getting some help for, at some point in time. And I believe at that time, and we had extensive conversations about it on Balance of Power, that this was a first time I've seen this level of disrespect from a cabinet official, regardless of what agency they represented. And I got to believe that started the drumbeat.
Showing up with Oppo research to go after the Democrats on the panel. 30 seconds, Matt. Go for it.
Yeah, look, I think Rick's right. And I think one thing to take away from this is that people like Kristi Noem and Pam Bondi cannot do what they think Trump wants them to do, which is to be mini-me versions of him. They can't pull that off. They can't lie with impunity. They can't, be argumentative the way that Rick was just describing and be contemptuous. They're just not good at it.
Wow. Matt Bennett and Rick Davis in the clutch once again. How does it always happen in the 12 o'clock hour? Balance of power. That's why you need to be here. And we'll invite our global television audience to the conversation coming up as well. Dial us up on YouTube. I'm Joe Matthew. Much more to follow here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Another cabinet official is shown the door. Welcome to the Thursday edition as Pam Bondi is reportedly fired as the U.S. Attorney General and already back to Florida. We're going to get the latest for you in just a moment, with oil prices today surging as Iran sets up tolls reportedly for the Strait of Hormuz. Markets reacting to the president's primetime address on Iran And we'll have much more for you when we talk to Bloomberg's Tyler Kendall at the White House with insights from military analyst Rebecca Grant at the Lexington Institute. And from our political panel, Rick Davis and Matt Bennett are with us. We start, as always, with a look at Wall Street. A volatile session so far. Charlie Pellet has the latest from World Headquarters in New York. Hey, Charlie.
Hello there, Joe Matthew, and let me help define volatile. At one point, we saw the S&P 500 index down 1.5%. Right now, we are looking at a loss of 0.2%, but mid-morning, we did see the S&P trading in the green. Right now, S&P down 15, 65.60 where we stand on the index, down 0.2%. The Dow Industrials down 0.4%, lower by 193 points. NASDAQ is down 53 for the NASDAQ Composite Index, a drop right now of 0.2%. The 10-year 4.31% with the VIX below 26. The 2-year yield 3.79%. Gold is down 100 even the ounce, though 46.57, a drop there of 2.1%. We are keeping an eye on crude oil. West Texas Intermediate crude 111.33 a barrel, up now by 11.2%. Barrel of Brent 107.88. That is a gain of 6.6%, but should point out that Brent crude, we did see Brent surging above 140. We're talking about dated Brent. That's the price of shipments bought and sold in the North Sea. Did reach 141.37 a barrel. That is the highest since 2008, according to S&P Global, which publishes the data. Dated Brent, by the way, represents the price of crude for a more immediate delivery period. Again, right now, we are looking at stocks trading lower among some of the oil majors. ExxonMobil down 0.2%. Chevron shares, they're up 0.7. ConocoPhillips up now by 1%. S&P down 19, drop there of 0.3%. Another day of fast-moving developments. Back we go to Washington. And once again, balance of power continues now.
All right, Charlie Pellet, thanks. We'll have more on the markets with Charlie in about 20 minutes' time, as we do each day here on Balance of Power. Welcome to the Thursday edition. We're live from Washington on Bloomberg TV and radio, on YouTube and your satellite radio channel 121, with a staggering move here in crude oil futures, to Charlie's point, up more than 11% now, following the president's primetime address last evening that did not offer a solution to reopening the Strait of Hormuz. We're going to be talking a lot about that coming up with Dr. Rebecca Grant, who joins us from the Lexington Institute, and when we speak with Tyler Kendall. But it is the Department of Justice that's making headlines right now in a story that's being driven by Fox News. We want to be careful with what's being reported, but it does appear that the Attorney General is either out of or soon will be out of a job, with Fox News reporting a short time ago that she was fired by the president yesterday ahead of his speech, and in fact was on her way back to Florida by the time the president got behind the podium. Fox News now reporting that Bondi will soon leave her job as Attorney General. It's unclear if they mean physically in the office or whether the paperwork is done yet here. Citing now an interview with President Trump, that Todd Blanche, the Deputy Attorney General, this would not be a big surprise, a former personal attorney of Donald Trump, will temporarily replace Bondi. All of this reporting, by the way, it wasn't just Fox News that had this report, now citing the president to suggest that it's happening, but there were multiple reports this morning to say that it was coming. And those reports identified Lee Zeldin, the EPA chief, as the eventual replacement for Bondi. This is all happening as we speak. And we want to bring you directly to the White House to get the latest on this, and at least what we do know from Bloomberg Washington correspondent Tyler Kendall. She's on the North Lawn as we speak right now. Tyler, what can you tell us about this either firing or reassignment that a lot of people saw coming?
Well, Joe, at this point, as you outlined, Fox News now going one step further from previous reports that President Trump has already dismissed Pam Bondi as the Attorney General. Not necessarily surprising considering all the speculation that has been swirling recently, but also the fact that we know that this White House has been frustrated in particular when it comes to the handling and the release of the Epstein files. Plus, I'd point you to that now infamous post on Truth Social from last September when President Trump appeared to post a private message to Attorney Attorney General Pam Bondi in a public forum, criticizing her and mounting on the pressure that he would like to see more progress when it came to prosecuting some of his perceived political enemies, citing some of them, such as California Senator Adam Schiff or Letitia James, as just some of the examples of the president's frustration with this attorney general. Now, as you mentioned, Fox News is now reporting that the deputy AG Todd Blanche will step into this role temporarily, but there has also been reporting that President Trump is eyeing his EPA Administrator Lee Zeldin to fill that role on a more permanent basis. As you well know, Zeldin has really been leading the president's deregulation push at the EPA, and we know that the pair had met on Tuesday. We should, of course, say that the White House has not confirmed this dismissal quite yet. Just yesterday, the Attorney General Pam Bondi did accompany President Trump to the Supreme Court, so it's going to be something that we'll watch for developments and confirmation from in the coming days.
Well, isn't this a moment we're in here, Tyler, quite remarkable? The president telling Fox News, just to make this clear, and we've got a redhead on the terminal to this end, that she's gone. Attorney General Pam Bondi was ousted. That is in the past tense. So presumably Todd Blanche would be the bridge, Tyler, to an Attorney General Zeldin?
Yep, that appears to be what we'd see next. Of course, we know that whoever is going to be nominated next to be AG is going to have to go through that Senate confirmation process, so it would make sense that the deputy would step in to fill the role here. We should also just talk about the broader context that at this point, everything is leading up to the midterm elections, and we know that the White House really wants to make sure that it is prioritizing its own message when it comes to the broader American public, but also those issues that really play with President Trump's base. That's why, for example, we saw the first cabinet dismissal just a couple weeks ago with the DHS secretary after the president was playing defense on his immigration policies that have really made up a core of his agenda and his platform as we debate the future of DHS funding going forward. Of course, those headlines crossing the terminal over earlier today, too.
All right, with the lift at the White House. Tyler, thank you so much. Tyler Kendall on the North Lawn. That's the latest we have, and we want to assemble our political panel for their take on this. We have a great one today, and Bloomberg Politics contributor and Republican strategist Rick Davis, partner at Stone Court Capital, alongside Democratic strategist Matt Bennett from Third Way. Gentlemen, it's great to have both of you along here. It's really something, Rick. This reporting began last evening. We should be clear. There were reports from CNN and the New York Times that this was in the offing. And when these networks went to the White House for a statement, they got one from the president. Quote, Attorney General Pam Bondi is a wonderful person and she's doing a good job, unquote. I guess that's all we needed to hear. What do you think, Rick?
Yeah, look, I mean, it shouldn't surprise anybody that this president, is going to take swift action. And my own point of view is it was a very strange time right before a presidential speech to the nation to fire your attorney general. If there wasn't something that day that precipitated it, and what he did that day was attend the first time a president's ever attended Supreme Court hearing on birthright citizenship, an issue that he has been campaigning on for a very long time with his attorney general Pam Bondi. And by all accounts, it didn't go well. And I wouldn't be surprised to hear someday after the fact, when people write their books about this administration, that he got back to the White House and he was furious and he'd had enough, and that could have precipitated many other ways to take a look at this story, but that's my point of view.
Yep. Well, I think it's really interesting and important, Rick, knowing that there was already a narrative that Pam Bondi's days were numbered here, Matt, following the way she handled the Epstein files. We all remember the binders that went to the influencers out there, to the point where Susie Wiles said Bondi completely whiffed in her response. We had that very combative hearing on Capitol Hill in which she showed up with Oppo research to actually shout down the Democrats, in some cases Republicans, who were asking her questions. And then, of course, just the Epstein file situation in general. You add what happened in Minneapolis. And Matt Bennett, are you surprised she's still here?
I'm not at all surprised that she's gone. I do think that I wouldn't want to be Lee Zeldin if he gets this job. I don't think there's any way to succeed at it. I mean, probably the most successful member of the Trump 2.0 cabinet is Marco Rubio. Of course, he has two jobs. He's Secretary of State and the National Security Advisor. And he does it by not trying to be a mini-me of Trump. He doesn't go before Congress and yell at them. He doesn't yell about how the Dow is at 50,000 in response to questions about Minnesota and the Epstein files. He is relatively, for this cabinet at least, a sober guy. And I think if Zeldin gets this job, he'd be smart to try to do that. The problem, though, is that Trump is going to expect him to do things that are not doable. It was impossible to have a good day at the court yesterday because the 14th Amendment is very, very clear that it does confer birthright citizenship. They were always going to lose. So Zeldin's going to be facing expectations that he cannot meet.
What do you think, Rick? A lot of people say Speaker of the House, the worst job right now in Washington. It might actually be the Attorney General.
Yeah, I actually would agree. I think what Matt said is irrefutable. His pressure on the Justice Department since taking over the presidency has been intense. And we're used to the idea of the Justice Department being relatively independent of the President of the United States and his White House. Yet here we now have the president's former lawyer now becoming acting Attorney General. I don't think you could have a merger and acquisition more suited to this administration than that. And so it's going to be a very rough go for whoever succeeds at this job. And it's not even going to be a very easy confirmation because even though there are plenty of Republicans in the Senate to pass on the Attorney General, there are a lot of unanswered questions in many other areas. Just ask Senator Tillis about the fight to try and get the Justice Department to drop the investigation into the Fed chairman. I wouldn't be surprised that he would withhold his vote for a new Attorney General until that's done.
Interesting. Matt, we're learning more as we go here. This must have been quite a phone call that Fox had with the president. Pam Bondi, we can say fired, but she's not leaving the administration. And this follows a pattern. Kristi Noem was reassigned to the Shield of the Americas. She took Corey Lewandowski, although I guess he's just hanging out. And, of course, Mike Waltz, the very first national security advisor, was effectively reassigned, some would even say promoted, to UN ambassador. What do you think of the way he's handling these not firings?
Yeah, for a guy who got famous literally telling people they were fired, he never fires anybody.
Yes, sir.
And I don't really know why. I mean, what value is there in it for him? The base can't stand Bondi because of the Epstein mistakes. Democrats can't stand her. I don't know who he is pleasing here by keeping her on, other than maybe he feels some kind of loyalty to her, but that's not a strong suit for Donald Trump. So I don't really know what he's doing. It is clear, though, that he wants his new Attorney General to do things that the new Attorney General will be unable to do. So he may have a stack of former Attorney Generals parked somewhere at the end of this thing.
What do you make of this, Rick, keeping everybody around? Is this about not admitting that you were wrong in hiring them, or he actually feels some sort of loyalty to this team?
I think there is an element of loyalty within sort of the Trump super orbit. But I would say, too, the best way to keep someone from talking to the press and telling stories about what's really going on inside of an administration is to keep them on the payroll. And I would not be surprised that the last thing the president wants, because he's seen this happen to himself before, is to have folks who are dispatched from the administration go out and they write books and they get on the television and they're seen as a former high-ranking administration official, and they start to feather bed their own future. That's the last thing this president wants right now. And I think this device doesn't cost him anything. It's taxpayer money. Sure, keep her on board, give her a title. This will make sure that she doesn't leak or tell stories out of school.
Taxpayer money. Matt, there was the story of retribution, that it wasn't happening the way President Trump wanted it to. We all remember the missive directed to Pam that was apparently a direct message, ended up being posted on Truth Social. What does this mean then for his political adversaries who Pam Bondi was unable to indict or unable to build a case on, beginning with former President Barack Obama? Should he be worried today?
No, because it's all nonsense. And the reason that Bondi was unable to succeed wasn't because she didn't want to. She was totally willing to bring these cases against, Jim Comey and Letitia James and the chair of the Federal Reserve. I mean, but they were all based on nothing. Bill Pulte of the Federal Housing Administration is ginning up all these ridiculous ideas that the Justice Department is acting on. So I really don't think it was for lack of trying or for lack of skill, for that matter. There just is no way to win a case that is based on nothing.
We've got a second report now, gentlemen. Reuters has joined the party with breaking news that President Trump has removed Attorney General Pam Bondi from her post. And if you're just joining us on Bloomberg TV and radio, we do have a big breaker today following the president's address to the nation last evening. It turns out he had fired the Attorney General, according to Fox's report, before he actually got to the podium. On her way back to Florida now, following mounting frustration with her performance, including her handling of the investigative files related to, yes, Jeffrey Epstein. Rick, is Pam Bondi the only U.S. official who will pay the price for the Epstein files?
It's hard to tell how deep the retribution will go within the Justice Department. I'm sure there are frustrations with her team. We've seen some already be removed. So you wonder really how much depth the agency has now. It's really probably amongst all the agencies, the State Department and the Justice Department probably have lost more career professionals than any other agencies in government. So you really have to start to wonder, is there anything left with people there to do? Because Matt's right. I mean, just because you get a new set of legs in there as Attorney General doesn't mean they're going to be able to do anything any better than she was able to accomplish, which obviously didn't meet the standards that Donald Trump wanted.
Boy, you agree with Matt that confirmation should come pretty easily for Elise Zeldin?
Yeah, I don't think so. As I said a minute ago, I don't think people like Tillis are going to want to go easy until they get reassurances that these investigations against the Fed chairman are dropped. There will be other people who want other things that the administration has been withholding from Congress. So I think you're finding a Congress now who's realized, oh my God, I've got to run for re-election, and I'm facing one of the starkest political environments that Republicans have had to grapple with, in the modern presidency. And so I think you're going to see a lot of people shaping up to cut deals, and it'll just depend upon how this administration wants to back their candidates and how quick they want to get this done. I mean, under any normal circumstances, this should be a snap, but we're not dealing with normal circumstances right now.
Well, it just in 30 seconds, Matt, the DOJ is still breaking the law. Will this resume the push to release all of the Epstein files?
Probably not. I mean, I think that Congress will push a little bit, and maybe Rick is right that at-risk members will be pushing, but I don't think you're going to see this increase. I think by contrast, the reason Trump is doing this is because he wants somebody to be even tougher in support of his priorities, and releasing a bunch of stuff about how he's connected to Jeffrey Epstein, not among them.
Representative Garcia saying that Bondi remains legally obligated to appear for her hearing into all of this on Capitol Hill. Big thanks to our panel, Rick Davis and Matt Bennett. Breaking news only here on Bloomberg.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. As we have been reporting, Attorney General Pam Bondi is leaving her post as head of the U.S. Justice Department, ending a tumultuous tenure as the nation's top law enforcement official, a topic we're all over right here on Balance of Power. More details coming up. The Dow, the S&P, NASDAQ, all lower, yes, little change. The key takeaway right now on the S&P 500 index at 6570, looking at a loss of 5 points. The S&P down under 0.1%. Keep in mind, at the worst level of the day, we did see the S&P down by 1.5%. Again, right now down under 0.1%. Dow Industrials down 0.3%, down 138 now. NASDAQ is lower by 22 for NASDAQ. That is a drop of 0.1%. The VIX at 25, the 10-year 4.30%, the 2-year 3.79%. Gold now down $98 the ounce to $46.60. Spot gold down 2.1%. West Texas Intermediate crude trading just below $111 a barrel. WTI up now by 10.8%. Barrel of Brent 107.81. Brent crude up by 6.6%. Right now, Bitcoin 67,328. Bitcoin is down by 1.2%. Shares of top asset managers declining after Blue Owl Capital said it will limit redemptions from two of its private credit funds after facing a surge in withdrawal requests. Blue Owl shares, they are trading lower today. Blue Owl down by 2.75%. Among other asset managers, KKR up 0.2%, and Blackstone right now is down by under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Balance of Power continues now. Back we go to Washington. Once again, your host, Joe Matthew.
Charlie, thank you so much. Making good on our reputation here on Balance of Power of coinciding with breaking news on a regular basis, it seems daily, as we take air on the radio at noon, here on Bloomberg TV and radio at 1 p.m. Eastern. Another screamer today, as President Trump takes to social media to confirm earlier reports that Pam Bondi is out as Attorney General. With a glowing review, the president writing, quote, "Pam Bondi is a great American patriot and a loyal friend who faithfully served as my Attorney General over the past year. Pam did a tremendous job," he writes, "overseeing a massive crackdown in crime across our country, with murders plummeting to their lowest levels since 1900. He says, "We love Pam, and she will be transitioning," get this, "to a much-needed and important new job in the private sector, to be announced at a date in the near future." And our Deputy Attorney General and very talented, respected legal mind, Todd Blanche, will step in, he says, to serve as acting Attorney General. Thank you for your attention to this matter. He did sign it, so we can only presume that he wrote it. This would refute an earlier headline that she was simply being reassigned and would stay with the administration. So this sounds like a real firing, even though he says that she is a great American patriot, loyal friend, did a tremendous job overseeing the crackdown on crime. Remembering, of course, the great controversy that surrounded the way Pam Bondi handled the Epstein files, and that goes right up until yesterday, not to mention, of course, while it involved the Department of Homeland Security as well, the way DOJ handled the two fatal shootings that took place at the hands of ICE agents in Minneapolis. I'm Joe Matthew in Washington. That's a red headline on the terminal. Pam Bondi is out, just a day after President Trump addressed the nation in prime time about the war in Iran. And by the way, Fox News is reporting that Bondi was out before the speech, saying that he fired her in the Oval Office ever before he got to the podium last evening, speaking for about 20 minutes about the war in Iran, but did not answer some of the most critical questions that people had, including how we might reopen the strait. He said the strait would reopen naturally, and talked about this winding down in the near term with some final explosion of military force, the end game as told by the president last evening. Listen.
We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. When this conflict is over, the strait will open up naturally. It'll just open up naturally. That will resume the flowing, and the gas prices will rapidly come back down.
That statement, the strait will reopen naturally, is not making energy investors feel any better. One of the top stories on the Bloomberg today is the surge in oil prices. West Texas Intermediate crude is right around $111 a barrel today, up 11%, and in fact, costing even more than Brent crude at the moment with $108 a barrel, and that is why we're seeing stock prices pull lower. It's been a volatile session. We've been bouncing around a lot. In fact, stocks were positive at one point this morning following an early swoon. We are now back in the red with the VIX at 25. And an important conversation as we try to understand what the president's message really meant last evening and what we should expect going forward in Iran. Dr. Rebecca Grant is back with us on Bloomberg, the vice president for the defense programs at the Lexington Institute, a military analyst who has been a very helpful voice in this process so far. Rebecca Grant, welcome back to Bloomberg TV and radio. Knowing that a third carrier strike group is en route to the region and we have more Marines and soldiers who are set to land, the president saying that we will send them back to the Stone Ages. What would the next 2 to 3 weeks look like to deserve that description?
Well, maximum pressure continuing on the IRGC. I expect to see another carrier there probably to relieve Ford, who's been out for almost 270 days. Then, of course, the USS Tripoli, which is basically a helicopter carrier with MV-22s, F-35s, the 2,200 Marines that are ready to fight. She's now in the Central Command area, too. But what I make of it here is that Admiral Cooper at Central Command still has a target list to finish up, including some very heavy strikes with bombers and other aircraft on Iran's defense industrial base, probably on more munitions caches, and maybe on more of those sites along the Strait of Hormuz. You know, a real big risk there is the use of anti-ship cruise missiles. We've seen Iran actually use a couple of those in the last day or so against commercial shipping. So let's continue to work the target set. It's not going to be over until Admiral Cooper briefs to President Trump that he's satisfied with the progress that Operation Epic Fury has made.
Well, I'm glad you mentioned some of the efforts that we're making in the Strait. We've seen a number of A-10 Warthogs. I think we doubled the number of A-10s that we have in theater. Apache helicopters. Are these basically strafing runs along the coastline to try to limit Iran's ability to act?
Yes, the A-10 has a tremendous, it's a 30-millimeter gun, huge shell, I mean, like this size, right? Yeah. And it's able to strafe, and the Apache helicopters, that is just a pure attack machine. The Apaches also can go after drones as well. But I think we're looking here at going after some of the small, fast boats or anything that looks like a remnant of the IRGC Navy with an ability to put a mine over the side or use cruise missiles. But, you know, that said, there's a lot moving in the background with the Strait of Hormuz. The European allies are going to get together next week to talk about what they might do. It's well within the capability of allies from Europe and allies like Japan and South Korea to contribute surveillance planes like P-8 and then also naval ships to do any kind of patrolling they want to. They've already done it over in the Red Sea. They're very active there against the Houthi threat. It would be easy to transfer some of that over to Hormuz, depending on what President Trump wants to do.
Really interesting. You mentioned the cruise missile that Iran shot at an oil tanker just in the last 24 to 48 hours. We understand that we've done enormous damage to their military and offensive and defensive capabilities here, but if they're still shooting cruise missiles, Dr. Grant, where are they coming from? Are these mobile launchers? Do we know where they are?
Well, this is still a combat zone, and even though it's much suppressed, it's day 33 of this campaign, and there's more work to do. Good news is every time that they do take a shot from a coastal area, whether that's land-based, which could have been in this case, or from a boat, then we have that much more ability to go after that site and any of the others, because we do really have great overwatch and surveillance. A little bit alarming is that this one ship that was hit, the Aqua, is believed to be Israeli registered. And, you know, she was up there off Qatar. And it's sort of like Iran is doing a little bit of very deliberate targeting of certain ships. So you see why the big VLCC carriers are nervous. That said, you got to pull back here and think about long term. The U.S. is the one that's going to have control over this flow of oil, and we know where that oil goes. It goes to China. And Xi Jinping has got to be taking note of this changing geopolitical situation.
Boy, I want to ask you about mowing the grass. This is a line that they throw around at the Pentagon to suggest instead of sending in special forces to get this highly enriched uranium and digging it out, putting it on building a runway, flying it out, which is what the Washington Post at least says would be required. We have a sense of maybe where it is. We set up surveillance and we stare at it. If we see them make a move, we obviously will go in with missiles or whatever is required to take care of that. And then we just keep staring at it. Is that a strategy, and is it safer than going in and getting it?
Well, President Trump mentioned that last night, and because we don't see the intel, this is all speculation, but it tells me two things. One, we're going to keep this air dominance over Iran. They're not going to rebuild their surface-to-air missiles. We're going to be able to go in there and do whatever we need to for a real long time. If that uranium is trapped deep under a lot of rubble and in a known area, we could do that type of overwatch. But I got to tell you, if ordered, our military forces are capable of going in there, setting up what would look like a forward arming and refueling point and taking it out. We have that much control. So the president has all of those options, and that's why he's really pointing the finger at Iran saying, hey, come on, let's get a deal set or you're going to lose more critical infrastructure.
Yeah, well, so we think about end games here and what the president is suggesting, some sort of shock and awe. He says he'll bring them back to the Stone Ages, Rebecca Grant, and threatened to hit each and every one of their electric generating plants very hard and probably simultaneously, he said. This has been a prior threat of his. This is the sort of ultimatum, right? In lieu of a deal, we will knock the lights out. We will knock out your energy grid, which would run counter to his suggesting that help is on its way to the people of Iran. How would we go about doing that?
Well, quoting Strategic Air Command's Curtis LeMay, who talked about bombing back to the Stone Age, it would be pretty easy. President Trump has to use that vivid language when talking to the IRGC, quite frankly. But this would be a simultaneous strike with B-2 bombers, B-1s, B-52s, F-15Es, carrier-based aircraft, all going against those nodes. And, oh, yeah, he could do that tomorrow night if he needed to, and that's what he's pointing out, desalinization plants as well. So he is saying to Iran, okay, come on, make the deal.
Would those be B-2 strikes, or would that be a more diverse package if we were going in to knock all of that out?
I'd expect to see the B-2s very much in the mix. You know, we've only got 19, and Trump, in the middle of all this, accelerated the new B-21 Raider stealth bomber, which was great. But I think this would be several platforms. It'd be a fairly big target set. You'd want to hit it all at once. But yes, we can hit multiple sites in one night and do that. Absolutely, 100%. The Iranians need to know that we can carry that out.
Great to have Rebecca Grant, as always, Vice President, Defense Programs at the Lexington Institute. Dr. Grant, thank you for joining our conversation. I'm Joe Matthew in Washington. On a breaking news Thursday in Washington, this day after the president spoke to the American people about the war in Iran, we learned that the Attorney General has been fired. That's not the word he is using, to be clear, but the president on Truth Social, referring to Pam Bondi as not only a great American patriot, but a loyal friend, and says she will be transitioning to a much-needed and important new job in the private sector to be announced at a date in the near future. Her Deputy Attorney General, Todd Blanche, who the president calls a very talented and respected legal mind, will step in to serve as acting Attorney General. I'm glad to say that Jeff Mason has jumped in to join us here on this breaking news. It's one that some folks saw coming today, with multiple reports this morning suggesting that the Attorney General might be out. And Jeff, it appears that it has happened. This is the third, if you're keeping score here, member of the cabinet who's been fired or reassigned. Having seen Kristi Noem reassigned to the Shield of the Americas, Mike Waltz is now our ambassador to the UN. Before I ask you why this happened, do we know anything about this private sector role? Should we call this a firing?
I think you can absolutely call it a firing, and I also don't think that you get transitioned to a private sector role in the way that you get transitioned to another governmental role. So it may be that she's going to some sort of a job where she will be assisting President Trump from the outside. People leave the administration to do that, both Republican and Democratic administrations. Right. But that is not the same as continuing to work for him or continuing to work, rather, in the administration.
This has long been simmering with her handling of the Epstein files. the immigration crackdown. Rick Davis pointed out at the top of the hour, it may as well have been drawn to this point yesterday because of what the president witnessed before the Supreme Court, his disappointment over the way that that case was delivered, not by Pam Bondi, but she was with him, and may have gone back to the White House to make up his mind at that point. What do you think brought this forth?
It's hard to say. Well, it's not hard to say, but it is some speculation.
Yeah.
I think one of the things that is important to realize about how President Trump views the Justice Department and his Attorney General is he sees it as an extension of the White House. Yes. I remember him saying during his first term how frustrated he was that he didn't feel that the AG was essentially working for him. That's because that's a shift from what virtually every other president that has held the office has seen the Justice Department. They've seen it as having its own sort of wall of independence. And that's, in fact, something that Joe Biden tried to restore when he was the president in between Trump's two terms. So all of that is a long way of saying context. President Trump sees this as essentially his personal lawyer. Yeah. And when she didn't do everything that he wanted or didn't get all of the results that he wanted, because you could argue that she did do everything he wanted, he got fed up.
So why not then tap your personal lawyer, your former personal lawyer, to have the job? He's going all the way through it, this Todd Blanche. There's been reporting that Lee Zeldin would be looked at for the permanent role. Is that what you're hearing?
We've seen some sourcing that have said that, but Todd Blanche, I would guess, is also someone who is certainly at the top of President Trump's list. We'll have to do some more reporting to figure out who else he's looking at, but it wouldn't be out of character for him to choose either of those two.
The retribution cases that he had called on, remember Pam, he called her by her first name in that post on Truth Social that apparently was a direct message wrongfully posted. Should Barack Obama be on the phone with his lawyer right now? What happens to these cases that the president tried to establish against his political enemies?
That's a good question. My suspicion is that any of the cases that he wanted to be pursued that weren't pursued or that are still in progress will be just picked right up by a new attorney general. He's obviously not looking for someone to come in and be more independent, to be a Janet Reno, or to be someone who has some distance from the White House. I'm referring, of course, to Bill Clinton's attorney general.
Yes, right.
So without knowing yet what his final decision will be, my guess is that he's not looking for a shift in the direction of independence. He's looking for a shift in the direction of do even more of what I say.
You covered the first term. The door was swinging a lot more by now.
It was.
Now that we have this third, does that foretell other departures? Because he's handling it differently. The reassignments, a great American, a loyal friend. He's keeping everybody close, Jeff.
Yeah, I mean, he did not say nice things about John Kelly on his way out the door as chief of staff.
Rex Tillerson.
Rex Tillerson, indeed. So that is absolutely a shift. But it is also a shift if it's about to be a trend, and we're not quite there yet, but it is a shift in his second term to be firing anyone at all. I mean, you mentioned Mike Waltz, and you were right to at the beginning, but he went from being National Security Advisor to being an ambassador to the United Nations. That was a real landing spot.
Some thought of promotion.
Yeah, with Secretary Noem, former Secretary Noem, that wasn't really a landing spot. And
we're still wondering exactly
we're still
what
trying
the
to figure out
shield
what that is. Yeah. It's certainly not a cabinet level position. And Pam Bondi apparently going to the private sector. We'll have to find out what that is, but it is absolutely being jettisoned from your cabinet, and that counts as being fired.
Isn't it interesting? I mean, I guess Kristi Noem was part of the conversation in the early going, but people had their eyes on Pete Hegseth.
Yes.
Tulsi Gabbard.
Yes.
Kash Patel.
Yep.
All still employed.
I would also say continue to keep your eyes on them, because if President Trump is in a period of frustration, which he seems like he is, with the war, with the economy, with the political prospects that are probably facing him in November, that often leads to him making decisions like this. Not forecasting that that's what's coming next, but I don't think it's wrong to keep watching some of the people who looked vulnerable.
We're always fortunate to bump into Jeff Mason when news breaks around here at Bloomberg. It's great to have you, Jeff, and
Thanks,
thank you
Joe.
so much for jumping in here on Balance of Power. We're live in Washington with a big breaker, a redhead on the terminal. Pam Bondi ousted as Attorney General. You can see it at the bottom of your screen, and this story is only about an hour old. Something that follows the president's address to the nation that folks may not have expected today, although as Fox News reports, this happened before he ever got on TV last night, having informed Pam Bondi that her tenure as Attorney General was up, and they're meeting in the Oval Office before he got to the podium, and she was reportedly on her way to Florida before the cameras turned on at 9 p.m. We're trying to tap the voices of as many experts as we can here in the clutch, and we look no further than Robert McWhirter to fulfill that mission, the constitutional lawyer, practicing criminal defense, civil rights lawyer in Maricopa County, Arizona, and the founder of the law office of Robert McWhirter. He's talked us through a lot of cases. I didn't think we'd be doing this one today, Robert. It's great to see you. I'm guessing that you probably saw this as overdue based on our prior conversations, but what does a DOJ led by Todd Blanche look like?
Well, I think the DOJ by Todd Blanche is just going to be a more intense version of the DOJ by Pam Bondi in terms of his professed loyalty to Donald Trump. So I don't see a lot of changes. He was kind of her henchman to affect all the whims of Donald Trump. So I don't see a big change coming from there, and that's going to actually be unfortunate.
Interesting. She's being reassigned, says the president, transitioning to a job in the private sector. I hope when I get fired someday, people frame it that way. What would a former attorney general like Pam Bondi be doing? Does she go back into the legal sector on a private level? Robert, what do you think?
Well, I think Pam Bondi is going to have a heck of a hard time because I think she's facing bar disciplinary challenges. I don't see how she keeps her bar license given the things that she did as Attorney General. And to name two things, filing charges against James Comey without any probable cause when it was clear from the beginning that no crime occurred. The fact that she could not get a grand jury to indict him. I mean, the grand jury will almost indict anybody. And the fact that she couldn't achieve that because she had no case, and it's clear from the outset, and it was also clear that she was just doing it because Donald Trump wanted to attack his perceived political enemies. Lawyers get disbarred for that. We're not supposed to do that. We're supposed to make objective decisions under the law with evidence. So Pam Bondi goes back to Florida. I'm not sure there's many law firms that are going to want to hire a lawyer who's facing bar proceedings and likely going to be disbarred very soon. It could be she'll go to some kind of Republican think tank, cushy little thing or whatever. I don't see how getting fired is a transition to the private sector when you're working in the government. That's a firing.
Yeah, well, it's amazing that, I think as Matt Bennett said earlier, the guy who was known for firing at the end of every episode of The Apprentice just can't seem to get that word out. Robert, then let's go a little further down that road. What will be Pam Bondi's legacy at the Department of Justice?
I think it's going to be one of, ultimately, I think it's going to be one that's one of ridicule. And I can't really phrase it any other way. She was essentially ineffective at doing the job, but she was ineffective at understanding the basic foundation of the job. The Attorney General, like all cabinet members, take an oath to support the Constitution. They don't take an oath to support the president. Now, they can be fired, of course, by the president, but our government officials are not supposed to be personally loyal to a president of the United States. They're loyal to the Constitution. That's everything from our generals and our soldiers to our attorney generals and our EPA director. All of them take an oath to defend the Constitution, not to defend a given presidency. And the fact that she didn't know that is really problematic. And I'll give you one example. Early in her tenure, she sent an attorney general memo to all attorney general offices. Now, those memos usually define things like how to chase after terrorists and prosecute narco traffickers. Her memo was a directive that no attorney general's offices should ever use paper straws again, because Donald Trump had filed an executive order saying no paper straws because he doesn't like paper straws in one of his 12 Diet Cokes a day. To have an attorney general of the United States send a memo about paper straws is just absurd, and it shows the lengths at which she was willing to basically suck up to Donald Trump.
Well, he says she was a great American patriot and a loyal friend, and I guess he really means this. He says, "We love Pam," which is not something you hear a lot when you get fired. What does this mean for 2020, if anything? Particularly, Robert, if we have an acting attorney general, does that handicap somehow the attorney general's ability to prosecute these cases?
Well, I think it might mean that some attorney general offices will go back to plastic straws. But leaving that aside, yes, having an acting attorney general is difficult because there's certain statutory functions. There's a time period at which an attorney general can only act. An attorney general has to actually be ratified by the Senate. So the president appoints him. So whether Todd Blanche, given his missteps, can get that is going to be in question, especially with the growing popularity of Donald Trump and also the unpopularity among Senate Republicans who don't fear him as much as they did because they're not as worried about him putting a MAGA primary against them. So this may be a bumpy ride for what happens. And the problem for the country, Joe, is the attorney general does important things. They prosecute narco traffickers. They prosecute people for federal crimes, frauds foisted upon the American people. It's an important job that needs to have serious people in it. And the fact that we don't and haven't had that, we've all had to suffer.
Pretty remarkable times we're in here, Robert. I love the suspenders. I'm delighted you could jump on with us here on Balance of Power, and we appreciate your insights as always. That's Robert McWhirter, the constitutional lawyer, practicing criminal law attorney, the offices of Robert McWhirter, once again back with us on Balance of Power. Pam did a tremendous job, the president says, overseeing a massive crackdown in crime. We love Pam, and she will be transitioning to a much-needed and important new job in the private sector to be announced at a date in the near future. Absolutely remarkable. Lee Zeldin reportedly in the pipeline here for the job on a permanent basis, but we'll find out together as we do most things around here in real time. As much as I would love to ask Liz Pancotti about all of this, and I'll bet you that would be quite an interview, we wanted to talk about the fact, and it's been one of these days, I haven't said it till now, Happy Liberation Day. Remember what we were doing 1 year ago today? We've made it to the anniversary, and Liz Pancotti is Managing Director of Policy and Advocacy at the Groundwork Collaborative. Great to have you back. Should I say happy anniversary?
Happy Liberation Day.
Is it happy? Because it was doom and gloom, and there were wild forecasts about upending the international economy, and maybe you'll tell me we did. What has happened to the global economy in 1 year of the president's tariff regime?
Well, we had a lot of tacos, so that for one. But I think that if we think about the president's speech about this time on the day after April Fool's Day, which he made sure to note when he announced all these tariffs, he said it would usher in a manufacturing renaissance here in the United States, that we would build things again in the United States. And in fact, if we look at the record over the past year, what has actually happened is we have lost 100,000 manufacturing jobs. We are losing construction jobs. We are, in fact, building fewer things in this country as a result, and it is much more expensive to build, given that his tariffs are on building materials, on steel forgings to manufacture things here in the U.S. Across the board, it has really increased prices for consumers and businesses alike. I think inflation is running anywhere between 0.5 point and a point higher than it otherwise would be if we didn't have Trump's tariffs on the books. And it had really erased a lot of the progress we had made on inflation in 2024. And unfortunately, we are seeing the Fed try to grapple with that. And now another twist in the story is, his war on Iran, which is further spiking prices.
Well, that's for sure. I'd like to ask you about that in a moment. But you remember what the forecasts were. And there was a thought that by August, maybe, once existing goods off the shelves had to be replenished, that we would see a massive spike in inflation. And if Peter Navarro were sitting here right now, he would tell us that, no, it's a one-time change in prices and inflation that does not make. But are you surprised that we're not many multiples higher than we are now?
I think it's a good question. One thing was that those forecasts baked in, Trump not turning the switch off and on and off and on and off and on, as we saw for most of
the Supreme Court ruling. So did the SCOTUS save us from ourselves?
I think it was really one of those things where had Trump kept in place the tariffs he announced 365 days ago, we would be in a very different situation. He ended up a couple days later turning many of those off, and you saw him negotiate quote unquote trade deals over the course of the past year. Many of those didn't didn't actually go into effect. And obviously, given his now across the board 10% tariffs, we are looking at a different situation. I think what changed was that Trump ultimately didn't go through with it. There were lots of sectoral exemptions. There were country-specific exemptions. He changed Chinese tariffs many, many times over. Right. And the bulk of that, I think, as companies were able to increase their inventories by quite a lot leading up to Liberation Day, and in that short window where things were getting adjusted between April and July during his pause, we were able to keep things on the shelf that were a lot less tariff than they would have otherwise been. Of course, the Supreme Court stepped in last month, and now, or at the end of February, and now we find ourselves in this kind of new order of this global tariff for the next 4.5 months or so. Right now, I think the bigger pressure facing the inflation picture is the war in Iran, which, you know, the president's remarks last night, I don't think instilled a lot of confidence in markets or in consumers that we'll be out of the war anytime soon.
We're seeing the market unfold right before our eyes here, and you know, it's amazing. We couldn't have imagined in the Rose Garden. It wasn't the Rose Garden Club, I think, at that point yet, a year ago, that we would be in a war with Iran on the anniversary of Liberation Day. You've got crude oil up over 11% in New York today. We're back to, what, 111, I think it was. Let me be sure here before I say that. Dollars a barrel, yeah, 112 almost.
I saw dated crude hit 140 today.
Wasn't that something as that month turns over? Pretty remarkable. This could go on for weeks, maybe even months more. The president said last evening the strait will open naturally, which makes us think that there will not be an operation to force its reopening. What will be the longer-term corrosive effect of all of this?
It's not good. I mean, Kevin Hassett, as you heard a couple of weeks ago, said he's got a flow chart he's working through. The president's remarks last night suggest to me we have worked our way through the flow chart, and we are now at, I don't know, find out and see what happens. Yeah, uncharted territory here as we navigate the Strait of Hormuz. As we look at global shortages in helium, we are looking at a chip shortage that could rival that of the 2022 period. As we look at global fertilizer shortages that will be orders of magnitude greater than the onset of Russia's war on Ukraine. As we look at jet fuel shortages in Europe, they are already canceling flights. Heathrow will be hammered. And even in the US and Canada, Amazon announced just this morning that they will be enacting a surcharge on all shippers that move things through North America. And so I think as this all unfolds, unfortunately for American consumers who thought they might be in the clear after the Supreme Court provided relief from those IEEPA tariffs, this is an even bigger wave of inflation coming.
You know, airlines are kind of the obvious first victims here when it comes to the doubling in jet fuel prices. But next earnings season, the next upcoming earnings season, we're going to start hearing in these conference calls about fuel surcharges in all different industries, right? If this continues in this direction.
I think it's already going to, given where diesel prices are. I mean, shipping and logistic inflation has really never come under management over the last year or two. Those costs are up tremendously post-pandemic. We really didn't get a hold on them. And with diesel prices up at $5, $6, $7 here in the next few months, stuff's going to get really expensive.
We've got a minute left. This is getting more depressing as we go, so it's almost over, Liz Pancotti. When's the recession?
You know, I saw folks really tick up their estimates over the past week. Goldman's at 30, 40. I don't think that if you watched that speech last night that I did, I don't know how on the street, I don't know how you walk away and say the rest of the year's in the bag and we'll be okay. We'll be able to weather the storm. The market's got it priced in. I think if we're in this war here in July, August, we've got 3 more months of this. We're really looking at long-term damaging economic effects. 3
more months of this, says Liz Pancotti. I'll tell you, it's not great to think about, but it's always a pleasure to talk it out with somebody who knows what they're talking about. Groundwork Collaborative, Liz Pancotti, thank you so much. Happy Liberation Day. Oil is up and Pam Bondi is out. Breaking news today. It's been a heck of a couple of hours, and I'll meet you back here on the late edition of Balance of Power with the latest from the White House on the future of the Department of Justice and, yes, the oil markets, with the war in Iran continuing now beyond day 33 and a primetime address to the nation. I'm Joe Matthew. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Welcome to Bloomberg Business Week Daily. Carol Masser, Tim Stenivek, live here at Bloomberg headquarters in New York City. WOA, getting ready for a long holiday weekend. Although the bond market open tomorrow, we're going to get an important jobs report. But we're watching on this Thursday, April 2nd, you've got stocks off their lows of the day. You've got Treasury yields here in the U.S. moving back off a bit. Signs of extreme supply tightness, though, cropping up in the U.S. oil market after we did see and hear from President Trump indicating the war with Iran could drag on for several more weeks. That's at play. But you know what our most read story in the Bloomberg is, Tim?
Is it about a shakeup in personnel at the White House?
Bing, bing, bing. You're a winner.
In the Trump administration. That would be... Yeah. President Trump firing Attorney General Pam Bondi. We're going to have more on that in just a minute. Carol, I do want to note the S&P 500 was down as much as 1.5% earlier in the session. It looked like, based on what the president said last night in his 9 o'clock address to the nation, wasn't really the message that people who are along this market wanted to see, with oil higher and stocks lower. But then we got this report out that Iran is actually working with Oman to monitor traffic through the Strait of Hormuz, and then we saw stocks move off their lows and even go into the green.
We're not done. That's for sure.
Yeah,
and
that is true.
You look at WTI crude as we speak, up about 11.7%, 111, almost 112 a barrel. So, yeah, that's the reality of where we are. So we were thinking and planning this hour of Bloomberg Business Week Daily about a lot of things. The macro, the cost of war, the cost of tariffs. Keep in mind, this is the 1-year anniversary since the president's so-called Liberation Day, and where this is all headed. And so this hour, we're going to talk about it all with our Bloomberg Intelligence Chief U.S. Rate Strategist, Ira Jersey, and also Robert Tipp, PGIM Chief Investment Strategist, Head of Global Bonds. Perfect duo to get into all of this.
Also, the latest from the White House, Jeff Mason is going to be joining us in just a few minutes with exactly what's happening at the Justice Department and the latest when it comes to Pam Bondi being ousted.
A lot going on in the nation's capital. Hey, and also the intersection of technology with health and more in our world with the former chair of the FCC. She is also now the MIT Media Lab Executive Director. We're going to check in with Jessica Rosenworcel. She's going to join us also in the next 60 minutes, but we got to get a check on the trade.
Yeah, it's going to be a packed hour. Charlie Pellet is going to set us up. He's in the Bloomberg Business Week studio. Hey there, Charlie.
Well, hello there, Tim and Carol. Yes, stocks lower across the board. Do want to recap and reset on the Pam Bondi story. Attorney General Pam Bondi leaving her post as head of the Justice Department, ending a tumultuous tenure as the nation's top law enforcement official. Now, sources tell Bloomberg President Trump has discussed EPA Administrator Lee Zeldin as a potential replacement for Bondi. President Trump also says Bondi will be moving to the private sector. We'll have more on the shakeup coming up right here on Bloomberg Business Week Daily. Equities lower across the board. Tim mentioned at one point we did have the S&P trading down by 1.5%. Right now the S&P is down 0.2%, down 15 at 65.60. Dow Industrials down 182 on the Dow, a drop now of 0.4%. NASDAQ lower by 65 for NASDAQ, a decline of 0.3%. The VIX just below 26 with a 10-year, 4.30%, the 2-year, 3.79%. Gold now at $46.50 the ounce, down 2.3%. Carol mentioned WTI, $111.50 on West Texas Intermediate crude, surging by 11.3%. Barrel of Brent, 108.72, dropped there of a gain there of 7.5%. Bitcoin is dropping down 2.2%, 66,680 right now on Bitcoin. So the Dow, the S&P, NASDAQ, they are all trading in the red. Again, oil trading above $111 a barrel. As for some of the oil majors, they are trading mixed. ExxonMobil down 0.2%, little change there. Chevron up 0.5%. ConocoPhillips up by 1.3%. Lots going on. We got you covered. And that, Carol and Tim, is a Bloomberg Business Flash.
All right, terrific. Charlie Pellet with a great market setup there. We are thinking a lot about the cost of war, the cost of tariffs, the impact of all of this on the U.S. and really the global economy. This is Iran warned the president against a ground offensive, and as the Islamic Republic will set a toll for ships passing through the Strait of Hormuz. We got this from the Iran deputy foreign minister in a quick interview with Sputnik. President Trump, though, remember last night, right, Tim, pledging to continue the U.S. war in Iran.
Yeah, even as he looked ahead to when the war is over, here's just a little bit of President Trump last night from the White House regarding his outlook for the conflict.
When this conflict is over, the strait will open up naturally. It'll just open up naturally. They're going to want to be able to sell oil because that's all they have to try and rebuild. It will resume the flowing and the gas prices will rapidly come back down.
That's President Trump last night from the White House. Meantime, the war continues now more than 1 month old. We've got a great group joining us for all things on the macro and interest rates.
Let's get to it with Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist, alongside Robert Tipp, PGIM Fixed Income Managing Director, Chief Investment Strategist, and Head of Global Bonds, both in studio. We're just going to lock the doors, keep you here for 60 minutes. There's so much to talk about. Where do we begin? I think it's safe to say that I think investors and markets thought that we were going to get something different from President Trump. Ira, let me start with you. What are we seeing in terms of the rates markets? What are we seeing in terms of financial markets from investors about where we're maybe going from here, the reality of it?
Yeah, so I think we should talk a little bit about today, because I think today is very interesting with West Texas Intermediate crude up and everyone saying, oh, look, the bond market's hardly moved. But then I dig into the details of this and I say, okay, the 2-year Treasury yield on the everyday 2-year bond is only down 1 basis point. But then you look at the TIPS market and look what's going on in like 5-year TIPS and 2-year TIPS. Those yields are down dramatically. And typically those yields go down primarily when you worry about either growth or inflation being high. And guess what? We have both of those things today. So when you look at inflation expectation and what the market's pricing for inflation expectation, that's up 10 basis points today, right? So you look at 2-year inflation swaps, like they're higher by, as I check my Bloomberg terminal now, by about 5 basis points today, but that's well off yesterday's low.
So Ira, is that not being reflected in the Treasury market? Is it only being reflected in TIPS? What's going on?
Yeah, so well, that's my point, right?
Yeah.
You have this disconnect,
Why
right?
is that?
So well, I think in large part because the way the market is pricing this is they're pricing it through TIPS and inflation expectations as opposed to the Federal Reserve hiking interest rates, right? Because if the market was pricing for the Fed to be really going to hike interest rates anytime soon, like the ECB we think is likely to do this coming month, would be to have higher yields, and that's not what's happening.
Robert, come on in on this, because I think the thing we're thinking about is, with treasuries, I mean, the concern that at some point higher energy prices, if they stick around longer, that ultimately can impact growth. And I'm just curious where you are, because what I'm hearing from Ira is the potential for, are we talking about stagflation again?
Right. We're definitely talking about it. But the fact of the matter is, I think we've learned a lot since COVID. We had a huge increase in interest rates. The economy was pretty resilient. In Silicon Valley Bank, the economy was pretty resilient. Fast forward last year, you have this massive increase in tariffs, tremendous uncertainty. The economy is pretty resilient. So now we're looking at high energy prices, right? And they're up. The curve is still in backwardation, so people are optimistic it's going to come down.
Right.
But the fact of the matter is the economy has shown a lot of resilience. So I think the market is looking at the Fed and saying, they may not be able to cut rates. They're going to have to drag their feet on this. But it's not like other countries where, hikes are priced in. So that has a dual mandate. They're going to be very well considered in this. But I think the market is sensitive to that. If we get minus 100,000 payrolls tomorrow, that'll be different. The market will be looking at recession possibility.
Is that likely?
I don't think so.
Okay.
I don't think so, because that's my point, is the economy's been pretty resilient.
Yeah.
And I think, frankly, we've seen a lot of stability in long-term interest rates. Once they got to this 4.25 level, late 2022, they've been range-bound around that level. So short-term, there's a tremendous amount of uncertainty. Longer-term, the inflation expectations, things seem to be pretty stable.
Ira, do consumers have that cash to protect themselves from these higher energy prices? I spoke to Chime's CEO earlier today on Bloomberg TV, and Chime is a company. The average, the typical person they deal with has a income of around $75,000. So it's certainly a part of the economy that is more affected by higher fuel prices. And he said fuel spending has risen 25% amid this war with Iran?
Yeah, and certainly, energy prices have, and obviously that's a pretty large part of the consumption basket. The way that I think about these higher gasoline prices, it's really a tax on the consumer. So if it acts like a tax on the consumer, then it will slow the economy. Now, we talk about stagflation. We have to be a little bit careful on how we define that, right? Because you could have a slower economy and not a recession, right? And we've had a pretty robust economy, and I agree with Robert that the economy has been somewhat robust, but a lot of that robustness has come from two things. One is investment spending, things like AI and the like, and then the other is, when you look at all of the jobs that have been created, and actually 2 times the number of jobs that have been created in aggregate have come from one sector, and that's the healthcare sector, right? With a lot of people in home healthcare and the like. So the fact is that when you have a one sector economy, I think it is at risk. I'm a little bit more pessimistic maybe than Robert is on the U.S. economy, but we don't have to have a recession. And but you could have a significant enough slowdown that it certainly feels like that. Like think about 2015 when you had the exit of the energy investment boom, or think about 1994. I always bring up that one because that's when I got out of grad school and I had a problem finding a job. But luckily my wife found a job and we were all good. But nonetheless, if you do have a significant slowdown, it can feel similar to a recession, even if it never shows up in the actual numbers.
Robert, what about you look at obviously the global bond market, but I do think about disconnects between what some other central banks might be doing, because this war is certainly impacting Europe, Asia differently than it is the United States. We've talked about that a lot. So if we have disconnects in global central bank policies, which does happen, it is still, we're all kind of connected. So I'm just curious do we see parts of the world go into recession or significant slowdowns? Does it ultimately feed back to the United States in some way? People buy stuff from the U.S. They do business with the U.S. So I'm just...
Right. Well, I think, the United States ultimately is more of the world's customer. And so I think that, the slowdown here will have more impact on other economies than their slowdown.
Which we saw with the GFC.
Yeah. Now, in terms of Europe, they are looking at possibly some rate hikes there.
Yeah.
And they may have a bigger bite from the energy side or not. So far, their gas prices are up, but it's been measured. We're going to have to see what comes from the government on these things. There's very little appetite out there for recessions. Is there going to be subsidization coming from the government in order to offset some of the costs there? But I think that, the U.S. is, for better or worse, in some respects more secure in terms of resources, in terms of geography. We will have more defense spending. Who knows, maybe we'll have some fiscal stimulus, before we get to the elections. And so I think we're seeing some firmness in the dollar. But
you definitely sound much more optimistic. I'm curious, Ira, because you are a little bit more pessimistic. Do you have a question for Robert? As you listen.
Well, not really. I mean, the one question I would say is, how do you invest some of this in the global fixed income market, right? Because, like Carol said, it's possible that the ECB is going to be increasing interest rates, whereas the Fed's probably on hold. Right. Is there a curve trade or something to do between the U.S. and Europe, say?
Right. Well, I think that, when I look at the markets more broadly, look at cash, look at equities, look at bonds, and what investors have been doing. Investors, without changing their asset allocations, have ended up with a tremendous amount of equities. So they have a lot of exposure to downside risk in the economy. Equity valuations are fairly full. And I think that's a tougher call. Do you stay with that, an above average allocation to equities? When you look at cash, what we've seen is money fund balances in the United States have continued to go up. Cash balances for investors, for return-seeking institutions and individuals appear to be kind of high. Yeah. Bond allocations are low. So I think people are under-allocated to fixed income, and I think that's why we're seeing resilience in terms of long-term yields.
Why do you think we see all that cash on the sidelines?
Because cash has been a great performer. But so if you think about it, since late 2022, the 10-year gets to 4.25. We're still at 4.25. You've been all over the map in the price of a 10-year. You could have ridden cash all the way up to 530, down through 430. Now you're at 360. So you're a little bit thinking about should you go out on the curve and so on. But the risk-adjusted returns of cash have been phenomenal.
I was under the impression that cash is trash, Ira.
Well, the Sharpe ratio of cash has been quite good, right? I think that's Robert's point. And the other thing that I would note with all of the cash, I talked to some of my colleagues in equities, and they say, oh, look, there's all this cash on the sideline that needs to be deployed. In this case, I do agree with Robert that the people are underinvested to fixed income, right, to buy bonds in general. But this cash on the sidelines that's in all these money funds and the like, they're not going into equities, right? This is instead of holding bank deposits that yield zero.
That's so interesting,
right?
because I would imagine that some of it is people who are saying, well, to your point, that equities seem fully valued, so we'll have money in a money market fund or in some sort of bond fund, and then when we see an opportunity in equities, we'll go there. But that's not the pattern?
What we're seeing is money is going into bond funds. A lot of money is going into bond funds. Money is going into stock funds. But the amount of money going into money markets is almost equal to the sum total of those two. So apparently, there's a lot of investable assets. It's piling up in those forms.
It continues to pile up. I feel like the last couple of years, we keep saying, when is this going to come in? But it just continues to grow.
Yeah, so for the most risk-averse investors, the cash has been very competitive with Treasury returns. But for more adventurous investors in fixed income, your high yield, your emerging market hard currency debt, and even your corporate bonds over the last few years have done very well. So I think that's why, there is overall support for the market, despite the tremendous short-term uncertainty.
Robert, when it comes to global bonds, though, where is the money going? And I'm curious, it's been interesting when you watch the dollar, which we saw it under pressure, then we saw it move up, certainly. As of late, I think about the impact on the emerging market world. So where have you guys been specifically in global bond funds, seeing money going in or out?
In terms of the flows, it looks to me like there's two offsetting kinds of flows that we have seen since the election in November. There's a big drop in the dollar, but the money is coming here. So what's going on? We're seeing foreigners buy U.S. debt securities, buy U.S. securities, but the amount of money that's coming in is small relative to the total stock of U.S. dollar assets held. So apparently people have been hedging the currency exposure of their U.S. investments, but net, where are they putting their money? It's still coming here.
And I think here's a reason for that, right? When you look at where the flows are coming from foreigners into the U.S. in terms of treasury bonds, corporates, equities, and the like, it's foreign institutions have been selling treasury securities or at least running off their portfolios, but private institutions continue to pile in, right? And those are the economic sensitive investors and the price sensitive investors. So those are the ones who are more likely to hedge their currency exposure. Central banks don't, because that's not really their mandate. And also private investors, they buy 10-year treasuries, 30-year treasuries. Central banks don't do that. Central banks buy T-bills 2 years, 3 years. They don't buy the long end. So they don't own a lot of market risk.
All right, so let's push this forward a few months and talk a little bit about Kevin Warsh and the economy that he inherits if he becomes Fed chair.
Which is kind of interesting.
I don't know. Is it a when or is it an if, Robert?
I think it's a when.
When is it?
Okay. And I don't have a great call on that. Let's say this year, but I think the more interesting part will be what does he do?
Yeah.
And I think what I'm supposed to say, what I'm supposed to think is he's going to come in, he's going to get the Vulcan mind meld on the committee, and they're going to cut rates regardless of what's going on. But we've seen this in the past, and we've read of in the history books. Even if inflation
is ticking higher?
That central bankers come in and they do the right thing. When you're in the seat, and honestly, if the dollar's going up and that's getting inflation down and long rates kind of stay where they are because the inflation outlook is solid, maybe that's an acceptable opportunity for everybody, especially if you're putting your signature on the dollar bill.
What if it's after midterms and they go to the Democrats? Would it still, does that change it? Just got about like 15 seconds.
I'm optimistic on the markets long term, but in terms of the picture for human beings in politics, it could just be increasingly chaotic.
All right. I
Robert,
told you.
Live long and prosper.
Lock the doors. They're not going. Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. Robert Tipp, thank you. PGIM Fixed Income Managing Director, Chief Investment Strategist, Head of Global Bonds. What a great start. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Attorney General Pam Bondi is leaving her post as head of the Justice Department, with Deputy Attorney General Todd Blanche stepping in to serve as acting Attorney General. President Trump is said to have discussed EPA Administrator Lee Zeldin as a potential replacement for Bondi. That's according to sources. The president also says Bondi will transition to what he calls an important new job in the private sector. We've got more coming up right here on Bloomberg Business Week Daily. The Dow, the S&P, NASDAQ, all declining right now. The S&P 500 index is down 11, a drop there of 0.2%. Keep in mind, at the worst level of the session, the S&P had been down by just about 1.5%. Dow Industrials down 161 right now. The Dow down 0.3%. NASDAQ lower by 50. For NASDAQ, a drop of 0.2%. The VIX just above 25, with a 10-year yielding 4.30%, and the 2-year 3.79%. Gold down $104 the ounce, down 2.3%, $46.54 right now. West Texas Intermediate crude just below $112 a barrel, surging 11.8%. Barrel of Brent 108.81, up by 7.6%. 2% drop now for Bitcoin, 66,800 on Bitcoin. Amazon shares are lower, little changed right now. We got Amazon down by roughly 0.5%. Amazon's going to start charging sellers who use its shipping services a 3.5% fuel and logistics surcharge later this month, joining the ranks of shipping companies raising prices as the war in Iran pushes oil prices higher. Again, West Texas Intermediate crude now just above $112 a barrel, up by 11.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Carolyn Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Attorney General Pam Bondi is leaving her post at the head of the U.S. Justice Department, ending a tumultuous tenure as the nation's top law enforcement official after some high-profile stumbling blocks in her efforts to carry out President Donald Trump's agenda. Now, in a social media post earlier today, President Trump writing, Pam Bondi is a great American patriot and a loyal friend who faithfully served as my Attorney General over the past year. We love Pam, and she will be transitioning to a much-needed and important new job in the private sector to be announced at a date in the near future. And our Deputy Attorney General and a very talented and respected legal mind, Todd Blanche, will step in to serve as Acting Attorney General. So again, President Trump putting this out a little bit earlier.
She was viewed as one of Trump's most loyal allies. She oversaw the unprecedented transformation of the Justice Department. Joining us now with what we need to know, Bloomberg News Washington and White House correspondent Jeff Mason in the Bloomberg News Washington, D.C. bureau. A quickly developing story, somebody who seemed very loyal to the president, Jeff. We cannot forget what she did in front of Congress just a few weeks ago. What was it that really caused the president to fire her?
That's a spot-on question, and I'm the wrong guy to answer it. We're going to have to ask him that, and he didn't make that clear in his social media post. I do think it's fair to use the word fired, however. That's not the word he's using, but it's what it was. The Attorney General doesn't just leave that job without the president saying you're leaving that job. And so there clearly was some increased frustration on his part that she wasn't able to deliver on the things that he was asking her to do. I also think it's important to sort of put a framework around what the president sees as the Justice Department and the Attorney General and what their role is. Most presidents view it as an independent agency. President Trump did not. He viewed it essentially as his personal lawyer, and right now he looks like he wants a new one.
You know, Jeff, I think so much about this president who understands, like him or not, everyone says he understands media and presentation and so on and so forth. And I do think about how so much of the administration seems camera ready. And so I do wonder how much of this is, actually her ability or what she did on the job, or is it how she presented, whether it's before committees up on Capitol Hill? I just think about that and contrast it with what we've seen perhaps of Pete Hegseth in some of those updates on the war.
Yeah, I think you're right, Carol, that he cares a lot about presentation. This is a former reality television host who has brought a lot of those same demands, skills, and sort of frameworks to the presidency. So yeah, he likes that in a cabinet official as well. That said, if you look at how Attorney General Bondi performed in Congress and the way that she bantered, if banter is even the right word, with members of Congress, it was very combative, and it was often done for the audience of one in the White House. So I'm not sure what he would criticize specifically about the way she came across, because it's seemingly the way that he expected her to come across. Maybe that's shifted, that's certainly a possibility, but the evidence doesn't show that he's looking for someone who is less combative or someone who is less willing to do his bidding or what he asks of the Justice Department. And those are things that she did, but she wasn't able to produce everything that he wanted. And you even saw at one point over the last year a sort of a direct message to her over social media when she wasn't, and that was really unusual. So we know that there was some frustration there.
Okay, so what does we talked about Todd Blanche taking over?
What about Lee Zeldin? That's
Lee Zeldin.
That's a name that's been bandied about.
Right. So who do we think is going to lead it next?
Well, that's the question, and both of those are possibilities. The president certainly has a comfort level with them, clearly with Todd Blanche, who is one of his former personal attorneys, and that's going to be something that we'll be continuing to report on in the coming days. It depends, of course, on how long the president takes to make that decision. But again, I wouldn't expect a major shift at the Justice Department. There will be a new head of the DOJ, but in the same way that at DHS, after Secretary Noem's departure, the policies aren't changing. President Trump himself is not changing. What he wants out of those two cabinet agencies isn't changing. What he is getting is a new face.
How easy is it going to be for that new face to get approved?
Good question. The president still has a majority, of course, in the Senate. That's where cabinet members get confirmed. I suspect that he will probably do just fine with this. If he was looking for a new head of ICE, that might be trickier. But I don't know. I would be speculating. But as long as he continues to have Republican majorities in the Senate, which of course he will have at least through the end of this year, that's not too big of a problem.
Yeah, and I guess it was so easy for Mark Wayne Mullen, relatively speaking, to get through.
He's one of them, and that's it's usually easier to get confirmed if you are coming from Congress, and that worked in his favor.
Hey, Jeff, you're going to be able to turn the ringer off and have a quiet weekend?
Nope.
Well said, well said. All right, Jeff Mason, thank you. Bloomberg News, Washington and White House correspondent joining us from our D.C. bureau. We're going to stay on this. With us is Matthew Seligman, Greyhawk Law founder, joining us from Big Sur. He has taught at Harvard Law School, academic appointments at Stanford and Cardozo, practices constitutional and appellate litigation, filed Supreme Court amicus briefs, and written extensively on structural questions of law and government authority. So we thought, perfect guest with all that's going on right now.
Hey, Matthew, good to have you with us. As Carol mentioned earlier, the president did say that Pam Bondi will transition to a much needed and important new job in the private sector. Will she be able to do that easily, going into private practice if she chooses to stay in law?
Yes, I don't think there's any question that she'll be able to find private employment. The question is what? Something that we've seen as members of the administration and other allies of President Trump, especially lawyers, as they leave their work for President Trump, whether that's voluntarily or not, their options are more limited than those coming out of prior administrations. An attorney general leaving any other administration, Republican or Democrat, would have their choice of any job. But I think it's fair to say that Attorney General, or now former Attorney General Bondi, will face substantially more limited options because the administration's lawyers are toxic to a wide range of law firms and private sector companies.
Hey, Matthew, I'm thinking too big time about who is the next U.S. Attorney General and what might be top of mind. How might you be looking at that?
Well, I think it's telling that Lee Zeldin's name is being floated right now when Todd Blanche is the acting attorney general. He's been in the Department of Justice since the beginning of this second term. He's served President Trump in a private capacity during the criminal prosecutions of President Trump. And yet the obvious choice, perhaps, is not being floated as the next choice. The reason why I think that's telling is because Todd Blanche, who is a very good lawyer, is also not a TV personality. And something that we've seen across President Trump's first and second term is that what he wants out of his cabinet officials is not only the execution of his policies and his priorities, but also a certain type of ability to present on TV and before Congress. And so he's looking for someone who will defend him on TV in a way that not everyone who's a good lawyer will.
But as our Jeff Mason said about Pam Bondi, we all remember her, going through her books and combative before committee members up on Capitol Hill. But having said that, that would have probably been what many would have said, or what Jeff was kind of saying, that a performance that President Trump would have agreed upon or would have maybe admired, that combative kind of back and forth. Do you think that's what the president's going to continue to look for, someone who's going to fight back?
I think there's no question of that. I think he views himself as a fighter, and he wants fighters on his behalf. I think the reasons why he became frustrated with former Attorney General Bondi don't have to do with that performance in Congress. I think they go back earlier. You mentioned before the unintentional social media private message that became public, and former Attorney General Bondi's various public missteps, primarily with respect to the Epstein files. And so I think those missteps are probably more what the source of the president's frustration. He wanted an attorney general to make that problem go away, and she didn't.
So what do you think
But can anyone do that?
What?
Can anyone make that problem go away? That's not. And the reason I ask is because Trump views the attorney general as a different job than other presidents have viewed. But nobody's going to make that go away, Matthew.
That's exactly right. I think he was asking the impossible, especially once Congress passed a law mandating the release of those files. And that was a bipartisan law.
Right.
So I think he was asking the impossible of an attorney general who wasn't able to deliver. And so one question we'll have to look at is, as things go forward, when he asks the impossible of his next attorney general, whether he will fire the next attorney general as well.
So you don't think that all of a sudden we're going to see the Epstein files, more of them released?
Probably not. I think the reason why they haven't been released so far has to do with the administration's interests. As you said, I think it's impossible to make that political problem go away, especially when it's dividing his own base.
One thing curious about, too, is, so we've got this news on Pam Bondi out as Attorney General, U.S. Attorney General. We had President Trump attending the discussion over the birthright citizenship issue before Supreme Court justices yesterday. Not the first time we've seen a president kind of watching what the Supreme Court does, but first time that we've seen it in the modern era. How are you looking at all of that? You are someone who thinks about constitutional law in a big way.
Well, I think what we're seeing here is the natural timeline of the legal system responding to the Trump administration's aggressive actions. Whether you like him or dislike him, there's no question that he's exerted more executive authority than any prior administration.
But President Trump being there, how do you see that before Supreme Court justices listening?
Well, as you also mentioned, he's a reality TV host, and that is a moment made for television. It's possible that he thought he might be able to intimidate the justices, but I can tell you that would never work, and it might even backfire. And so I think the fact that he decided to go was a political statement about his investment in the issue, and it's theatrical in a way that I think appeals to the president.
How do you view the Supreme Court, just based on what we heard yesterday? How do you view the Supreme Court ruling on that?
Well, I think it's quite likely that the Supreme Court is going to hold against the administration, and that the executive order that purported to say that the children born in the United States to undocumented immigrant parents are not citizens. That's what the administration said, and there's been precedent on the books since the 19th century that says that that's not what the 14th Amendment means, that everyone born in the United States, with the exception of very small categories like the children of ambassadors, aside from that, you're an American citizen, and the president can't undo that by executive authority. I expect the Supreme Court will say exactly that.
Hey, Matthew, before we let you go, you're joining us from beautiful Big Sur, California, on the Central Coast right now. Have you seen the $10 gas? This is sort of like a big story. Nationally, that premium gas there at that one gas station has hit $10.
It's remarkable, and I think that's another dimension that we're going to see increasingly. I mentioned that the legal bills are coming due, where the administration took executive action, very aggressive executive action last year, and now the legal system is slowly starting to respond. And I think that's happening economically as well. You know, the president's tariff powers, for example, he asserted these unlawful tariffs, and over time, there's an economic toll that builds up. And we're seeing that as well with his actions in the Middle East, that this war isn't going away as quickly as he thought it would, as he's promised it would. And we're starting to see the economic consequences of that. And after that, we'll see the political consequences.
Yeah, we had planned to really talk to you about 1 year anniversary of Liberation Day and more on tariffs. Maybe we'll have you come back at a moment, because we do see, of course, the continuation of the White House to think about that, certainly as a tool. Matthew, thank you so much. Matthew Seligman, Greyhawk Law founder. When we come back, we're going to get to a former chair of the FCC. She's now over at the MIT Media Lab. Jessica Rosenworcel will be with us. We're going to talk about the intersection of technology and so much in our world. So that's in just a moment. But first up, back to the markets. We got to go.
Yeah, Charlie Pellet is standing by in the Bloomberg Business Week studio with an update. Hey, Charlie.
Well, hello there. Let's begin with the big story today. That is what's going on with energy, specifically crude, specifically WTI. West Texas Intermediate crude with a $111 handle, $111.64 right now. That is an advance of 11.5%. Brent crude, the global benchmark, 108.82. Barrel of Brent up by 7.6%. Equities lower across the board on this Thursday ahead of a long holiday weekend for a lot of people. Of course, a jobs report tomorrow morning. S&P right now down 14 at 65.61. That is a drop there of 0.2%. Dow Industrials down 181, decline there of 0.4%. Nasdaq down 56, drop there of 0.3. The VIX just above 25 with a 10-year 4.30%. Gold is down 2.1%, 46.58 the ounce. And again, crude bears repeating, 111.69 on WTI, up by 11.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, along with Tim Stanovic, live here at Bloomberg headquarters in New York City. We often talk about the intersection of the business world, market world, money, with so many different sectors of our world. And we often talk about how increasingly it has to do with health in particular. And I was just thinking about earlier, we were talking about equities and what has been kind of where you see job growth, you often see equity outperformance. A lot of it has to do with health.
With us, Jessica Rosenworcel, Executive Director of the MIT Media Lab, also former chair of the FCC, the Federal Communications Commission, the first woman to lead the FCC as permanent chair by President Biden. Previously, she served as commissioner. That was back in 2012 after being nominated to 2 separate terms by President Obama and President Trump. She joins us from Boston. We're going to talk about health, and we're going to talk about everything you've been working on recently, but I'm really curious, and we're both really curious about the shift of going from the FCC to the Media Lab and the new perspectives that you've gained by being there, given the experience that you had working in the government.
Well, thank you for having me. I like the intersection of technology and policy, and it was a treat when I was in Washington to try to come up with new ways to use technology to close the digital divide. And now it's been really just awesome being here at the MIT Media Lab, which is a place that's been around for more than 4 decades and is really committed to thinking about what our digital future looks like and how to make sure that there's a role for humanity when we develop it.
So let's talk about this in the context of healthcare, because when you were at the FCC, you were known for working to preserve net neutrality. You were very interested, if I recall, in making sure that everybody had access to broadband throughout the country, this idea of the homework gap as well. Do you see the technological gap and the challenges that many Americans face? Do you see that similar when it comes to healthcare, or is it even more stark when it comes to access to healthcare?
Well, I think there's a lot about technology now that leaves people wary. They can feel like they lose their agency and that big systems are making decisions and they don't have a voice. But at the same time, I look at a lot of those new technologies that are being developed, like wireless sensors and AI diagnostics, and I see lots of opportunity for us to improve healthcare. And there's a lot of work we can do to improve healthcare, so I think we've got to seize it.
Jessica, let's go deeper into specifically for women. This is what we call our Business Week Women's Health segment. And we talk about often the gaps when it comes to men versus women in either diagnosis and treatment and R&D dollars. It's slowly getting better, but there are still gaps. So I'm just curious, this intersection of technology, how that might help reduce that gap and really expand access to care for women specifically and women's issues.
Yeah, you're so right. I mean, there's long-standing gaps when it comes to women's health care. For so many years, they weren't included in critical studies. And then we've had just a fraction of the research dollars go towards women's healthcare issues compared to men's healthcare issues in this country. And it's made a real difference. We are not diagnosing women's healthcare problems the same way that we are for men. And if we close that gap, we're going to do some good work, not just for women's healthcare, but for our global economy. In fact, there are studies that show that as much as $1 trillion could be seen in economic growth globally by 2040 if we close the kinds of gaps you are talking about. And there are so many ways that we are starting to see possibility, and they all involve technology. I think in particular, we are going to see so much more use of wireless sensors, because when we use wireless sensors with healthcare, we get so much more information, good quality data, continuous monitoring that can be used to improve diagnosis and healthcare. And that is one of those areas that I think is just poised to grow tremendously in the future.
I'm glad you brought that up, because I think a lot of people who work in that space, who are trying to create these devices and work in medical devices, they have thoughts about the regulatory process, that it takes too long to get FDA clearance or FDA approval, whatever they're going for. You operate in this unique position because you were one of those folks who was considered, a regulator at one point in your career. Is there room in the regulatory process there to make this easier so more people do ultimately get access to this technology?
Yeah, I had a different kind of regulatory role in that I oversaw communications networks, but I used to say that it was a three-legged stool. We had to make sure that we got the regulations right to get wireless airwaves available to those who could use them for these kind of technologies, and broadband, again, for these kind of technologies. We also had to make sure that practitioners knew how to use them. And then the third leg would be making sure that insurance was set to reimburse these kind of technologies, because that's what also makes it really practical. So we've got to have all three things: regulation, familiarity among our practitioners, and insurance reimbursement working together. And if we do that, I think we can solve some of the healthcare gaps we know that we have today. And I think these things are possible. We've just got to work at them.
Yeah, we also have to have money flowing into it, right? Investors. I hate to be so basic, but
that old thing, Carol. Easy.
Here at Bloomberg, we kid, we laugh, but there's follow the money with anything, right? That just tells the story. So, what kind of money and interest do you see among investors? You guys are in this great place,
totally.
where there's this great intersection of all of it.
No, you're absolutely right. That's part of the equation. We were doing some work at the Media Lab. We have all of these different efforts underway. We've got folks working on ultrasound technology that would go in a bra to make it possible for early cancer warning without having to go to the doctor's office and get a mammography. That could be tremendous at scale. We've got work going on with affected computing and physiological signals, then trying to understand how that enforces our healthcare and things like sleep. We've also got work going on with bionic prosthetics that connect to our nervous systems. Now, the neat thing about the Media Lab is we are pre-commercial. So we're not yet thinking about how you monetize all these things. What happens is the work we develop gets taken up by healthcare practitioners and research doctors who then put them into clinical trials. So we're the early stage for ideas here, but I think that's what makes me so optimistic and excited about what I get to see here every day.
We just actually did. I was just looking up. Was it Bloomer Technology? Was it Bloomer Tech that we had on?
Yeah.
Bloomer.
Yeah, Alicia Chong Rodriguez, the founder and CEO of Bloomer Tech.
Yeah, it was a smart bra basically for heart health and for women. And it was really kind of fascinating. They were in the testing phase.
Yeah, there's so much that is going on right now with technology and healthcare. I just think there's so many more opportunities for customization. When you think about the data that we get from wireless technologies, there's also opportunities for customization that come from AI-based diagnostics. And down the road, I think we're going to be doing more work with digital twins, where we might develop models of unique organs and test them before we have real-world intervention. All of these things are becoming possible. We're going to have to work to get them out into the real world with more clinical trials. And like you say, it will also take some money and funding.
So I just want to ask about the timeline for this stuff, because when we talk about this stuff, I think a lot of people think it's pie in the sky ideas. But I mean, do you think we'll see this stuff in the next 5 years?
Absolutely. You know, it was like 10 years ago, I was visiting villages in rural Alaska, and they were demonstrating to me how they were using these refurbished echocardiogram machines to try to send images of heart disease off to doctors in specialty hospitals in Anchorage and Seattle, because they didn't have those kind of practitioners in their backyard in a small village near the Arctic Circle. And what I was seeing in a rural location was something that has now moved into mainstream medicine, which is this idea that we can connect and get expertise no matter where we are, and take measurement of where we are with our health in places that we've never been able to do that before. So I think we are moving from having technology be at the margins to being part of mainstream medicine. And I think what I saw years ago in that little village in Alaska sort of set off a light bulb for me, which said that we can do this here. We can do this everywhere.
Listen, Jessica, you know, I'm listening to you. I think both Tim and I are, and we think about, you know, we live with a company where we can go everywhere and talk to all different kinds of voices and really respect the importance of content and media as a medium. And I am just curious, whether it's dealing with healthcare issues and understanding what you're talking about, it's so important that correct content gets out there, but that there's freedom in content, right? And I just wonder, your view as former chair of the FCC, I've got to ask you, I'd be an idiot not to.
Yes, no, I think I saw this coming.
Your view on the use of the agencies, the current agency's powers to influence the content, whether it's late night TV or news coverage in general. It's, for me, who's been doing this for 30 years, it makes me a little uncomfortable, a lot uncomfortable, to be fair.
Yeah, that's fair. It makes me uncomfortable too. During my last few weeks as chair of the Federal Communications Commission, you know, I took a look at what was on deck, and I found some petitions that involved content and coverage and behavior at ABC, NBC, CBS, and Fox. And what I noticed is they came from the left, they came from the right, but every one of them wanted the government to step in and use its power to prevent free speech. And so on one of my last actions before I left the agency was I dismissed them all. And I did that because I don't think that the FCC should be the president's speech police, and I don't think that the FCC should be journalism's censor-in-chief.
What do you think about Brendan Carr, your former colleague, just very briefly, about his approval of the Nexstar-Tegna merger without a full commission vote?
Well, I think there are some challenges associated with that, and the underlying law, which limits the number of television households any one company can reach in this country to 39%. And I know that there are ongoing court cases involving that decision. So I think we'll all have to stay tuned.
And we're going to stay tuned to the work you're doing. Please come back. We would love to continue this conversation. We've talked with a lot of folks over there, and it's just great to hear what you guys are doing. Jessica, thank you so much. Jessica Rosenworcel, she is Executive Director of the MIT Media Lab, former chair of the FCC, as we stated. If you missed any of that conversation, be sure to check out our podcast feed.
Hey, just taking a look at markets right now, we are seeing stocks still in the red, but very much so off their worst levels of the day. The S&P 500 down 0.1%. When we come back, stocks on the move. That's next on Bloomberg Business Week Daily.